Telling us earlier on that Canada is holding some conversations with Sweden on a partnership with Sweden, and that could result in them buying some more jets from Saab. So as a result, we keep an eye on those, and the defence sector more widely could be in focus because of the Ukraine conversations. And Merck KGaA is in focus, a downgrade at Barclays, and according to this list, we're also watching Coloplast, Guy.
We certainly are. Many stocks to watch. Not much of a macro top-down read, but let's see how these markets open. I think we're expecting kind of 1 or 2 tenths to the upside, but gains still nevertheless. US markets, remember, we are looking at futures a little saggier than that, soggier than that. So here we go, FTSE 100 out of the gates with an exciting and impressive 0.012% of a gain. As I say, I don't think these markets have a clear and obvious catalyst this morning to work with. Those catalysts are coming. You've got US retailers reporting numbers later on this week. Clearly, we're going to be watching Powell. You've got UK inflation data to watch tomorrow. There are things that are going to be happening that may give us a little bit more. I'm fascinated to see what the AVAT screen looks like in terms of the volume. I suspect we may be a little light on the volume side right now. But there you go. Look, European markets, I think, are just drifting at the moment. We're waiting for something to latch onto to give us a little bit of momentum in one direction or the other. But at the moment, we've had a great rally. We're coming into the middle of August. We're waiting for the next catalyst. That comes at the end of the week, arguably, from Jackson Hole, but we'll wait and watch. But at the moment, no clear sense of obvious direction coming from the index level. Let's get below the surface there. Anna, what are we seeing in terms of kind of the single stock story and also some of those sectors?
Yeah, a bit of an energy theme actually playing out across markets this morning, Guy. And you mentioned this at the top of the last hour, the fact that we've seen a retreat in oil prices and partly linked to what's been going on with regards to Ukraine. And maybe we haven't done quite enough justice to that theme this morning, because we see both ends of the sector picture responding here. So the best gaining, or one of the best gaining sectors was travel and leisure. In fact, it's just lost that point. That spot, technology has taken the top spot, but that's one of them. And energy is the worst performing sector. So there is that energy play there. We're also seeing basic resource stocks go a little bit higher this morning. Technology going higher, up by 0.4%, which is interesting in the context of all the Intel news. We talked about that a lot at the top of the programme. Not sure there's a huge amount of read across there, but certainly there's a lot of news being written about the technology sector and about the chip sector at this point, whether it is NVIDIA's ability to sell into China, whether it is the government purchasing a stake in Intel, which is, according to our reporting, being discussed, whether it's SoftBank taking a stake, which we've had confirmation of. So there's the tech theme for you, but also, yeah, this energy theme, evident to some degree, at least, across these markets.
Yeah, money rotating out of Shell. You can see that with BP a little bit as well. You're also seeing money rotating out of some of the big pharma names. So Nova's a little softer after its recent good form in terms of some of the drug delivery news that we've had from that company treating liver disease. We saw that yesterday, so we're kind of rotating back out of that. But defence stocks is actually an area of interest. So Rheinmetall a little bit softer. You've got BAE Systems a little bit softer this morning. Thales is down. Saab's a little softer as well. Is there a geopolitical narrative that comes out of the peace talks that we saw yesterday? Is that a view that actually we're moving towards peace and there is a peace dividend, and maybe actually you take some of the recent kind of very strong pricing out of these stocks? I don't know. It's so hard to read on a day-by-day basis and get a kind of clear and obvious line between one and the other. Yes,
although we do have a number of those defence names down by more than 1% today. So we've got Rheinmetall, Leonardo, Thales, Saab, Hensoldt, a number of companies that you would include in that defence space are retreating a little bit this morning, more than 1%, as I say, on all of those names. So we'll continue to keep that.
If you, look at it over the last Rheinmetall 5-day charts, it's still up by nearly 5%.
Yeah. So not really cutting through, perhaps. Let's get a broader perspective on where we are on markets. Eric White-Ellis joins us, EMEA Head of Investment Strategy at JP Morgan Private Bank. Eric, good morning to you. Thank you for joining us. Midsummer, 19th of August here in Europe. We don't have a great deal of data points to trade on, but we have plenty of geopolitical news, and we have stocks on good form, it seems, not far from all-time highs on global stocks, driven higher by the earnings story, AI. We've got Jackson Hole looming. What is the big picture driver for markets right now for you, Eric?
Stocks really are on good form, and it ultimately comes down to earnings, which have been very impressive. The last 3 quarters of earnings in the U.S. have been plus 18%, plus 13%, and it looks like this quarter will be about plus 12 to 13% relative to expectations just before earnings season of about 5%. That is rather impressive resiliency of the earnings delivery of the major companies in the U.S. We have an increased amount of buybacks that are also expected, which is helpful from a supply-demand standpoint. And overall, U.S. corporates are showing an impressive amount of dynamism to ebb and flex around tariffs, adjust pricing, source the supplies that they need, and lo and behold, risk asset prices are performing nicely.
Okay. The Grinch would say, isn't this just the tariff impact delayed? The tariffs have not hit as quickly as expected, and there was plenty of inventory build-up ahead of the tariffs being imposed, and so we're not seeing the full impact of those tariffs, I suppose.
August might be slightly early for a Grinch reference, but I appreciate where you're coming from. And yes, it is certainly possible that an increased amount of tariff impact gradually feeds through to the consumer. For example, just recently, our analysis showed that only about 40% of the tariff impacts were being borne by the consumer, and then more recently, north of 45%. So if that trajectory continues, we could start to see more cost pressure start to impact the consumer. But one of the things that's very fortunate about the circumstance is U.S. corporate margins are close to all-time highs. So they've been able to absorb a good chunk of the overall tariff impact, therefore not passing it all on to consumers. Lo and behold, consumers continue to spend. We just saw some solid U.S. retail sales numbers last week. And again, the risk rally ultimately marches on.
An eventful I read your notes this morning. You kind of buried the lead, to my mind. A little bit, maybe at the bottom. An eventful 2025 now at healthy levels of risk. Asset rally suggests a close look at one's asset mix. That sounds a little cautious to me.
Well, the point that I'm trying to get at there is, so of course we have Jackson Hole later this week, which will be incredibly closely watched. Every sentence, every piece of grammar, every utterance, and so on. What I would encourage people to think about is if you fast forward, say, 6 to 9 months in the future, we could be maybe 2 full points, about 200 basis points lower in U.S. cash rates than we were off of the highs. That's a big change because we cut 100 basis points last year. It looks likely the Fed will start cutting in September. And then if you fast forward, say, to about the springtime of 2026, we could be about 2 full points off of the highs. Therefore, we think it is very sensible to think about how much cash you have in your asset mix and lock in duration or considering other ways to produce greater degrees of yield because the cash yield has been attractive in dollars.
Yields are going up at the moment. It's not going down. Long-end yields are going up, not down.
But the overall cash levels that you can achieve are going to track most likely what happens with Fed funds.
You're confident the Fed's going to cut rates quite aggressively, though?
Aggressively is probably a strong term.
100 basis points.
We think it's likely they start with 25 in September and take a bit of a gradual path and then maybe land at about 3.5% or so at some point in 2026 as an ultimate terminal rate. And therefore, those cash yields that you can achieve on money market types of products are going to head south.
Why are they cutting rates?
They've got substantial weakness that's starting to develop in the U.S. labor market.
And what happens in a recession to assets in the States? If you get a recession, what happens?
Well, of course, you would have pressure on risk asset markets overall. Right. You also would continue to see yields most likely head south, and that's where the fixed income component of your portfolio would probably help buffer what could happen there. But we don't look for a U.S. recession. The resiliency of the U.S. economy has been impressive. We just discussed earlier how consumers have continued to spend. Overall, we think a bit of an insurance cut type of approach might be what's forthcoming out of the Fed and a bit of a gradual path to softer rates.
So this is a picture of a weaker labour market, but not weak enough that it undermines consumer spending and therefore, stocks your view is that stocks don't have much to fear from, to Guy's point, the reason that the Fed is cutting rates.
Correct. It ultimately does come down to earnings, which have been delivering and delivering. We've got an extraordinary amount of CapEx that is committed to for 2026 out of the big tech companies. And we have that sustainability of what's been happening with the overall performance of the U.S. economy. But back to Powell for a moment in terms of the Jackson Hole confab on Friday. There's going to be a bit of a balance that he's going to have to think about there between the softer amount of labor performance that's been coming through. The 3-month moving average for non-farm payrolls in the U.S. is now down to only about 35,000, which is not a spectacular number. But we also have a degree of upside inflation pressures that have been coming through most recently, PPI numbers and others. So there's a little bit of a balance there about what to signal between the Fed's dual mandate, between trying to help ensure full employment and also help ensure price stability.
Yeah. You see, I was mentioning the Grinch guy, but he's the one who's looking for the cracks, aren't you?
Green makeup at the ready. Eric, nice to see you. Thank you very much indeed. Eric Whitehouse, EMEA Head of Investment Strategy at JP Morgan Private Bank. Core 6 looks like this morning. A little bit of movement in some of the defence names. Rheinmetall, as you can see, off by 2%. Tech a little higher. ASML up by 0.8%. What else are we watching? We should probably spend some time, a little bit more time maybe, focusing on what that defence story looks like with Chloe Melly.
Good morning, Guy. Yeah, so let's start with defense today. We can see a little bit of weakness that's off the back of the latest updates from Trump's efforts to bring about that peace deal in Ukraine. So it is pushing for a meeting between Putin and Zelensky. And off the back of that, and maybe us moving closer to that potential peace deal, we are seeing some weakness in some key defense names this morning. Rheinmetall, Hansel, Leonardo, and BAE Systems. We've got a wall of red across that sector this morning. Moving on to the mining sector. So the read across from the BHP results actually was fairly positive. So we can see Rio Tinto, Ferrexpo, Glencore, ArcelorMittal all moving up. Even though BHP reported a fall in profits, it did indicate a little bit of a brightening outlook there. So that is reading across quite positively for that mining space this morning. Moving on to Doc Morris, which is a pharmaceutical retailer in Switzerland. The first half adjusted margin missed estimates, and that is leading to a little bit of weakness in that stock this morning. We're down about 4.5%. And then finally, IWG is seeing, so IWG is the provider of co-working spaces, and it is also down because the forecast was a little bit also lower than expected. So we can see a lot of weakness. We're down 13% in IWG this morning.
I remember the WeWork heyday. Chloe, thank you very much. Thanks for joining us. Chloe Melly from our equities team with a look at some of those stocks on the move this morning. Coming up on the programme, after Ukraine reportedly offered to buy US weapons, how will defence companies respond to pledges of security guarantees? We'll take stock, as Chloe was just doing for us there, the little bit of weakness that we're seeing in defence names, even if they've been up very, very strongly of late, of course. We'll talk about the sector next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back. What are we calling it? 15 minutes into the equity market session. We've not gone very far since the open. I just want to check the AVAS and see kind of what the volume figure looks like, because it's been quite quiet over the last few days. There are catalysts coming. There just aren't any obvious ones today. Yeah, we're down quite hard in terms of the volume picture that we are watching quite carefully at the moment. Defence stocks certainly front and centre this morning. That's where actually there is some quite interesting action. And as you can see, the names are generally on the screen lower right now. Not a lot. I take a look at the 5-day chart, you'll see actually this movement is significant, but not kind of out of kilter with what we've been watching. You've seen some quite big upswings. Donald Trump pushing a Putin-Zelensky meeting. He's also stressing that European nations are, quote, going to be taking a lot of the burden for security guarantees, though the US would be chipping in, apparently. But the scope of those guarantees, unknown at this point. For more details, we're joined by Bloomberg's Jerry Doyle. What did we learn yesterday about what Europe is going to have to do in terms of the commitments that it's going to have to make and how big it could be?
Honestly, we didn't learn much. Security guarantees can mean all kinds of things. Yeah. It can mean boots on the ground. It can mean additional supplies of equipment and war material. It can mean additional ISR, intelligence, surveillance, reconnaissance, satellite pictures, things like that. But right now, we don't know what those security guarantees are going to look like. And as a result, we don't know what impact it's going to have on defense companies and what they might be asked to provide.
The initial read in markets this morning, as Guy was just pointing out, is a little bit of weakness in defence stocks. Is that about the overall small steps towards some kind of peace deal? Is this what might be a peace dividend for the rest of the market would end up being a negative for defence companies? Is that the big picture takeaway?
It could be. I think it's probably more just a function of uncertainty. Nobody knows what's going to happen next, and so as a result, nobody knows what it's going to mean for the defense companies and what they might be asked to contribute, and so investing becomes a little trickier.
What kind of capabilities historically have you needed to provide for some sort of a security force? Are there historical precedents here that we can look to?
I don't think there's a direct one-to-one precedent we can look at, but I think it's safe to say that if there are troops on the ground, they would need things like small arms and ammunition, armored vehicles, things of that nature.
It needs to be quite mobile.
Yes, exactly. And then for sort of a larger picture, security guarantees for Ukraine to make sure that they were sort of safe against future attacks, you would need higher-end equipment such as missile defenses, air defenses, more sort of elaborate and expensive gear.
Yeah. On the one hand, you could see that if we did get peace in Ukraine, that might weigh on defence stocks at one level, because obviously if there's not active fighting, then there's less requirement perhaps for some of the things you just described. But on the other hand, the burden to provide defence is now going to increasingly fall on Europe and maybe less on the United States, and maybe these European players actually set to benefit from that. Is that big picture still what we're looking at here, Jerry?
I think so. And Europe has already committed quite a bit of resources into expanding its defense industrial base. That's not going to go away. So a lot depends on the scope of what a security guarantee would look like, how many troops are on the ground, what needs to be supplied to Ukraine. But the defense industrial capacity is there, and I don't think that's going to dissipate.
Okay, Jerry, thank you very much. Thanks for the update. Jerry Doyle, Bloomberg's global defense editor. Let's switch focus then from the defense sector to the mining sector. We've had plenty of news flow from this overnight as well. BHP's full-year underlying profit fell to its lowest level since the pandemic as prices of its key earners, that's iron ore and coking coal, came under pressure from softer Chinese demand. Let's go to Bloomberg's Martin Ritchie in Shanghai, who has more details here. So that's the sort of negative story that we can tell here, I guess, Martin, about the comparison with last year. But actually, the CEO trying to tell a slightly more positive story around China. And last I looked, that had certainly pushed the stock price up during the Australian session. So what's the big takeaway?
Yeah, I think you're absolutely right to point that out. We've seen the headline number, the profits down, I think 26% from a year earlier, and the lowest since the start of the pandemic, actually in 2020. So it's a low result, but it is generally quite expected. BHP gets a lot of its earnings from iron ore, obviously, a lot from coking coal, which are reliant on China's steel industry. Now, in that regard, demand hasn't really slumped, hasn't fallen very much, but at the same time, supply of iron ore is rising, and China's economy is sort of slowing down, and so prices have come down. But on the positive side, as you pointed out, and as Mike Henry was very keen to point out, demand is still, by standards of recent years, still relatively strong. You've seen pockets of strength, for example, in Chinese exports, which also helps steel in some areas of manufacturing. Electric vehicles is one example. So there's still, despite the property slowdown in China, which everyone knows about, this was a sort of in-line result.
Is copper going to make that big a difference going forward? How does the balance work? They were highlighting how copper is one bright spot. Is that set to continue? And as we do see these large miners looking to have more exposure to copper, how far through the kind of revaluation process around that are we?
Yeah, I mean, copper is something that big miners, BHP topmost amongst them, of course, have been talking about for many years now. More than half a decade, going back even further, as like their big bright prospect. So you've got iron ore demand starting to fade. It's getting more difficult to find the best types of iron ore. So you're seeing BHP, Rio, many others try and get more exposure to copper, and that is a sensible strategy because copper demand is starting to expand very rapidly in a whole range of industries. In terms of the timing, though, it's a very long-term process. As Rio's CEO said fairly recently, they're still going to be digging up iron ore in huge volumes from Australia in a decade from now. So it's really a kind of long-term process where it's hoping that their earnings can stay at stable high levels rather than fade away along with the property boom in China.
Yes, we've seen iron ore prices extending declines, and part of that being attributed to these BHP numbers and comments then, Martin. And we've actually seen it declining for 5 straight sessions now. What is the bigger picture around the supply story that's weighing here?
Yeah, I mean, I wouldn't read too much into link between BHP results and the iron ore price day to day. Iron ore has been steady just above $100 for quite a while now, and that speaks to still relatively strong demand in China. In recent times, prices have gone up because there's this expectation of what's called anti-involution measures in China to try and restructure the industry. That might actually help iron ore because it raises steelmaker margins. But I think investors are still waiting to see what the real fruits of that campaign are. And so iron ore is kind of following the macro mood at the moment, which is slightly downbeat, I guess.
Okay, Martin, great stuff. Thank you very much indeed, Martin Ritchie, on what is happening with the mining story after BHP. I want to turn our attention to what is a story that could develop later. Reuters is reporting that NVIDIA is preparing a new AI chip for China. It will be more powerful than the H20. They are calling it the B30A, apparently. They're aiming to deliver samples, according to Reuters, to Chinese clients as early as next month. Now, the indications are that US regulatory approval for this is not in any way guaranteed, but we have to remember, obviously, the deal that was done in the White House regarding effectively an export tax for some of these chips. Was it last week or the week before? And it'll be interesting to see whether this is a direct reaction to that, effective opening up of the Chinese market, which kind of just leans against the idea of the US having security concerns.
Yeah, we're used to NVIDIA making specific chips designed for the Chinese market. That's what they did before, but they were told to stop selling those particular ones, and now they're talking about a different variety. I think there's a nice line in the story that you quote here, the Reuters story, where NVIDIA is saying that a variety of products for our roadmap are being evaluated so that we can be prepared to compete to the extent that governments allow. And that tells you a lot about the sector and where we're at in this sector right now. It's all at the, you can go as far as the government will let you, it seems.
Which government? So you've got the US government, obviously restrictions, export restrictions have been part of the landscape for quite some time, but you kind of wonder whether Trump is changing that. But the Chinese government as well. The Chinese government is very keen to ensure that actually China has an alternative to some of these chips. And the argument has been, certainly from Joseph Wang, that you want China to be addicted to US chips, and therefore you want to be as close to the edge of the envelope that is allowed on security terms. And it'll be interesting to see whether the Chinese push back on that. They certainly were last week, talking about the idea that there were security flaws, there were all kinds of issues surrounding some of these chips, and that we shouldn't be using them in anything government-related. And I just wonder how the balancing act of those two things are going to fall. There was also the DeepSeek story suggesting that DeepSeek was struggling, though some cold water was poured on this, using domestic chips to train. And maybe this, again, is a reaction to that.
Yeah, and Jensen Huang did have some success in persuading President Trump of that view. We heard him using those sort of Jensen Huang talking points, talking about the need for US chips to be there in the mix in China. So that's one of the chip stories that we're watching today. We started at the top of the program, they're talking about Intel, and that's also going to be something that develops, because there are so many strands to what's going on with Intel. We've got Masayoshi-san and SoftBank through SoftBank taking a stake, a $2 billion stake, and 5 times larger, we have our reporting suggesting that the US government is considering taking a stake in Intel.
Is 10% nationalization? I don't know. There's headlines in US newspapers talking about nationalizing Intel. Is this what this is? I don't know. You certainly put the government on the board, maybe not the board, but certainly you put the government with a significant amount of influence. What happens? Does it take certain options off the table? Can you break this business up in the current form, therefore? Governments, as we discussed earlier, brilliant at running companies and giving companies picking winners are fantastic.
That's a phrase gets thrown around a lot when you see companies take stakes.
So yeah, is this we were discussing, Val and I were discussing about this. Is this a good thing for Intel or a bad thing for Intel?
Yes, indeed. Well, the stock responded positively to early conversations, early reporting around the US government taking a stake, but we'll see how it responds later today to these latest news lines, plenty of them around Intel. We will pivot back to the Ukraine story shortly. Coming up, Spain's Foreign Affairs Minister will be speaking to us about how the country is responding to Ukraine, taking on a number of other themes for us as well. This is Bloomberg.
Definitely in the center of it, and we're looking for how do we spend time and which industries do you invest in. Investors becoming more and more digital or AI enabled that actually adds value to economic growth. And this, we think, could be time, because you have a strong hardware power and you have a strong software power, as we see, and it's accelerating significantly. But a very important, another element, which is changes in demographics. More AI-enabled softwares and applications may improve the people's lives and actually increase productivity in times where demographics are decreasing everywhere around the world. So this, I would say, is a major theme. So digitalization and AI-related technologies, and we think of it technology, but in reality, a lot of the businesses coming up and claiming to be technologies that are actually cannibalizing a lot of traditional businesses.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
This is the opening trade. We're 30 minutes into today's session, and it's a bit of a mid-August feeling to markets, it seems, today. We're pretty flat across European equity markets, a bit of downside on the DAX, a bit of upside coming through on the CAC 40. But broadly speaking then, Guy, pretty flat across these markets, the FTSE almost entirely. So we've seen some underperformance coming through from some energy names, a weaker oil price, the defence names on the back of edging closer, perhaps, to any kind of resolution of war in Ukraine. That's weighing on defence names. To the upside, we've seen some technology stocks doing okay this morning, a lot of news lines around technology, but most of that based around the United States, around Nvidia and Intel, as we discussed earlier on, and some of the travel and leisure names getting a boost from a weaker oil price this morning. So net-net, that adds up to a bit of a waiting game, waiting for Jackson Hole, Guy, and a bit of data middle of this week. So we've still got plenty to talk about as we get through the week.
In search of a catalyst. And the catalyst comes, as you say, towards the back end of the week. 411 up, 173 down. It's interesting to obviously that tells you that the weight is actually these are bigger companies that are to the downside. You've got light volume today. I think we can anticipate that in the month of August. Let's talk about 52-week highs. There's not many lows out there this morning. Bit of a sort of infrastructure theme. Hochtief is at a 52-week high, up by 9/10, nearly a percent. That stock is tracking a little bit higher. ADP is up by 1.23%. It's at a 52-week high. Prysmian's also up as well, 1.56%. So something of an infrastructure theme maybe running through European markets this morning. You're certainly seeing a few banks hitting 52-week highs. That's a given. There's only 3 or 4, though, this morning. Some days there are absolutely loads of them. So a quietish market with an infrastructure theme maybe running through that, Anna.
Yeah, an infrastructure theme here in Europe, a tech theme developing then over in the United States. Let's tell you about some of the other stories then you need to know this morning. SoftBank has agreed to buy $2 billion worth of Intel stock in a surprise deal to shore up the struggling US chip maker. Meanwhile, Bloomberg has learned the Trump administration is in discussions to possibly take a stake of about 10% in the company. Such a deal would make the US government Intel's biggest shareholder. The Indian Prime Minister Narendra Modi has hailed Vladimir Putin as a, quote, friend after discussing bilateral cooperation with the Russian leader. The call comes as Modi's government also moves to bolster relations with China. Modi is due to meet with the Chinese Foreign Minister Wang Yi today as both nations push to normalize relations amid diplomatic tensions with the United States. And President Trump says he's called Vladimir Putin to urge him to begin making plans for a summit with Volodymyr Zelensky. It comes after his meeting with the Ukrainian president and several European leaders at the White House just yesterday. U.S. Secretary of State Marco Rubio says Washington coalition is working on security guarantees for Kyiv. Guy.
Okay, let's talk more about what is happening on that geopolitical story and where we go from here. Oliver Crook joins us from Brussels with more details. Ollie, how unified is Europe in this idea that it is the Europeans that will be providing the bulk of the security guarantees? We obviously heard from those around the table yesterday, but not everybody was there. Is this a unified picture across the continent?
This is a unified picture that they want to present to Donald Trump, that they're all on the same page, that they're all in agreement, that this is going to be relatively easy to get through, because obviously that makes Donald Trump's job a lot easier if he feels like he's speaking to the Europeans with one voice. Remember, even during the trade negotiations, one of the big frustrations was that the Europeans don't speak with one voice. So on this issue of Ukraine, they really want to be speaking with one voice. But Guy, I think as to what you're alluding to here is that the difficult parts of this conversation, as difficult as the United States has been, as Donald Trump has been for the Europeans to get on their side, there are very serious, very complicated issues that they need to discuss, not just between each country within Europe, but domestically for their own audience. I mean, we are talking about basically taking on fully the sort of defensive measures of Europe on the European side from a financial standpoint. If there are those Article 5 style-like guarantees, what do they actually look like? Does it mean that the United States would engage in military conflict if, after a peace deal, Russia were to impose once again on Ukraine? That is still an open question. But at the end of the day, what the United States has sort of called for in private conversations is that the Europeans need to be basically on the ground in Ukraine if that's what's going to look like. And that is not something that there is total agreement on in Europe. When I have spoken to a number of German government officials, and we can say that Germany is one of the biggest supporters of Ukraine financially, verbally, and all the other sort of respects, they have been very reticent to commit to any sort of agreement like that would mean German troops on the ground that would theoretically return fire on any encroachment from the Russians. So I think that this is going to be the very beginning of a conversation, one that is a lot more difficult, that just sort of is not betrayed by the united front that the Europeans wanted to present to Donald Trump. But this was a question of money, and it's a question of basically risk, of willing to put your own troops at risk, willing to put yourself in the firing line against Russia. That is why it's so important to get those security guarantees from the United States, because at the end of the day, if they can rely on U.S. support, that will make that a lot easier a decision to make for European leaders.
Ollie, thank you. Bloomberg's Oliver Crook with the latest on Ukraine. We're joined now to continue this conversation by Jose Alvarez, the Spanish Foreign Affairs Minister. Minister Alvarez, thank you so much for giving us your time. We appreciate it. Spain not directly represented at that meeting yesterday, although under the EU umbrella, I suppose, represented there. What did you make of the conclusions so far from those meetings at the White House, and underline for us why it was that Spain was not in attendance?
Spain is part of the coalition of the willing. Today at noon here in Europe, we will be joining, and we are a very important part in backing Ukraine's sovereignty. Yesterday I was discussing with the Vice Prime Minister of Ukraine about European integration. President Sanchez is in full contact with President Zelensky, and we are committed to back Ukraine as long as it takes. Yesterday, we saw President Zelensky backed by European leaders in the White House talking about peace. And any conversation about peace is welcome. But we must be talking always, giving the same content to the word peace, a just and lasting peace, a peace that will not be just a parenthesis between two words. That's why we need a ceasefire, first of all, to make sure that we stop the killing of people. And then we will want to see Russia, that is giving no sign of being in good faith, engage in real conversation for a just and lasting peace.
Yes, we've seen some in other European countries calling for that ceasefire, but President Trump doesn't seem minded to go in that direction. Just sticking with this theme of why Spain was not in attendance, does it have anything to do with the way that Spain stood apart from other European nations at that NATO meeting and didn't quite commit to the level of NATO spending that the United States wanted to see?
We have not got any signs of two things being related, because Spain is a very committed ally. We have a historical deployment of troops in the eastern flank of NATO with 3,000 soldiers, tanks, aeroplanes. We are an integral part of the security of the Baltic countries. We are present in countries like Slovakia, before in Romania. We have a Patriot battery deployed in Turkey, another NATO ally. And we have been, since the very beginning, part of the financial, humanitarian, and military equipment effort to Ukraine. So I think that the commitment of Spain to Euro-Atlantic security is out of question. And we, in the last NATO meeting, we have said that with a lower percentage than 5%, we could meet all the objectives, all the targets that we had to meet, both in capacities and in joining the Euro-Atlantic security. So I think both things are not related. There are many other European leaders that were not present. For instance, the current presidency of the European Union, the president of Denmark.
Minister, good morning. If the requirement was that Europe needed to put troops, boots on the ground in Ukraine, would Spain be providing some of those boots, some of those troops?
I don't like to make political fiction. The reality today is that Russia has not given yet any sign that wants a real peace. I want to see, first of all, if that Zelensky-Putin meeting becomes concrete, if they can agree on a ceasefire and walk towards a real peace. So there are a lot of things to talk, including security guarantees. And that's what we should be focusing today, and not in future scenarios that doesn't exist. The reality of today is that Russia continues to wage war, an unjustified war, against Ukraine.
How far would Spain be prepared to go in providing security guarantees for Ukraine? Were there to be a ceasefire or peace, how far would your country be prepared to go to guarantee Ukraine's security?
We have been giving all the support that Ukraine has been asking for and requesting so far. Military equipment of all sorts, financial assistance, humanitarian assistance, with 200,000 Ukrainian refugees in our soil. Accession talks for joining European Union were open during our European Union presidency. So we are on all sides helping Ukraine to defend its sovereignty and its territorial integrity.
Would Article 5, like guarantees, be acceptable to Spain?
Article 5 is not something that is on the table right now. The best security guarantee for Ukraine so far, today, talking with the reality on the ground, is to reinforce the Ukrainian army. Because that's what's providing today safety, sovereignty, freedom for Ukraine. And that's what we are doing, providing military equipment to make sure that the Ukrainian army is capable of guaranteeing sovereignty and territorial integrity for Ukraine.
If Spain were to be part, Minister, of these forces or a support effort to try and provide security for Ukraine, what role would Europe require the US to play?
I think we are both allies in Euro-Atlantic security. And the security of Europe is directly at stake in this war in Ukraine. That's very clear. What will be the future of Ukraine? It's also what will be the future of Europe. And we have been together, Europeans and the United States, since the very beginning of this war of aggression of Russia to Ukraine. So what I expect is that this continue in the same path. Both of us being together to make peace and to give security guarantees to Ukraine, to make sure that this is not just a break between two wars, but a real, just and lasting peace, because the security of Europe and therefore the Euro-Atlantic security is at stake.
Minister, I know that the domestic attention in Spain is very much on the wildfires that are taking place there, and Spain enduring one of its worst fire crisis in its history, I am told. Can you give us a kind of update as to when you expect these wildfires to be under control?
This is a terrible situation right now in Spain, with 40 fires that are active in different parts of the country. And I really want to have a thought for those that have lost their lives. The government is doing everything that is in our hand. We have thousands of people deployed fighting against this fire, and I want to thank all those countries, 7 countries so far from the European mechanism of civil assistance that are joining with their capacities to fight against this fire. The president today will be visiting some of those places. Unfortunately, there are many reasons for this, but climate emergency is very much related to this. This is not something that affects only Spain. We see right now several countries in Europe, and every year we have the same type of fire. That's why the president has proposed to all political forces a big state agreement to prevent, to reinforce the capacities, and to do as much as we can against this climate emergency. We need prevention to make sure that this is the last time we see this sort of fires.
Minister, you started the conversation talking about the fact that Spain does not need to increase its defence spending because it can meet the capabilities that are required of it with current amounts of money being deployed. If we start seeing Spain using its military, though, to deal with wildfires and the environmental catastrophe, can we still argue that Spain is spending enough to be able to meet all its commitments, including fighting wildfires, and deliver everything at the same time with the current budget?
We will do it, and we are proving that we will do it. We have a European mechanism. Today, it's Spain that is receiving that help from several European countries, but during many summers in the past, it has been Spain putting its capacities, because we have a big capacity. We are a southern country with high peaks of heat, therefore we have big capacities to fight against fire with aeroplanes and with different equipment that we have been lending it to other countries. So you can be sure that Spain will meet all the targets, both the security targets that are earmarked by NATO. We are a very committed and reliable ally, and we are proving it with a historical deployment in the eastern flank, both with soldiers on the ground, 3,000, but also with equipment of all sorts. And at the same time, we have to make sure that this is the last time we see this type of fire, and that's why we have proposed to all political forces in Spain this big state national agreement to increase the capabilities and to increase the prevention even more than we have been doing it so far.
Minister, thank you very much. Thank you for your time. Jose Alvarez, the Spanish Foreign Affairs Minister. Coming up on the programme, UK 30-year inflation-linked yields hit the highest since 1998. We'll deep dive into what's behind these moves ahead of some key data out for the UK this week. This is Bloomberg.
For Trump to have been, you're never too young to learn AI. That's why he's urging the government for school kids as young as 6 to be taught how to use it.
Within this system, from first grade, they all start with the AI education. They play 4 years, just playing. And then from 5th grade, they start to develop AI by themselves. And STEM and robotics, I see very clearly how Vietnam should be in future. Vietnam just about 100 million people, young people, good education, and latest technology. That's the only way to go. Education not contribute much profit for FPT, but from the country point of view, that's most useful contribution what FPT should do. And today we're thinking about every kids, not in cities like Hanoi or Ho Chi Minh City, but kids in the countryside should got the good education. That's what we're going to do now.
So you're leapfrogging?
Yes, exactly.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest.
Every trading day.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
"49 minutes into the equity market session." Let's call it 50 minutes into the equity market session. As you can see, the picture is exciting, and particularly for the FTSE 100, going nowhere in a hurry. The FTSE 100 is unchanged this morning. You've got a little bit of movement elsewhere. It's largely down to kind of single stock stories that we're watching, but there isn't a clear sense of direction this morning. Defence is a little softer. Maybe that's one theme you can take away. Some of the infrastructure plays maybe getting a little bit more traction, but there isn't a clear catalyst this morning to work with. There are catalysts coming. Stay tuned. They're on their way. Let's talk about a story that we've all been watching quite carefully over the last few weeks. Air Canada's flight attendants are going to stay on strike. This after the country's Labour Board ordered them to go back to work. So this is causing the airline to delay plans to restart flights. The company's CEO, Michael Russo, spoke to Bloomberg about the current situation.
That is one option, is we could go to the courts and seek an injunction, which we may do. I mean, we're obviously very, very disappointed with the actions of the QP leadership team. They're violating law, and it's negatively impacting hundreds of thousands of our customers right now.
Let's talk to Danny Lee about this. Danny, now what?
Well, significantly, the union and Air Canada did hold talks for the first time on Monday since the strike started. And there seems to be a willingness just to see where each side is at. Clearly, for the CEO, Michael Russo of Air Canada, is raising the stakes by waiving this threat of trying to maybe get an injunction to get the 10,000 cabin crew back, back operating their flights, because this is seriously damaging for Air Canada. Over 100,000 passengers a day are being impacted. We also heard 24 hours ago from Air Canada that they would be suspending its guidance for the third quarter and the full year because they just do not have the visibility given the potential costs that this strike has. So there are limited options, frankly, for Air Canada. And given the union has defied the country's Labour Board in getting back to work, there is clearly a willingness, but the airline would want to see some kind of resolution, but things still remain up in the air.
Still up in the air then, appropriately enough, Danny. So it's unclear where this heads next. This coming at a very busy time of year for many airlines, and Air Canada falls into that camp. Underscore for us just the level of disruption that we're seeing as a result of this.
Well, Air Canada is one of the two major airlines in that country, and so by crippling almost half the flights that capacity that is offered, it is pretty damaging for not just Air Canada but for the country's economy as a whole, and that's something that does cause concern for the government in Ottawa. Clearly, there are benefits for other airlines out there who will be cashing in, because when you try to look internationally for seats for flights into Canada, most airlines are full. You have to take maybe 1 or 2 or 3 stops to try and get into Canada at the moment. So there's a headache for travellers out there, wide range of disruption. And yes, we just don't see when there will be a resolution. And clearly for Air Canada to try and restart operations, that could take many, many days with the crews unknowingly when they will get back to work.
Yep. Danny, it's interesting because a lot of people obviously have been trying to go to Canada recently as a result of changes maybe in perceptions of what it's like to take a holiday in the United States. Anna and I can debate this at length, I suspect. Danny Lee, thank you very much indeed, Danny, on the Air Canada story. Let's look to what we are going to be watching for the rest of the day and the rest of the week. Today, a little light on catalysts, but there are a few out there that Valerie Teitel has her eye on.
A few of them, one of them being that the back end of the bond market has not had a streak of a good few days. I mean, we're approaching 5% yields again on the third year. I mean, it could perhaps, right? That is the big argument for how far this equity market rally could go. A back end blow up in the bond market could definitely be something that could spook the equity market. But it's not just been isolated to the U.S. We're also seeing European government bonds shoot to multi-decade highs. On Friday, it was French and German yields. And then yesterday, gilt yields were trading at year-to-date highs in the 30-year yield. And there was almost hardly any catalyst for the weakness in yesterday's session, which was very surprising. Yes, you can talk about, okay, the data has been better than expected. Maybe that's tempting GDP estimates to be revised higher, inflation to be revised higher off the back of that. But this is really complicating things for the chancellor, because we know that not only better growth projections are good for her, are nice for her, but if we get higher yields off the back of that, that just basically undoes it all in one swoop.
It's all right. We can raise property taxes. It's going to be fun.
Yeah, that seems to be where the conversation is heading. Government ministers on various airwaves this morning doing their best to not answer any questions about the speculation in various papers about whether there'll be a change in property taxes. So the gilt yield story sort of ties in with the long end story that we're seeing in lots of different geographies. And we get UK CPI tomorrow, Valerie. I suppose there's a linking thought there.
Well, one of the biggest data prints for Europe this week is UK CPI dropping tomorrow at 7 a.m. Now, the narrative has been one of economic resilience, or better than expected economic data, frankly, from yesterday. Yep. This can be all undone if we see a hotter than expected CPI print tomorrow. We are expected to see services CPI tick up just 0.1% on a year-on-year basis. This comes as the market has really pushed out the likelihood of any Bank of England cuts this year. We're now pricing none.
Services inflation is running at 4.8%. That's what the survey is. These are punchy numbers from the UK.
Punchy numbers, and maybe the Bank of England has already said their response to that, as in that hawkish meeting that they had 2 weeks ago, that they're going to be on hold. But yeah, the rate expectations for rate reductions have been pushed out, but on the backside of that, long end yields are still rising.
Meanwhile, we get closer to the US session, where they'll probably care less about gilt yields and what's going on in the UK dynamics, but a lot about the tech sector today, because a lot of headlines there, Val.
A lot about the tech sector, and a lot of thinking and thoughts. I know Guy has some to share about whether you're more bullish on the AI story because the US government is getting involved, saying that they're going to take the money that they've been given in the CHIPS Act, which is around $11 billion, they want to convert that into an equity stake.
Okay. Not everybody's convinced that this is a good idea. We'll see whether the market responds positively or negatively. So far, positively. We'll see how long that lasts.
Valerie, thank you very much. Bloomberg's Valerie Teitel with a look at some of the macro drivers and a little bit of the tech story as well. That is it for the opening trade. The Pulse is up next. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday, only on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Donald Trump pushes for a bilateral meeting between Putin and Zelensky, with the U.S. and European allies now promising security guarantees for Kyiv. Indian Prime Minister Narendra Modi hails Vladimir Putin as a friend, as his government also moves to bolster relations with China. Plus, a surprise from SoftBank, the Japanese investor has agreed to make a $2 billion investment in Intel, this as the U.S. considers taking a 10% stake in the chip maker. Now, first thing is first, there's, of course, quite a lot going on. A week dominated so far by geopolitics, so we look at the impact on oil. For the moment, it's not much, so let's focus also on Jackson Hole. We're, of course, eagerly awaiting that speech by Jay Powell. S&P futures practically unchanged. The U.S. 10-year is probably the one to watch, 4.3433, and then euro-dollar 116.83. The market's definitely pricing for something in September of a cut, and then another one before the end of the year. Let's also get to the European markets. A lot of the focus, of course, will be on technology. Look, in the U.S., we have Walmart and others reporting this week. It could give us an indication of how tariffs are impacting a lot of these U.S. retailers. The CAC 40 gained some 0.5%. The DAX practically flat. The other stories, of course, Intel and what the U.S. wants to do with it. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Trump says he has pitched a one-on-one meeting with the Russian President, Vladimir Putin, and the Ukrainian leader, Volodymyr Zelensky. Now, that would be followed by a trilateral summit involving all three of them. It comes after his Monday meeting with Zelensky and several European leaders at the White House. Now, anxious to avoid the disastrous shouting match that ruined his last visit, Zelensky repeatedly thanked President Trump for his involvement. The gathering was a win for Western allies who'd flown to Washington in a bid to steer President Trump away from a quick deal with Russia at Ukraine's expense, while security guarantees for Kyiv were the key focus of the meeting.
In a very significant step, President Putin agreed that Russia would accept security guarantees for Ukraine, and this is one of the key points that we need to consider, and we're going to be considering that at the table also, like who will do what, essentially. I'm optimistic that collectively we can reach an agreement that would deter any future aggression against Ukraine. And I think that the European nations are going to take a lot of the burden. We're going to help them, and we're going to make it very secure.
It's important that the United States send a clear signal that it will be among the countries that helps coordinate and participate in security guarantees for Ukraine. I believe this is a big step forward. While I can't yet disclose all the details, the political will and decisions are already in place, and that's what's important.
Well, joining us now is Carl Bildt. He's co-chair of the European Council on Foreign Relations and, of course, former Prime Minister of Sweden. Mr. Bildt, thank you for joining us. What was your main takeaway from what we saw in the White House yesterday?
Well, I think the most important thing that happened was really what did not happen. I mean, the European leaders rushed to Washington after the disaster in Alaska in order to prevent Trump from sort of forcing Zelensky into some sort of dirty deal. That did not happen. That was success. Then, as for the rest, he still seems to be very reluctant to urge a ceasefire of the sort that was the centerpiece of the Western approach up until Alaska. And whether these bilateral meetings that Trump is talking about will materialize remains to be seen. Details on security arrangements, that's good that there was a discussion, but the devil is in the details, so remains to be seen. But it prevented something that could have been even worse.
So, Mr. Bildt, we did spend a lot of the better half of the early part of the week talking about Alaska and how it was a clear win for Vladimir Putin. Is it now less of a win, or is it still a Putin win, but the Europeans at least were united and got a seat at the table?
Well, Alaska is still a win for Putin, because what Putin managed to do in Alaska was, of course, to say to Trump, forget about this ceasefire thing. Prior to that, of course, Trump has said, ceasefire, and if you don't do ceasefire, I take measures. All of that went out through the window, and that win remains, unfortunately. You heard some of the European voices, Merz and Macron, saying yesterday, we need a ceasefire. But Trump doesn't seem to be receptive to that. But what happened yesterday was that he did not pressure Zelensky into making sort of these land swaps that he evidently discussed with Putin. Says land swaps, or whatever you call them, are for Zelensky and Putin to discuss, fair enough. Try to set up a meeting between the two of them, fair enough. Is that going to happen? Unlikely, I would say.
What do you think happens from now until the end of the year? Do we even is there a 15 or even a higher % chance of some kind of truce or peace?
I think likelihood is less than it was before Alaska, and I don't think the meeting yesterday changed that very much, unfortunately.
I mean, I guess there are a couple of things, of course, that Europe wants to focus on. It's working on this trilateral meeting, possibly trying to have a little bit more policy substance on what kind of backing the U.S. would have, and then the third is basically giving up land. What do you think of those three is the most achievable?
Well, I think giving up land is going to be very difficult for Zelensky, particularly the giving up land that Mr. Putin is asking for, the remaining of the Donetsk region. That is really heavily defended areas that the Ukrainians have been defending with great success now for 30 or 32 months or whatever it is by now, that they should give that up. They're well-fortified positions. I think that's extremely unlikely. It's not going to happen. So we can forget about that for the time being. Whether there are other things that can be sorted out in the bilateral meeting, that remains to be seen. But so far, we have seen Mr. Putin very reluctant to engage directly with Mr. Zelensky. They have these talks on a lower level that produces very little. Mr. Putin, of course, prefers to deal with Mr. Trump because he believes that he can get Mr. Trump to agree to certain things, which so far has proved to be correct. So exactly where we are a couple of weeks down the road, we are probably further along when it comes to discussing some sort of security guarantee for the rather uncertain time when the war has ended. And that's not a bad thing.
Carl Bildt, why do you think, I mean, actually, the question is probably, is Vladimir Putin now normalized? Has he come back into international politics because he was uninvited on U.S. soil. And what's the reason President Trump has done this?
Well, I mean, from the Russian point of view, Alaska was a triumph. The Russians they've had this nostalgia for the old days when the Soviet Union and the United States were the two superpowers, and the two of them could have their summit meetings and decide the future of the world. This looked like it was back to the old days, with all of the bombers flying by and honors and whatever. So they're immensely satisfied with the optics of it. And they are satisfied also with the substance, in the sense that it got him off threats if he didn't do a ceasefire. They're probably less satisfied after yesterday, because they had probably expected Trump to put very heavy pressure on Zelensky to do some sort of land deal. It doesn't seem like he did that at all, which is a good thing. So the next step between Moscow and Washington remains to be seen. I understand that sort of J.D. Vance and Marco Rubio are now going to task with setting up that bilateral Zelensky-Putin meeting. The best of luck to the gentleman.
Yeah, Friedrich Merz, I think, says that the Putin-Zelensky talks could take place within 2 weeks. Emmanuel Macron says the trilateral, then with also President Trump, may be held within 3 weeks. I mean, can any concrete action happen with so little time?
Unlikely, I would say. I mean, nothing is to be excluded in the world, but I would not put very many money, if any money at all, on there being a bilateral meeting within 2 weeks and a trilateral meeting within 3 weeks. I think that is still very unlikely.
Mr. Bildt, maybe final question on, we understand, of course, that the Europeans really wanted to make sure that the U.S. promised to underwrite the future of Ukrainian security, and that was central to the discussions yesterday. What do you think will happen in that space?
Yeah, there was evidently some sort of movement. Exactly what it was remains to be seen. They are saying they're going to work further on it, on the details of it in the next few days and weeks. And I think that will be important to find out what that actually is. And it is, of course, long-term very important, when there is an end of the war and some sort of, I don't think it's going to be peace, but end of the fighting. And we resume the process of EU accession and all of that for Ukraine. We need also to help with the security of Ukraine. And the Europeans can do and will do a lot, but there's a need for some sort of US engagement in that. And clearly the Americans opened up for that. That is very important, but exactly what it entails, the devil is in the details, as I said, but exactly what it entails remains to be seen. But work in progress and in the right direction.
Thank you so much. As ever, great to speak to you again. Carl Bildt there, the co-chair of the European Council on Foreign Relations and the former Prime Minister of Sweden. Now, SoftBank has agreed to buy $2 billion worth of Intel stock in a surprise deal to shore up the struggling U.S. chip maker. Meanwhile, Bloomberg has also learned that the Trump administration is in discussions to take a stake of about 10% in the company. Let's get more with our Tom McKenzie. Tom, thank you so much for joining us. So first of all, what's the motive behind, the SoftBank stake?
Yeah, there's a couple of clear takeaways from this news that SoftBank is investing $2 billion in Intel. One is about the SoftBank ecosystem itself. So Masayoshi Son really trying to build out their stakes, his position in terms of the infrastructure that's underpinning this AI revolution. So, of course, they own ARM, which has some role to play. They have investments in NVIDIA, they have investments in TSMC, and now they have investments and will have this investment in Intel. So it's part of that, as Masayoshi Son is trying to get more exposure to the upside that's come through from AI. And so far, that exposure that he's had has been relatively limited. The other key takeaway is that this is a vote of confidence, clearly, for Intel, that has been under pressure because of cost-cutting, because of jobs, because of the fact that they're paying catch-up to NVIDIA when it comes to AI accelerators. But it's also a vote of confidence in the Trump administration strategy, quite frankly, of reshoring a lot of that chip manufacturing capacity back to the US. And Masa and SoftBank were really clear that they believe that that is going to be successful and that this is partly a bet on that story of a US resurgent on the back of chip manufacturing.
And what more do we know about the U.S. government's plans to buy a stake in Intel?
So, of course, Bloomberg had reported last week that they were looking at buying the stake, and now we have more details on how that could form up and how that could shape up. So potentially 10% stake, so the U.S. government would, in that scenario, be the biggest shareholder of Intel. And what you'd be looking at doing, according to our reporting, is potentially changing the investments that Intel has received from the CHIPS Act, the subsidies, into equity holdings. So far, Intel has received about $2.2 billion through that US CHIPS Act. It is on track to receive close to $11 billion, and the idea is that you convert those subsidies into a US government equity holding in Intel. There's a big focus from the Trump administration on the projects they had lined up in Ohio, massive foundries manufacturing chips. Those have been delayed repeatedly because of the cost overrun and the fact they don't have major clients and major customers to buy from those foundries. The Trump administration wants to make sure that those plans go ahead, and this seems to be part of that direction. But it's also a reminder that the Trump administration now is piecing together something of an industrial strategy. They invested in a rare earths mineral company. They're taking 15% of revenues from NVIDIA and AMD in terms of those sales into the Chinese market. So it's part of the bigger picture as well.
Yeah, and it's interesting the fact that, the Intel chief executive was definitely the target of Donald Trump, and then went to the White House to try and pivot him. Tom, thank you so much. Tom McKenzie on the very latest with Intel. Coming up, we talked to Bill Browder, founder and chief executive of Hermitage Capital, on the prospects for a Putin-Zelensky meeting. That's next, and this is Bloomberg.
up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Well, President Trump has called Vladimir Putin to urge him to begin making plans for a summit with the Ukrainian President Volodymyr Zelensky. Now, attention is now firmly on Putin and whether he would agree to direct talks before a possible trilateral meeting to include the United States. Well, my next guest was the largest foreign investor in Russia in the 1990s. He's the author of the best-selling book, Freezing Order, a sequel to Red Notice. He continues his fight for justice after his lawyer, Sergei Magnitsky, was murdered in a Russian prison. Bill Browder, chief executive of Hermitage Capital, joins us now. Bill, thank you, as always, for giving us a little bit of your busy schedule. I know you, know Russia and also Putin quite intimately. How did he turn the situation around to actually have a pretty good week on the international front?
Well, there's this strange affection, affinity, and respect that comes from Donald Trump, and for reasons that almost nobody can understand, Donald Trump does not want to offend Putin. He does not want to punish Putin, and he somehow wants to be friends with him. And Putin has taken advantage of this. And I should point out, he's not the only president that started this way. There was George Bush looked into Putin's eyes and saw his soul. Barack Obama wanted to do a reset, but this one is particularly difficult because Putin is in the middle of a war of aggression, murdering Ukrainians, and so this respect that Trump has for Putin and the deference which he gives him Putin has played it for all it's worth, and Trump had threatened really crippling secondary sanctions on the sale of Russian oil if Putin didn't come to a ceasefire. And I think that was the thing that triggered Putin to come to Alaska. And in Alaska, we don't know what went on behind closed doors, but at the end of that meeting, there were no crippling sanctions, and all of a sudden there was no demand for a ceasefire.
Yeah, and we saw, I thought we saw actually a pretty impressive diplomatic initiative by Europe yesterday, showing up at the White House, trying to support President Zelensky as much as they could. I think Chancellor Merz also asked for a ceasefire. Where are we now? Could we actually see some kind of agreement between Ukraine and Russia, or is this wishful thinking?
There's not going to be any agreement between Ukraine and Russia. One of the things I read this morning was a readout from the Kremlin of the phone call that they had last night between Trump and Putin. And the readout from the Kremlin is totally different than what everyone else is talking about. But there's the idea that there's supposed to be a bilateral meeting between Zelensky and Putin is not what the Kremlin is talking about. The Kremlin is in their readout is saying that it's been agreed that there should be more meetings between the Russian government and the Ukrainian government, which they've already had. And then it went on to say, and in that context, the meeting should be higher level. In no way, shape, or form are they agreeing to a meeting between Putin and Zelensky. And taking a big step back from this whole thing, it's very clear to anyone who knows what Putin is up to that he doesn't want to end this war. And he doesn't want to end the war on all any terms that we've been floating around out there about land swapping or anything like that. What Putin wants to do is a total subjugation of Ukraine. He doesn't want Ukraine to be an independent sovereign country anymore. He doesn't want Ukraine to have a military. He doesn't want Ukraine to have any type of independence, any foreign protection. He wants Ukraine to be part of Russia, and that's been his goal ever since the beginning of this whole terrible war. That continues to be his goal. The one thing you can say about Vladimir Putin is he's very transparent. He hasn't been in any way saying anything other than that. And so for everybody to be talking about security arrangements for Ukraine, we're putting the cart way before the horse because Putin doesn't want to do that. Putin wants this war to continue and he wants to win this war.
So, Bill, a couple of questions on the back of that. Why does Donald Trump say that Vladimir Putin wants peace? And actually, how do you think the fact that Vladimir Putin showed up in Alaska on U.S. soil, how is that playing out back home?
Well, so Putin's meeting in Alaska was the biggest success he could have ever had. First of all, it was symbolically amazing to have the red carpet rolled out on American territory, to have Donald Trump applaud him. That couldn't be better from a symbolic standpoint, but from a substantive standpoint, I believe that his main objective is to continue the war, and he was allowed to continue the war. And his second objective was not to have crippling economic sanctions imposed on his oil industry. And he was somehow able to continue the war, no ceasefire, and without any crippling economic sanctions. And so now he can drag it out and make all sorts of, slight, intimations of peace to Trump so that these negotiations go on into perpetuity, and he can continue the war until he hopes we give up. That's his goal, that's his idea, and that's what he'll continue to do.
So could you see a situation where Donald Trump actually normalizes, I guess, relationships with Russia economically in terms of businesses, but where the bombing of Ukraine continues?
I don't see that happening for one simple reason, which is what we saw yesterday at the White House, which is that it would be so against world opinion, first of all against U.S. opinion, but against world opinion. The fact that you had all these heads of state all showing up at the White House telling Trump, Putin's a bad guy, don't give in to him. That's what the message was. Don't attack Zelensky, be tough on Putin. And Trump is influenced by that. I mean, it was a very flattering thing for Donald Trump to have the entire, important people of the world all converge with like 24 hours notice on the White House to make this point. And his ego was stroked. He was flattered, and he's not going to go against the world so dramatically with everybody all coming in and showing him that deference.
Bill, do you see any progress on Europe seizing the 200 billion euros in Russian central bank assets frozen in Europe to help Ukraine?
Well, I see sort of marginal progress, and it's very important. This is a potential game changer for Ukraine. The United States has stopped funding military aid for Ukraine, and the money needs to come from somewhere. The United Kingdom and most other European countries don't have the money to fill in the gap from where the United States was, and so it's got to come from somewhere. And the economic realities will say that that money should come from Vladimir Putin, and that money is sitting on account. 200 billion is sitting on account at Euroclear in Belgium, and it's sort of the obvious thing. I think the economic realities have to overcome the political hesitation, but I see that coming. I see a lot of movement in that direction, because at the end of the day, money is needed to continue to defend Ukraine, and that's got to be where that money comes from.
Bill, as always, thank you so much. Sir Bill Browder there, Chief Executive of Hermitage Capital. Now let's talk a little bit about the markets. We're joined by Van Ram from our Markets Live team. Van, a lot of the talk this week, of course, is on geopolitics, but what do you make of the currency and bond market reaction to news on Russia and Ukraine?
Morning, Francine. I think that the markets are a bit all over the place. They're a little bit subdued, principally for the reason that your previous guest, Bill Browder, was mentioning. You know, Kremlin seems to be on a completely different page here, and the markets are questioning how far this peace dividend and peace initiative can go. There is still a lot of hoops to jump through before the markets will catch on to the glee. If you look at oil prices, they haven't moved to lower much at all. So the markets seem to be, and equity prices are subdued as well in Europe. And that seems to suggest that the markets are questioning this peace dividend and how far we can get there and how quickly we can get there. So at the moment, the markets are saying, yes, progress has been made in the past 48, 72 hours, but the question marks are still big and large and looming.
So then traders onto the Bank of England. Traders now reckon that the BOE won't be able to cut rates this year. Are they positioned right?
Well, they're both right and wrong, Francine, because they're right because, you know, there is very little room for the Bank of England to be able to cut rates. You know, we've got the July inflation data coming up tomorrow. That is expected to show a print of 3.7% on the headline inflation. Core inflation is likely to hover around 4%. And services inflation is already around 5%. None of those metrics are clearly anywhere near the 2% BOE target. So the markets are saying, look, it will be a policy mistake if they cut rates in November. So they are assigning a very low probability of that event. But what we can't forget that is that the Bank of England, at least quite a few members on the policy committee are dovish leaning, and they carried the weight through in August to ensure a rate cut. And even though the Bank of England thinks that inflation will peak down the line at 4%, they seem to be wanting to cut rates, which will be a policy mistake. And even though, because of that, you know, there's the risk that because of the dovish leanings, it can't be ruled out that they can't cut further. So they're both right and wrong for the reason right because there is no policy room, wrong because the Bank of England may still shoehorn in another rate cut.
Very quickly, but in 20 seconds, German yield curve, pretty steep now. Where do we go from here?
Well, I think that steepness is going to persist for some more time to come because of the Dutch pension fund reform that is re-altering the demand status for swaps, and that swap curve is having an impact on what is happening with the yield curve as well. So that's going to persist in the short term.
Van, as always, thank you so much, Van Ram there. You can find him, of course, on the Bloomberg terminal and on our website. Coming up, we'll discuss where to find investment opportunities in emerging markets amid Trump's trade war and political uncertainty. That's next, and this is Bloomberg.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we don't want to lose you, Emily, in all of this?
Stargate. Put that name down in your books.
What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. Donald Trump pushes for a bilateral meeting between Putin and Zelensky with the U.S. and European allies, now promising security guarantees for Kyiv. Indian Prime Minister Narendra Modi hails Vladimir Putin as a friend as his government also moves to bolster relations with China. Plus, a surprise from SoftBank. The Japanese investor has agreed to make a $2 billion investment in Intel, this as the U.S. considers taking a 10% stake in the chip maker. Now, President Trump says he's called Vladimir Putin to urge him to begin making plans for a summit with Volodymyr Zelensky. It comes after his meeting with the Ukrainian president and several European leaders at the White House on Monday.
I think that we had very good conversation with President Trump.
Very good.
And it really was the best one. Maybe the best one will be in the future.
I think if we play this well, we could end this. And we have to end this. We have to stop the killing. We have to stop the destruction of Ukraine's infrastructure.
Now we are here to work together with you on a just and lasting peace for Ukraine. Stop the killing. This is really our common interest. Stop the killing.
The next steps ahead are the more complicated ones now. The path is open. You opened it last Friday. But now the way is open for complicated negotiations.
Everybody around this table is in favor of peace. And we work very hard, and we've worked very hard during the past few years to have a peace which is a robust and long-standing peace.
Well, joining us now is Oliver Crook in Brussels. Ollie, so what more do we know about the security guarantees for Ukraine?
Yeah, I think that this is kind of the main takeaway that we've got since this meeting that happened with Trump and Putin on Friday and over the weekend, this idea beginning to emerge from a number of Trump's advisors, namely Steve Witkoff, that there would be these sort of Article 5 style guarantees that would in some way be furnished by the United States. They would be part of the security architecture. And I think for European leaders, that is really the thing that they needed to hear. I think they will be very reassured that in their trip to Washington, D.C. yesterday, this is something that was not just a sort of flash of the pan that was mentioned by a few advisors over the weekend. This is something that Donald Trump reiterated. Now, there's still a lot of ambiguity around what the Article 5 style guarantees mean. Does this mean basically a kind of de facto NATO membership for Ukraine without calling it NATO? Would it mean that the United States would enter a military conflict theoretically if ever Ukrainian sovereignty were imposed on again after a peace negotiation? Then there are also a lot of other questions about the idea of troops on the ground. What European nations would be willing to sort of commit them? I think that what the European leaders in Zelensky have learned from dealing with Donald Trump, particularly on the issue of Ukraine, is to not be the problem, do not complicate the situation. So as a consequence, all of these European leaders who showed up in a huge number yesterday in Washington, D.C., showed a very unified front. What, Francine, that paper's over are a lot of very difficult conversations that are going to happen domestically when they get back home. It is all about how the Europeans are going to pay for this potential security guarantee going forward. And of course, many of the German officials that I have spoken to and a number of other European leaders, not everybody is totally convinced about the idea of sending their own military troops within Ukraine that might have to theoretically return fire if Russia were to once again impose on Ukraine. So these are some of the very difficult conversations that are now beginning. But one of the great sort of takeaways from the last couple of days is that there is work being done at the very highest level by the United States and the Europeans to try to hammer out what this Article 5-like structure will actually look like.
Ollie, what is the likelihood of this bilateral meeting between Zelensky and Putin and then the trilateral one involving President Trump?
Yeah, so what we know so far about that is that President Trump spoke to Vladimir Putin after the conversation with European leaders, and I'll just quote from him here what he put out on Truth Social shortly after the meeting. He said that at the conclusion of the meetings, I called President Putin and began arrangements for a meeting at a location to be determined between President Putin and President Zelensky. After these meetings take place, I will have a trilat, and that would be the two presidents plus myself. We're starting to see a little bit of reporting from some agencies across the wire. Reuters saying that meeting could potentially happen in Hungary over the next 2 weeks. I would take all of that with a grain of salt because nobody expected, for example, the Trump and Putin meeting to take place in Alaska. That being said, there were still a number of European leaders that were saying that basically it's impossible to imagine a trilateral meeting and to have these active discussions without a ceasefire. And we should say that ceasefire is not something that is a Trump priority after that meeting with Putin. So these are going to be kind of the things to watch over the next couple of weeks. Could that be the bilat in the next 2 weeks and potentially the trilat the 2 weeks after that? That being said, Francine, we're doing a little bit of guessing because there are a lot of unanswered questions still.
Yeah, many unanswered questions. It was interesting listening to Bill Browder saying that he read also the Kremlin transcript, but had a different version to what we've been told in the West. Ollie, thank you so much. As always, Oliver Crook there in Brussels. Now, the Indian Prime Minister, Narendra Modi, has hailed Vladimir Putin as a friend after discussing bilateral cooperation with the Russian leader. The call comes as Modi's government also moves to bolster relations with China. Now, Modi is due to meet with the Foreign Minister Wang Yi today, as both nations push to normalize relations amid diplomatic tensions with the U.S.
We should sum up confidence to dispel interference, expand cooperation, and to further consolidate the momentum of improvement and development of China-India relations so that while pursuing our respective rejuvenation, we can contribute to each other's success.
Having seen a difficult period in our relationship, Excellency, our two nations now seek to move ahead. This requires a candid and constructive approach from both sides.
Well, for more, let's bring in Sudhi Ranjan Sen, our government reporter in New Delhi. Thank you for joining us. So what can we actually expect from Wang's meeting with Modi later today?
Well, we are not expecting any major announcements from it, but the very messaging of it, the very optics around the meeting is what one is watching out for. Prime Minister Modi is going to China later this month. It is his first visit in 7 years, and therefore just shows the kind of frostiness that was there in the relation in the past few years and how things have really turned around. And it happens amid President Trump threatening penalties on India, slapping India and China both with very high tariffs. Of course, the China tariffs have been held in abeyance. So there is this is happening at a time when there is a rethink perhaps in India as to which way should India forge and go ahead in its foreign relationship. And that is why this meeting with Wang Yi is important, and the meeting with in Beijing, which we expect later this month between Prime Minister Modi and President Xi Jinping.
Sudhi, so Modi also spoke with Vladimir Putin on his recent peace talks with Trump. What do we know about that?
Well, I mean, what we know about that is from the readouts that we have seen and from the briefings that we've got from in the Indian side. Largely discussions were around Putin's discussion in Alaska. He briefed Prime Minister Modi of what all happened, and the two leaders then continued to discuss the bilateral relationship. This is important because it comes at a time when President Trump had threatened India, and we have seen his aides, kind of squarely blaming India for funding Putin's war machine, which India kind of denies very vociferously. So these kind of the call takes place in that background, and India clearly hasn't backed away from its Russia relationship or given any indication that it is willing to, scale down its engagement with Russia.
Sudi, thanks so much. As always, our government reporter there, Sudi Ranjan Sen. Now, joining us now is Giulia Pellegrini, Emerging Markets Portfolio Manager at Allianz Global Investors. Thank you for joining us, Giulia. I mean, there's many questions on India and China, but I mean, how is India actually rechanging geopolitics at the margin, and what does that mean for investment in the country?
Interesting times indeed. I mean, the saying that your enemy's enemy is your friend comes to mind at this time. Obviously, India has to play well because it has invested a lot in developing a strong relationship with Mr. Trump. President Modi himself personally has invested a lot in this, given that he was very close to him during Mr. Trump's first term. So recent news headlines around tariffs on India, up to 50% in case they don't stop buying Russian oil, have come as a real shock to the Indian leadership and to India as a whole. So this attempt to warm up relations with China isn't surprising. India is very much at the center of what we're calling now a multipolar world, and it's likely to continue to engage constructively with both sides. We just heard President Modi calling President Putin. So we think it will continue to, again, engage constructively with all sides. It cannot afford to do otherwise. Half of its exports going to the U.S. will be subject to sanctions otherwise. So a lot more to see here, but we don't expect meaningful, concrete steps taking place in the very short term. So we see a lot of headlines, a lot of uncertainty, but that doesn't mean that India isn't an investable market for us, alongside many of the other emerging markets that we've seen sort of battered by headlines, but there's opportunities on the ground that we're picking up.
So, Julia, I was going to ask you about some of the opportunities. First of all, what asset class in India looks attractive or could be attractive in the coming quarters?
So we've seen interesting moves in the Indian local bond space. Last year, obviously, a lot of interest because of their addition to major emerging market debt indices. Some of that initial excitement has obviously ended by now because that inclusion has occurred. Most recently, we've seen a sell-off in Indian local bonds. They have underperformed most of their emerging market peers, but we think that has now created some value that we could look to get involved in, because at the end of the day, because of these headlines around tariffs and global growth softening, we're likely to see a central bank in India that is grappling with solid growth, but a softening one, inflation well-behaved, and possibly more room to cut than what the market price is in now. So potentially an opportunity to re-engage in the local bond trade there. Mm-hmm. And that is the case for many other emerging markets where we see similar dynamics. Solid fundamentals on one side, central banking officers having the room to reduce rates in the context of global growth and their domestic growth softening. And that creates an opportunity for the local currency trade for us.
Julia, is there anything, I mean, when it comes to India, is there anything, for example, in the equity space? I know there's also a massive consumption gap with many more local retailers offering their own products. I don't know whether this is such a large economy that you could see opportunities in emerging companies.
The Indian economy has traditionally been relatively close to foreign companies and foreign investors. That is changing now. We think, given the space that has been created in the bond market, is probably more interesting for us, given the uncertainty still at the level of the consumer locally, at the level of measures to spur growth and to maintain it at sustained levels. So we prefer to be involved in the local bond space, rather.
Anywhere, when you look at other emerging markets, I mean, you're basically saying that India could be a mirror for other ones. Is it ones that went through structural pain, or where do you see the biggest value?
Well, we're seeing value in a lot of local markets, actually. A lot has occurred. A lot has moved in local markets. We've seen local markets in EM this year delivering nearly 14%. Two-thirds of that value has been delivered by moves in emerging market exchange rates because also of the change in the U.S. exceptionalism narrative, the weak dollar, that has created a lot of tailwind for any EMFX. So a lot of that has run its course. We think there's more to come, but we're slowly shifting into a second half of the year where global growth considerations are taking more of a hold. There's a sense that the global economy will be slowing down, and hence that will have repercussions on local growth prospects as well. So then we go back to a situation where some emerging markets will again have relatively solid fundamentals, but the opportunity to cut rates. So we see those opportunities.
Like which ones in terms of countries?
Brazil, in South Africa, in Mexico as well. So there's plenty of options to diversify. So what we're trying to highlight here is that, yes, there are lots of headlines and lots of upheaval from trade and geopolitics, but the opportunities for active managers to pick out those pockets of values are there. Again, South Africa, not always the easiest country, but you were noting yourself in your program earlier this morning, improvement in the electricity situation, an economy that is overall solid, that has made some fiscal gains, government on national unity that is holding together and doing some reforms, and a central bank that is extremely credible and looking to lower its inflation target. That is meaning a structural reduction in interest rates locally that is very, very appealing for investors like us.
Julia, give me a sense of what happens to dollar dynamics. So if the dollar weakens from here, again, who does it impact in terms of emerging markets?
Well, a weaker dollar is generally a positive news for all emerging markets. That means that, generally speaking, all EMFX will continue to perform well. And that is indeed what we're going to continue to see in our base case. So we will likely remain involved in many of the currencies, again, the rand, the Brazilian real, the Mexican peso, and so on. So these are some of the ones we like the most, but also the Turkish lira, which is a more idiosyncratic case, perhaps. What we're saying is that in the second half of the year, that gets boosted further by the opportunity on the local rate side as well. So an overall very constructive year for emerging markets, and one where we're seeing a lot of opportunities after years of the asset class being a bit in the doldrums.
Julia, thank you so much for joining us. Julia Pellegrini there, Emerging Markets Portfolio Manager at Allianz Global Investors. Now, coming up, oil sliding today as traders weigh the outlook for a ceasefire in Ukraine. We'll discuss that next, and this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Welcome back, everyone. S&P has affirmed its AA plus rating for the U.S., saying tariff revenues will partially offset weaker fiscal revenues from Donald Trump's so-called Big Beautiful Bill. Let's get more from our very own Valerie Teitel. Hi, Valerie.
Hey, good morning, Francine. Maybe not a surprise that they reaffirmed the AA rating, but the reasonings behind it were quite interesting. S&P Ratings calling the tariff revenue meaningful in its statement overnight, saying we expect the meaningful tariff revenue to generally offset the weaker fiscal outcomes from that Big Beautiful Bill that just passed in the Senate earlier this year. Now, this comes at an interesting time because if we look at what's going on in the back end of the bond market, it does look like yields are starting to creep higher, and we're attempting 5% in that 30-year yield. So maybe the bond market isn't necessarily buying for now that these tariff revenues could pay for those tax cuts and spending increases in that Big Beautiful Bill. But over the last 4 days, we're up 10 basis points on the 30-year yield at 4.94. But this phenomenon of yields moving higher in the back end is not just going on in the U.S. We're also seeing it here in Europe. Yesterday, the UK 30-year gilt yield reached the highest since 1998, another new year-to-date high for the back end yields. Germany and French yields as well on Friday. No clear catalyst, but hit a 14-year high for both of those names. So it goes to show that this move in the back end of the bond market is confusing some, but do remember September is a very busy month for issuance, especially in Europe. So perhaps some concession being built into the back end of the bond market. Francine?
Valerie, thanks so much. Valerie Teitel there. Now, oil sliding today as traders weigh the outlook for a ceasefire in Ukraine. President Trump pushing for a summit between Vladimir Putin and Volodymyr Zelensky after a series of high-level talks. Well, joining us now is Al Nightingale, our Europe oil markets editor. Al, thank you. So what's happening with oil right now?
So obviously the traders are watching those negotiations very closely. But I don't know that they're kind of taking a strong view on the outcomes. We've seen so many kind of geopolitical things come and go in the oil market, and traders, when you're looking for real positions and real kind of taking a view, they want to see things that are definitely going to affect supply or definitely going to affect demand. And I don't think either of these negotiations clearly do that. So what we're looking at really right now is a more of an ongoing picture of supply and demand and how people are viewing that. And I think going later into this year, there is an expectation for oversupply, and maybe over, in the past few weeks, we've seen the market starting to lose some steam.
So, Al, talk to us about OPEC Plus. What are we expecting from OPEC Plus in the future? And again, if you look at the price of oil, it could stay in this holding pattern.
Well, that's a really interesting question. For quite some time now, they've obviously been adding supply. They've kind of completed this round of supply increases. The delegates that we've spoken to have said that they could now do anything. They could increase, they could just keep supply the same, or they could actually cut supply in their next kind of meetings. So that creates an uncertainty and kind of puts guardrails around oil. Obviously, if they were to cut supply, then that changes the kind of expectations for supply-demand dynamics. Equally, if we do keep having this sort of weakness in prices, then maybe next year some of the supply expectations will come off if you get less investment in oil. So there are reasons to kind of be bullish and bearish, and that's, I think, why you're seeing that holding pattern that you talked about.
Al, what's the latest on China buying Russian crude oil?
Yeah, China does seem to be buying a bit more Russian crude. If you look at the proportions of the seaborne flows, India is what matters here, and they're very cautious about US sanctions at the moment. They're still buying or being subjected to US sanctions. They're still buying. There is a deadline in a few weeks' time where they could face more aggressive US measures, secondary tariffs. If that were to happen, then India could kind of create a void, and we would have to see what China would do. A lot of people think, it will go somewhere, and that's the nature of the oil market. It goes somewhere. So we have to just see how that plays out and, how it really goes in time. Ultimately, will the US want to risk supply? I don't think so. And that's where you always have to think, will the US be willing to lose supply? Probably not.
So interesting. Al, thank you so much. Alaric Nightingale there with the very latest on oil. Now, Hamas says it has agreed to a truce deal proposed by Qatar and Egypt to pause fighting with Israel in Gaza. A diplomat told Bloomberg that the proposal would see Hamas release half of the hostages it still holds in exchange for the release of Palestinian prisoners and a partial withdrawal of Israeli troops. Now, it's not clear whether Israel has received the proposal or whether it would agree to the terms. In other news, full-year underlying profit at BHP has fallen by more than a quarter to its lowest level since the pandemic. The results from the world's largest miner were broadly in line with expectations and came as prices of BHP's key earners, iron ore and coking coal, coming under pressure from softer Chinese demand.
Everybody's chasing higher standards of living. To feed that growth, to feed those higher standards of living, the reality is the world's going to need more of the commodities that BHP produces. There's more steel needed to build cities, more copper needed not only to electrify the world, but for data centers, so for AI. And so we've tried to orient the BHP portfolio towards those commodities that the world's going to need more of.
Now, as summer temperatures rise, some of London's wealthier residents are looking to install air conditioning units in their homes. However, their plans are often being thwarted by local councils for technical and aesthetic reasons. Well, we're now joined by Olivia Woodgard from Bloomberg Green. Olivia, thank you so much for joining us. I mean, this is one of our most read stories in the terminal today because people are kind of either confused or trying to understand exactly what's blocking the uptake of aircon.
Yeah, so there's a few different things going on. I mean, one of them is that London has a very, it's very well-motivated cooling hierarchy. So councils are basically told prioritise passive measures like, like shading ahead of things like air conditioning because of climate concerns. And another thing is that there's a lot of buildings that have conservation or aesthetic protections. So if you have a building that is deemed to be architecturally very valuable, it's difficult really to do a lot of things to it. So a lot of people are finding that they're applying and they're being told either you have to jump through all these hoops and it takes a long time, or you're sort of being denied altogether.
Yeah, so why are Londoners finding overheating at home to be such a problem?
I mean, London has the same issue that a lot of cities in the Northern Hemisphere have.
Big cities, yeah.
Yeah, exactly. And it's it's not well adapted for climate change. So, there's this really interesting mix of building stock. Some of it is Victorian homes that have these kind of big floor-to-ceiling windows. In some cases, you might have newer build properties that actually what's happened is they're very well insulated, but there hasn't been a lot of thought given to ventilation. And as temperatures rise because of climate change, especially overnight, people are finding that it's actually very uncomfortable.
There are, I imagine, serious health implications for overheating homes.
Yeah, absolutely, and especially at night. So what you often find is that if you have several days of a heat wave, people are not able to recover at night. They're still suffering. They're still overheating. It actually accentuates a lot of those long-term health problems and more acute health problems that you get as a result of heat. So that's stress on the heart, stress on the respiratory system, and it can actually be a very serious health risk.
So, Olivia, I mean, new housing is being built without aircon. What's taking so long to change regulation?
Well, so like I say, a lot of it is actually around it's prioritising more passive measures. So the planning rules actually say that housing developers should be prioritising things like smaller windows and shading, which is very well intentioned. It's air conditioning. It puts a lot of strain on the grid. It's historically been not favoured because of the carbon implications. But actually, there are calls now for some of that to be changed because we are seeing this really acute heating and overheating risk.
So, Olivia, is policy around air conditioning changing? Is it going to change in the foreseeable future?
Yeah, so there have actually been a couple of changes. Well, there's been one that's already happened this year. So there's something called permitted development, which is where there are certain changes you can make to your home without having to ask for permission. And actually, the government has added air conditioning units that can both heat and cool to that rule earlier this year. That could actually have arguably some climate benefits because people maybe then aren't using their gas boilers in the winter as much. They're using their air conditioning unit to heat. The other thing that might happen is there's a subsidy program for heat pumps. So an air conditioner is really just a form of heat pump. And the government is currently considering allowing people to get that subsidy, some level of subsidy for a heat pump that can both heat and cool as well.
All right, Olivia, thanks so much. Olivia Woodgard there on aircon in London. Now, quickly, a lot going on, of course, with Intel, the Trump administration in discussion to take a stake of about 10% of Intel by converting grants made under the U.S. Chips and Science Act into equity. The other story is, of course, SoftBank seeing a potential for a turnaround at Intel, with the government valuing the company's manufacturing prowess and actually putting quite a lot of money in Intel. Up next, Bloomberg Brief. They'll also talk about Jay Powell and Jackson Hole. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that three-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know this Tuesday. More talks. President Trump calls for a meeting between Presidents Putin and Zelensky and a trilateral with himself. The big Intel bet. The Trump administration weighs a 10% stake. SoftBank buys a surprise $2 billion worth of shares. And playing for time, stocks go nowhere fast around all-time highs ahead of retail earnings and Jackson Hole. We are still going nowhere this morning. As a matter of fact, yesterday the S&P ended the session down 0.01%. We are so close to all-time highs, but maybe why would you take on risk? More earnings, Jackson Hole, do we get a Fed tonal shift? So both the S&P and NASDAQ, little change. Russell underperforms after an outperformance yesterday. Also yesterday, you had the entirety of the curve higher. We're little changed yet again this morning. Your 2-year yield, that is slightly lower, but the 10-year yield at 4.33, 30-year yield at 4.93. We also had another poor auction in Germany, so you really are starting to feel some of the tension on the long end of the curve. Let's look at some of the stocks moving in the pre-market, though. With that is Valerie. Hey, Val. Good morning, and Danny, let's start with Intel. Surprise move by SoftBank to invest $2 billion in an equity stake in the company. We're seeing Intel shares rise over 6.5% in pre-market trade. This comes a day after the U.S. announced they wanted to convert that CHIP Act funding into a 10% equity stake. And Intel now has risen over 25% since the CEO met with Donald Trump last Monday. Let's move on to earnings. Palo Alto, this is the cybersecurity software firm. Some bullish forecasts when it comes to revenue for next year. We're seeing those shares jump 5.5% in pre-market trade. They say demand for their AI-enabled software security systems is looking strong. And lastly, let's end on drones. Geopolitics front and center here yet again. The FT reporting that the Ukraine and the U.S. might enter in a $50 billion deal to produce Ukraine drones. We're seeing the likes of A-Eagle Aero Systems up over 2%. Many of the drone stocks traded positively into the close after this report. Danny.
Valerie, thank you very much. And in some of the movements in Ukraine and Russia and peace talks, we're seeing oil come lower this morning by about 1%. Now, in this hour, it's conversations you don't want to miss. Sam Linton-Brown of BNP Paribas will join us shortly to discuss the steepening yield curve, and we'll catch up with Keith Lerner of Truist later this hour on an equity market hovering around all-time highs. Now, bonds, as I mentioned, bonds sold off across the curve yesterday. And with that, the gap between shorter and longer dated U.S. borrowing costs has been widening. The 530s yield curve has now reached its steepest level since October of 2021. Joining us now is Sam Linton-Brown, head of global macro strategy at BNP Paribas. Sam, wonderful to see you this morning. And look, it's a long end that's been under pressure. When you look at this, how much of it is about inflation concerns, deficit concerns, versus more technical factors like changes to Dutch pension schemes that have been pressuring the long end?
It's all of the above. I think in the US, it's predominantly a fiscal and inflation story. But in Europe, while it's also a fiscal story, to a lesser extent, it's an inflation story. And the reform you mentioned that I certainly like to talk about in the Netherlands is a key driver. Perhaps if we first address the US, though. So for the US, on the fiscal side, an interesting point here, I think, to flag is the monthly budget numbers that are coming out actually look a bit better than the market was expecting. So we had data, for example, for the end of July. It shows that the US deficit is running at a lower run rate than last year, 4% lower. If we think about what that means as well from an issuance perspective, we heard from the Treasury, from Treasury Secretary Scott Bessent, they're planning to fund any incremental financing requirements they have through bills, not through bonds. So our view, a little bit contrary to consensus here, is that long-end bonds in the US could actually outperform versus swaps.
Long-end bonds could outperform. Sam, that's something considering so many people have been terrified about touching the long end of this curve. What is your timeline for that, especially if there are concerns that we get a shift to a more dovish Fed that pressures further the long end, if there are inflationary concerns alongside that?
It's a crucial risk that if the market begins to price less inflation credibility from the Fed, that we'll see that permeate across the curve. To some extent, that's been playing out. But when we look at inflation break-evens in the US, while the front end has repriced higher, that's predominantly a reflection of the market's expectation that tariffs will drive prices up. If one looks at, for example, 30-year break-evens in the US, they're at a level that effectively prices the Fed hitting its inflation target on average over the next 30 years. So it is a key risk. I think it's an important risk that if the market gets more concerned on the Fed, if there is perceptions around political interference getting embedded into inflation expectation markets, that the long end in the US will certainly be under pressure.
Sam, can we just sit on the Dutch pension reform for a moment? Because I know you've been doing a lot of work on that, not even insofar as it's affecting European markets, but we've seen other foreign tails wag the American dog, be it concerns of fiscal in Japan impacting the US. How much of what's happening in Europe right now in the Netherlands, how much of that is slightly filtering in to American bonds too?
I don't think it's having a big impact. I think the US is the story that's predominantly driving the rest of the world rather than the other way around. And perhaps to a lesser extent, Japan, as you mentioned, which is an important market today. We had again some weakness in the long end of the curve following a weak 20-year bond auction. That's also contributing. For Europe, the story here is that the curve is quite flat compared to other markets. So at the start of this year, the long end of the Euro swaps curve, for example, 30-year compared to 10-year was actually inverted. That's very different, for example, to Japan, to the UK, or even to the US. That inversion has now sort of abated. The market trades between 20 and 25 bips positive in 10s, 30s. But the key point we think from here is that we're going to see a significant further steepening in the Euro swaps curve.
Meanwhile, Sam, we are at the week of Jackson Hole. In Jackson Hole's past, it's been big policy pronouncements, be it 2022, the Payne speech, or last year, the time has come to adjust. For Powell this time around, do you see any reason for him to either endorse or push back against current market pricing of cuts?
It's very tricky for the Fed at the moment, and in particular for Powell. The way I'd frame it is that the Fed at the moment, our view is it's bimodal. We're either in a scenario where the employment data rebounds somewhat. Hiring in the payroll print that we get on the 5th of September is solid. The unemployment rate doesn't rise. If we're in that state of the world, especially given the PPI data that we had last week, we think this is a Fed that's going to be cautious to cut rates. And that's the central case that we have here at BNP Paribas. That's been our view since November 2014. No Fed rate cuts in 2025. The other scenario, though, and it's a scenario where we're very attuned to the risks, where we acknowledge that it's plausible, is the employment data is weak, the labor market's deteriorating faster than we anticipate. If that's the case, the Fed's going to cut. And it's going to cut very quickly, and it can cut by a lot. Potentially, it could cut 150 basis points, 3 consecutive 50-bip cuts this year. And that's because if the labor market's weakening, the Fed is much less concerned about the increase in prices that's going to come from tariffs, because that increase is going to be one-off. It's not going to be sustained. So if the labor market is weak, that's what the Fed will react to. They'll cut a lot. Our central case is the labor market will hold up okay, and therefore the Fed's not going to be cutting.
We might not know the answer to that, Sam, for some time, though, and we certainly won't know the answer to that this week during Jackson Hole. But if you look at just the FOMC, of course, you have Bowman and Waller, who've been leaning more dovish, but it's not just them. It's Cook, Musalim, and Daly have all shifted a lot of their speech to skew more dovish, too. If we have a Powell who is a consensus-building Fed chair, which we know he has been, does he have any choice but to also lean more dovish in what he talks about this week?
It's certainly possible. On the basis of the reaction function that Powell laid out at the last FOMC meeting, from what they've seen so far, they shouldn't be cutting rates. He premised the reaction function on the unemployment rate and core inflation. The unemployment rate's gone up, but it's still below a level the Fed see as the non-accelerating rate of wages for unemployment, the sort of the neutral level. And it's still well below where the Fed project it to be at the end of this year, which is 4.5%. So on the basis of the Fed's reaction function, they should not be cutting rates, even given the data we've had over the past 3 weeks. The question is, and I think it's the right question, is if you have a lack of consensus on the Fed, given all of the pressure, is the easiest move at this juncture to do what's sort of somewhat risk mitigating, delivers on that consensus, and therefore delivers a 25-bip cut in September. I think that if Powell is to do that, we probably should see some type of remessaging of the Fed's reaction function when he speaks at 3 p.m. London time this Friday.
Well, we'll also get Fed minutes tomorrow, so that also might be instructive for the split happening at the FOMC. Sam, so wonderful to start our morning with you. Thank you for joining us, Sam Linton-Brown of BNP Paribas. We're also going to be hearing from Fed Governor Michelle Bowman. That is a conversation you do not want to miss. It'll take place at 10 a.m. in New York, 3 p.m. if you are in London. Now let's get you some other top stories that are trending on the terminal this morning. Sources say that the Trump administration is in discussions to take a stake of about 10% in Intel. The government is considering a potential investment that would involve converting some or all of the company's chips from the U.S. CHIPS Act into equity. Grants, rather, I should say, into the CHIPS Act. A White House spokesman declined to comment on the specifics of the discussion. And more on Intel. SoftBank agreed to buy $2 billion worth of its stock. The Japanese company has been trying to become a central player in AI, but has largely been a bystander. SoftBank's move delivers a strong vote of confidence in Intel as it struggles to remain relevant in the AI space. Elsewhere in tech, Apple is expanding iPhone production in India at 5 factories, trying to lessen its dependence on China for U.S.-bound models. Sources say the company is producing all 4 iPhone 17 models in India ahead of their debut next month. It's the first time that all new variants will be shipped from the country. Coming up, President Trump pushes for a Zelensky-Putin summit. We're going to have more on that and security guarantees for Ukraine. That's coming up next on Your Brief.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. This week, Bloomberg is live at the Jackson Hole Economic Symposium, bringing you news and interviews with Fed leaders and other economic experts. Tune in for continuing coverage leading up to a special episode of Surveillance, Friday at 9 a.m.
We need to stop this war, to stop Russia, and we need support American and European partners. We will do our best for this.
If everything works out well today, we'll have a trilat, and I think there will be a reasonable chance of ending the war when we do that.
The coalition of willing countries, that's 30 countries already working together on security guarantees, will now work with the US on those guarantees.
My hope is that the United States do the most possible, because that's what will allow us to alleviate the burden on Europe, and that the United States also confirm its commitments, because that was a big question mark.
Presidents Trump, Zelensky, Macron, and Prime Minister Starmer speaking after yesterday's summit in Washington, D.C. Bloomberg reporting earlier this morning that Europe and the U.S. are now working on how to guarantee security for Ukraine. For more, let's bring in Bloomberg's chief European correspondent, Oliver Crook. Oliver, what appears to be the outcome of yesterday's meeting?
Yeah, Danny, when we sort of step back and think about kind of what the Europeans left with, how they can feel about the meeting that they held in the White House yesterday, I think that reasonably they can say that they had a reasonably good meeting with Donald Trump. It went fairly well, particularly compared to the last time, obviously, that Zelensky was in the Oval Office, which was, a catastrophe by basically any sort of measure. I think what they wanted to make progress were on a couple of topics. The question of ceasefire, that is the one, but it was probably the weakest. Trump has really distanced himself from an idea of a ceasefire, something that Trump originally posited and really was pushing very hard. That is an idea that he has basically since abandoned since his meeting with Putin. On the question of Article 5 and security guarantees, to me, this is the most significant outcome over the last couple of days, something that basically was being touted by many of the Trump advisors, including Ambassador Witkoff, and it's something that Trump himself sort of confirmed yesterday. Again, it is still very unclear what this means. Does this mean that the United States would effectively come to the aid of Ukraine militarily if ever its sovereignty were imposed on again after a peace agreement with Russia? That is basically de facto NATO membership. It's hard to imagine for the Russians signing on to that in any kind of negotiation. What I think is interesting, though, is for the Europeans, they leave this sort of capital of Washington, D.C. with this kind of victory. They've presented an extremely unified front to Donald Trump. Danny, what that papers over are some very difficult discussions that need to happen back home now for these European leaders. They need to, A, figure out how they are going to pay for all of this architecture, because we know that Donald Trump in the United States has no interest in financing it. And the second question is, are they willing, as sovereign nations, to put their own military personnel in Ukraine, theoretically, as peacekeeping operations that could, at some point, potentially have to return fire on Russian troops? These are some of the very difficult discussions that they need to have. They put that unified front to Donald Trump because Donald Trump does not want to complicate matters with the Europeans, but they need to sell this to their domestic audience, and that's what they're on their way back to do now as they develop what this architecture will actually look like.
So you have Europe presenting a united front. But Oliver, where do the gaps still remain? You mentioned some of it with the security guarantees, but between Ukraine and Russia, if we are to get something like a bilateral or a trilateral, how much closer does it seem like we might be nearing something that looks like peace or an agreement?
Yeah, so I think it's very hard to tell, Danny. I think that one of the other takeaways from this meeting yesterday, and I think that the Europeans and the Ukrainians can be pleased about, is that there did not seem to be a lot of pressure from Donald Trump, at least publicly, on the subject of giving up territory. He kept repeating and said several times that that is a Ukrainian decision at the end of the day. So that is something that will come as a relief to many of the watchers, including the Ukrainians. There is a lot of question about whether any progress can be made without a ceasefire. We had Emmanuel Macron and Friedrich Merz both pushing this idea that basically you can't have any negotiations, make any progress without a ceasefire taking place. And that, for the moment, is really off the tables. In terms of what we're looking ahead to, Danny, this is what we got from Donald Trump on Truth Social after the conclusion of the meeting. He says that after the meeting, I called President Putin and began arrangements for a meeting at a location to be determined between President Putin and President Zelensky. After that meeting takes place, we will have a trilat, which would be the two presidents plus myself. So again, the details are still pretty sketchy on this. I think the hope from the White House is to get the bilat meeting in the next 2 weeks and then potentially a trilat in the 2 weeks after that. But again, Danny, much of this still seems to still up in the air as they sort of hone in on what the potential dates could be for this.
Oliver, this conversation isn't ending anytime soon. Thank you so much for joining us this morning. Bloomberg's Oliver Crook. And should just point out, as we've had those discussions and that push for peace, we are looking at weaker oil prices today, both Brent and WTI down about 1%. Now, over in India, Prime Minister Narendra Modi has moved to ingratiate himself with President Putin, calling him, quote, my friend in his post on X. Those moves have come after the U.S. has put pressure on India to stop buying Russian oil. For more, we are joined by Bloomberg's Indian government reporter, Sudhi Ranjasen in New Delhi. Sudhi, great to see you this morning. And not only is it this post from Modi, we also have China's Foreign Ministry Minister Wang Yi going to India. How significant might that meeting be between the two?
Well, it's a very, very significant meeting. And you know, there have been a couple of meetings in the last couple of hours, starting yesterday, when China's Foreign Minister Wang Yi met India's Foreign Minister Subramaniam Jaishankar. A short while ago, he met India's National Security Advisor Ajit Doval. And the last meeting with the Prime Minister is to happen in a couple of hours from now. Very significant meetings from at least, you know, what we are getting to hear. Both sides are kind of saying they want to get the relationship at a level where both countries can work together, both expressing a deep interest in better relationship. Now, that is a big movement. India and China, for a brief, to give a brief background, India and China did have a very, very, you know, tense relationship for the last 5 years following a border standoff which left soldiers dead. Now things to be turning the other way around, and it happens at a time when India-US relationship is tense and under strain, and India has been criticized by the United States for buying Russian oil. So it is very important. And going forward, Prime Minister Modi will be in China, his first visit in 7 years, and he will be meeting his Chinese counterpart, President Xi Jinping, there.
You mentioned the tensions with the U.S., Sudhi. To what degree is this just an outright rejection? Is this Modi and India saying, America, we don't need you, and we're looking elsewhere?
No, I won't put it like that, because there are too many things at stake between India and the United States. Relationship may have soured, may be a little difficult right now, but doesn't look like, at least from the reporting that we have done, from the briefings that we have got here in New Delhi and my colleagues back in Washington, doesn't seem that both sides are willing to write off the relationship. Rather, both sides are looking at, you know, this is a difficult patch, how to get over it. However, having said that, India is looking out for alternatives. India is looking at how to boost its economy. And that is where China and Russia come in.
All right, Sudhi, thank you very much for joining us this morning on that. That is Sudhi Ranjasen on the latest with India and China. Now, coming up, speaking of China, NVIDIA prepares a new chip specifically for the country. We're going to have more of that in your front page news. That's coming up next. Stay with us.
applications have been received positively both in Kenya and UAE, and we are optimistic that we should be able to open the office in the fourth quarter. We think the Middle East have deep capital sources. It has strong logistics for trade, and it is a strong center for investment. And we are seeing increasingly the global GDP is increasingly becoming overweight in Asia and Middle East. So that linkage with the middle income segments growing in India and China, they will provide a very strong market.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Welcome back to your brief. I'm Danny Berger in New York. Let's take a look at the front pages, what's making headlines on the major publications. First up, the Wall Street Journal and most newspapers leading with this, the meeting between President Zelensky and President Trump. Trump is pushing Zelensky to meet with Putin first before a potential trilateral summit. Next up, Reuters reporting that NVIDIA is developing an AI chip specifically for China. It would be called the B30A and be more powerful than the H20 model. It aims to deliver samples to China clients for testing as early as next month. And on the New York Times, sources say that Hamas has accepted a new ceasefire proposal for Gaza put forward by Qatar and Egypt. The plan would see the release of Israeli hostages and Palestinian prisoners. It was unclear, though, whether Israeli Prime Minister Benjamin Netanyahu would accept the proposal. Just want to bring you some breaking lines. Air Canada flight attendants had been on a strike. Air Canada flight attendants saying that that strike has ended. They had been seeking higher pay and compensation for periods when the plane isn't in motion. But again, the flight attendants there saying that the strike has ended. If we have any more details, we'll bring that to you. You're watching Bloomberg Brief.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think The question is, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know this Tuesday. More talks. President Trump calls for meetings between Presidents Putin and Zelensky and an eventual trilateral to include himself. The big Intel bet. The Trump administration weighs a 10% stake. SoftBank buys a surprise $2 billion worth of shares. And playing for time, stocks go nowhere fast, around all-time highs, ahead of retail earnings and Jackson Hole. Yesterday, it was a second consecutive day where the S&P narrowly loses ground, and emphasis on narrowly because what you're seeing this morning is basically what you had yesterday, a little change for the S&P and NASDAQ. Russell 2000 underperforms after outperformance for the small caps yesterday. For this bond market, it was yields higher across the curve yesterday. Taking a break from that this morning, but again, little change, maybe lingering concerns of inflation, but also between Jackson Hole, the wheat bond auction in Japan this morning. Why would you really take any risks at this moment? Should also flag that oil is down by about 1% on talks between Ukraine, the U.S., and the rest of Europe over Russia. Let's get some stocks that are moving in the pre-market, though. With that is Valerie Teitel. Hey, Val.
Good morning, Danny. Let's start with Intel. The stock up over 6% in pre-market trade. This comes after a surprise announcement by SoftBank. They'll be investing $2 billion on Intel's revival. And also a day after we heard news that the government wants to convert that CHIP Act funding into a 10% equity stake in Intel. The stock has now risen 25% if you take this move into account since the CEO sat down with Trump last Monday at the White House. Moving on to earnings, Palo Alto, this is the security software firm, up 5.6% in pre-market trade. Danny, they raised their revenue guidance for 2026 off the back of strong demand for its AI-enabled security products. And lastly, ending a bit on geopolitics, the FT reporting that Ukraine and U.S. are looking at a $50 billion deal to invest in drone technology. Ukraine produced drones, but it's still boosting the likes of drone stocks here in the U.S. We've got Eagle, Aero Systems up over 2% in the pre-market, and many other of the drone stocks are in the green this morning. Danny.
Valerie, excellent work this morning. Thank you for that roundup, Valerie Teitel there. Elsewhere, stocks are hovering just below record highs. Keith Lerner of Truist weighs in, writing, quote, "The bull market uptrend continues to deserve the benefit of the doubt, even while we still expect a choppier near-term environment and digestion period." I'm pleased to say that Keith joins us now. He's co-CIO and chief market strategist at Truist. Keith, thanks for joining us. Okay, stocks near all-time highs, credit spreads around the tightest since 1998. What gives you the confidence that we can continue to push higher?
Yeah, well, great to be with you, Danny. I mean, what you just talked about, like credit spreads being really tight, markets around all-time highs, that tells you that expectations are higher, so that's maybe the risk. But our ultimate theme, I mean, as we think about a little bit longer term than just the next week, when we think about the next several months, I mean, the key driver of this bull market has been earnings. And if you look at markets at all-time highs, earnings or forward earning estimates for the S&P are at all-time highs. Now, a lot of that is driven by tech, like what I call the big T, technology over tariffs, technology, communication services. But I will say more recently, what we've seen that borne out to small caps, the equal weight index as well. So I think the key, especially where valuations are today, will remain earnings.
When you say it broadens out to the small caps, Keith, is that because of what? The economic environment cuts? Or are you talking about AI improvements and productivity moving out to other companies beyond the big T tech?
Yeah, well, I think, I guess more directly, we're just seeing the forward earning estimates for small caps start to move higher. And then when we look under the hood and say what's driving that, that is partly actually small cap tech, but there's also leverage with financials and industrial. So I think also, getting through this one big beautiful bill, there's some offsets in there that actually help some of the small cap companies as well as far as lower tax rates, capital spending incentives as well. So I think that's why we're seeing it. The stronger trends are still with the large caps in tech and communications. That's where we're still overweight. But it is notable for the first time in about a year that we're actually seeing some better trends beyond just the growth sectors.
A lot of people, and Keith, this has been talked about to death, so forgive me for doing this, but I always think it's important to come back to, is the concentration of this market, the top 10 contributing to about 60% of the gains since the market low, just how tech-heavy this index has become. And over again, examples are brought back to the dot-com bubble. Keith, why is this time different?
I don't know that it's different per se, but here's a stat that's important. I think will be helpful. When you look at the technology sector on a year-over-year basis, it's up about 27-28%. When we look back over the last 2 decades or coming out of that technology bubble, the real issue or red alert is when it's up 100% year-over-year. So we're not even there. The other side is the tech side has the strongest earning trends of any sector. Even look at this last earnings season. We talked about how over 80% of companies are beating earnings for the S&P. Over 90% of technology companies are beating. Now, listen, there's a lot of discussion about how these companies are moving from cap light to a little bit cap heavier with all the capital spending. So that's something to watch. But right now, the earning trends are moving at a faster pace than the overall market. As long as that continues, we're going to stick with that sector overweight. If that changes, then we'll change our tune. And the valuations, even though high, are a lot different than when it was back in the technology bubble period.
But Keith, when you see things like Bitcoin and other cryptos at all-time highs, or even we learned yesterday that Chamath Palihapitiya is coming back with another SPAC into this market, is it fair to say that there is froth in some corners of this market?
Certainly. There's certainly pockets. And listen, I don't know that sentiment's at extreme, but there are pockets, as you mentioned, where you see speculation and you're even seeing crypto come off a little bit on the margin. So again, if you say, hey, what's the biggest risk on a short term, is that after we've moved up, people are feeling pretty good. And that bar for positive surprises is pretty high as we go into this Jackson Hole meeting. But as I step back and I think about the next 6 to 12 months, what's going to be the key factor? I think it will be, does the economy move forward? Do earnings start continue to make new highs, especially given where valuations are? So yeah, a little bit of froth, but not enough, not nearly the extreme that we saw, for example, back during the technology bubble or even back in 2021.
In terms of drivers, Keith, you've mentioned the one big beautiful bill, you've mentioned tech, you've mentioned earnings. Nowhere in there has been tariffs. If we had this conversation in early April, we would have said that would have been the main factor driving all markets. Does it come back at any point as a driver, or do we have the certainty corporates are able to move through it and adapt, and we can forget about tariffs?
I don't think we'll move completely through it, but I think what happens is market becomes very myopic at different times. And at one point, we were thinking tariffs were the only thing that mattered, or this week's Jackson Hole meeting is the only thing that matters. And it still matters, but it's not the only thing that matters. The other thing that, going back to your point, companies are adapted. And what we're also seeing is relative to those effective rates, there's a lot of carve-outs. So the actual amount of tariffs coming through is somewhat less relative to those extreme rates. And I think, as you mentioned, we've had corporations adjust during an inflation shock, the fastest interest rate hikes, since the 80s, supply chain disruptions, and each time our companies have been able to adapt. So I think they deserve the benefit of the doubt. Are we going to get some broken glass in the China shop? Probably, but again, I think at this point, the market still at least deserves that benefit of the doubt.
Keith, how are you thinking about American involvement in corporate America? We had overnight Bloomberg reporting that the Trump administration was looking at taking a 10% stake in Intel. SoftBank also seemingly buying some Intel stock as part of this push. There are more links, whether it be Trump posting on Truth Social about various CEOs or the U.S. government buying stakes. How do you think about these things?
Yeah, it's something relatively new. So I mean, at the end of the day, when there's all this news, what we tend to try to do is look back at things like relative earnings momentum, relative valuations, and going back to your question on tariffs. I mean, this is kind of a similar, picking winners and losers. The government's kind of stepping in more. So I don't know that there's a big shift in our overall strategy, but historically, the capital markets has done a pretty good job of picking those winners and losers. So if there's going to be government support and more in these strategic areas, it's just something we have to become more accustomed to. But we're going to still focus on those fundamental trends to figure out when to overweight or underweight. But maybe there's some less downside in some of these areas. But then the question becomes, are these companies focused on where they want to focus or where the government wants to focus, and where's the profitability? So it all roads lead back to profitability in our mind as we make investment decisions.
Hey, Keith, it is always a joy to catch up with you. Thank you for joining so early this morning. We always appreciate it. Keith Lerner of Truist. By the way, in terms of conversations you don't want to miss today, Fed Governor Michelle Bowman will be joining the team at 10 a.m. Eastern. Stay with Bloomberg for that conversation. First, though, let's get you some other top trending stories on the terminal this morning. President Donald Trump has widened steel and aluminum tariffs to include more than 400 consumer items. The new list was posted on Friday and includes items like motorcycles, baby booster seats, tableware, and personal care products that come in metal containers or packaging. Indian Prime Minister Modi has hailed Russian President Putin as a friend while his government moved to bolster relations with China. It's another sign that the country is tilting away from the U.S. in the face of President Trump's tariff threats. The comments come ahead of a meeting between Modi and Chinese Foreign Minister Wang Yi. And Chinese toy maker Pop Mart posted a revenue increase of 204% year-on-year in the first half of 2025. It saw revenue close to $2 billion. Net income jumped nearly 400%, boosted by global demand for, you guessed it, its hugely popular Labubu dolls. The Beijing-based company is racing ahead with its global expansion plans. Coming up, Europe and the U.S. get right to work on Ukraine's security. We're going to have an update on that coming up next on your brief. This is Bloomberg.
You missed it on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
We published a story recently about the explosion of robotic companies and innovation in China. I think we said there's something like 50 or 60 robotic startups in China. Are we behind, and should we be concerned about that?
I think as far as the state of innovation, no. Most of those robots aren't built for work, for the things that, which is the entry point for these robots today. They can do some interesting things. A lot of times it's backflips or making coffee or something, but not really useful work. These robots can pick up to 50 pounds on our next generation. So they're great for the education of robotics, getting people interested. But as far as humanoids, they've got to check that safety box before they can come into any of the facilities here. And that's a big bar that we haven't seen much of out of the Chinese robots.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
only on Bloomberg. Context changes everything.
We need to stop this war, to stop Russia, and we need support American and European partners. We will do our best for this.
If everything works out well today, we'll have a trilat, and I think there will be a reasonable chance of ending the war when we do that.
The coalition of willing countries, that's 30 countries already working together on security guarantees, will now work with the US on those guarantees.
My hope is that the United States do the most possible, because that's what will allow us to alleviate the burden on Europe, and that the United States also confirm its commitments, because that was a big question mark.
Leaders from the White House and Europe speaking after the D.C. summit on Ukraine yesterday. Following that meeting, Europe and the U.S. are said to be working immediately on how to guarantee security for Ukraine. Joining us now is Bloomberg's Brussels bureau chief, Suzanne Lynch. Suzanne, to what degree does this seem to be marking the start of more serious talks and a prospect for peace?
Yeah, I think we are already now in the next phase of this. European leaders were relatively happy with how Monday's meeting went at the White House. But now the real work begins in terms of how to flesh this out. How would security guarantees work for Ukraine? So as we've been reporting this morning, that work is already starting between officials from the US and Europe, probably most likely military and intelligence officials, to see how this would work. And one of the most crucial aspects of this, and the key question, is whether European or allied NATO troops would be stationed in Ukraine in some way to try and help Ukraine bolster its security. There appears to be mixed views about this. Some countries are more keen on this than others. And of course, we have the big question of whether the United States would commit any military support to this.
So where do some of the gaps still exist in Europe specifically, Suzanne? They came to Trump with a united front. What happens as they go home and talk to their constituents?
Well, today, in just about an hour or so, all EU leaders, that's the prime ministers from all the 27 EU countries, are going to hold a virtual meeting, and they're going to be briefed by the 5 or 6 European leaders that were at that meeting yesterday with Donald Trump. They're going to get a debrief of that meeting, and this is going to, I suppose, be the first time that the EU gets together and sees, right, takes the temperature now, what's next for Europe? I mean, they were extremely worried that Europe and Zelensky was excluded from this process in the last few weeks. Yesterday was definitely a win that the Europeans are back at the table. But now, of course, it's coming back to the key question, which is whether the United States is prepared to give a security guarantee of some kind. Now, Donald Trump has appeared to shift on this. He has suggested that they would, but what form that would take is another matter. We've also got some countries like Britain, France, who seem to be more positive about the possibility of sending military personnel to Ukraine to help the country. Less sure if other countries are on board with that.
All right, Suzanne, thank you very much for that update. Bloomberg's Suzanne Lynch. Let's now turn to tech, where Intel getting a boost in the pre-market after falling yesterday. The Trump administration is said to be discussing a stake of about 10% in the chip maker. Adding to that, SoftBank has also agreed to buy $2 billion of the firm's stock. Joining us for more is Bloomberg's Tom McKenzie. Tom, what do you make of it all?
Well, it's opportunity, isn't it, in terms of the timing, with SoftBank coming through with this commitment for a $2 billion investment, of course, in Intel. It's a vote of confidence to some extent from Masayoshi Son to Lip-Bu Tan, the leader of Intel, after he faced that pressure from President Trump. On the SoftBank story, look, this is about Masa building out his stable of the kind of companies that underpin the AI revolution. He owns, of course, a majority stake in ARM. He has a stake in TSMC, he has a stake in NVIDIA, and now he's building, or looks to be building, a stake in Intel as well. There's possibly some politics at play as well. It's certainly going to look good in terms of Washington, this commitment, this investment from SoftBank, from Masayoshi Son, in a company like Intel. And it comes, as we discussed, and aligns with that potential 10% equity stake in Intel by the government, by President Trump and the team and the US government. That would be converted in terms of subsidies that be committed under the CHIPS Act. Intel has received about $2.2 billion of those. It could be in line for up to close to $11 billion US. And the idea would be, according to our reporting, that the government would be looking to convert some of those subsidies into equity. And it ties into this almost industrial policy now that you're seeing from the Trump administration in terms of taking stakes in key areas that they see, key sectors they see as national security challenges, whether that's rare earths or steel or now Intel and chip making on domestic soil in the US.
Speaking of security issues, Tom, NVIDIA making a lot of headlines earlier in this month about the Trump administration letting them sell to China if they got 15% of the revenue. Reuters has this story this morning that NVIDIA is preparing for a new, more powerful chip to sell to China. What is the likelihood that they get regulatory approval for this, and why would NVIDIA take this tactic?
Well, the sands have shifted, haven't they? Because the Trump administration is now willing to go easy on some of these export controls in return for 15% of those revenues, of sales of those chips into the Chinese market. So it seems to be aligning with that change in thinking. And some would say, some would suggest, maybe a downgrading in terms of the national security focus from the Trump administration. Certainly that is a critique of this approach. The Trump administration and the Treasury Secretary Scott Bessent has pushed back on that idea and said, look, national security remains a key focus for us, but we can also extract these revenues. So it seems that NVIDIA is again tailoring its team to produce a chip that would fit into the Chinese market. There is going to be that demand still for those AI accelerators, given the gap remains versus its Chinese competitors, Huawei, but clearly a chip that will manage to get around those export controls that, again, have been softened now by the Trump administration in return for that slice of revenues.
Tom, thank you very much for that update. Tom McKenzie there in London. Now, we're also keeping an eye on Home Depot. They are set to be reporting earnings before the market open. Let's bring in Bloomberg's retail reporter, Jennifer Creary, for more. So, Jennifer, Home Depot kicks off the big box earnings. What's expected?
Yeah, so a bit of an optimism from investors ahead of the results earlier this morning. The analysts are expecting a fairly positive read for results in Q2. And now the figure we want to look at is comparable sales. So the Bloomberg consensus for that is 1.4%, which is certainly an improvement from the previous quarter where we saw a slight dip. And that's thanks largely in part to spend on smaller DIY projects. So think your one-off ad hoc purchases, you know, a new cabinet door, a new lick of paint. That's really buoying Home Depot sales. Now, something analysts and investors will also be looking at is any comments that management will give on the impact of those ever-changing tariffs and whether or not Home Depot has been able to negotiate lower prices with some of its sourcing partners. We know that Home Depot sources just under 50% of its products from outside of the US. So investors will be looking at for any signs that Home Depot has been able to manage some of those costs, because we know that retailers, there's only so much retailers can do to swallow up those costs before they start passing them on to consumers.
I was about to say, to what degree are we going to learn more about the consumer? We don't just get Home Depot. Following that, we'll also have Target and Walmart earnings this week, Jennifer.
Yeah, exactly. I mean, what's really impacting Home Depot at the moment, of course, we have spend on smaller DIY projects, but there's still some persistent weakness in those big ticket discretionary spends. So those more costly home renovations, think your bathroom, your kitchen renovations that consumers are putting off until we see lower interest rates. Potentially, you know, we might see a cut in interest rates in September, so that's giving them a bit of optimism. Some analysts have noted that you know, potentially, you know, consumers will they'll eventually have to get round to some of these big ticket spends. So that's giving consumers a bit of hope going forward.
Jennifer, thank you very much for that preview. Jennifer Creary, and again, we will be getting Home Depot earnings today. Coming up, an interview with the Fed's Mickey Bowman. We'll also have some more housing data. We have your trading diary for you next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
You're watching Bloomberg Brief. I'm Danny Berger in New York. Let's get you set up for your trading day on this Tuesday. Home Depot will be reporting earnings before the bell. Those should actually drop in any minute now. We're also going to get U.S. housing starts and building permits data. That's at 8:30 a.m. Eastern. 10 a.m., we're going to hear from Fed Governor Michelle Bowman right here on Bloomberg, an important conversation not to miss. Now, some of the stocks moving in the pre-market, Intel being among them, those shares up just under 6.5%. SoftBank is investing about $2 billion worth of shares. The U.S. also looking to take a 10% stake in Intel. Palo Alto, those shares up more than 5.5%. They had stronger than an expected annual forecast in their earnings after the bell yesterday. And just dropping moments ago, you can see at the bottom of your screen a headline from the Wall Street Journal on Medtronic. The medical producer developer is adding directors to its board. Elliott Management has become a major holder. Now, in terms of this overall market, everything is very quiet. Bonds are barely moving. Stocks are barely moving. Here's the one thing that's kind of moving. It is oil. It is now down, I should say, less than 1%, about 1% for both Brent and NYMEX crude. We had that meeting in Washington, D.C. between Zelensky and the coalition of the willing of Europe, getting maybe closer to something of conversations. Trump putting on Truth Social about talks of a bilateral and then a trilateral, including himself, Putin, and Zelensky. So that seems to be moving oil this morning. All right, that is it for Bloomberg Brief. Surveillance takes things from here. You're watching Bloomberg TV.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
It's been messy for the cyclical side of the market.
You don't want to have a scenario where tech and tech capex slows down.
The market's back where it was, or heading at least in the direction of where it was last year.
You can take a look at where risk is priced right now, and I think reasonably conclude it's a relatively rich.
The market figured out and kind of agreed with me that the economy was resilient and we're not going to have a recession.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, this hour, the president pushing for a meeting between Putin and Zelensky. Home Depot kicking off a week full of earnings from retailers in America, and global bond yields inching higher, heading into the Fed's annual get-together in Jackson Hole, Wyoming.
So is this the quiet before the storm or just the quiet? Because it's August and a lot of people want to go on vacation, and I think about that at a time where you have the potential risk events of retail sales coming in and hinting some concern about a consumer, or Jackson Hole maybe not necessarily seeming as dovish as being risks to the downside. Is the pain trade still higher? And that's really what I want to understand at a time where we're still hovering near all-time highs.
We're going to turn to Home Depot numbers in just a moment, but let's just sit on the bond market just for a beat. Long end of the curve, 30-year bond yields, multi-decade highs in the UK, in Japan, close to those levels. The US 30 bond year inching back towards 5%. Is this becoming a problem for central bankers yet?
It's definitely becoming a problem at a time where you hinge a lot of those longer-term yields to borrowing costs like mortgages, et cetera. But it also highlights the international feature of this bond market at a time where inflation still is substantially higher than where it was in the past. Look, this is the crux of what we're going to be looking for at Jackson Hole. They're going to reassess their framework. They're going to talk about how they balance their dual mandate of both employment as well as inflation. And they're doing it at a time where inflation has been markedly higher. This is a new paradigm than where they were, say, 5-6 years ago when they first were coming out with this. And all of a sudden, they have to consider this is a global inflationary push with the build-out of infrastructure, with all of the tariffs and the post-pandemic realities of supply chains.
Are they seeing any demand-side destruction? Here's the headline on Home Depot just crossing the screen. Soft demand for big-ticket items. Are we going to see some more of that in the future?
Well, this to me is the key question. Their comparable sales missing estimates as they come out with their EPS basically in line. How much is this going to be the status quo going forward? How much is this specific, the big ticket items that Home Depot sells, like the aluminum and steel filled items that you have in your home? How much is this tied to the housing cycle, which has been in a world of hurt and kind of on its own planet? And how much is this really the question of who is going to bear the brunt of the costs? Is it going to be the consumer or is it going to be the companies? So far, it has been the companies. A lot of people saying that's not for long.
Home Depot in the pre-market, little change, just about positive by about 0.1%. Coming up this hour, we'll catch up with Brian Levitt of Invesco. As stocks go 2 days without gains, we'll speak to the retired Lieutenant General Robert Walsh of Academy Securities following Zelensky's visit to the White House, and John Lovelow of UBS on the state of the U.S. housing market. We begin this hour with stocks steady as retail earnings ramp up. Brian Levitt of Invesco writing, the rising prices of tariff-impacted goods, in our view, should be seen as a one-time price shock rather than the onset of a prolonged inflationary trend. And Brian joins us now for more. Brian, good morning.
Good morning. Nice
Let's
to
get
see
into
you.
it. What gives you that confidence?
Well, we saw it in 2018. Obviously, the tariffs were not as broad back then, but you saw a one-time price jump in tariff-impacted goods while all other core goods services didn't do much of anything. So that would be one. The second is if you're looking at the inflation expectations in the bond market, 3 years out, 5 years out on the break-evens, very stable. So the bond market is not overly concerned about it. I would still categorize it more as a price shock, and it's something that's going to weigh on demand in other places, which really should prevent a broad-based inflation spiral from taking hold.
This is the commentary that's coming from Home Depot this morning, that our customers are telling us they're putting projects on hold, they're not cancelling them. We've had this conversation over the last several months with regards to banks and activity. Are we seeing activity delayed or derailed because of the policy initiatives of the last several months?
Well, it sounds like we're seeing it delayed, but the reality is we were always going to have a bit of a slowdown here. And you know, whether that's a slowing job market, whether that is less stimulus coming into the system, the reality was the consumer was going to slow. What's interesting this time is the housing market and housing investment have been weaker. We know that investment in artificial intelligence and the infrastructure around that has been stronger. So it's a bit of a different cycle than we're used to. But the reality is if you look at the sort of the canaries in the coal mine for the cycle, the things that would give you cause for concern, whether it's, like I already mentioned, inflation expectations blowing out or credit spreads blowing out or the bankers tightening lending standards, none of that is evident. So it doesn't feel like the end of a cycle. It's a slowdown, given what's been a mixed policy response reaction this year.
So that's the sort of slowdown on the demand side. There's a real question about how inflationary this is going to be. Also, digging into this, Home Depot talking about how they've been able to hold prices where they are because they brought in most of their inventory ahead of this. This is the classic story. One of their competitors said the same thing, but that this will change, that prices will have to go up, and this is what people expect. Do you still expect to see the brunt of the inflationary impact to come, that we haven't necessarily seen it yet in the inflation data?
Yeah, absolutely, and that's going to be the challenge. Like, we're going to be sitting here each month on inflation day, and the numbers are going to be ticking higher. The question is whether that is sustained or whether a year from now that moves back into the comfort zone. Now, price levels will be higher, but will the rate of change continue? It's like if my washing machine cost me $100 last year and now it's going to be $110, right? That's a big inflation move in the short term. Next year, is it still going to be 110? Probably. So the consumer slows down, but the rate of change of inflation will jump and then likely come back down towards the upper end of the Fed's comfort zone. And that's what I keep saying, in every cycle, there's something new to watch, right? In 2008, we stared at interbank lending rates. 2020, we looked at social mobility indicators. This year, I'm laser focused on inflation expectations, 3-year, 5-year, quite stable, which is promising for how the Fed's going to approach this and promising, in my opinion, for the markets.
Is the pain trade still higher, given that there is potential downside risk, but people are concerned about inflation? People are concerned about all of these sort of more tail risks coming to the fore that could temper some of the enthusiasm.
Well, you could temper some enthusiasm, but the reality is it doesn't feel like the end of the business cycle or feel like the end of the market cycle. So it really depends on how tactical you want to be. When we look at leading indicators of the economy, it suggests to us in most places of the world that you're below trend and really mixed, but most sort of deteriorating, maybe a little bit of improvements in Europe. So it's not in a broad risk-taking environment. It's still sort of that focus on quality, focus on mega cap. The hope and the expectation is you will get some easing in here and you will get a reacceleration of activity. But we're a little bit delayed on that because we're still waiting to see what tariffs will mean.
Is that reacceleration dependent on an easing of Federal Reserve interest rates?
Yeah, I think it will be dependent on it.
Is there a risk that's derailed by the data we get in the next few weeks?
Yeah, yeah, absolutely. And so the reality on rates is I'm not as concerned as I think a lot of people are, whether it's September or which month it is. I'm more concerned about the ultimate direction of it. So, I'm not trying to time, is there a 5 to 10% downturn coming? Because in most years, you're going to get one of those, even though we already had our 20. But policy uncertainty will create that type of volatility. What I'm looking for is does the cycle continue? Will we move into a more easier environment over the next year? And ultimately, that should be a positive for risk assets.
They've got an easing bias, and so long as they've got a bias to ease, you've got a bias to buy. Is that fair?
Yeah, that's fair. I don't want to fight the central bank.
Do you think they'll have to fight the data in the months to come?
They will have to fight the data. I mean, that's the challenge, right? You have a price stability, full employment, and we know the economy's slowing. We know the job market is slowing. At the same time, we know prices are going to increase. That's why it's so critical to determine, is it a price shock or is it longer-term inflation? Again, the bond market's telling us it believes it's a price shock. Right, if I have a 3-year inflation break even at 2.5% or under, to me, that's price stability. And that means the Federal Reserve is going to work on normalizing the yield curve, getting rates back to, on the Fed funds rate closer to 2-year or, somewhere in the mid-3s to create a spread between that and the 10-year Treasury rate.
So later this week, when we hear from Fed Chair Jay Powell, he's going to reassess the framework. And a lot of people are saying it's sort of a signaling tool to markets about how they look at inflation, how they look at their dual mandate. One speculation is they will move to not just average inflation targeting of 2%, but possibly a range, right? 2 to 3%.
Right.
They might actually codify what we all have experienced in reality for the past 5 years. Does that shift your view in terms of the risk reward of stocks versus bonds? In other words, that might be good for stocks, but not so great for bonds going forward.
I do think it is good for stocks. And, if you remember, we all remember 2010 through 2019. We could not get inflation into the comfort zone. And coming into this year, we had inflation stable in the high 2s. I was thrilled with that, right? That's a great nominal growth backdrop. I don't think the Fed has to bring it to 2%. That's stability in my mind. So I've always categorized it as a perceived range rather than we have to get back to 2% as if there's something magical about 2%. So yeah, I do think that is good for the equity markets. I don't believe that we're going to see the Treasury market sell off significantly in that environment. I mean, you have a 10-year rate that's been between 4.25% and 4.5% now for some time, and that's probably a pretty reasonable expectation of what nominal growth or potential nominal growth should be in the United States.
Going forward, let's say there is some sort of agreement between, and I'm just shifting gears here, when we talk about the U.S. versus the rest of the world, let's say there is some sort of peace reached between Ukraine and Russia and a rebuilding of Ukraine. How much does that actually endorse the idea of going to Europe or going outside of the U.S., or is this still mainly a United States story?
I don't think it's mainly a United States story. I would think about it more from the perspective of our U.S. rates and the U.S. growth differentials narrowing with the rest of the world rather than necessarily a deal between Ukraine and Russia. The markets have not seemed to be overly impacted by it. In fact, I looked recently, I think MSCI Poland has been one of the best indices over the last few years since Russia went into Ukraine. I don't think most people would have expected that. Not for nothing, MSCI Israel has been one of the best performing markets over the last couple of years. So I don't tend to put too much concern or too much optimism into the geopolitical. What I do think the big story is with Europe, as other people have mentioned, valuations are more attractive. There's big investment going on in Europe for the first time in a while, and the rate differentials between the United States and the rest of the world may finally start to narrow if the Federal Reserve eases here.
Really encouraging news, though. It looks like a breakthrough in the last 24 hours. I've got no idea where this ends up, but it's sort of what happens next. Do trade relations with the Russians and the Europeans normalize in any way, shape, or form? Does that unlock some cheaper energy for the Europeans who've been starved of it over the last 2-3 years? And that would certainly help the European economy if that was the case. But again, I've got no idea what happens from here and whether the Europeans even want to do that, even with a peace deal.
Yeah, you can see the oil prices, the energy prices coming down in anticipation of that. And you've seen that steadily as these discussions have gone on. And as you have Friedrich Merz of Germany coming out and saying this went a lot better than he expected. They're all also is the question of the rebuilding of Ukraine and all the infrastructure funding that's come around that. And you can already see people trying to prepare for funding. So yes, there is a potential boom, but a lot of people are saying, how far off is that, given all of the details that need to be worked out here?
Every time you come in, I just think FOMO guy.
Same thing. Every time I want to come in and just say, are you still a FOMO guy? But I don't want to become cliche.
I'm a FOMO guy. Brian Levitt of Invesco still sounds like a FOMO guy. Good to see you. Thank you, buddy. Let's get you an update on stories worldwide with your Bloomberg Brief. Here's Yahira Anand. Hey, Yahira.
Hi, John. We are seeing sales for Home Depot coming in shy of expectations in the latest quarter, with consumers staying away from big purchases. Consumers are still facing higher interest rates and inflation concerns. The world's largest home improvement retailer said comparable sales grew 1% in the fiscal second quarter, less than analysts had expected, but an improvement from the prior quarter. Shares are lower by 1.8% in the pre-market. Meanwhile, President Trump is pushing for a one-on-one summit between Ukraine's President Zelensky and Russia's President Putin to discuss terms that could bring an end to the war. Trump urged Putin to consider the plans after European leaders joined Zelensky at the White House yesterday. The summit would be followed by a trilateral gathering involving President Trump. Meanwhile, we are seeing shares of Intel rising 6% in the pre-market after SoftBank agreed to buy $2 billion of the chipmaker's stock. The news coming as the U.S. government looks to take a stake in the company. Sources telling us here at Bloomberg the Trump administration could take a 10% stake in Intel using funds from the CHIPS Act. That's your Bloomberg Brief. John?
On that story. Later this morning. Yahira, thanks for that. Up next on the program, a breakthrough in Washington.
We had a very good conversation with President Trump.
I really want to thank you, President of the United States, dear Donald, for the fact that you, as I said before, broke the deadlock.
So far, nobody's been able to bring it to this point, so I thank you for that.
A conversation up next with the retired Lieutenant General Robert Walsh of Academy Securities. Live from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Coming up later on this morning, don't miss this one, and one of the big descents of the last month or so on the FOMC. Mickey Bowman Federal Reserve Governor sitting down with Michael McKee in Jackson Hole, Wyoming, 10 a.m. Eastern Time, together with Governor Waller. Some of the biggest dissent we've seen on the Board of Governors going back several decades.
Yeah, going into Jackson Hole, where suddenly there needs to be a new framework review. How much do we hear from the Mickey Bowmans and the Chris Wallers as we hear the political intrigue, but also the pressure on the Federal Reserve to take a stance on an increasingly fraught debate on Wall Street?
Looking forward to that conversation later on this morning, just a few hours away. At the moment, your price action shaping up as follows. We're negative 0.1% on the S&P, down a similar amount on the NASDAQ 100. Over in Europe, a rally underway across the continent. Under surveillance this morning, a breakthrough in Washington.
We had very good conversation with President Trump. It was really good. And we spoke about very sensitive points.
I really want to thank you, President of the United States, dear Donald. As I said before, broke the deadlock.
Thank you, Mr. President, for organizing this meeting and for your commitment.
So something is changing, something has changed thanks to you.
And so far, nobody's been able to bring it to this point, so I thank you for that.
So here's the latest this morning. European leaders praising President Donald Trump during Ukraine talks at the White House. The president now pushing for a meeting between the Ukrainian President Volodymyr Zelensky and the Russian leader Vladimir Putin. Bloomberg's Ollie Crook joins us now for more. So Ollie, the language used there. Here's Alexander Stubb, the Finnish president. In the last 2 weeks, we've made more progress than in 3.5 years. Is that just flattery, or is there a real shift underway?
Listen, I think there is certainly a dose of flattery there. I mean, if you could count the number of thank yous that were received around the table, you know, it would be really sort of ranking them at a very, very high number. And this is something, of course, that was learned, you know, in the hard way in February of last year when President Zelensky was asked if he'd ever, you know, thanked the United States. But I do think there has been a significant shift now that is underway, and it has to do with the security guarantees, these Article 5 style guarantees that the United States, and this has been confirmed now by Donald Trump. We were just going off of sort of Steve Witkoff into Monday. Trump is saying that he's committed in some way to this new security architecture. Now, there are still a lot of questions about what this could actually compose. Would the U.S. really do a NATO-style backing for Ukraine if Russia were to reimpose itself on Ukrainian sovereignty? Would the United States get militarily directly involved? It's hard to imagine such a scenario. It's hard to imagine Russia accepting such a scenario. And there's, of course, the difficult questions about boots on the ground for the Europeans. We've spoken to a number of countries. Some countries are more open to it. We've heard from the likes of France and the UK when this idea was first floated. But when I've spoken to German officials throughout the last few months, and Germany has been the biggest financial supporter of Ukraine within Europe, they have been very, very resistant to signing on to this. So while the Europeans showed up in Washington, D.C. with a united front, that is papering over some very difficult discussions that need to still happen at home about how to pay for this, but also whether or not they're going to put boots on the ground potentially in order to have a peacekeeping troop. But I think that really the takeaway here is that at the U.S. level, at the very top level in Europe and the United States, this architecture, this new security guarantee architecture is now being built.
Ollie Crook with the latest out of Brussels. Ollie, thank you. Joining us now to build on the conversation, retired Lieutenant General Robert Walsh of Academy Securities. Lieutenant General, welcome back to the program, sir. We've been tracking the diplomatic effort in the United States, in Alaska, then down in Washington. Could you tell us what the realities are of this conflict on the ground?
Yeah, thank you, John. This war's been going on, obviously, for a long time. And when we talk about a stalemate, Russia's been making slow progress on the ground. There's no question about that. It's a much larger country. It has a lot more military power, but it's been very slow progress. And the real challenge for Russia is that in today's modern warfare, the defense is more to an advantage than the offense. And Russia is running into that against the Ukraine belts of defense. And what we see clearly here is they're getting closer to the Ukrainian main defensive belts, or their fortified belts. That's the area of the Donetsk region that Russia really would like to get their hands on for a number of reasons. It's part of the industrialized area of Donetsk. It's got a lot of key minerals that are in that area. But from a military standpoint, and that's where Putin is really focused, from a military standpoint, it has the key defensive areas around 4 major cities, and urban conflict, as military members know, is the toughest warfare to go through, and that's where Russia or Ukraine has their forces entrenched in this defensive belt.
Lieutenant General, how much of a win, then, is it for Vladimir Putin to not have a ceasefire as some of the details of this potential trilateral meeting take place?
Yeah, that's a great question, Lisa. I think both the U.S. and the Europeans did want a ceasefire. And the situation is the Europeans and Ukraine, certainly in the U.S., would like to end the war more than Vladimir Putin would like to end the war. So a ceasefire helps end the war, stop the fighting right now, and stop the killing, as Donald Trump has put out. In the case of Putin, he would like to just continue. So these talks, he continues to kind of slowly drag out because he wants these battlefield gains. The more gains he gets on the battlefield, the more leverage he has, and the possibility of a breakthrough that could happen, and he could even gain more gains and threaten more the heart or the interior of Ukraine.
As we hear more about security guarantees, is some sort of agreement between the U.S. and Europe to guarantee some sort of support to Ukraine, do you feel more encouraged or less encouraged? Do you still kind of feel like the jury is out?
No, I think I'm very encouraged after what's happened over the last few weeks. There's no question that the meeting yesterday at the White House was historic. I don't think we've ever seen that many national leaders, along with the leader from the EU and the NATO secretary. We haven't seen anything like that at the White House. What that really shows is the power, the unity, the strength that NATO is bringing, and the ability to kind of coalesce power for collective security. And that's a key thing here, that Vladimir Putin throughout this conflict has tried to break the NATO alliance, tried to break the U.S. from NATO. And if anything, what this showed around that table yesterday is those leaders, as Ali had said, have really kind of come around the table to show Putin that there is a lot of strength here. And it's not only military strength that's here. We know Russia has continued their wartime economy to build their military, but the economic strength that you see from the group that was around the table, it is much larger than Russia is, and Putin knows that.
Lieutenant General, just a final question. You mentioned NATO. The details of this security agreement, in your opinion, why does it need to live outside of NATO? Why is that so important? And what does that tell you about really the nature and strength of that overall agreement in the future?
Yeah, John, this is a great question. I think the key thing is if you look at Putin's objective from the very beginning, is to rebuild the former Soviet Union and break NATO. That's his goal, that's his objective, and a red line for him from the very, very beginning was Ukraine not joining NATO. And from the beginning, President Trump, as he came into office, laid that down, that he knew that would be a red line, and took that off the table, and the Europeans supported that. And so now when you get to some type of security measures, it is so important to have security measures that when the fighting stops, that there are security guarantees. And that is going to be the devil in the details as we go forward. And Putin will not want to have an Article 5 type security arrangement. And what that means is that we would be supporting Ukraine through the European countries, those that are in NATO, with the same type of support that they would get as if Ukraine was in NATO. It was a very interesting approach that Trump took and pulled that out of his hat. And Vladimir Putin listened to that and initially said he would take a hard look at that. So I think that is going to be the key thing. And Zelensky is going to push very, very hard to get those type of assurances from the large militaries.
It's the breakthrough we all wanted to see, sir. Lieutenant General, we appreciate your time.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I asked whole corporations study how will you bring generative AI to their job.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Live from New York City, welcome to the program. Here's the price actions. 2 straight days without gains on the S&P 500. A mild pullback on Friday. A very snoozy summer Monday to kick off the trading week. And it continues into Tuesday. We're down just 0.1% on the S&P. On the Nasdaq 100, negative by 0.08%. In the bond market, things are starting to get very interesting. The difference between 2s and 30s, the steepest going back to something like 2022. This morning, you're seeing it again. Yields down at the front end, up at the long end, creeping back towards 5% on 30s, 4.91.93. How many times have we seen this over the past few weeks?
Well, this, to me, sets up the ultimate conundrum for Jackson Hole. How much can the Federal Reserve lean into the idea of rate cuts while keeping yields in the long end suppressed? Just keep hearkening back to last year. They cut 100 basis points, and they saw the long end rise by 100 basis points when it comes to yields. So do they see the same kind of dynamic this time around if there still is this kind of inflationary pressure?
I say you're seeing it again, maybe not this morning, but in the last 24 hours, and certainly worldwide as well. It's the UK, it's Japan. We're talking about multi-decade highs on bond yields at or close to those levels. Likewise in Europe, multi-year highs in some of those bond markets too. Then this is the problem for the Federal Reserve and other officials at the moment. It's not just stateside, it's worldwide.
Is it a supply side story, the question of incurring more debt, which we do see around the world? Or is it a demand side story at a time where you do have inflation that is coming on the heels of supply chain disruptions, tariffs, as well as just a structural shift that we've seen post-pandemic? And that ultimately is going to be a key question.
We will keep tracking that story for you. We'll come back to it later. We'll catch up with Priya Misra of JP Morgan in the next hour. Let's get you some movers. We're about 3 hours away from the opening bell with your morning movers. Here's Danny Berger. Hey, Danny.
Hey, John. About 30 minutes ago, we got Home Depot earnings dropping. It was a miss on their second quarter comparable sales, up 1%. The expectation was for just under 1.4%. The CFO speaking with Bloomberg saying that purchasers are holding back on big ticket items. Yes, there was an uptick in some of the smaller ones, but that pain is apparent. They also front ran a lot of the tariffs, and they said prices will start to go up in the second half of the year, but they are going to try to keep things competitive. In other words, margin pressure. Elsewhere, we also had quite the 24 hours for Intel. For one, Bloomberg reporting that the Trump administration is weighing a 10% stake in the company. And for two, SoftBank announcing that they are buying a $2 billion stake in the company. All a vote of confidence in getting that turnaround happening at Intel, making it a homegrown champion for chip development. Shares are up 6%. Finally, another earnings for you. After the bell yesterday, we learned Palo Alto's future, and it is a brighter than expected 2026. They are trying to push a lot of their AI-enabled cybersecurity products, and moreover, just having a wide platform for consumers. That strategy seems to be working, so those shares up 6.5%, John.
Danny, thank you. More from Danny in the next hour. On our radar this morning, our top story, President Donald Trump urging Russia's Vladimir Putin to make plans to meet with Ukrainian President Volodymyr Zelensky. Trump proposing a trilateral meeting involving all 3 leaders as a follow-up. Elsewhere, NVIDIA is said to be developing an AI chip specifically for China China. Reuters reporting the new chip will be more powerful than the H20 model, with the company aiming to deliver samples for testing as soon as next month.
To me, this is the true test of how much President Trump's administration has bought into the Jensen Huang view of the world, which is that it is more important to have a presence in the technological footprint of China's AI machine than to avoid selling them higher caliber technology to potentially hamper their march toward AI supremacy. It highlights how the sort of Belt and Road question of technology has really permeated this White House. So the key issue is, will they sign off on this? Will they allow NVIDIA to sell this chip? And if they do, it indicates a very different way of looking at U.S. technology and what kind of safeguards need to be on it going into China.
Most people would assume yes, with the price. Yes, if you give us a share of the revenue, which is where we're at right now.
Which actually, and I'm just going to be really honest, doesn't make any sense to me on a theoretical level, because I don't understand how that has to do with national security, and I don't understand how to sort of expand that into a framework of where our priorities are. But at the same time, if it brings revenues in, then, you know, S&P will be happy.
S&P Global very happy with some of the revenue coming in. We'll talk about that a little bit later this morning. The tariff revenue. NVIDIA's up in the pre-market by a few tenths of 1%. Let's finish on trade. President Donald Trump expanding the list of products subject to 50% steel and aluminum tariffs. More than 400 consumer items that contain the metals are now included, such as motorcycles and tableware. And as I read that story, I'm just thinking, you know what? I looked at that this morning and just thought, this is still going to take time. If you're drawing conclusions about tariff pass-through sitting here in the middle of August, tell me what you're thinking a month from now, 2, 3, 4, 5 months from now, because the tariff pass-through is going to take some time, given that the tariff policy is changing too.
Tariff policy is changing, and where people get their steel is changing. U.S. Steel is very happy about this, and you saw some of the lobbyists come out very excited. Meanwhile, the S&P and others out there are saying, yay, it's going to bring in revenues, an estimated $138 billion of revenue with imported duties. It really points a spotlight to Home Depot and them talking about how they front ran a lot of the tariffs. They brought in a lot of the goods, so they haven't had to pass along the prices. How much does that change as this does go on and during highly fungible policies when it comes to what tariffs are put where?
Let's get to Home Depot right now. Shares slightly under pressure this morning. Shoppers pulling back on big-ticket items. That stock is down by 1.2%. Bloomberg's Drew Redding joins us now for more. So, Drew, what's the latest read of what's happening in U.S. retail?
Yeah, so when you think about Home Depot, you have to think about who their consumer is. A majority of them are homeowners, as you would expect. Typically, dual-income households, higher income earners. They're seeing strong employment, strong wage gain. So, you know, they're still spending. I think what you need to look at, and what you guys alluded to earlier, is where people and how people are spending. We're seeing relative strength in smaller ticket categories. But where the weakness has been is in those bigger ticket discretionary categories. And this is something that's been going on for several quarters now for Home Depot. And the reason for that is because rates are so high. If you think about the type of projects that are typically financed, like kitchens, baths, flooring, with rates where they are, consumers are taking a wait-and-see approach because they think rates are going to fall, so they're delaying these projects. And that's really where the weakness has been.
So, Drew, this is an important tape because we're all trying to figure out the answer to the same question. Are we seeing activity delayed or derailed? Do you sense that once we get a few rate cuts in the pipeline from this Federal Reserve over the next several months, it will unlock some real activity?
Yeah, I think it's more of a project deferral situation. You know, homeowners have certain projects that they need to undertake. They need to do them immediately. And then there's the discretionary categories, like we mentioned, which are more subject to that financing. I think if rates start to come in and you start to get a little more activity from a volume perspective in the housing market, I think that really starts to boost those demand for big ticket projects. And the way Home Depot and even Lowe's has been positioning themselves over the last couple of years is to capitalize on those big ticket projects with professional contractors as that demand starts to reemerge.
Drew, appreciate the update. Drew Redding there of Bloomberg, the latest on Home Depot and the latest on people making a push to maybe renovate their kitchens.
Yeah. Well, some people are getting ahead of the rush later and redoing their kitchens now and actually find that people are pretty available.
Share your story. How's that going? What's that like? Access to labor?
Access to labor, it actually has been a lot
Are the deals
better.
as well?
Yeah, and I think that, well, I mean, I think within reason, but people have imported the goods already, and so you don't have to pay the tariff prices. So some people theoretically thought, let's get ahead of this because the rush for it will happen later. So if you do it now, the prices won't have gone up. But so far, it seems to be working.
Bramo making a move. Home Depot down by a little more than 1% in the pre-market. Let's stick with housing. Building permits and housing starts data coming out at 8:30 Eastern time. We'll get some earnings too. Results from Toll Brothers after the closing bell. John Lovell of UBS writing, we expect another solid quarter from Toll Brothers, most notably in terms of deliveries and margins, while orders could be a touch soft. John joins us now for more. John, good morning.
Morning.
The bounce is finally happening in home building stocks. I'll throw that out there first. Why have people suddenly woken up to all of this over the last few months or so?
So let's put it into context. So since the start of earnings season, the builder stocks are up about 17% relative to the market being up about 2%. This is something we highlighted in our preview note, and we titled it Bear Trap. And what we meant by that is that it felt like investor sentiment had turned far too negative at a point where consumer confidence was beginning to improve. And most importantly, we were approaching the end of the negative earnings revision cycle. And that's a very powerful point to get involved in sort of cyclical early cycle stocks. And so I think what we're seeing is sort of the culmination of the consumer kind of settling in, rate stabilizing, and people realizing, hey, you know what? We may be very close to the bottom.
Rate stabilizing. That's a nice way of saying on the precipice of rate cuts. How much is this predicated on the idea that the Fed is going to embark on 100, 150 basis points of rate cuts over the next 18 months?
Lisa, I don't think we need it. We're at 6.59 on the 30-year. That's not a bad spot to be. I would take lower rates all day long, but stable rates are what we really need. And what that means is that the consumer has an idea of what they're getting into. Importantly, the companies can plan their businesses. They can kind of plan the mortgage rate buydowns. The cost of those buydowns comes down with rate stabilization as well.
I'm so sorry, but I'm thinking here, we don't need lower rates. What is we here? Are you talking about the home builders, right? Because there are a lot of people who are screaming at their screens right now saying, we really could use lower rates, and home affordability has been the lowest that it's been in decades and generations. So you're telling us we don't need it. Are you just talking about home builder profitability, or are you talking about the housing market as a whole to actually generate some type of volume and normalcy?
It's an interesting question, right? And I would say that there's two sort of distinct markets out there today, right? There's the new construction market where the home builders have the ability to buy the rates down, and they've done that very successfully. But to your point, 90% of sales historically have been on the existing home side, where we do need rates to come down. And that sort of turnover in the existing home market is critical to the long-term success of the market. Think about it. When an existing home is sold, there's going to be generally a purchase on the other end. That could be a new home or an existing home. But this part of the market being frozen is not good for anyone. So lower rates to that extent are important.
You like Toll Brothers. It's a very different market.
Yeah.
So spell out why you like Toll Brothers.
Yeah. So we've sort of taken a barbell approach where we like the entry level because that's a very need-based buyer. Life events like marriage, children, things that necessitate more space. On the other end with Toll Brothers, this is a buyer that is less concerned about rates. I mean, 30% of them pay
wealthy.
Cash. Yeah,
yes.
They pay cash. But, you know, on the flip side...
Give me that number again. What percentage pay cash?
25 to 30%.
That's for Toll Brothers?
For Toll Brothers.
Yeah.
Yeah. There's also about, over $200,000 of very high margin sort of options and upgrades that go into these homes. And so it's a different buyer. Now, Toll Brothers is not just this high-end buyer. Keep in mind that their ASP is about $1 million, but they span from, called $400,000 up to $4 million. And so it's a very wide range. And they've actually changed the business model to the extent where about 50% of their deliveries are on spec. And what we mean by that is they're starting the production of the home before there's that buyer in place, which helps them expedite the build cycle.
Can we deal with some of the doom and gloom? I'll throw it out there. Lisa will weigh in. No doubt she'll double down.
Lisa will definitely weigh in.
Without a doubt, she'll double down.
I'm not that bearish. I'm redoing my kitchen.
Bramo, let's talk about housing. You've seen the same charts I have. The amount of unsold inventory. We've heard a lot of people say this is a market now that's priced for rates at 3%, not 6%, and it's not sustainable, it's going to break. What would you say back?
Yeah, I think, look, there are certain markets where inventory has clearly built up more than what the builders would like to see. I mean, there's parts of Florida, the I-4 corridor between Orlando and Tampa, parts of Texas and Austin, even in Phoenix. But now what you're going to see today with the housing starts is that the builders have done the very rational thing, and they've pulled back. They said, look, we're not going to push inventory into a market that is just not receptive. And what that's going to do, very importantly, is clear the path as we move to the back half of this year and into next year from an inventory standpoint.
A lot of people say that unless rates come down significantly, prices have to come down 10 to 15% around the country in order to normalize the housing supply. Do you push back against that?
Absolutely. Yeah, I think we're still underbuilt massively in the U.S., particularly at the price points that are most important for today's buyer, and that's the entry-level, first-time kind of buyer space. There's just not enough inventory. I find it very hard to believe that we'll see widespread declines in pricing. Keep in mind that we have about 1.8 million units of single-family inventory in the market today. That's below the historical average of 2.4 by about a standard deviation. So we are still light on inventory across the board, particularly at the price points that matter the most.
John, it's good to see you. It's good to catch up.
Thanks
Good rallying those names that you cover too. It's finally happened.
Yeah.
John, thank you, sir. John Lovell there of UBS on the home builders here in the United States. This is one of the most sensitive topics in U.S. politics right now, particularly in this city.
What he just said right now explains why Zoran Mamdani is running and why so many people have really backed him. This is such a political hot potato because ultimately housing prices where they are has really made it so that a lot of people in a certain generation, unless their parents are very wealthy, cannot afford to get in on the housing market. What's the solution to build more, right? And this is what people keep saying. How do you get to that place really is going to be a key question.
The average age of the first-time buyer. We've all seen the chart. It's just doing that.
Yeah, exactly.
That's not the chart you want to see.
This to never. And that's sort of what we're talking about at a time when it really has to come down to inventory.
I like that. Up and to the right to never. You know, something like that. Right?
That's kind of what it is.
Yeah. Well, I don't like what I see, but I like the expression. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Arnott. Hey, Yahara.
Hi, John. The union representing Air Canada's flight attendants said the strike has ended after a tentative agreement has been reached. The union advises its members to fully cooperate with resumption of operations. Air Canada's flight attendants walked off the job on Saturday after contract talks with the carrier had failed. Flights are set to resume this evening. Meanwhile, Apple is expanding its iPhone production in India ahead of the debut of the iPhone 17 next month. Sources telling us here at Bloomberg, Apple plans to produce all 4 models in India, marking the first time that all new variations will ship from the country. This comes as Apple seeks to lessen its reliance on China for U.S.-bound models. And Hurricane Erin is threatening to cause big problems in the U.S. While the Category 3 storm is not expected to make landfall, it is raising the risk of high winds and flooding along the Carolina coast. Dangerous rip currents and flooding are also expected in other states, including Florida and north to New York. Waves may crest more than 20 feet on Long Island this Thursday and Friday, according to officials. That's your Bloomberg Brief. John?
We'll be tracking now. Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, a slowing economy.
The economy's slower than people think. I think all those job revisions, we're finally starting to realize, hey, this economy is slower. There's pressure on the consumer. I think the global economy is slowing.
That's next with Kit Jukes of SocGen, live from New York City. You're watching Bloomberg TV.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows, up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Live from New York City this morning. Good morning to you all. Under surveillance this morning, a slowing economy.
The economy's slower than people think. I think all those job revisions, we're finally starting to realize, hey, this economy's slower. There's pressure on the consumer. I think the global economy's slowing. The markets are a little bit potentially in danger of getting too comfortable that we get rate cuts for good reasons.
So here's the latest this morning. The strength of the U.S. economy in focus as investors await Fed Chair Jay Powell's Jackson Hole speech. Kit Jukes of SocGen writing, the more prices rise in the data, the worse it will be for the economy. And the Fed should focus more on the labor market as a result. If they do that, the dollar will be vulnerable. Kit joins us now for more. Kit, welcome to the program, sir. Let's talk about this FX market, driven in the first half of this year by perceived capital flows. Do you believe that in the second half of this year, it will be driven by rate differentials, and why?
Rate differentials up to a point, expectations about growth, which are often the same thing. But yes, I think people are genuinely uncertain in the sense of at the moment they're uncertain but aware of the fact that the world is very long dollars because we've all put so much money into the U.S. equity market, because money's gone into the U.S. Treasury market, because the U.S. has been outperforming for so long, and that if the economy slows, rates need to come down significantly. Then some of the returns people have enjoyed are pretty vulnerable. I think the market's confused about the short-term rate story, but confident that the answer is the U.S. economy slowing a little, or is it in more danger of a more significant slowdown? And that means we're overreacting to every single piece of macroeconomic data, with the exception perhaps of the really sort of minor data we saw yesterday. But we're lining up to overreact to each piece we get going into September.
Taking a step back, Kid, earlier this year, it seemed like a one-way freight train of sell dollar, sell the United States. That was the trade, and pretty much everyone lined up behind it. Is it over? We've kind of plateaued and kind of shifted around this level for a couple of months now. Are we seeing sort of the end of the sell the America trade and going back to this sort of nuanced, overreacting to every data point type of landscape?
I think the data will decide that. I think the question then is whether the U.S. economy is slowing significantly. I mean, a currency can't go down as fast as the dollar did or go up as fast as currencies like the euro did for very long. An inflation-targeting central bank reacts to fast currency moves. An economy reacts to fast currency moves. So the move we had in euro dollar from 102 up to 118 was too fast. We have to take time out. Whether that takes us to 125 or we get stuck here depends on how much or how little the U.S. economy slows in the next 3 months, I would have said. And if we got a repeat of last month's payroll numbers, if we got something genuinely soft, then I think we're going to head off into the middle of the 120s for euro dollar. We've got another 5 to 10% weakness in the dollar in this cycle to come. But you know, I wouldn't want to overinterpret some of the data that we've had in the summer and extrapolate it out blindly as saying that is what's definitely going to happen. Again, if the inflation hit from tariffs isn't too big, the economy's not going to slow too much, and a very gentle easing in U.S. growth
doesn't justify much dollar weakness at all.
So let's build on that. Right now we're looking at 116.88 on the euro-dollar cross. You're saying it could go into the mid-120s if you do see some sort of significant weakening in the U.S. economy. Heading into the fall, what are the key data prints that you're looking at, and what would constitute that type of weakness that would really cause that type of depreciation in the dollar?
So we would set ourselves on that route if we saw weakness that suggested not recession or anything, but that the Fed's got significant rate cuts to make, that we're going to get yields down, that the things that have made people pour their money into U.S. assets need to be questioned at least temporarily. So if we saw if we saw a payroll number in the United States that was, I don't know, say only up 100,000 or weaker than that at the beginning of September, I think that would concern people. If you saw weakness in the housing market beyond a small correction, if you saw softness in real personal spending as consumers scale back in the face of higher prices, then I think you'd be sort of forming that kind of backdrop. The advantage for the consumer who's critical in this is if the inflation data continues to be held back by lower energy prices. So if low energy prices offset tariff increases, or if tariff increases aren't fed through to U.S. consumers, it all softens the economic blow, and the downside to the dollar is reduced.
Kit, we're all still wrestling with this, and I imagine many on the committee of the Federal Reserve are wrestling with the very same thing, which begs the question going into Jackson Hole, just how much can we expect? Neil Dutta, Renmac, don't expect a strong signal at Jackson Hole. Jonathan Pingle at UBS, if you're looking for rate cuts, he says, quote, I don't think he's going to lock it in. Kit, do you think he's going to lock it in a few days' time?
I'd be surprised if he locks it in, but the topic of the symposium is the labor market. The labor market is going to be the thing that tells us what's happened to the economy. So we should hear a really interesting set of discussions about how they feel about the labor market and how they feel about labor market tightness relative to softness in employment gains. And if I get any hints from that, I will jump on them to provide me with a clue to what they'll do. But I think that, again, if the jobs numbers are weak at the beginning of September after what we saw last month, frankly, the game's up. So that'll tell us what happens. But it'll be a very interesting symposium on the labour market.
Okay, just before you go, what's more likely over the next 12 months or so, that we get 3, 4, 5 rate cuts from the Federal Reserve, or Arsenal win the league?
3, 4, 5. Yeah, I think Arsenal have got a decent chance of winning the league. I'm slightly more optimistic about that than about anything in the U.S. economy, which is all up for grabs.
Kit, thank you, sir. Kit Jukes there of SocGen. Kit, thank you very much. On the FX market and a little bit of Premier League football.
Yeah, they just beat Arsenal. Arsenal just beat Man United. It was a really great game. 1 goal.
You enjoyed that?
It was really good, yeah.
Calafiore.
Yeah, exactly.
At the far post.
I think that actually they're doing really well. So
I know you actually watched this, too.
I do. I'm starting to. It's sort of ironic that, maybe golf will be next, who knows?
Maybe.
Yeah,
Speaking to someone yesterday, found golf very relaxing. They don't play themselves. They just like watching it.
Yeah, it's the
just
relaxing
the rhythm,
thing. Yeah, exactly.
The cadence of it all.
I prefer staring at the wall.
Tour Championship this weekend. Just give it a go. Just give it a go. All right? And sometimes a raw.
Yeah.
All right. Up next on the programme, Sarah Hunt of Alpine Saxon Woods, Brian Gardner of Stifel, Angelo Zena of CFRA, and the brilliant Priya Misra on the bond market, joining us from JP Morgan.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The single best investment opportunity you see in the world, regardless of industry or geography. Why? And again, how are you making it available to your clients?
I think there's no question AI is going to impact everything we do. The opportunity to take great companies and use AI is going to transform. Also, the issue of jobs. What do we do with jobs? Because there's no question. You look at things that are customer service oriented, and the AI is so much more efficient. As we look at across all these different opportunities, what we really like is data centers in the U.S. And, the one thing that we know is that AI is just going to create this enormous demand for data. in this even growing opportunity for cloud computing. So for us, you know, owning data centers for 20, 30, 50 years, we're going to have a limitation on power in the U.S. There's no question over the next 20 years, the technology will change for chips. It'll become more competitive, and NVIDIA may not be the only major provider. So I think you're going to have a big technology refresh over the next 20 years. But the one thing we know is you're going to need data centers, you're going to need power, you're going to need cooling to support all this growth in the cloud. So we look at them as long-term bonds.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
If the labor market deteriorates further, then the Fed can get more aggressive.
It's clear from the recent data, particularly employment data, that we have a dual mandate that is in conflict.
You're going to have to cut. You're moving in that direction.
There's enough to start the process of cuts, but not necessarily enough to commit to 150 basis points of rate cuts.
Why would policy be restrictive at a time when there is so much uncertainty?
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. It has been a snoozy couple of days. Snoozy Monday, and pretty quiet this morning too. We're down by 0.1% on the S&P 500, negative by 0.13 on the Nasdaq 100. In the pre-market, one name to watch, Home Depot. Out with earnings a little bit earlier on this morning. Tomorrow we'll hear from Target, the day after from Walmart. That name is down by, let's call it 0.7%, out with numbers about 60 minutes ago. Just a little bit softer than expected.
What's most interesting to me about Home Depot is delayed, not deferred, right? This idea that people still have their projects, the big projects in the works, but they don't have the conviction to go through with them. The other interesting aspect, and this speaks to the question of how inflationary will tariffs ultimately be, they talk about not passing along prices yet. That is because they brought in a lot of the goods ahead of some of the tariffs. Going forward, they do expect to pass on some of the pricing. This is going to be a theme. So far, companies have eaten the tariffs. Will that change in the months going forward?
They're in a fairly good position, arguably, for a couple of reasons. They secure more than 50% of their goods, I believe, from the United States of America. And as for that delay, we spoke to a couple of people in the last hour who believe once you get a reduction in interest rates, people are going to step back in and start doing these projects again.
But this ultimately goes down to the dual mandate, right? If you have rates come down, suddenly demand goes back up, and then people can increase the pricing, which goes to the question of inflation. It is the reason why you look at valuations where they are in this snoozy August, and you wonder, how much room do we have to continue upward? What will the catalyst be? Are rate cuts enough, given that we've baked them in, and given the fact that inflation has not died? And that ultimately is going to be a huge question at a time where we do see longer-term bond yields creeping higher around the world, even at a time when the Fed seems to be very much on course to cut rates.
Isn't it nice to have a snoozy August? Just like, a little bit quiet.
Yeah, well,
just settle down.
I'm just telling you right now, people will be cursing your name at the end of today when the world is erupting. You do this every single time.
Strange
there's a quiet
things happen in August.
Okay, are you actually
was it Japan last year? I feel like it was Japan last.
So hold on a second. Would you like to see something strange happen?
Look, I am long volatility. Sat in this seat. Obviously, I have a bias. I can share that. That is not a secret. It's more interesting to me when things are a little crazier. get that, but I think a lot of people deserve a summer. Just take a beat, go to the beach, take a few weeks off, re-engage.
Just warning, when he says this, re-engage, start watching, things happen.
Re-engage. Maybe in the bond market, that's my focus too.
Very much
Just this continued bleed higher in long-end yields worldwide. And we spoke to the Treasury Secretary, Scott Besson, about it just last week, this leakage on 30 years worldwide. We've talked a lot about that wall of demand stepping in and buying backups in yields. You don't really see that at the very long end of the curve. That's been like the orphan segment of the yield curve globally over the past 6, 7, 8, 9 months. And I think it's going to become a bigger and bigger problem for policymakers, both central bankers and fiscal officials alike.
Especially because the ballast of the bond market had been Japan, which had been stuck in this sort of morass of no growth, no inflation. Suddenly there's inflation, there's the potential for yield, and all of those investors have some sort of incentive to keep their money home. You start having yields creep up there. Around the world, is it going to be that much harder to pressure yields lower? You add on top of this inflation, the reindustrialization, this question of supply chains getting near-shored. Suddenly, it's a very different picture, and it clearly is one keeping a number of policymakers up at night.
We made it interesting. There you go. 30-year bond yields this morning, down about a basis point, very close to 5%. That 30-year yield at about 4.92. Coming up this hour, we'll catch up with Sarah Hunt of Alpine Saxon Woods as stocks slip with earnings in focus. Brian Gardner of Stifel as President Trump is pushing for a meeting between Putin and Zelensky. And Angelo Zeno of CFRA as the White House is weighing a 10% stake in Intel. We begin this hour with stocks inching lower. Sarah Hunt of Alpine Saxon Woods writing, investors seem positioned for positive earnings surprises into 26, but we expect higher volatility as summer gives way to fall. Sarah joins us now for more. Good morning, Sarah.
Good morning.
It's good to see you. What's the source of that volatility going to be?
I think the uncertainty that's coming around, the timing of what's happening in tariffs, the timing, like there was an announcement today that aluminum and steel in different products was going to be taxed at a different rate, and that it did include goods in transit. I think all those kinds of things make for problems for potential earnings. I think the uncertainty around what spending is going to happen, something like what's going on with Home Depot, not such a huge thing, not a big surprise, a lot of big ticket items, not so much people bought ahead of tariffs. But I think that there is some concern about what this is going to do to margins and what it's going to do to earnings, and that's going to, I think, add to volatility.
Well, let's stay on this. Which way do you think it breaks? Let's say we've got a company right now in America that was importing a lot of goods, a lot of pre-tariff inventory. Of the goods they imported that were tariffed, they were absorbing that on margin. Do you believe that's going to lead to, say, cost cutting, a labor market hit, or do you believe it leads to higher prices? They're going to pass it on to the consumer.
I think they're going to try to do both. I think they're going to try to get their costs in line as much as they can, and I think they're going to try to push price to the extent that they can. And the question really is, as these targets have been moving all year, did we get such a backup in demand that we pulled for a lot of activity, and are we therefore going to see some softness anyway? Or is this going to be so gradual that it doesn't have as big an impact as a big one-day slam dunk situation? And I think that's the question, and how this plays into PPI and CPI, because the tariff isn't really inflation itself. It's a tax, but it doesn't matter, because if the price levels are moving higher, it doesn't matter. To the consumer, it feels like a problem because prices are higher.
I remember a long time ago at the end of July when people said August tends to be volatile. Watch out, it tends to be the witching month. Well, we're up, 1.7% on the S&P. We've reached new high after new high. Sure, we've been down for a couple days, but down is sort of a relative statement given that we're going nowhere. At what point are we just pushing off this volatility, showing that the pain trade still is higher?
So I think that right now we've got Jackson Hole coming up this week. If you recall, last year it was the labor numbers in August that came in that really threw things off for the Fed, and people started to worry about the labor market. The data is uncertain enough that right now it's like it needs a push one way or the other. The fact that there is talks with Russia and Ukraine, whether they get to peace or not, that's probably a net benefit to most things except potentially energy, which is not the worst thing in the world either, because that helps everybody else with lower energy prices. I think the question's really going to be, where do we end up in terms of the consumer, and where do we end up in terms of inflation, and what happens to companies, and are they laying people off? Does that affect the labor market? All those interplays are uncertain from now, and I don't know how much clarity we get in 3 or 4 weeks, but you could see some uneven data.
Right now, a number of people are talking about trying to just get a little bit more defensive. We see that in the investment grades market with spreads getting to the lowest levels going back to 1998. And the theory here is there's going to be some weakness, and potentially you could see it in a stagflationary type of feel. Are we getting to a place where the high flyers, the tech-exposed stocks, will continue to perform even as the rest of the market continues to just kind of grind nowhere because of that type of dynamic of stagflation?
And because of the dynamic that there's still a lot of growth in that sector, there's still a lot of cash flow, and they're not being impacted as negatively as some of the companies that don't have the technology aspect. So as that technology flows through, maybe you do get some margin expansion from that, right? Because that's the big argument about AI, is that it's going to help us and it's going to help productivity, and that's going to help margins. So there's a little bit of an offset. Whether or not we get that, the big spend right now is still in technology. So those stocks are at a premium valuation for a reason, because people can see through and see forward.
At least I mentioned investment-grade credit spreads. Let's spend a couple of minutes on that. This is important. Super tight. Tightest level since when? Was it 98?
98.
This side of this century, which is absolutely bonkers. Do you think that tells you more about confidence in corporate America or a lack of confidence in the Treasury, in the US government, and in fact for sovereigns worldwide?
I think it probably has to do more with the confidence in the companies themselves and the balance sheets of the companies themselves. I think there's a little bit of that on the sovereign side, because as debt levels rise globally, there is concern on the sovereign side that we hadn't seen prior to those massive increases in debt post the financial crisis. But if you look at the way that public companies, at least, have been managing their cash flows and balance sheets, there's a reason those spreads are so tight. One, it was a yield-chasing operation, and the other one is they're in pretty good financial shape. There isn't a lot of credit weakness on a lot of the publicly traded stuff. So the IG and those spreads are very, very narrow because there isn't a lot of daylight between that right now.
There's another way of asking what John asked, which is, even with spreads at the narrowest since 1998, is there still value because there is any spread above benchmark government rates, given that their creditworthiness on some level might be better in some respects than the U.S. government?
I think that's one of the reasons that you saw some of those corporates be able to borrow at ridiculously low rates, right? Because people looked at them and said those stabilities of cash flow are way better than some governments that I've seen. I think in the end, there's always a place for fixed income when it has finally a yield, which it does. If you're matching portfolios, if you're matching exposure, or if you're just looking for safety and preservation of capital, there's always a space for that. And I think that right now, it's not a bad place to be if you know that you need that money in a short period of time. Longer term, do we think that rates maybe go higher in the long end? They could. It's unusual to stay this low for this long.
Are corporate bonds a better hedge right now, a better safety play than government bonds, given the fact that they also have these strong balance sheets behind them?
I think that the volatility in governments is much more policy-driven than it would be for corporates. So to the extent that you might see more volatility in the government market, and we have over the last year, which is more, the last couple of years, it's more surprising to see that much volatility in government spreads. So to the extent that there's less vol in the IG market, I think that's not a wrong thought.
Sarah, good to see you. Thanks for dropping by. Thoughtful stuff. Sarah Hunt there of Alpine Saxon Woods. I believe it was Brian Weinstein, then at Morgan Stanley, now at Apollo. But when he was at Morgan Stanley, I think he sat around this table and we talked about the prospect of IG spreads trading through, actually seeing them go through treasuries.
Yeah, and what Sarah Hunt just said there, I thought was really compelling, the idea that you could see less volatility in corporate bond yields than you could government bond yields, because they're not going to be subject to tariff announcements or some other proclamation that could have the same kind of volatility on long-term government bond yields. So maybe Apple's not the best example, maybe Microsoft spreads are going to trade inside 10-year Treasury yields at some point at a theater near you.
It's pretty amazing, isn't it, that we've got the tightest spread since 98, equities at all-time highs, and we're having this conversation about a deceleration in the economy and rate cuts coming soon.
Well, this to me is the conundrum. How can we be talking about the need for more accommodation when you see record highs in a number of different risk instruments in the U.S. equity market? And you just see that the U.S. equity market and the U.S. bond market has gotten so divorced from the underlying economy that we're talking about two different things, and that continues to be a conundrum for the Fed.
Two very different worlds. S&P futures this morning, negative by 0.1% on the S&P 500, with an update on stories worldwide with your Bloomberg Brief. Here's Yahira. Hey, Yahira.
Hi, John. President Trump is pushing for a one-on-one summit between Ukraine's President Zelensky and Russia's President Putin to discuss terms that could bring an end to the war. Trump urged Putin to consider the plans after European leaders joined Zelensky at the White House yesterday. The summit would be followed by a trilateral gathering involving President Trump. Meanwhile, sales for Home Depot coming in shy of expectations in the latest quarter, with consumers staying away from big purchases as they continue to face higher interest rates and inflation concerns. The world's largest home improvement retailer said comparable sales grew 1% in the fiscal second quarter, less than analysts had expected, but an improvement from the prior quarter. Shares are higher. Meanwhile, NVIDIA shares are also edging higher, up 0.2% as the company is reportedly developing a new AI chip tentatively being called the B30A. According to Reuters, the chip would specifically be for China and would be more powerful than the H20 model. The B30A chip is likely to deliver half the raw computing power of NVIDIA's flagship B300. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara, about 30 minutes away. Up next on the program, Europe's charm offensive.
We had very good conversation with President Trump.
I really want to thank you, President of the United States, dear Donald, for the fact that you, as I said before, broke the deadlock.
So far, nobody's been able to bring it to this point, so I thank you for that.
That conversation up next with Brian Gardner of Stifel, live from New York City this morning. Good morning.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Stocks are doing okay. We're down about 0.1% on the S&P, and the Nasdaq 100 softer by 0.14 on the Russell. After a brief breakout, it didn't last long. We're down about 0.16% so far this morning. Under surveillance this morning, Europe's charm offensive.
We had very good conversation with President Trump. It was really good. And we spoke about very sensitive points.
I really want to thank you, President of the United States, dear Donald. As I said before, broke the deadlock.
Thank you, Mr. President, for organizing this meeting and for your commitment.
So something is changing, something has changed thanks to you.
And so far, nobody's been able to bring it to this point, so I thank you for that.
Here's the latest this morning. President Donald Trump looking to strike a deal on security for Ukraine while pushing for a meeting between Russian President Putin and the Ukrainian leader Zelensky. Bloomberg's Ollie Crook joins us now for more. Ollie, something's changed. What changed?
Yeah, I think that what has changed in the last 48 hours is going out of these sort of abstract on this idea of the security architecture after a sort of peace proposal, which of course the backstop, the Article 5 style conditions where the United States would support Ukraine in the event of a peace deal. That was basically fundamentally to getting a deal over the line. And that is something that Donald Trump himself, not just Steve Witkoff, not just Marco Rubio, said that he would be there to stand by in some capacity in terms of securing security guarantees for Ukraine in the future. Now, what that exactly means is still very much up in the air, but what the European leaders can say, and is factually true, and in fact the European leaders are meeting right now to debrief from that meeting yesterday, is that there is an architecture that is currently being worked on at the top level by the United States and the Europeans. But what I think, John, is very interesting here is that we tend to focus on selling this to the United States, this defense architecture, selling it to the Ukrainians, to a certain degree, selling it to the Russians. What we have not really talked about, and this is going to be the next task at hand, is selling it domestically here in these European capitals. These were European leaders that were very unified in Washington, D.C. They don't necessarily have that kind of rock-solid commitment and sort of unity within their own capitals. You think just of the Germans who last week, the AfD, the right-wing party in Germany, who's been very pro-Russian, very against giving more support to Ukraine, they became the #1 most popular party in Germany last week. If you're talking about potentially putting German boots on the ground within Ukraine to secure its defense in the future, that is going to be a very difficult sell politically. So there's still a conversation here in Europe that needs to happen about boots and, of course, money, because the United States is not going to pay for it.
Well, Ollie, let's talk about the money. This came from the Financial Times. They're reporting Ukraine will promise to buy $100 billion of American weapons financed by Europe in a bid to obtain U.S. guarantees for its security after a peace settlement with Russia. What are you hearing about that?
Yeah, so listen, this is going to be part of the conversation going forward, and there are a lot of different programs that are currently in place to buy a lot of these arms. There's a lot of question about, John, that almost $500 billion that the Germans are going to spend on defense. How much of that are they going to willing to put forward to ensure Ukrainian security? This is the fundamental question, John. We talk about joint debt. This is something that comes in and out of the sort of periphery and the sort of main conversation here in Brussels. It's sort of faded away. At a certain point, John, I think it's inevitable. We're going to be back at the conversation at these finance ministers' meetings like we were, 10 years ago at the sort of height of the financial crisis, talking about joint debt, because how is this going to get paid for? The Europeans do not have the military hardware. What they do have is a little bit of fiscal space, not that much of it. They're going to probably have to look at debt financing this. This is something that they did in the pandemic. It's something that's going to be reopened once again. $100 billion is a lot of money. It is money that Ukraine does not have, and the Europeans need to pull together in order to keep the United States on board.
Ollie, appreciate it. Ollie with the latest over in Brussels. Joining us now to extend the conversation, Brian Gardner of Stifel. Brian, welcome to the programme. Let's take it from the top. What are the details, as far as you understand, of what the security arrangement might look like?
I think Ollie hit the main points, and I think the big takeaway is it still has yet to be finalized. That, yes, you do have a European financing component with U.S. selling arms to Ukraine. Big question is, in terms of the security guarantee, is boots on the ground. I mean, is this security agreement going to include NATO troops, U.S. troops? I don't think anybody knows that yet. So I guess, Jonathan, the ultimate answer to your question is that we still don't really know what the details of the agreement are. Maybe there really isn't an agreement in place. It's an agree to move forward with some kind of framework, but not a real agreement yet.
Brian, Ollie raised a really good point, this question of selling this deal, whatever it may look like, at home. And there's a real question in the United States about how much appetite there is, what type of popular support there is in furthering this effort, in putting boots on the ground from the United States, from giving any money from the United States, or potentially from not doing such actions, given some of the previous polls. What's your take on where the populace is?
So throughout the Ukraine conflict, the U.S. population, U.S. voters have pretty solidly been behind supporting Ukraine. That has slipped over time, but it's still, I think, a majority. I think most polls would show a majority of Americans supporting Ukraine. The question is boots on the ground. And this becomes not just an issue for the broader population, maybe more specifically for the Trump base, the MAGA base, which has been against forever wars. It's against U.S. international involvement. They see this as a European problem, not an American problem. This could create a big split within the Trump base. That being said, he has a unique hold over that base. So, are they going to stick with the principles that led them to back Trump, which was, kind of make America first, make America great, America first policies? Or are they going to then shift and say, he's our guy and we're going to follow him, even though this is not what we voted for? Well, but there is a question coming up about his support among within his base.
Well, to build on that, Brian, I mean, this is sort of the question at a time when there are so many different domestic issues that are facing the government. Why is President Trump spending so much time with this? What is your sense of why, at this moment, President Trump is getting so engaged in trying to bring about the trilateral meeting?
I think it's the same answer if we were talking about tariffs, which is legacy, right? Everything that Trump is doing at this point, especially in these big issues, is about legacy. I think he knows deep down that when historians write the history of his presidency, foreign policy is going to play an outsized role in that. It always does. Going back to World War I and Wilson, World War II, the Cold War, presidents have been defined for the last 100 years by their foreign policy accomplishments and failures. And to bring peace to Ukraine, what he's working on in the Middle East, if he's able to accomplish this, despite all the noise about what goes on domestically in the United States, that is going to set him apart in his mind from a lot of other presidents, and that historians will be very kind to him as they write the history of his presidency.
Brian, something really big and transformative is happening to American power on the global stage. It feels like we're blending national security initiatives with commercial objectives. A colleague of mine, Steve Hu, put this out on X in the last 24 hours, Pax Americana as a service. He's being snarky, but you can see how this might play out. If you want us to be a superpower on the global stage, you're going to help pay for it, seems to be the message, Brian. How are you thinking about that change? Because that's a big shift.
Yeah, I think there's a shift internationally. I think there's a shift domestically, Jonathan. I'm probably going to get in trouble for saying this, but I don't necessarily view Donald Trump as a capitalist. I think he's more of a mercantilist. And I think your question and viewing how U.S. domestic economic policy go hand in hand, I think you can see that shift there from capitalism to mercantilism, where the state has, yes, there is private property. You can make profit, but the state is going to have more of a say in how you do that. And then on the international side, yes, we're going to help, but you're going to pay for it. I think there's a big shift both internationally and domestically going on.
Brian, we'll keep tracking it. Appreciate your time. Brian Gardner there of Stifel. In just a moment, we'll catch up with Angelo Zeno of CFRA, talking about the White House taking a 10% stake of Intel. That speaks to exactly this conversation we're having right now about national security.
Yeah, and what Brian said, which is he sees President Trump as more of a mercantilist, someone who believes in the government controlling more of a stake in terms of some of the key businesses than just allowing capitalism to run amok. And that seems to be the Intels of the world, the give us a slice of the NVIDIA chips of the world. But if you look back, a lot of different kind of republics in the past, I'm thinking at Rome, for example, controlled the trade routes and controlled these things. Sure. So it's not without precedent. And this is something that some of the big rivals, I'm thinking of China, do with a much more aggressive thumb.
Capitalism with Trumpian characteristics.
Exactly, I guess so.
It's kind of what this is developing into. We'll talk more about Intel and that 10% stake in just a moment. We'll speak to Angelo Zeno of CFRA, plus Danny Berger with your morning movers, and a move in sympathy with Home Depot. From New York, you're watching Bloomberg TV.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The opening about 2 hours away. Equity futures on the S&P 500 pulling back by just 0.1%. No drama so far this Tuesday morning, down by 0.14 on the Nasdaq 100. With your morning movers, let's cross over to Danny Berger. Hey, Danny.
Hey, John. The drama's even evaporated for Home Depot, which about an hour and a half ago reported earnings that were disappointing. Their comparable store sales for the second quarter up only 1%. The expectation was for 1.4. They talked about the fact that people weren't buying larger ticket items. Shares, though, have erased gains, are now up 0.2%. They did talk about a lot of purchases still for smaller DIY type things. So maybe that's helping keep things afloat. Just to flag, though, we're going to get Lowe's earnings tomorrow. Those shares are still down only slightly, 0.33% in reaction. We also had Medtronic earnings. This is the medical device maker. What a volatile session it has been for this company. First, the Journal, before the earnings, reported that Elliott had taken a stake in the company, was adding directors. Shares went up 10%. They reported earnings and shares fell. They're now down 3%. Despite some pretty solid earnings, they even upgraded their outlook, saying that the tariff hit would be less than expected, but maybe a buy the rumor, sell the news kind of thing happening here. Finally, Intel, those shares continue to rally this morning, up 5%, a big 12 hours for them, with the Trump administration reportedly mulling taking a 10% stake in SoftBank, investing $2 billion, buying that much of Intel shares. So again, those shares up 5% with the big bets from the government and SoftBank. John.
Danny, thank you. More from Danny in the next hour, plus more on that story in a few minutes' time. On our radar this morning, one of our top stories worldwide, President Donald Trump saying a meeting between Russian leader Vladimir Putin and the Ukrainian President Volodymyr Zelensky is in the works and could be followed by a trilateral meeting that would also include the President of the United States. Elsewhere, the outlook for U.S. credit remains stable. S&P Global affirming a AA+ rating, saying the revenue from President Trump's tariffs will help to balance the cuts made in the massive tax and spending bill.
Two things. Number one, exactly that is the reason why it is going to be so difficult for anyone to take these tariffs off. This is the reason why it's going to be politically incredibly difficult for whoever follows President Trump to reverse some of the tariffs, regardless of the legalities involved. That's number one. Number two, a kind of tension is emerging here. If you're counting on the revenues to really boost the deficit coffers of a government, that means that you expect to not necessarily bring that much production back to the United States. It is sort of a carrot and horse or stick or whatever the expression is. I never get the expressions right.
Anyway, live TV. Can we rewind? We can rewind. Start again. How about that? Your thoughts?
There's this real question of, can you count on revenues for something that you hope to change on a structural basis? And that, I think, is what a lot of people are looking at.
Yeah, look, you totally nailed it. I'm going to stop laughing and you can too.
Thanks.
It's the ultimate contradiction of the policy. If you believe the tariffs will work, then you won't raise any revenue because the manufacturing will come home. And ultimately, if you're relying on the revenue, then you're also relying on the manufacturing not coming home. And That's the ultimate tension, I think, as this plays out.
Right now, it seems like a lot of companies are saying, look, it's better for us to keep importing goods from elsewhere, even by paying the tariffs, than to try to make it domestically. And I guess that some of the policy is counting on that continuing. With Scott Bessent coming out and talking about this with you, saying that all of the tariff revenues for 2025 could be well in excess of 1% of the United States' GDP.
So if you look at those numbers, he's looking for something north of 300 billion. CBO's telling you the recent bill that's passed will add 3.4 trillion over the next 10 years. You can see how these things stack up. Of course, none of this is going to be static, and it can all change over the next few years.
This is the reason why you haven't seen yields go even higher at the long end. And when you see some of the revenues coming in and some of the projections, you've actually seen long end treasury yields go down. So there clearly has been a pretty active type of discussion in markets about just how much the tariff revenue is offsetting some of what we're seeing with the expenditures.
And the carrots and horses and sticks and all of that. I love that.
I don't know. It's like you put them together. What comes first, the horse or the carriage? The cart or the horse? Right. I hate these expressions.
We'll figure this out in a commercial break. I'm going to move on. I want to talk about Apple. Expanding new iPhone production in India. The tech giant wants to reduce its dependence on China for models being sent to the US and avoid new tariffs. All 4 iPhone 17 models will be made in India ahead of their debut next month. And this was the development that really irked this White House over the past few months, and I think put some daylight not only between the president and Apple, but also the president and India.
The fact that Apple is doubling down on this, though, highlights, A, how they cannot make policy according to what a tariff rate is threatened as at any given moment, and also highlights their determination to move away from China and depending entirely on production there. So to me, the fact that they're continuing with this, despite the fact that this raised ire with President Trump, shows the difficulty that a lot of companies are in trying to make long-term planning at a time of short-term policy shifts.
And stepping into the realm of speculation just a little bit, if we were to speak to the trade strategist Tim Cook this morning and ask him, what does it tell you about what he thinks is going to happen with tariffs in India over the next 12 months?
Well, that's a great point, especially as they're being used as some sort of negotiating tool in the Russia-Ukraine talks. It seems like he's expecting those to come down in a material way.
That's the latest on Apple. Let's stick with tech and this story, a developing one. Shares of Intel whipsawing after sources here at Bloomberg reported the Trump administration is considering taking a 10% stake in the chip maker. Bloomberg's Tom McKenzie joins us now from London for more. Tom, that's about $10 billion. Where's the money coming from?
John, this is a conversion. The plan, at least according to our reporting, is you convert the subsidies under the CHIPS Act, of which Intel has received about $2.2 billion US to date, but is in line to receive almost $11 billion US. You convert that into equity. That gives you your approximate 10% stake in Intel, again, according to our reporting. Is this a lifeline from the US government, or is it a vote of confidence in the CEO, Lip-Bu Tan, of course, whose fortunes have whipsawed under the pressure from President Trump? Came out of that meeting last week, and President Trump spoke highly of him and his background. At a time, of course, when we have SoftBank and Masayoshi-san also putting in $2 billion US into Intel. Of course, Masa has a relationship with Lip-Bu Tan. Lip-Bu Tan used to be on the board of SoftBank. What's clear from SoftBank's investment is they certainly see a vote of confidence in the Trump administration's policy, at least efforts to reshore some of that manufacturing to US shores. That came out. That was clear in that statement from Masayoshi-san. The key question around the government investment is, does this also apply to other tech companies within the US sphere? If you're Texas Instruments or Micron or Global Foundries, should you also be looking potentially at a US government stake in your business?
Tom, these are really thoughtful questions. I think something else that you've nailed, and I've listened to you, I've been hearing you talk about this over in Europe. The strategy of Intel was about to change. It felt like we were going into a world where you had to make a choice. You design or you build. And now the US government wants to build out domestic foundry capacity. I imagine they still want Intel to do both. Tom, do you see some tension there between what the strategy might have been and what it might be now?
To your point, John, look, this is a business that wants to be designing and competing with NVIDIA. It's not doing that yet. Its ambitions are to match NVIDIA in terms of nanometers, 1.8 by 25-26, towards the end of 26, I should say. And then there's the foundries business and that plan in Ohio for a super foundry. Those two aspects, design and build, not a conundrum, of course, that NVIDIA has to face up to with just the focus on design. The politics suggest that the Trump administration will want that build out of the foundry in Ohio. and the design is where the margins are. So that's a key question for investors, because another element that has not been put to play yet is an Intel that is better capitalized but still doesn't have customers for that mega foundry. If indeed that is what the Trump administration wants to see at the end of this, is the build out of those facilities in Ohio.
Tom McKenzie with the latest. Tom, thank you, sir. I'm going to take that note and throw it over to Angelo Zeno of CFRA. He's got a hold rating of the stock, price target of 24. Angelo, I'm sure that you were following that conversation. That last point is a really important point. And I know you've explored it in your research because I've read it. Can you imagine a scenario where Intel builds out domestic foundry capacity and then the US government effectively puts pressure on fabless vendors to ultimately use it?
I mean, and John, I think that would kind of be almost the intent here for the U.S. government in many respects. I think if you kind of give Intel essentially a lifeline here in terms of funding, that really doesn't do anything if you think about it, right? I mean, it doesn't really solve the problem that Intel has here. Intel really has two problems. One is the design aspect of things. It's having the right product out there to compete with the likes of an NVIDIA and an AMD, which they are, light years behind at this point, especially kind of in terms of having the right AI offerings on the data center server side. And then the other issue is clearly, as far as their foundry initiatives are concerned, ramping that up, finding external customers, to really take that capacity. And when you start thinking about that, really, I would think the whole objective here for the U.S. government is, in many respects, to try to strong arm their way into getting the likes of, an Apple or NVIDIA or Qualcomm or Broadcom, any of those names. None of those were even names at one point considered to potentially acquire a name, Intel, right? So we'll kind of see how this all evolves. But I think ultimately, yeah, I mean, the U.S. government probably wants to push some sort of business to Intel in some way. I would say this, as far as the 232 semiconductor investigation goes as well, which we're still waiting on the details of that. The U.S. government, we've heard from Trump recently, is he's potentially looking to give an exemption here to potentially a company like Taiwan Semi, which would almost disincentivize companies from actually using Intel's local production. So it'll be interesting to kind of see how all these moving parts really work itself out.
SoftBank's buying, the United States government's buying. What would it take for Angelo Zeno to buy? For Angelo Zeno to actually see this is actually having a real upside ahead, with the prospect that at least more customers would be using their foundry?
Yeah, I think you definitely need a white knight in there, right? I mean, you need to get actual validation from a major external customer out there to actually give their stamp of approval to Intel and what they're doing. And I'm not necessarily talking about some token business that we've seen from the likes of a Microsoft or an Amazon. You need to have a company like an Apple and NVIDIA actually come out and give their full support to Intel. And again, this is something along the lines of potentially the U.S. administration going to NVIDIA and saying, hey, listen, help us out maybe in some respect and give Intel some business. And potentially maybe we'll say, maybe we won't charge you that 15%, from business going into China. So it'll be interesting. Again, it'll be interesting to how this stuff all plays out. But what we do want to see is something is in terms of a white knight in terms of that foundry business. And you also do want to see some success on the product side. But at this point in time, the product side just looks like it's just going to take a lot of work and a lot of time. But at this point in time, listen, I think this is a very hard buy if you're an investor. I think the opportunity cost is just way too high. There are just so many better opportunities within the semiconductor ecosystem rather than looking at Intel at this point in time.
Angelo, can you give us some color on what the barriers are that Intel has to cross in order to catch up to TSMC? What do they have to do? Is it on a talent side of things? Is it on an actual capacity side of things? Or is it in just a nuts and bolts hardware side?
I think, when you think about the, what we heard when Intel actually tried getting into the whole foundry space is that it was going to be a lot harder than Gelsinger at that point thought it was going to be. And a big reason for that is the servicing aspect of a foundry business is a lot more complicated than one thinks, right? So what they've actually been able to do over the last couple of years is to some extent try to, close the gap on the technology manufacturing side, and I think that's been a huge help. But really, they haven't executed and been able to really show external customers that they've been able to find success actually servicing and kind of meeting those, the potential obligations that these external customers have. And again, it's almost kind of an external customer out there really taking that leap of faith at this point in time more than anything else. In order for Intel to start finding some success. But if you actually go back just a month ago, I mean, Lip Bhutan actually was on an earnings call and said, no more blank checks, right? And you've now got the U.S. government in here almost kind of looking to accelerate some of these, initiatives and hopefully get Intel to get this all right.
Angelo, let's pretend that we're talking about China, and Intel's a Chinese company, and the Chinese government's about to do what the US government is thinking of doing. We wouldn't accept those chips. So let's talk about the Chinese business. How big is Intel's business in China? And what are the Chinese about to do if this carries through?
That is actually a great point, right? I mean, when you think about it, right, so about 30% of the revenue is from China at this point in time. And I think that to some extent, that's got to be at risk. I mean, there was an effort here, or there has been an effort by the Chinese government to de-emphasize a lot of, the US-based designers, but specifically when you look at Intel and even AMD CPU-oriented businesses into the PC market, there's a path here for the Chinese government to reduce their reliance on Intel and even AMD here over the next couple of years. So potentially you see that accelerate because maybe to your point, if you're the Chinese government, do you really want to be investing in Intel and leveraging Intel if it's somewhat owned by the U.S. government? So there is risk, at least for Intel's China business, I think, here over the next couple of years, if we see that U.S. government stake there.
I want to give you some credit, Angelo, not my point, your point. It was at the bottom of your note. Angelo Zeno. Angelo, thank you, sir. Appreciate it. Thank you very much. Angelo Zeno there of CFRA. The point on China is a really important one. Big slice of the revenue comes from that country. They're not going to like this development at all.
Yeah, the idea of state planning, how does that deal with the idea of national security elsewhere? And that's going to be a real issue as China has already instructed some of its biggest tech players to avoid buying from the likes of NVIDIA and maybe Intel at a time where they can't really avoid that. And that's what we've seen in a number of different reports.
Intel so far this morning, just a little bit firmer. Let's get you an update on stories elsewhere with your Bloomberg Brief. Here's Yahira. Hey, Yahira.
Hi, John. Google is betting on nuclear power. The tech giant has struck a deal with the Tennessee Valley Authority and startup Kairos Power, the first binding agreement in the U.S. with a new kind of smaller, safer nuclear reactor. It will supply 50 megawatts to federal utility TVA, which powers Google's data hubs in the region. The project is expected to go live by 2030. Meanwhile, the amount of visitors to the U.S. arriving on student visas has plunged for its fourth consecutive month, with the biggest declines coming from Asia. U.S. universities have already warned that first-time foreign student enrollment on campuses are projected to fall by about 30% this fall, potentially costing the education sector $2.6 billion in tuition revenue. And Carlos Alcaraz won the Cincinnati Open final after Jannik Sinner pulled out due to illness in the first set. The match lasted just 22 minutes amid scorching heat and humidity. It was the fourth time this year the two superstars have met in a final. Alcaraz, who is ranked number 2, now holds a 9-5 advantage in his matchups with Sinner. Looking forward to the U.S. Open. That's your Bloomberg Brief, John.
Ditto. Just not looking forward to trying to buy tickets because it's so bloody expensive every single year.
Qualifiers. That's where you get to see all the different players and you get to see a lot of things, and it's a lot cheaper. That's what my family's doing, but I'm at work.
Because it's nice over there,
yeah,
you know.
Exactly.
It's a nice experience.
Out. You know, some people are friends with the ball boys, etc.
We'll have a rant on New York sports another day. It's just expensive. Up next, waiting for every response from the Fed.
The Fed needs to respond to what's actually happening in the real economy. Demand is the principal reason why labor market conditions have slowed, and that's something the Fed ultimately will need to respond to.
Just this massive concentration of wealth in one city. They all like the same sports, and anyway, I couldn't hold it in.
Access, yeah.
Couldn't hold it.
Everyone was waiting for it, so.
Priya Misra of JP Morgan joins us next on the bond market.
Applications have been received positively both in Kenya and UAE, and we are optimistic that we should be able to open the office in the fourth quarter. We think the Middle East have deep capital sources. It has strong logistics for trade, and it is a strong center for investment. And we are seeing increasingly the global GDP is increasingly becoming overweight in Asia and Middle East. So that linkage with the middle income segments growing in India and China, they will provide a very strong market.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Live from New York City, welcome to the program. Under surveillance this morning, global bond yields ticking higher ahead of comments from Fed Chair Jay Powell due Friday. Priya Misra of JP Morgan writing, the dual mandate is in tension, but we think a September 25 basis point rate cut is likely and a signal for more cuts to come as the Fed removes the level of restriction in monetary policy. For more, Priya joins us around a table. Priya, good morning.
Morning.
It's good to see you. RBC has talked about this. A lot of people are focused on it. Is the long end becoming unanchored from the front end? Not just domestically, but worldwide when you look at the bond market at the moment?
So I'm glad you bring up the global side because I think that's absolutely important. Global term premiums are correlated. The fact that we have fiscal expansion globally, the fact that there isn't that much demand for long duration is the reason why UK, German, Japanese long-end yields are rising, and that's raising US rates as well. But, I mean, talking about the long end getting unanchored, sell America or the deficit, that's like very April. I mean, I know it was only a few months ago, But you look at the tariff revenues, they're coming in, they're actually offsetting the OBBB, the One Big Beautiful Bill. I think it's going to largely offset it. You look at the Sell America trade, we're not seeing evidence that foreign investors have stayed away. Now, there is a longer-term question. How much should Treasury, and I love your question to Secretary Besson, how much should you issue in the long end? I think all Treasury departments have to think about that and maybe not issue as much in the long end. And that might be happening. Issue where the demand is. The demand, and you see it in the credit market, the mortgage market, the Treasury market, demands in the belly of the curve, 5 to 10 years. That's where they can issue. So yes, it's a little unanchored. You can trade the curve on that front. But I don't think we're looking at a scenario that bears steepener, which is the nightmare scenario for risk assets as well, is when all rates rise led by the long end. We're not seeing that. I think the curve is steepening for different reasons now.
Are we going to see the opposite? You said that Sell America is so April. Okay. Are we actually outright into Buy America again as we see the dollar firm up in a couple of different pockets? And the long end, yes, yields have been rising, but not necessarily unmoored in the way a lot of people were worried about.
Exactly. So I do think that U.S. exceptionalism, remember we talked about it just a few months ago, is that over? Look at the economic data. We're pricing it. Look at financial markets. You know, I know the financial markets is not the economy, but it is pricing in. I think markets across the board are pricing in a soft landing and what Governor Waller called good news rate cuts, that maybe the Fed can reduce accommodation, those rates can fall a little bit, allowing the broadening out of the recovery. I mean, we have the structural AI tech capex in there, but maybe this can broaden out. That's what the market's pricing in. So to your question, is the rest of the world buying U.S. assets? They are. They're buying credit, they're buying equities, they're buying treasuries, fixed income, because they're seeing that the U.S. is still growing the best.
Are you going long duration? Is this a time to buy, even at a time where potentially there is inflationary pressure coming down the pike?
So we are long duration. We've looked for any opportunity. We've been in this 375, 4.5 fair value in our mind. That's the soft landing fair value. There's an asymmetry, though. If things slow down, we have a lot of policy shocks that have hit the economy. If things slow down, we can absolutely rally more. But if we stay in the soft landing, by rally more, I mean lower rates, but if we stay in the soft landing, 430 on 10s is cheap. You're near the upper end of the range, so absolutely, we've been buying some duration. Are we max long? No. You know, there's, to your point, the Treasury interest rates are driven by this fear of inflation, fear of growth. There are shades of stagflation in the data right now. I don't think Chair Powell is going to commit to a rate cut. I think he's going to just signal the easing bias. So we might hang around here. But what happens if this, I think the labor market's on edge. And if things actually slow down, as companies say, we can't absorb all of this in margins, we're going to have to cut costs. That's a fear. That's what keeps me up at night. And at that point, duration's your only friend.
Do you think there's scope for disappointment on Friday?
I think we get a lot on Friday. So I always think of the economic outlook and the reaction function. If you're looking for Chair Powell to signal imminent rate cuts or a dovish reaction function, I don't think we're going to get that. I think it's going to depend on, so where the disappointment might come in is, well, he didn't commit to September. He still left the door open because we have another payroll report, revisions. Now, I think the market might pay more attention to revisions along with that number, something that frustrated me for years, that you get both sets of data and the market always looks at the headline. Maybe we'll look at both. You have another CPI report. So I think where the disappointment will come in is no commitment. But I'm going to be watching that framework review. That's going to sound maybe a little bit hawkish. They're going to talk about symmetry to the unemployment rate, symmetry to inflation. Yep. That might sound a little hawkish, but I'm watching the economic outlook. How nervous is he that consumer spending has slowed, that PDFP, the private domestic final sales, that number is slowing without the rise, that much rise in inflation. So why is the consumer pulling back if companies are not passing on costs? It means there's maybe some underlying slowing here.
Priya Misra of JP Morgan. Based on what you've said, I imagine that speech is going to be a lot longer than 8 minutes, just based on those comments. From New York City this morning, good morning. The third hour of Bloomberg Surveillance up next.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, We are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We published a story recently about the explosion of robotic companies and innovation in China. I think we said there's something like 50 or 60 robotic startups in China. Are we behind, and should we be concerned about that?
I think as far as the state of innovation, no. Most of those robots aren't built for work, for the things that, which is the entry point for these robots today. They can do some interesting things. A lot of times, it's backflips or making coffee or something, but not really useful work. These robots can pick up to 50 pounds on our next generation. So they're great for the education of robotics, getting people interested. But as far as humanoids, they've got to check that safety box before they can come into any of the facilities here. And that's a big bar that we haven't seen much of out of the Chinese robots.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
It's been messy for the cyclical side of the market.
You don't want to have a scenario where tech and tech capex slows down.
The market's back where it was, or heading at least in the direction of where it was last year.
You can take a look at where risk is priced right now, and I think reasonably conclude it's a relatively rich.
The market figured out and kind of agreed with me that the economy was resilient and we're not going to have a recession.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
It is a no-drama Tuesday so far, at least. Live from New York City this morning. Good morning to you all. The third hour of Bloomberg Surveillance starts right now, with equities just off all-time highs, pulling back by not even 0.1% on the S&P. Similar move on the Nasdaq. Had Home Depot report earnings a little bit earlier this morning. I'll use that phrase again. No drama from them. Then on to tomorrow, we're going to hear from Target. The day after, we'll hear from Walmart, and then the man himself on Friday, Chairman Powell, just a few days away.
It sets up the preamble perfectly to understand the dual mandate of both employment, the idea of how much the labor market continues to be firm versus inflation. And the retail earnings are going to be really key with that. Home Depot coming out and saying that they didn't have to pass along the prices quite that much over the past couple of months, partly because 50% of their items are sourced from the United States, but also they imported a lot of goods ahead of the tariffs getting implemented. Going forward, not so simple. And to me, that is one of the key questions. How much is this delayed, the inflationary impact of some of these levies?
The most important thing I think we're going to have discussed in the next 60 minutes or so with Jim Karen of Morgan Stanley is about what happens in the next few months, and not just obsessing over downside risk, but considering the prospect of upside risk, the potential for a re-acceleration in the US economy. I think that's really, really important, because what you just heard from Home Depot was important. What they said to you was that you could see activity delayed and not derailed, which also means in the next few months you could see things pick up once again.
If you get certainty of tariffs, if you get certainty of policy, and this is ultimately the key question, are we discounting some of the weakness without considering what will happen down the pike? The idea of people putting off big ticket items doesn't mean that they're never going to do them. It means that they're waiting for more certainty. One rate cut could actually ignite that. The idea that they're going to pass along price increases down the line also highlights the idea that they think that investors are going to be able to accept them. This from Goldman Sachs, I thought this was fascinating, an analysis that came out. They estimate that companies are paying 64% of the tariffs currently, but that ratio will drop to 8% by October. Consumers currently paying about 22%. They expect that to go up to 67% of the tariff costs coming by October. It just shows this is coming down the pike. The question is, will consumers be strong enough to absorb that? And then how much does that shift market expectations?
Equities this morning negative by not even 0.1% on the S&P. Coming up this hour, Jim Karen of Morgan Stanley as markets eye Fed Chair Jay Powell in Jackson Hole, Chuck Grom of Gordon Haskett in a busy week of retail earnings, and Gene Soroka of the Port of Los Angeles as they brace for the impact of new tariffs. We begin this hour with stock steady as investors await a sign on rate cuts. Jim Karen of Morgan Stanley saying the following: I expect Powell to acknowledge downside risks in the economy, but not signal a rate cut is 100%. Jim joins us now for more. Jim, welcome to the program, sir. It's a lesson you taught me a long, long time ago, to consider the risk cuts both ways. Can we talk about upside risk? What is the potential for that upside risk materializing in the months to come?
Thank you, John, and thanks for having me on the show. Look, I think there's a lot going on here, and what we have to recognize is that a lot of things are in flux at this moment. So we're transitioning our economy from a dependence on the government sector in terms of job creation to now shifting towards the private sector. We're in that very uncomfortable in-between period where you're going to see weakness in the labor report. These are the numbers that are likely to come up. I think it's early September, September 9th. We have another quarterly census of employment and wages, which is the downward revisions that we're expected to get in previous month payrolls. All of this is in front of the next Fed meeting, which I do think that the Fed is going to cut 25 basis points. But when we look forward, when we look into the future, what that means is that the labor supply had been taken up by the public sector, meaning by the government sector. The majority of job growth that we've seen over the past few years has come from the government sector. Now, that's going to shift over to the private sector as we go into late this year, 2026. Now, what the demand is going to be, I think, likely is going to come from the tax and budget program that was passed by the Trump administration. A lot of the CapEx investment that we're seeing, a lot of the FDI that's coming in from foreign countries, is going to be a large surge of that investment coming into the U.S., which means that private sector jobs are actually going to start to lead the growth. Private sector jobs over the past few years have been relatively flat to going down. Public sector jobs, government sector jobs have been actually going up, and that's what's been keeping things buoyant. Now we're going to see a shift in this mix, and I think that is going to be the leading indicator for there to be a broadening out of markets, and that could be a positive element going forward.
Jim, just build on that. How do you want to position for that transition in the U.S. economy?
So really, it's in terms of positioning in portfolios, it's really a broadening of the equity markets. So what we've seen right now are the CapEx leaders. These are the Mag 7. These are the big tech companies that we all know. They have all the money, so they can do the early investment, and that's what's really been propping up and boosting up the economy and a lot of the data. What we think can happen going forward with the tax plan and all the CapEx and all the investment that's coming through, that the labor supply that's going to be available to the mid-cap sectors and to the broader, say, the other 493 across the S&P 500 is going to be labor at a reasonable price. I like that phrase, labor at a reasonable price, which means that wage inflation doesn't necessarily have to pick up, which is good news for the Fed because they don't have to worry about extended inflation, but you can still have a growing economy. So I think the broader, more cyclical sectors, manufacturing, industrials, all of those sectors can actually stand to gain going forward, and that tech leadership will still be there, but I think that leadership mantle is going to be shared amongst a broader cohort.
how much is that sort of broadening out predicated on the idea of an ongoing slew of rate cuts that start as soon as next month?
I'd say that rate cuts are helpful. I don't know that it's overly predicated on it. Rate cuts help valuations for sure. I mean, it's it's certainly not a headwind, but I think it's mostly predicated on the accelerated depreciation, the CapEx plans that have yet to be started. Right. Remember this, this bill was passed in early third quarter. The tax bill was passed in early third quarter. Businesses are yet to actually really start to, in the broad sense, in the more broader sense of the market, are really yet to actually start to make this investment and actually start their growth plans, because now they know what the tax plan is. There's a lot of pent-up demand that's likely to come through, and that's going to help GDP. That's going to be for the broader parts of the market to actually generate some of that growth. Look, this is a risk to the upside, and John knows I like to say this, that the risk to the upside is still a risk and it needs to be hedged. That's my tagline, right? We have to look at risks as symmetrical. There's both upside and downside. So when we look at asset prices today, I don't think the market's necessarily overvalued in an equity sense. I just think the market is taking into account that there is potential for there to be upside, and it's balancing itself right around here. And there is downside risk too.
Well, okay, so a lot of people have pointed to a lot of the aspects that you just talked about and say a lot has been priced in. You look at the 493 at something like 22 times earnings, just in terms of valuation. Even when you strip out the Magnificent Seven and you wonder, okay, is that still not accounting for some of the efficiencies that you're talking about, whether it's AI, whether it's just the idea of the investment that's coming from the tax bill that was passed? How do you decide what's already been priced in and what potentially has yet to be factored?
Lisa, that's a fantastic question. All right, so let me break it down. If we go back to January 1st, 2025, start of this year, the 12-month forward earnings for the U.S. were somewhere between $300 EPS, $300 to $310, somewhere in that neighborhood. Now, what happened is we had tariffs. There was a lot of turmoil in the economy. Analysts took those numbers down to 265, 280, 285, which is where they stand right now. What if we get back to EPS expectations back to where we were at the start of this year, around $300, $310, and you brought up the 22 PE multiple. Let's say that multiple stays exactly where it is. So now you've got 22 times $310. You're looking at an S&P that could get to 7,000. I'm not making that forecast. All I'm saying is that when you draw the distribution of probabilities, that's in there within a first standard deviation move. So it's possible that you can get there. And that's the upside potential in terms of valuing the markets.
Jim, just before you go, I just want to wrap it up. Sort of get 35,000 feet and think about where we are at the moment and where we have been over the last decade plus. Bull markets in this country for a long, long time post-GFC have been absolutely despised. They've been hated. And it feels like to some extent this is no different. I hear a lot of people pouring freezing cold water on this market, whether it's narrow breadth, concentration. There's always a reason to hate this stock market rally. Jim, when you speak to clients at the moment, do you hear any exuberance whatsoever? When you hear things like bubbles, are you seeing any of that in your career? Lean on some of your experience. Any signs of that at all?
I'm not seeing that. I'm seeing a lot of skepticism to the upside. And, as I also like to say, the markets keep disappointing to the upside, right? Because it means that people aren't fully positioned to where they want to be. The downside risks are very clear and they're very evident. We know what can happen. We can have a sharp decline in the jobs market. Tariff pressures could start to bite. Margins start to compress, and you could have a significant slowdown. We know those risks exist. And I acknowledge those risks as well. And I think most people fixate on that primarily because it's tariff driven. But what people aren't seeing is the benefits, the cost reducers. Tariffs increase costs. The cost reducers are the deregulation and also the reduction in tax costs. When you net those two things together, there could be a positive outcome, but it's hard to solve for, and it's not readily apparent. So that's why I don't think you see a lot of that exuberance to the upside at the moment.
Jim, appreciate it. Thank you, sir. Jim Caron there of Morgan Stanley. Disappointment to the upside. It's what it's felt like for a long, long time for a lot of people not riding this rally.
When you look at the 13F filings, you see that hedge funds and other institutions have been chronically underweight NVIDIA as they look to other places to outperform. And you can just imagine that that has been a chronic disappointment as well.
Stocks very close to all-time highs on the S&P 500. Let's get you an update on stories worldwide with your Bloomberg Brief. Here's Yahira. Hey, Yahira.
Hi, John. We start with our top story. President Trump is pushing for a one-on-one summit between Ukraine's President Zelensky and Russia's President Vladimir Putin to discuss terms that could bring an end to the war. Trump urged Putin to consider the plans after European leaders joined Zelensky at the White House yesterday. The summit would be followed by a trilateral gathering involving President Trump. Meanwhile, NVIDIA shares are edging higher by 0.2% as the company is reportedly developing a new AI chip being called the B30A. According to Reuters, the chip would specifically be for China and would be more powerful than the H20 model. The B30A is likely to deliver half the raw computing power of NVIDIA's flagship B300 AI chip, which is part of its Blackwell architecture. And Starbucks will give 2% raises to corporate employees this year, moving away from merit-based increases as the coffee giant looks to rein in costs. The pay bump will go to North American corporate staff, retail managers, and U.S. manufacturing workers later this year. Starbucks is in the middle of a major turnaround after 6 straight quarters of falling sales. That's your Bloomberg Brief. John?
Yahira, thank you. More from Yahira in about 30 minutes' time. Up next, the Morning Calls Plus. Chuck Grom of Gordon Haskett with a busy slate of retail earnings well underway. That conversation up next. Live from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
There's two sort of distinct markets out there today, right? There's the new construction market where the home builders have the ability to buy the rates down, and they've done that very successfully. 90% of sales historically have been on the existing home side where we do need rates to come down. And that sort of turnover in the existing home market is critical to the long-term success of the market.
That was John Lovello of UBS on a housing market in the United States, a housing market that he's still pretty constructive on. If you're just joining us, welcome to the program. Equities at the moment on the S&P, lighter, softer, negative, down by not even 0.1% on the S&P 500. It's been a quiet few days so far this trading week. That's the price action. Let's get you some morning calls. First up, Citi raising its price target on 5 below to 143, expecting comparable sales to drive a second quarter earnings beat. Your second call from Bank of America cutting its price target on Gap to 21, saying tariff pressures will weigh on margins. And finally, Piper Sandler raising its price target on Dollar Tree to 112, citing improved fundamentals and trade down benefits. Let's stick with retail. Investors looking for signs of inflation in big box earnings ahead of comments from Fed Chair Jay Powell in Jackson Hole. Mike McKee is in Jackson Hole and he joins us now for more. Good morning, Michael. Let's just talk about what we've learned so far, what you see in the data and what you're hearing from corporate America.
Well, I think the important thing today, of course, John, is housing starts, which have not been good because builders have been holding back to wait and see what happens with interest rates, as we just heard. And the question is Jay Powell going to give us any kind of indication about when interest rates might come down? The betting is among analysts that he won't, that he'll keep his options open because there is more data to come. Now, the interesting thing about all of this is, of course, that if the Fed were to lower rates, but the markets were to think that perhaps the fiscal policies we have now were going to cause inflation, it wouldn't bring mortgage rates down. It would probably raise the long end, and mortgage rates would stay where they are or go up.
Mike, this is an important point. Just how much pent-up activity is there in this economy waiting for lower interest rates, whether it's the front end or the long end?
Well, there's a lot of pent-up, it's not just demand, it's a desire to sell as well. A lot of baby boomers, the kids are gone, the house is too big, they want to sell, but they don't want to get out of their mortgage. So there's a feeling that if mortgage rates come down maybe into the 5s, you'll start to see some action out there. But that's going to take a while. So it isn't going to be housing that's going to drive things soon. And you saw today with Home Depot earnings that it's affecting the broader economy because people aren't buying the things that go into houses as well.
Mike McKee, some data dropping in about 12 minutes' time. We'll cross over to you in just a moment. Stay close. Mike mentioned Home Depot. Let's stick with the consumer and Home Depot. Given a warning as consumers pull back from big-ticket items. Chuck Graham covers Home Depot for Gordon Haskett, has a hold rating at 380 price target. Chuck joins us now for more. Chuck, just first of all, what's the big takeaway so far this morning for you and the team?
You know, to be honest with you, it's kind of a non-event. 1% comp, pretty much in line with expectations. EPS was in line, backing guidance, and it's really more of the same out of these home improvement retailers. Really just continue to bounce along the bottom. As some of your prior guests have said, we really need housing turnover to really trigger demand, and right now we're not seeing that. So business is okay, and right now we're waiting for that inflection, and we're just not seeing it yet.
Chuck, do a couple of rate cuts get it done, or do we need to see more than just that?
You know, the survey work that we do shows that if you get mortgage rates below 6%, you start to see an improvement in demand. You really kind of need into that mid 5% level, given where rates are and where people are sitting on their current mortgage rates. So probably need more than just a couple.
How much does Home Depot stand in a better position than the others, just simply because so much of their inventory comes from the United States?
Yeah, that's a great point. And with prices moving higher over the next couple of quarters, I mean, Home Depot, Lowe's, the two big box guys are in great shape relative to some of their peers. But like I said earlier, we really need to see rates move lower. That's the big thing. Big ticket just continues to be weak. We think on their call at 9 o'clock, we hear about certain seasonal categories doing a little bit better as we progress throughout the quarter. We think the exit rate in July was probably better than the entry rate in May. That'll give people some hope as we move into the back half. But their guide, in our view, still looks a little bit of aggressive. If you look at the 2-year stacks, what they need to do to hit that 1%, they really need a big improvement. We're talking like 300-400 basis points of a comp improvement for them to hit that guide. And right now that looks a little bit aggressive.
Chuck, we were just talking to Jim Caron about the potential to the upside, the risk to the upside of potential reacceleration. And one thing that you keep saying is we need rates to go lower to restart some of that demand. What we heard from Home Depot was a lot of people putting on hold some of these plans. If the Fed does cut rates substantially, just how much could that reaccelerate the business and give them the ability to raise prices as they plan to do with the marginal increase in tariffs?
Yeah, I mean, it could be a multi-year tailwind. And if you look at the valuation of Home Depot in particular, trading at roughly 25, 26 times forward earnings, which is roughly a 3 or 4 turn premium to historical levels, the market's kind of anticipating that. I mean, these stocks are flat on the year, and their comps have really gone nowhere for several quarters in a row. So the market's certainly anticipating that. And if you look at home improvement spend as a percentage of total PCE, it's gotten back to sort of 2019 levels. So there's no doubt about it. The home improvement vertical is probably the best that I cover. And when I think over the next 10 years, there could be a tremendous amount of demand that gets unlocked.
That's one segment of the companies that you do cover, Chuck. When you look across all the companies you cover at the moment, are there any potential landmines? I often ask you this question that some of these companies might have stepped on, given the amount of policy change we've seen in the past few months and anticipation of that policy change as well.
Yeah, I think the one, it's a good question. If you look at the big, beautiful bill and some of the pending changes to tax rates and where things are going to fall out early next year, there's a little bit of concern at the low end when we start to see Medicaid cuts and SNAP reductions. So that's, I don't know if it's a landmine today. I do think you are seeing some trade down effect or trade in, but I do think the low end is something low end income we're going to need to see. Keep an eye on that as we move into the beginning of next year.
Chuck, we've heard from a lot of companies that they're absorbing the tariffs, that they're cutting some of the margins in order to remain competitive, especially for that low-end consumer. At what point have you started hearing, or have you already started hearing about layoffs or trimming employees on the margins to compensate for that? We were just talking about Starbucks and the fact that they're only increasing wages by 2%. I mean, that's below inflation in order to restrain costs. How much does that sort of start to bleed over into the labor picture?
It's a good question. I mean, right now, I mean, the price checks that we've done would tell you that we haven't really seen a big increase in pricing. We're talking like up like 2.5%, 3.5% relative to in early April when we started to do these checks and when tariff increases started to come into effect. I think if you were to sort of guess the over under and what people thought you'd see by August, people would have taken the over relative to that. So it doesn't really seem like we've seen those price increases yet. Now, every company we talk to is telling us mid-August into September, into October is when we're going to start to see that. The second derivative of that, could we start to see job cuts and layoffs? Certainly. I think wage rates in general have been relatively benign over the past couple of years. Remember what we saw in the early part of this decade, big changes to labor rates. It looks like that's starting to level out right now.
What are you looking for on Thursday when we get Walmart results? That's going to be kind of a linchpin moment, considering that they're the biggest private employer, but they also are really head-to-head when it comes to Amazon and when it comes to shipping, when it comes to technology, when it comes to warehouses. Yeah. What are you looking for?
I think Walmart is in a market share gaining mode right now. I think that's the approach they need to take. It's really the Costco approach. I think they're going to stay aggressive on keeping prices low. I think they want to gain customers, and if that comes at the expense of margins in the near term, they're willing to make that sacrifice. And I think right now that's what we're going to be focused on. I also think they had a really good second quarter. I think they are gaining market share. Our checks would say that early part to back to school, back to college has been really good. The U.S. consumer is healthy, very healthy. And I think the outlook is what I think where Walmart probably poses a little bit of prudence, just given where prices are going and the uncertainty that's still out there.
Hey, Chuck, good to hear from you. Chuck Grom there of Gordon Haskett. Very, very different conversation with Chuck there, who covers these retailers compared to, say, an economist following payrolls a few Fridays back.
If there is this incredible weakness, where is it if you look at the retailers that are coming out showing how, yeah, they're choosing not to pass along the price increases in order to gain market share, not necessarily because their sales are going to fall off a cliff. Again, this points to the strength that's on the other side, the upside risk that Jim Caron was talking about.
Great conversation to kick off retail earnings. More retail earnings come tomorrow, Target, and then on to Walmart. The big focus for Lisa and for all of us here at Bloomberg Surveillance. Up next on the program, we'll get some breaking economic data on housing. Plus, Rob Sarkin of Citi expecting payback for goods front-loaded ahead of tariffs. That conversation just around the corner with equities close to all-time highs. Futures negative by not even 0.1%. Bond yields lower by a single basis point across the board. 2s at 375, 10s at 432. From New York, you're watching Bloomberg TV.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Equities on the S&P 500 totally unchanged. Likewise on the Nasdaq, we're down by close to 1/10% here, just a little bit softer. Going into some economic data just moments away and an opening bell about 60 minutes away. In the bond market, 2-year, 10-year, 30-year bond yield shaping up as follows. We're down about a single basis point across the curve. On a 2-year, down to 375. On 10s at 432. 30s yesterday creeping closer and closer to 5% this morning. 491.93 and down a single basis point. With some economic data, housing starts, building permits, housing starts, just crossing the Bloomberg terminal. Let's get to that data right now with Mike McKee. Good morning, Mike.
Good morning, John. An upside surprise for housing. Builders started new homes at a 5.2% annual rate increase, which is much more than the negative 1.8% that was forecast. It puts us at a 1,428,000 annual rate. That's up from 1,321,000. So builders perhaps getting a little more confident in the idea that the Fed might cut rates and people might come back out again to buy houses. Building permits were down, though, 2.8%. So it's a kind of a mixed picture. They had some confidence in July, but what's it going to be like as we go into the fall?
Mike McKee, I just wonder how sensitive the Federal Reserve is to this one data point, not housing starts or building permits, but the housing sector, this industry. Mike, we've been having this conversation repeatedly on this program recently about what the Federal Reserve would do if they started cutting, but interest rates started to go higher at the long end of the curve. Mark Summerlin, a man who you know, of course, a Fed chair candidate, came on the program in the last week or so and suggested that if he saw that, they should stop cutting. Stop almost immediately, Mike. How sensitive are they to a repeat of what we saw last year in Q4?
Oh, they're very sensitive to that. They're going to be keeping a very close eye on it because, remember, they think that it's a very close call as to whether you should even cut rates at this point because of the possibility of inflation. So they're going to be watching what the market reaction is because whatever the Fed does won't get into the markets, won't get into the financial system for 6 months to a year, whereas the market reaction, especially at the long run, will be immediate. So they're going to be watching that very closely.
Mike McKee with the latest. Mike, looking forward to your conversation later on this morning. Mickey Bowman, Mike McKee, sitting down together 10 a.m. Eastern Time from Jackson Hole, Wyoming. One of the key dissents in the last month or so on the FOMC. Looking forward to see what Governor Bowman's got to say about some of these issues.
Yeah, and how it's going to be messaged in Jackson Hole, given that they're doing the framework review, whether it's relevant, given the fact that Jay Powell might not be the chair come next year. He will not be the chair next year. I do wonder about the housing market and how much that is an indication of weakness, given that it's been completely divorced from the economic cycle for a number of years now. And we see that again today. What can we infer from this? Not a whole lot. People are trying to navigate this around the edges, but ultimately it counts on whether rates go down and how much that can ignite some of the demand.
Yeah, which rates go down,
exactly.
And that's the important piece of it. We've both been talking about it, and you've been on top of it too. This has become a really, really key political issue in this country. first and foremost in this city, in New York, and will be in months to come. And there seems to be some confusion between the relationship at the front end of the curve and the long end of the curve. The pressure that you're seeing on the Federal Reserve to cut interest rates is for a whole bunch of reasons, but one of them, there is a belief from politicians at least that that can help unlock some activity in the housing market and maybe make housing more affordable if you believe that housing should be more affordable based on a monthly payment and not on the price of the house. More on that later. Anyway, that's the issue this Federal Reserve has now got. They could cut rates and mortgage rates could go up. We saw that last year. Could it happen again?
Right. We saw 100 basis points of rate cuts in the front end. We saw 100 basis points of an increase, essentially, on the 10-year yield. So in the opposite direction. A real concern here about whether there is inflationary pressure. And if there is, if they cut rates too quickly, that could unleash steepening, not necessarily the flattening or just some sort of all-around curve coming down, as many people would like to see.
The pandemic screwed up this housing market in this country. This housing market reset to interest rates of Fed funds of 0, a mortgage rate of 3, and here we are now, and it just doesn't sync up. Something's got to give. Something's got to give. I don't know what, but something's got to give.
I apologize in advance. I'm pulling out my little soapbox and I'm getting on it.
Sure.
So many people come on and they say, when I was a kid, I could go out and buy a house and it wasn't that big of a deal. I remember when it was $300,000 and, you know, guess what? Mortgage rates were at 10%. Well, yeah, they could still buy a house with mortgage rates at 10% because they cost so much less than what they do now. So it's been years and years and years in the making of inflated pricing, and now all of a sudden you've got a generation that can't get in. And a real question, how do you deal with it? Sure, housing supply is going up marginally, but is it in the right areas? Is it the right type of homes? If we hear about Toll Brothers being, going ahead with these monstrous houses for wealthy individuals, it doesn't really work for the entry level. I'm coming off my soapbox.
No, I'm right there with you, on top of the soapbox doing the same thing, so don't worry about it. I've heard those guests talk about those things. I know, it drives me insane.
Yeah, it's like it's been a very different landscape.
Different generation.
Yes, exactly.
Certainly nothing easy about the 70s into the 80s, not playing that down if any boomers are watching, I'm sure you are. I understand that. But it's a very different situation, which is why you see these younger cohorts voting the way they are. I don't know if it's the right way to be voting. I think you know what my view is on that personally. It's another conversation for another day. But ultimately, that's the way they're looking to vote. They're going further to the left.
Yeah, because ultimately, if they don't have access to home ownership, then they start getting concerned about the cost of rent, which is also going up. And it's the reason why a lot of cities are really grappling with this.
Rob Stockin's got lots to say about this. Don't worry, Rob. Not coming to you on that. He joins us from Citi. He's got this to say. Recent labour market data increased the scope for a Fed cut as soon as September. We expect that the Fed will look through elevated inflation in the coming months and favour the growth side of its mandate. Rob joins us now from what? Rob, good morning. Good to see you. Less on housing and less on the politics at the moment, much more on this Federal Reserve going into September. What do you expect to hear this coming Friday?
I think Chair Powell's in a tough spot going into Friday because we've got a long way to go until we have that September meeting you referenced, and a lot of data in between now and then. On top of that, he has the political pressure on the back of his neck he's been dealing with some time. So he can't lean one way or another, in my view, in this speech. So it's going to be a lot of, here's what's happening with the labor side of things. There are a lot of factors going on. Here's what's happening with the inflation side of things. Fairly muted so far, but we expect more to come. We have to wait and see. And so he's not going to lean too strongly one way or another. Ultimately, I do think that we're going to see more softness in the second half on activity, a bit more inflationary pressure, and that's going to lead to those cuts that I was referencing, but I think it's too soon for him to lean too strongly into that.
So you think it's going to be a snoozer? Is that what you're saying?
I think a bit of it. I mean, I think there's going to be interesting issues in the speech. As I said, there are a lot of interesting things going on in this economy. Labor market's a good example. We've had a lot weaker labor reports recently, but we're also getting a contraction in labor supply. At the same time, we're getting a slowdown labor demand. Where the break-even rate is for the labor market and what holds the unemployment rate constant, not clear at this moment. So I think those issues will be outlined.
If the focus is on growth, which has been the focus for the Fed, the feeling that if there is a recession, the negative effects longer term of a loss of employment is so pernicious that you want to avoid that at all costs, even if it comes with higher inflation. Does that mean that they are biased to allow inflation to be perpetually above 2%? And I say perpetually, but at least over the next few years. Is that essentially a Fed that is willing to accept 2 to 3% inflation, not just 2% inflation?
Yeah, and I think this is the challenge with targeting 2% inflation is I think in this environment or in any environment, I think they wouldn't explicitly say it this way, but if inflation goes down to, let's say, something like 2.25, I think they'd be just fine with that. I think once you're getting to numbers that are closer to the high 2s and to the 3s and even higher than that, that's where the discomfort starts. So it's really a soft target around those numbers. And in our own forecast, inflation, core inflation rises to about 3%, maybe even a little above by the end of the year. I think those numbers are too high, but they still favor the growth side of the mandate. And if they think that the inflation will subside over a few quarter period, they're willing to put, a few rate cuts through. So it's a balancing act. If inflation goes much higher than we're forecasting, which I don't expect, then I think rate cuts are less likely. So it's really about where is inflation heading and how willing are they to look through that to support the growth side.
They've been looking through it now for years. They've missed their target for 4 years.
Yep.
Inflation is close to 3%. It is in the high 2s. I don't sense any discomfort whatsoever. Do you?
Yeah, it's a great point. I think
I hate to be snarky about it. Like, forgive me, but seriously, the chairman doesn't come out and sound uncomfortable with where inflation is at all.
Well, they started some rate cuts last year, and I think they paused it because they felt that there were risks to inflation, and inflation was grinding down slowly. But I do agree with the progress they've been seeing. They don't sound particularly worked up about it. And without the tariffs and those effects, if inflation were to continue to moderate in the way it was, I think we would still be getting gradual rate cuts. But it's this potential tariff effect which could lead to a reacceleration. That's what has them, I think, worried in the back of their mind.
Do you think rightly worried?
I think, again, so far the tariffs have been less disruptive than we would have thought. Companies seem to be absorbing these tariffs to a higher degree than we would have expected. But I think that argument has its limits. I think companies are running through inventory that they built up, trying to avoid putting through those tariff increases. And I think when we speak with a lot of companies, they've been waiting to see where the tariff rates are going to land. I think with where they seem to be landing now, which is an effective tariff rate on U.S. imports somewhere close to 20%. I think that's too much for them to absorb in their margins, and you're going to see more price increases for the consumer as we head into the fall. So I do think there is cause for concern, even though we haven't seen those real inflationary effects to the same degree that the Fed and many of us have been expecting.
So there's the inflation side and there's the labor market side of things, and people are wondering just how much weakness was implied by some of the non-farm payrolls reports that we've gotten in the revisions that really point to a much greater degree of weakness. Other people saying this is just the natural rate of things, given the supply side of things, the fact that immigrants aren't coming to the United States as much as they were in the past. How much do you expect to hear some insight there? Why they see this market as in transformation and sort of difficult to interpret?
Yeah, absolutely. This is the exact issue we were talking about earlier, where you're getting the slowdown in labor supply and demand. So where those meet, you should naturally expect payrolls growth to be lower than we've seen for the last few years. I do think that the size of the revisions that we saw and the pace we've seen over the last few months is below most estimates of that. Now, the labor market data are noisy, as we've seen, as the administration has also highlighted. And we saw some of this last year where things were slowing down and then the labor market picked back up. So I think they're going to highlight that there are risks there, that the revisions and the extended payrolls is worrying. But it's a complex picture, and they're waiting to see how things evolve. I mean, there are other labor market data that are much less concerning than that. If you look at the weekly layoff data that we get, still really no signs of a sharp slowdown in those figures.
Rob Sockin, good to see you, sir. As always, appreciate it. Robert Sockin there of Citi. This from Steve Chevron of Federated. He writes in and says, add me to the soapbox too. It's very generational, this stuff, isn't it?
Well, we're so sick of hearing people come out and say, you haven't seen anything. I remember when rates were this level and it was just fine and I still bought a house, and you think,
for a bag of peanuts.
Exactly, for $10,000, in some prime location. I will just add to the soapbox this aspect.
Please do.
You start talking about the labor market and how maybe it's better than expected. Kevin Gordon puts this out on X, and I think it's a really compelling one. The unemployment rate for 16 to 24-year-olds is up to 10%. That is the highest it has ever been outside of a recession, and speaks to the sort of generational divide and a question of where the opportunities really lie. At the same time, that housing market costs very much are front and center.
It's a fantastic point. Get rolled up in this now, don't we?
Well, I think so. I mean, if there's nothing else going on, then we pull out our soapboxes, we get on them, and exactly.
Let me tell you
pitchforks.
About the 1980s. Let me get you an update on stories elsewhere with your Bloomberg Brief. Here's Yahira. Hey, Yahira.
Hi, John. President Trump widened steel and aluminum tariffs to include more than 400 consumer items. U.S. importers were given little notice ahead of the change, which went into effect Monday and included items in transit. The levies will apply to a wide range of items, including auto parts, plastics, baby booster seats, and furniture components. Meanwhile, Intel shares are rising 6% in the pre-market after SoftBank agreed to buy $2 billion of the chipmaker's stock. The news coming as the U.S. government looks to take a stake in the company. Sources telling us here at Bloomberg, the Trump administration could take a 10% stake in Intel using funds from the CHIPS Act. And too bad Anne-Marie isn't here for this one. Chinese toy maker Pop Mart reported robust revenue and profit growth, boosted by global demand for its Labubu dolls. You can see them there. The pointy-eared, sharp-toothed monster's popularity has been fueled by blind box packaging, pushing repeated purchases. The CEO saying he expects foreign sales to likely outpace the domestic Chinese market this year. That's your Bloomberg Brief. John?
Yahira, thank you. Thanks for this morning. Anne-Marie taking a well-earned day off. What are you Googling? You're having a little look at something, aren't you? You're looking at the price of them. What are you checking? Go on.
Fake Labubu dolls.
How much?
Known as lafufus are serious choking hazards. So don't get a lafufu if you want for your kids.
I knew you were onto something.
Why did you want me to tell everybody
about that? I just could see that you looked entertained.
Don't buy a lafufu.
There you go. Up next on the program, we'll set you up the day ahead, plus an important conversation with Gene Soroka of the Port of Los Angeles as shippers race to beat tariff deadlines. That conversation up next.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appeared, immediately I asked whole corporations study how will you bring generative AI to their job.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
long end getting unanchored, sell America or the deficit, that's like very April. You look at the sell America trade, we're not seeing evidence that foreign investors have stayed away. I think markets across the board are pricing in a soft landing and what Governor Waller called good news rate cuts.
So April is the biggest bond market diss I've heard over the last month. Priya Misra, JP Morgan, a little bit earlier on this morning.
Yeah, but it's so true, and it just highlights just how much the narratives have been shifting. Get over yourself. That is so April.
So April.
Yeah.
Equities right now down about 0.1% on the S&P 500. Bond yields down about a single basis point across the curve. With your morning movers, let's cross over to Danny Berger for more. Hey, Danny.
Hey, John. One of the best performers in the S&P pre-market is Palo Alto, reporting earnings yesterday. It was a better 2026 than expected. They have a whole suite of cybersecurity offerings. That big platform seeming to do well with customers. So those shares up 6.6% rather. Perhaps one of the surprise gainers of the day is Home Depot when they reported earnings with a miss on comparable same-store sales and a less purchasing of big-ticket items. Initially, they sank, now up 1.7%. It would seem a lot of the commentary coming out of the sell-side community, including D.A. Davidson, saying that it was in line and the trend is positive. Therefore, all in all, a solid earnings report. Not perhaps a solid earnings report was Viking. This is the high-end luxury cruise operator. They had bookings that were solid. They had half of 2026 booked out too, but still shares down 3.8%. The problem, according to strategists, was that they were only able to raise ticket prices 4% for this year. That is a slower growth than last year. The concern now is, are they losing pricing power? John.
Danny, thank you. I don't do cruises, but if I did.
I knew you were going to say this. I know, going through the fjords.
Like that river cruise.
I know, it looks pretty awesome.
That looks pretty awesome, doesn't it?
Either Croatia or the fjords of Norway, and there are a couple of those.
They're sort of partial to the fjords.
Yeah, I think the
look very
pool,
pretty.
Yeah, they're beautiful. I
Team
like cold weather.
TK always wanted to make that team cruise happen.
Yeah. Do you think that you want to be on a boat with people who want to talk to you?
No, probably not. And then stuck there and not be able to leave.
Yeah,
I think I'd really struggle with that, actually, yeah.
I think that sounds like your dream.
Not that I should joke about this kind of thing, but like man overboard, you know? Like,
all right.
Swim into the...
Yeah.
And if you did that in a river, you'd make it, right? You'd get to shore. Probably. I don't suggest doing that.
This is going to a really dark place.
Let's turn to trade.
Jump overboard.
The Port of Los Angeles seeing the best month for cargo volume in its history in July. The port's executive director, Gene Soroka, saying traders front-loading cargo ahead of tariffs caused the spike. Gene joins us now for more. Gene, welcome to the program, sir. There was a quote from you in the last few weeks that we were talking about around this table. It's been a roller coaster ride all year long, and the ride's not over yet. Gene, just take a moment just to describe what the last few months, in fact, what this year so far has been like for you and the team.
Good morning, John and Lisa. It has been a roller coaster. Interestingly enough, when hard tariff policy comes out, cargo plummets. When those policies are softened and deadlines extend, cargo picks up, just like we saw in the back half of June and for that record month of July. Folks just trying to get the import side of the business and cargo in under the wire of these changing deadlines.
Gene, what are the backlogs like now? How much longer does it take to process this with all these different tariffs from all these different countries changing from day to day?
Well, this is what we're most proud of, John, and we've been talking about this for months now, but we weren't caught off guard. Thanks to the port optimizer that we've developed with the Wabtec Corporation, we can see cargo 40 days before it arrives in Los Angeles, and we did just that last month, processing 107 ships, 30% more than the 5-year average, with not one backup on water or land. The cargo moving through the terminals at 3 days out by truck is a pre-pandemic low.
Gene, this comes after all of the disruptions and some of the lessons learned. I am wondering what you are seeing in terms of the composition of imports to the United States and whether that has shifted. Yes, there are these pockets of big surges and then declines on the heels of tariff policies, but has there been any consistency, say, about shipments from China or shipments from India that really come to your mind?
Lisa, you're right. We did learn a lot. We're working closer together than ever. We're using technology to help us wherever we can. What we have seen is cargo emanating from China really dropping. Back in 2018, it was 60% of our portfolio. Today, it's 45% and continuing to decline. An uptick from Vietnam, Indonesia, Malaysia, Thailand. Not so much from India. And with the 50% tariffs that were slapped on that country, I don't see much change there yet. But definitely a shift to Southeast Asia and more liner services of the nonstop variety being put in to keep that speed component in place for us here in Los Angeles.
How quickly do you see some of the importers shifting their orders on the heels of different policy prescriptions from the White House? I mean, can you just give us a sense of how much in real time all of these companies are adapting and adjusting, to use our friend Tom Keene's phrase, to what's coming out of Washington and taking those opportunities to pounce when there's an opening?
Right, Lisa, they're showing so much resilience on the import side of the business, but it's not can recall.
So, Gene, have you seen any slowdown? I believe that you have something like a 3 weeks, 4 weeks, maybe view on the kind of traffic that's going to come through, the kind of volume that's going to come through over the next 3-4 months. Gene, how are you thinking about that now? Do you see any slowdown in the pipeline whatsoever?
I do, John, and I think history will show that we peaked in the month of July, which is a little bit early considering year-end holidays and the traditional seasonal products that come through. But August looks pretty good right now, between 900 and 950,000 container units. Yet that would be about a 7 to 10% drop compared to our previous month. And we'll probably see 3 weeks out from now a real dip in cargo, down about 20%, because folks have brought in just about all the inventory they can off those open orders, and for pre-positioning inventory the way they want to look at the end of Q3 and Q4.
Gene, just before you go, just one final question. You've been following the conversation on this program. I know you have, because you follow the conversations on here. I just wonder if there's something people are missing at the moment. You're in a unique seat. Do you think people are missing something just in the trade story at the moment? And if so, what is it?
Well, I think it's been recounted a number of times that the big box retailers, home improvement stores, those that had the capability brought a lot of inventory in since last summertime when this talk began on the campaign trail. Going through that level of inventory has not yielded the pass-through to consumers that some have seen, but it'll come. It's the small to middle-sized folks that I'm really concerned with right now, dipping into their savings to pay these elevated prices, get the cargo cleared at ports like Los Angeles, paying up to 55% tax on those goods, like product coming from China. So it's the small to middle-sized firms that make up a lot of employment across this country that we've got to watch real closely over the next weeks and months.
Gene, you're one of the best. Thanks for making time for us. We appreciate it. Gene Soroka there of the Port of Los Angeles. That final point, a really important one.
And it's the one that really has people looking to future CPI and PPI prints to understand exactly what the inflationary ramifications will be from tariffs.
Conversation continues tomorrow. Target up next. Brian Nick of New Edge Wealth will join us. David Seaford Nomura will catch up with Alicia Levine of BNY Wealth and Seema Shah of Principal Asset Management. Live from New York City this morning. Good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
Good Tuesday morning, 30 minutes until the start of trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, retail earnings roll in. Home Depot's results offering the latest sign consumers are staying away from big purchases. Meanwhile, in tech news, Intel draws support from SoftBank as well as the President of the United States as Palo Alto wins praise from Wall Street. Plus, President Trump stuns the logistics industry by widening his metals tariffs to include more than 400 consumer items, including baby seats and motorcycles. Katie, what are you watching?
I know that news hit you particularly hard when it comes to those motorcycles. Let's talk about Intel, though, one of your favorite stocks to watch. It's surging on news that the Trump administration is considering a 10% government stake in the chipmaker. That also comes as SoftBank announced a $2 billion stake in the company. So a lot of folks circling Intel right now. Shares up another 5.7%.
Yeah, we're going to talk about that because it's such a fascinating story. We're going to dig deep into this once iconic chip maker. And Home Depot reaffirmed guidance for the year despite a pullback in comparable sales as inflation uncertainty lingers. This, I think, is fascinating, although the stock is up 2%.
Yeah, an interesting pre-market move there because originally it was down 5% in the wake of those numbers, now up slightly. Let's unpack it all with Bloomberg's Emily Cohen. She leads our coverage of the U.S. consumer. So what is the read here? We know that the call also is kicking off just about right now, so things could change. But it seems like on some of these key metrics, there was a little bit of disappointment.
Yeah, I think what we're seeing here is much of what we've seen throughout the year. Rates continue to be high. That's keeping people from going in on big projects like kitchen and bathroom renovations. But Home Depot is still seeing growth in those smaller projects. They called that out specifically on this call. Think gardening, lighting, painting refreshes. So people are still going to Home Depot. Comp sales growth was up 1%. Small, but a positive sign. And they noted that the business improved over the course of the quarter.
So higher rates are a problem. Higher prices, is that hitting consumers? Because they don't get the lion's share of their products from overseas. This is a company that gets a lot of American-made products.
So we spoke to the CFO this morning, and he said that most of what they were selling in this quarter, they already had prior to new tariffs. So those costs were not getting passed on to the consumer in this current quarter. But he did say that price increases were coming in the back half of the year. So we are expecting to see that.
All right, Emily, thanks very much. Bloomberg's Emily Cohen. I'm sure you're going to run over and jump on that call. Let's get to the tech stories because there are
several.
Many.
An embarrassment of riches.
Yeah, absolutely. The Trump administration in discussions, as you probably know, to take a stake of about 10% in Intel, but we're getting more details as to how they're going to finance that and what it's going to mean for actual capital. Plus, SoftBank agrees to invest $2 billion in the chip maker, and that's got to make the White House happy as well. Bloomberg Tech co-host Caroline Hyde joins us now here on set. And Caroline, what I'm interested in is how much actual money is Intel going to get to invest in Central Ohio? Like, what's the government stake and the SoftBank investment going to yield in terms of working capital?
And is it money that's already been promised? Because Intel is one of the biggest receivers of the CHIPS Act money. We're talking about $10.9 billion if you put it all together. And the talk of the town and the reporting coming from Bloomberg is that that's just going to be converted into an equity stake. When you're about a $100 billion company, $10 billion means you get about a 10% chunk. But does that 10% equity ownership by the government means suddenly they have an impact at the board level, that they have a narrative in the direction of travel of this business? Lynx Equities, which is one of the analysts out there that have written really a note saying this is monumental, because not only does it drive, in theory, far more government interaction with Intel becoming key infrastructure in the United States, and that is but a positive. But then you add the SoftBank situation, $2 billion coming from Masayoshi Son. What does that mean with combining the architectures with ARM? Remember, chip designer is also controlled by SoftBank. Suddenly you've got a whole new breadth of growth, and they think of refocus on R&D coming from Intel. Instead of being one of retraction, this is an expansionary story in the United States for Intel.
Well, it's interesting. What you're touching on, too, is that it seems like the U.S. government and SoftBank are interested in different parts of the business. It seems like the government is chiefly concerned with the manufacturing capabilities. That's not necessarily what ARM is after. It's more the chip design.
It's the design, and it's taking on NVIDIA. Masa made a ton of money by owning NVIDIA stock for ages. He kind of sold out an integral moment, but recently the numbers have gone up and to the right again for Masayoshi Son's own wealth because he took a stake back in NVIDIA. Now, he also, though, is a bit of a frenemy to Jensen Huang because he does want to be able to take on the AI spectrum of chip design. He can much better do that with ARM's chip design integrated with Intel and the manufacturing side there as well to make it a reality. So he wants to drive for generative AI tokens and more broadly using his hardware and chip designs going forward. Meanwhile, the government just wants Ohio to become a reality. J.D. Vance used to be a senator there. They want to put manufacturing prowess on the ground. They want to ensure that they've got supply chain here and domestic strength, but also some jobs in Ohio would help.
Yeah, right in Licking County next to my hometown, Granville, Ohio is just such an important, it's a mecca of chip-making capabilities.
Makes some great people.
Listen, NVIDIA wants to provide even more powerful chips than the H2O chips they're already allowed to sell into China.
H2O, is that what you're calling it?
Are they, is it H20?
Yeah.
H2O makes a lot more sense to me in terms of branding, in terms of marketing.
True.
But
it's as essential as water.
Right.
Exactly.
The Chinese, though, have long been trying to dissuade their own manufacturers from using these chips at all.
I know. They don't want to have US basically an integral part of their generative AI prowess in China, and they want to be using their own Huawei-made chips. But the basics is they haven't got enough of them. The supply isn't there. You're not able to train models as efficiently. DeepSeek tried it, but ultimately they want access to NVIDIA's architecture. And H20 is great, but maybe a B30A, as Reuters is reporting, the Blackwell Chinese version, that is what they want. And actually, look, we had lots of hints of that from the president himself. Do you remember President Trump just last week was saying, I have a feeling Jensen Huang is going to come back and want to negotiate about getting access for his chips that are based on the Blackwell architecture into China. So this had already been kind of hinted at, but this is what China wants access to. Who knows what percentage of sales Jensen Huang's going to have to pay to get that access? But clearly,
Callie
they're
Cox
already
called them kickbacks. Remember that?
She did. That was
she retracted though that phrase.
You pushed back, Caroline. Before we let you go, we do have to talk about Palo Alto, this cybersecurity company.
Very nicely.
Yeah, absolutely. Investors really welcoming last night's results with open arms. What was the big takeaway?
Well, the revenues are going higher in the quarter that they just posted, but the next fiscal year, more broadly, they're able to signpost future growth. Look, this is a company that, yes, the founder who was the CTO is retiring, and that's a little bit of a worry for Bloomberg Intelligence going forward in this whole platformization valuation of the business. But this is a company that wants to offer you a one-stop shop when it comes to cybersecurity. It's why they're doing big M&A, and at the moment, it's working. Companies want fewer vendors, and they want a more clear price point. And that's kind of what they're getting with Palo Alto Networks, and the stock is clearly reacting to some of the numbers. We got the CEO on later.
We should, I just want to point out, because we showed the year-to-date chart, which doesn't look that great, but over the last 5 years, the shares have quadrupled.
It's not bad.
Over the last 10 years, they're up more than 500%.
You always have to zoom out. That is the takeaway.
I think it's a fascinating story, and I'm really looking forward to your...
Going full circle, Nikesh used to be over at SoftBank. He's a man who understands...
Nikesh Arora, the CEO.
Exactly, a guy who understands the financials of a business as well as sometimes just the offering of what they're giving.
Well, that is Bloomberg Tech co-host Caroline Hyde. And as she mentioned, she'll be back next hour with the CEO of Palo Alto Networks right here on Bloomberg Television. But let's turn now to tariffs, because President Trump stunned the logistics industry by widening steel and aluminum tariffs. Now, these new tariffs impact more than 400 consumer items, including baby gear, motorcycles, and tableware. Bloomberg's economic statecraft reporter Joe Doe joins us now. So clearly the timing was a surprise. Another surprise here is that this did not exclude goods in transit, Joe. What do we know so far?
We know we just got a heck of a lot more tariffs. In our story today, we quoted a Michigan State professor who is focused on supply chains and said, if you count everything that just got listed in inclusions for new tariffs, it's 6 times more than the total that we saw in the 2018 time period. So this is a massive expansion of what is actually covered. I think importantly for people to know, as you showed up on the screen there, these are derivatives, right? So these are derivatives of steel and aluminum. I think it was a surprise because, well, one, maybe a lot of people just forgot that there was a comment period for inclusions. But also the timing was never quite clear to the market. And so for it to drop here, like over the weekend, basically, I do think that comes as a bit of a shock. And as you said, it's instant. So you didn't have a time period to move or ship any sort of products into the country ahead of that tariff coming in. So a lot of people are probably going to be pretty upset by that.
Yeah, I wonder, Joe, you know, if you're an importer and all of a sudden the goods that you've already ordered that are in transit are now going to cost more than you expected, that's a big burn. And the question is, are you then a little bit more shy next time you import stuff? Are we going to see this coming through in economic numbers because people are afraid to put in orders?
Yeah, I mean, Matt, I think it's fair to wonder that out loud, right? I think one of the things that we're watching tariffs broadly, right, is kind of the dislocations that we're constantly seeing coming out from announcements, being far away from expectations. This might count as one of those. People, again, not knowing that there would be a massive list of inclusions coming at the time that it did. You know, there was a comment period for people to ask for those inclusions. I understand that the ones who asked pretty much got them granted. But a good example comparing this is like looking at the copper market just a few weeks ago. Most of the copper market had expected that refined copper would be tariffed. And so they spent months shipping metal into the United States ahead of tariff announcement. Of course, the president came out and did not announce that he was going to tariff refine it. Instead, it was on products specifically. Slightly different here, but it still shows you had a massive dislocation in the market. I mean, copper dropped 20% that day. I think it's getting really difficult for buyers in the United States to predict what they can do moving forward. I mean, when you're shipping, you're talking about 90-day time periods. And for this to happen overnight, I think it hurts.
Yeah, absolutely. A lot of big questions out there that are pretty difficult to answer at this point. That is Bloomberg's Joe Doe. He is our economic statecraft reporter. Meanwhile, let's take a look at another stock moving this morning. SoFi, the stock is climbing on breaking news that it will add blockchain-enabled international money transfers to its app. It will be partnering with Lightspark for that service. You can see shares up about 2% pre-market.
This is, I think, a fascinating story. As someone who spent a lot of time living overseas, right, it is very frustrating to try and move money internationally in and out of the U.S. Of course, if you're doing it within Europe, it's super easy and quick. But this will make it instantaneous if they're if they're using the technology right, and incredibly cheap. So it's a real problem, I think, for a company like Wise, like TransferWise, which currently probably dominates this market for consumer transfers.
Should note that this reporting is coming from Dow Jones, and they quote CEO Anthony Noto saying that this service will first roll out in Mexico, and then it will expand to other countries, maybe help facilitate those cross-border payments that you're talking about. But coming up,
yeah, more talks on Ukraine. President Trump calls for a meeting between Presidents Putin and Zelensky. We'll give you the details on what they've achieved and what's yet to come next. This is Open Interest.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we? We don't want to lose you, Emily, in all of this.
Stargate. Put that name down in your books.
What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Let's get a look now at high interest, what's making headlines around the world. Tesla is pricing its new Model Y sport utility vehicle in the same range as local rival Li Auto's L8 model to win over middle-class families in China's hyper-competitive market. Tesla's Model Y SUV will be available for as low as $47,000 there, with deliveries anticipated as early as next month. So in case you're buying a Tesla in China, maybe you need to know that. Viking Therapeutics is falling in pre-market trading. The biotech company's oral weight loss drug missed Wall Street's estimates. Mitsuo writes, the data looks inferior to Eli Lilly's pill on nearly all metrics and probably shutters hope for Viking to be a big-time player in the oral obesity market over the near to medium term. And Robinhood is expanding its prediction markets with new contracts that are tied to pro and college football games. DraftKings and Flutter Entertainment are falling on the news. You can see Robinhood right now up just about 0.75% in the pre-market. But Katie, I think this story is just going to build.
Yeah, absolutely. Robinhood clearly trying to expand into sports betting. We'll see if that works. But let's switch gears here and get back to geopolitics, because President Trump is pushing for a summit between Ukraine's President Zelensky and Russia's President Putin to discuss terms that could bring an end to the war. Trump urged Putin to consider the plans after European leaders joined Zelensky at the White House yesterday.
We need to stop this war, to stop Russia, and we need support American and European partners. We will do our best for this.
If everything works out well today, we'll have a trilat, and I think there will be a reasonable chance of ending the war when we do that.
The coalition of willing countries, that's 30 countries already working together on security guarantees, will now work with the US on those guarantees.
For more, we're joined now by Bloomberg's Washington correspondent Tyler Kendall. Tyler, it's worth pointing out that Putin and Zelensky haven't had a face-to-face meeting since February 2022, at least, when, of course, Russia invaded Ukraine. What potential timeline are we talking about for this potential meeting?
Yeah, hey, Katie. Well, we actually heard from the German Chancellor Merz yesterday, who said that this bilateral could take place in the next 2 weeks. But we should caution that we haven't gotten any sort of confirmation when it comes to Russia's side of this, although we did hear from the Kremlin through Russian state media yesterday saying that Vladimir Putin did talk with President Trump about the idea of lifting the level of official for these conversations, but did not expand beyond that. So we're still waiting to see some details here. But President Trump took to Truth Social yesterday and said that he has laid the groundwork for first this bilateral meeting at an undisclosed location, in his words, and that would then be followed by a trilateral meeting that would include him. Now, President Trump did speak by phone with Vladimir Putin yesterday. Actually, our reporting indicates that it happened amid these discussions with European leaders at what turned out to be an impromptu summit at the White House, where we really did see a relatively warmer welcome for the Ukrainian President Zelensky compared to the last time he was at the White House back in February. And we all know that that meeting had devolved into essentially a shouting match. It had ended early, but instead we saw many of the European leaders leave the White House yesterday, striking a more optimistic tones about how the talks have progressed and progress made yesterday here in Washington.
Yeah, I was listening to Balance of Power, Tyler, yesterday, and I heard yet another general, and you've had a number on that program recently, say that Russia is losing this war. How much land is the President of the United States interested in giving Russia to stop a war that country illegally started and is losing?
This is, of course, a big issue of contention here, Matt, and we have heard President Trump say that any such peace deal will likely include Ukraine having to give up territory, but he did say that this is ultimately up to Zelensky and Putin to work out, and we know that it has been a red line for Zelensky before, but yesterday after that meeting, speaking outside of the White House to reporters, Zelensky said that he would be willing to talk about this in person if a bilateral meeting with Russian President Vladimir Putin ends up happening. And we know that the Kremlin has demanded that a large part of eastern Ukraine, the Donbas region, which includes two very large provinces, would be completely handed over in any such deal. It is hard to imagine that would actually be a concession on the table that Ukraine would be willing to make. Since you did mention balance of power, you know that we had Melinda Herring on yesterday of the Atlantic Council, who told us that Russia does not completely occupy those areas. In total, they occupy about 87% right now of the Donbas region, but they are demanding the entire area. So there are a lot of big questions here about what this is going to look like moving forward, whether or not the sides would be willing to perhaps freeze the battle lines where they are. It is a big issue of contention, and it's something that our European allies say there cannot be discussions around yet until there are firmer security guarantees on the table when it comes to the future of Ukraine's security, which is another big development that we got out of yesterday.
Tyler, looking forward to your continued coverage on Balance of Power. That is our Washington correspondent, Tyler Kendall. Meanwhile, coming up, we'll discuss the health of the consumer and a potential big tech bubble concerns with HSBC's Raquel Odin. That conversation up next. This is Open Interest.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday, only on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Options traders are preparing for the worst with big tech. Traders are buying disaster puts on the Invesco QQQ ETF as a hedge for any sharp downturn. That is according to 22V Research. Remember, concentration in the Mag 7 is extreme as the index has risen 50% since its April bottom. Joining us now to discuss is HSBC's Head of Wealth and Private Banking, Raquel Oding. Raquel, great to see you in person.
Great to see you guys.
So let's talk about where we stand and how investors should be approaching it, because you think about this really violent rebound that we've seen since the April lows. Does grabbing tail risk protection at this point make a little bit of sense?
It does, but here's what I'm saying. As I was just sharing right before we went on air, my excitement for what I'm expecting from the markets right now. So you're seeing such strong performance, whether it's the NASDAQ's up 42%, the S&P's up 19%. I mean, actually, Dow's up 19%, the S&P's up 10%. So incredible performance. You actually add to that what we're seeing from these corporate earnings. Corporate earnings continue to outperform. 95% of corporates have come in over expectations, which is great to see. Then we talk about this important thing called the rate cuts. You had the potential 3 rate cuts, of which what we're saying right now, whether that's September, November, and March, at a minimum 75 bips will continue to fuel this incredible market. And then you add to that the efficiencies that we're seeing from a lot of corporations around AI. So the fundamentals are telling us the markets look pretty good, and we'll continue to see that. Of course, there's always that slip or what we anticipate as a slump, which we'll talk about a little bit later, but currently really strong performance.
Yeah, to me, it feels like there's so many things that just don't quite jibe, right? Like the market's doing great. This is the hottest economy in the world, and we need to cut rates by 75 bips. Or we're all buying these disaster puts, and NVIDIA is the most under-owned that it's been in 16 years. We're going to talk about that when we come back. Raquel Odin is staying with us, and shall we check futures before? We only have 5 seconds.
I mean, there's not much to talk about because the market's a little bit lower right now. We'll walk you through all of the action up next.
Nice check.
in Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, anti-money laundering, BSA, Bank Secrecy Act, KYC, know your customer, know your customer's customer. You know, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Aqua in Sintra, Portugal, and this is Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. We see futures down a little bit, but again, really holding it at record highs, right? I think the S&P 500 closed at 64.49 yesterday. So it's been an incredible gain, and not as good as you would have had if you bought, you know, like Madrid stocks or Frankfurt stocks. But we're still seeing record highs, or near record highs, I should say, because futures are falling so little. At the New York Stock Exchange, EB Research Partnership is ringing the bell. It's like super slow season at the NYSE. They just have like charities and partnerships, like instead of traded companies
Not like
and CEOs.
at the NASDAQ.
Well, at the NASDAQ, you have the Campbell's Company, which they remind us, it's not just Campbell's Soup anymore, because they own like Prego and V8 and Snyder's and Kettle and all kinds of
Pepperidge Farm.
Pepperidge Farm,
Yeah.
Cape Cod. But the stock has been an absolute dog. Year to date, it's down 20%. If you invested for the last 5 years, you've lost a third of your money. Even over the last 10 years, you've lost money on Campbell. So they've got to do something to turn this around.
All right, well, hopefully that they're watching and listening. Probably not, because they're ringing the bell, but do something, says Matt Miller. Let's talk about Intel. It's been several minutes since we checked this stock, and we actually have a lot to talk about when it comes to Intel. Surging on news that the Trump administration is considering a 10% government stake in this chip maker. That comes as SoftBank announced a $2 billion stake in the company. A really interesting story, both politically and fundamentally, when it comes to Intel at this moment. Shares up about 7%, Matt Miller. I believe they're back over $100 billion.
Yeah, just over. I mean, they're not worth as much as Palo Alto Networks,
Well,
you know. But
they're getting there.
Deep tease, we have Michael Ball coming on from the MLive team, and he has a take that really changed the way I think about this whole story.
It's
so
all about national security.
Absolutely. He's coming on in about a half hour. That's a segment you don't want to miss. Home Depot reaffirmed guidance for the year. Maybe that's why the shares are now climbing 3%. Comp store sales grew only 1%. Analysts were looking for 1.4% growth. The problem there, I guess, is higher rates. But the question is, do people go and brave the higher rates in order to avoid inflation that has to come later, since all the stuff they sold they already had in inventory?
Well, that's the thing. We heard from the CFO that price hikes are coming later in the year, so we'll have to see.
Yeah, you got to weigh, do you have to borrow or can you pay with cash? We are back with HSBC's head of wealth and private banking, Raquel Oden. And Raquel, I was talking about a couple of conundrums before we went to break. And, you know, you say 95% of companies are beating earnings. That's great. And earnings growth is fantastic. It's like 8 or 9% if you use the EA function on the Bloomberg terminal. You can find that. So why does the Fed need to cut 75 basis points through year end? Like, rates don't feel super restrictive, do they?
So I'd say there's a couple of things there. So I'd also add to the conundrum, if we take a look at consumers, they're doing pretty well, right? Wages are up 4%, outpacing inflation at 2.7%. When we look at their, what I call their confidence in the markets and spending, that's actually happening. Credit debt is staying flat. So another conundrum, if you're saying consumers are doing great, corporates are doing great, why would we cut rates? And the big unknown here, which is really causing the inflationary items that we're talking about, is the tariffs. So the unresolved of the tariffs are absolutely what's pushing up inflation. We were at 2.3%, we went up to 2.7%. What we do know is now producers are going to start passing those costs on to the consumer. So that is the need or the importance of the rate cut, truly inflationary through the tariff decisions that have not been made or made, but changed so often that's causing the inflation.
But is Powell going to say, listen, I think inflation is coming later from tariffs, so I'm going to do my best to help out this administration and cut rates?
So I think right now, since we're so close to the 95% likelihood of the September rate cut, what's also important about that when you take a look is not only anticipation of the tariffs, but what you haven't seen so far, though, is those have not been actually passed on to the consumer yet. So at this point, corporations can no longer hold back. So the likelihood of that happening is going to be pretty high. So that now means cost of goods are going up, right, for the individual. So you've got to figure out ways to ease that for the individual, as well as you just talked about Home Depot. Home Depot probably came in a little lower than earnings expected, but they're tied to the home market, right? We also want to fuel home buying, and we also want to fuel construction, and again, going back to that consumer side of things. So rate cuts are actually going to be about the individual, which I think is a good thing.
Well, I feel like we can't ignore the labor market in this conversation because, okay, there's a lot of concerns about inflation. You think about the Goldman Sachs estimate that got Jan Hatzius in trouble with the president that, okay, businesses are eating the cost right now that's going to be passed on to consumers. But then you think about the July jobs report.
Which was great.
Really ugly revisions that we got. It really, that was what solidified the pricing for that September rate cut and beyond.
So beyond that, but currently, which we know, unemployment rate is at 4.2%. Right? So as you said, it's the anticipation. So that is the intent of what the Fed needs to do. Anticipate where things are going and looking at the core fundamentals. I would say this is one where it hasn't been a black and white decision. And the kind of big unknown that has caused what I call difference in what we normally see from the Fed is the tariffs. And there is no historical history. There's nothing to point to, right? And I think that's here. They're just going to have to make the right judgment call for the individual.
So before we let you go, let's bring this conversation to the portfolio. How do you structure a portfolio around this, around these different cross currents? What the Fed is doing, weighed against the fact that corporate America, as you mentioned, is very strong right now.
So there's two things I always say, seize the moment, right, no matter what's actually happening. And I think we all know for September and October, that's actually usually the normal cyclical lowest performing months in the market. So I'd say it's a buying opportunity in those cyclical months of September and October that we're going to see. So we are going to see a little slow as it relates to what we normally have seen normally. And then additionally, the hope here is we actually see that rate cut. So I'd say there's opportunity in this market in the next 2 months.
I have to ask you about this chart. Katie and I were talking about this on the call this morning.
Oh, my goodness.
It's hard to believe that NVIDIA is that investors are underweight Mag 7, NVIDIA and Mag 7 stocks. But Morgan Stanley was out with this
inscrutable chart.
Well, I think it's very interesting. It may be a little bit difficult to read, but you can go to the Bloomberg terminal and check it out, or you can go to Morgan Stanley, probably go to your broker.
Stand in front of your TV.
Call your broker.
Get professional advice.
The point is these dark red diamonds, right, are institutional weighting. And the dark blue diamonds are the S&P 500 weight. So the point is, institutional weighting is far below, and has been historically, the S&P weighting of these companies, NVIDIA, Microsoft, Apple, Amazon. But it strikes me that you're unlikely to hold a tenth of your portfolio in NVIDIA, right? What do you tell clients?
So I tell clients, as we always talk about, the importance of diversification. And I think what we have seen, though, quite honestly, about the Mag 7 versus what I call the forgotten 493, which I talk a lot about, it's 2-to-1 earnings, where Mag 7 continues to take off on a level that none of us could anticipate. So I'll go back to my statement a little bit earlier. If you have interest in the Mag 7, September, October might be the opportunity for you to get back in there. But I will tell you, quite honestly, we expected to see more from the 493, but the Mag 7 has just been a real concentration over this time period.
Yeah, and that's been bedeviling active managers for quite a while now. Raquel, always great to catch up with you. Really appreciate your time. That is HSBC's Head of Wealth and Private Banking, Raquel Oden. Meanwhile, let's get a check on the stock market right now. We're just about 8 minutes into the session, only lower by about 0.1% on the S&P 500. I'm so excited to talk about the individual components, though, because what an interesting leaderboard you have at the moment. Up top, you can see that it's Intel actually is the biggest points contributor to the S&P 500 right now, up about 8%. Then you have Palo Alto Networks up almost 7%. These two are neck and neck when it comes to the points. Eli Lilly also having a great day on the heels of some disappointing data from Viking Therapeutics. We'll get into that in just a bit. Then you train your eyes on what's going on the downside. Microsoft, Broadcom, Amazon, Palantir, some of those big tech heavy hitters really dragging this index down or trying to. We'll see who eventually wins out. But let's take a look at the sector level as well and what the spread looks like there. It's almost an even split when it comes to your sectors. You take a look at what is green right now. Real estate, consumer staple, materials. Those are your top performers on this Tuesday, Matt. Then you go down to the bottom. You do have tech down by 0.4%, and then communication services, which is really tech in disguise, also down about 0.7%.
All right, that is a fascinating look at what's going on at the index level and at the industry group level. Coming up, it's been a wild few days for Intel. This is one of Katie's favorite stories and has been, honestly, for at least over a year. It sees a huge investment from SoftBank, $2 billion, a potential stake from the Trump administration, 1/10, and there's so much more to talk about involving the great state of Ohio and Licking County. We'll give that to you when we come back. This is Open Interest.
In case you missed it on the close.
With regards to the electric vehicle business, when we talk about the commitment to new models and more importantly, commitment to the infrastructure to support that, what's the plan?
We're starting to see different kinds of hybrids that customers are excited about. E-revs, which go about 100 miles, all electric, but then you could take a 700-mile trip once in a while. Those look really promising for a three-row crossover like Explorer. We're going very low end, super affordable EVs for urban duty cycles and for commercial. We're not going to invest in a lot of the very expensive crossovers for pure EV. We think that's going to be a hybrid business.
What does the supply chain look like specifically for the EV and hybrid business right now?
We've moved out our cycle plans. We've focused on affordable and commercial. We're fortunate we moved 3 or 4 years ago and we could tilt to hybrid and a specific kind of EV. And the supply chain has been able to move with us so far.
Don't miss the close, live every weekday.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersetchi in Vienna, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
right. Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
All right, it's time now for top calls. Some of the analyst action in focus this morning. And first up, Caterpillar getting raised to a buy over at Evercore. The analysts over there say that the company is trying to reduce discontinuing in the fourth quarter, which would boost earnings. Shares up a little bit this morning. Next up, the data center energy company Vertiv is getting initiated with a sell rating over at GLJ Research. The analyst says that the stock is pricing in perfection. And good news, we'll sit down with the CEO next hour. Finally, Palo Alto is getting upgraded to over at Bank of America to a buy after what the firm calls an impressive performance on all fronts in its fourth quarter. Also good news, we'll talk to the CEO next hour, Matt Miller.
We talk to a lot of CEOs on this program. That's the point. So I'm looking forward to those two interviews. We've been discussing the U.S. government's potential 10% stake in Intel using the CHIPS Act as equity. Bloomberg tech editor Peter Elstrom joins us now from London to try and sort through this complicated and fascinating story, Peter. So my main concern, because I'm from Licking County, Ohio, is that, they have the cash they need, the capital to build this giant fab, I guess, between Columbus and Granville. So is this money going to come to them? Have they already gotten some of it? And how is SoftBank going to help?
Yeah, Matt, well, I don't know the geography of Ohio quite as well as you do, but there are a couple things going on here. First of all, what we heard overnight is that SoftBank is going to step up. It's going to spend $2 billion for a stake in Intel. That is a vote of confidence that SoftBank perhaps can work with the company and that Intel is going to be able to make some of these advanced chips. SoftBank has some ambitions to be able to develop AI chips that would compete with NVIDIA, in particular AI chips that would help run some of the AI models like ChatGPT. So that looks like that deal's been announced. That deal is done. On the other side, the Trump administration is in talks with Intel about making this investment. It could be about $10 billion. Howard Lutnick, the Commerce Secretary, just confirmed this earlier today, that they are in talks to be able to put this money into Intel to take an equity stake. Now, Intel was already supposed to get a bunch of that money through the CHIPS Act, this whole Biden administration plan to rebuild the U.S. semiconductor industry. Now, the Trump administration is changing it a bit to see whether they can put that money in and then take an equity stake. They would probably also have some influence at the company because of that, perhaps to invest in Ohio, perhaps in other areas, to try to restore U.S. manufacturing of semiconductors.
Talk us through a little bit more the SoftBank interest in Intel. We understand the government perspective pretty well at this point, but the Financial Times reported that actually Sun was holding talks with Intel CEO about just outright buying the company's contract chip-making business. Instead, here we are with a $2 billion investment.
Yeah, there are a couple of divergent interests here. So SoftBank, the Japanese conglomerate, has been investing in a number of different areas of AI, robotics, and semiconductors. They own ARM, of course, which is the chip designer that is used throughout the smartphone industry in particular. And ARM has been trying to move into AI and some of these other growth areas to add to their potential in particular. Masayoshi Son has had this secret project that we wrote about called Izanagi, where they want to design AI chips and then have them manufactured either by Taiwan Semiconductor or perhaps somebody else like Intel to be able to compete with NVIDIA and get some of that growth in the AI side of the sector. Now, as Lip Butan, the new CEO of Intel, has been working on a revival plan, he's looked at a number of different alternatives, as we've reported before. There is the potential that The foundry business, which competes most directly with TSMC, could be spun out. It could become a separate company. There are possibilities along that scenario. But one of the key things, the key reasons to do that is because the foundry business requires so much capital to make these investments. So I think the Trump administration money, if it comes through, could help them make those investments in the foundry business. Now, what they still need, though, is customers. They need customers for that foundry business. They haven't been able to demonstrate that their chip making is so good that they can draw on customers like NVIDIA, Apple, Tesla, those kinds of companies that you would want to be able to grow the revenues a lot.
You know, on our call this morning, which was at 6 a.m., so 3.5 hours before the market opened, I was like, I got to ask Peter why the shares aren't reacting more strongly. Like, even on Friday when this news came across, they were only up 3%. And if the government is going to put its gigantic weight behind the company, and now we know SoftBank is going to invest as well, why aren't more investors going along for the ride like Peter Cheer at Academy Securities is? But now I see some real action in the shares. This is, over the last 6 days, 27% is the gain. Today, they're up 11%. So it looks like investors are finally really starting to buy into this story, Peter.
Yeah, well, shares were up last week, to be fair. They took a pretty nice run. Remember, it was just 2 weeks ago that Donald Trump called for the resignation of Lip-Bu Tan at Intel. He wanted Lip-Bu Tan to leave because of some China investments that he had made in the past. Then Tan visited Trump at the White House. They kind of smoothed over those issues, and now the Trump administration is looking at making this investment. But it's important to look at exactly what the U.S. is planning on doing here. Under the CHIPS Act in the Biden administration, the U.S. was going to give, as part of their grants, $10.9 billion to Intel to be able to build these facilities in the U.S. Now the Trump administration is saying, hey, we're not going to give that to you. We'll forward it to you if you give us equity in exchange for that. So the deal may not be that great from Intel's standpoint. They still need to decide whether they want to make this trade of equity for cash. One of the big advantages, though, is that they would get the money much quicker, one assumes, if they go ahead with this deal, but they still need to be able to get the customers to be able to build up that foundry business to be able to have a shot at a really good, a strong revival from here.
It was only on August 7th that President Trump urged the CEO of Intel to resign. So what a 12 days it has been. Peter, really appreciate your insight. That is Bloomberg Executive Editor for Global Tech, Peter Elstrom. Now, coming up, Viking Therapeutics sinking after its weight loss pill trial fell short of expectations and then some. Shares down 40%. We'll get into the details next. This is Open Interest.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a check on what stocks are doing. Just about 22 minutes into the session, we're down 0.1% on the S&P, but still at 64.41. So, we closed down yesterday as well, but we're just inching lower from all-time highs. The NASDAQ still at 23,600 right now, off about 0.6%. The NASDAQ is a much bigger drop than we see on the S&P 500. Let's go over to the stock chicklets and see why. NVIDIA is off 0.9%. It's a huge weight on the S&P, as we know from that Morgan Stanley chart, but an even bigger weight on the NASDAQ. So when that $4 trillion company falls, it pulls the rest with it. Intel is up 10%, as we were talking about Peter Elstrom a second ago. So that's a big move for Intel, and over the last year to date, it's up 30%. Home Depot is now gaining 5%. This is a company that missed expectations on same-store sales and warned that consumers are staying away from big purchases because of high rates, and yet just holding their full-year forecast powers the shares up, I guess. Everybody is hopeful for rate cuts as well. And then Viking Therapeutics. Check it out. Eli getting a little bit of lift from this news that Viking's pill did much worse than Lilly's on pretty much every single measure. But Viking getting absolutely punished because its weight loss pill just didn't work out that well. I guess side effects were a big problem, Katie.
Yeah, absolutely. You're taking a look at Viking's worst day since April 2016. So let's get a little bit more detail now on Viking and its disappointing results from that study. We're joined by Michael Shaw. He is Bloomberg Intelligence Senior Equity Research Analyst for Pharma and Biotech. So digging into these results, okay, 12% weight loss. That sounds okay, but then you think about the dropout rate, 28% of patients discontinuing treatment. It seems like that's what investors are paying attention to.
Yeah, I mean, absolutely. I mean, the 12% weight loss, when we look at that in the context of other treatments, I mean, it's suggestive of best-in-class, efficacy, especially when we consider it was 13 weeks and we hadn't seen a plateau in the curves. That coupled with encouraging maintenance data as well, I would say is positive. Now, as you said, what really overshadowed things was the tolerability profile of this drug. 28% of patients discontinued treatment. Most of that's due to gastrointestinal side effects, a known side effects for the class. Primarily nausea, but that compares higher compared to other obesity studies out there, and that's something that's going to be need to be addressed if they're going to have a commercially viable product.
How much does it cost to develop a treatment like this, Michael? Because the cost to consumers at the end of the day are massive for the injectable drugs, even when they're discounted by 50%. But I wonder about the R&D that goes into it for a company like Viking or a company like Lilly. What are they spending to build this?
I mean, in terms of, you have to obviously do your early to mid-stage studies, so dose-ranging trials as well, and then you need to back that up with 2 phase 3 trials in order to get to market. But in order to be competitive, you probably have to do larger scale outcomes trials. So these are 5,000 patients plus. So they're expensive trials. So it could cost billions to get to market eventually, and then you have to look at the manufacturing side of things as well. So you have to have enough capacity in order to to make these drugs and supply the market too.
All right. Great to get some time with you, Michael, and we'll definitely check out your research on Bloomberg Intelligence. Michael Shaw covers this sector, and you can type, if you type Viking and look at their equity, or if you type Eli Lilly and look at their equity, you can type BICO GO to get the coverage from Michael Shaw. Coming up in the next hour, we have an interview with the Fed governor. She's one of those in which I think the president puts some hope for cut momentum. Michelle Bowman joins the program, plus the CEO of Palo Alto Networks on the company's robust outlook. That's a stock that's doing well. And we're going to go to Westerville, Ohio, and talk with Gio Albertazzi, the CEO of Vertiv. This is Open Interest.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube as well. Head over to youtube.com and search Bloomberg Podcast Live. Lisa Mateo and Paul Sweeney. Coming up in just moments, Federal Reserve Governor Michelle Bowman is going to speak with Bloomberg's Michael McKee from the Wyoming Blockchain Symposium. So right before the Jackson Hole, we've got some blockchain folks out there, Lisa, talking about the crypto space. And so Michael McKee will be out there as well.
He's doing double.
Yep, absolutely. So we got a little bit of red and green on the screen here today. So we will keep on top of these markets. We'll keep on top of the news coming out of earnings, and we'll keep on top of the economic news as well, as including the geopolitics. But right now, let's go out to Wyoming. The Federal Reserve Governor Michelle Bowman speaking with Bloomberg's Michael McKee from the Wyoming Blockchain Symposium.
Welcome in. Bloomberg's international economics and policy correspondent Mike McKee is in Wyoming with a special Fed guest. Mike?
Well, good morning to you and to everyone around the world who's watching and listening on Bloomberg Television and Radio. I am with Michelle Bowman. She is the Vice Chairman for Supervision at the Federal Reserve Board, and we thank you for joining us here. Most people know Michelle Bowman lately as one of the dissenters at the last meeting. You talked last weekend about the fact that you haven't really changed your views, so there's not much to add in that, I guess.
Nope, the story's out there, and I haven't changed my views.
Well, the real reason we wanted to talk to you, of course, is because of your regulatory job. First, can you give us a little feel for how it fits into the overall Fed structure? I think most people, unless you're in banking, pay much more attention to the monetary policy activity.
So the role for Vice Chair for Supervision was created in the Dodd-Frank statute after the financial crisis of the aughts. And I'm the third person to serve in this role, and so we're moving forward with a number of different opportunities, and we oversee, this person in this chair oversees the supervision and regulation of the banking system, essentially.
And here you're going to be talking to the blockchain conference about debanking. How big a problem is that?
Well, I think it's important to understand that the president issued an executive order because it is a problem in the banking system. And one of the first things that I did in assuming this role was to rescind all of our guidance and to change our supervisory materials that referenced reputational risk so that we could ensure that the Federal Reserve is no longer including that in our examinations or in our supervisory activities to ensure that the banks can have as customers anyone that they choose to that's engaged in legal activity, and they can't discriminate against them based on their business model, their political views, or otherwise.
Well, is that a widespread issue? I mean, how do you stamp it out?
Well, I think it's difficult because all of that happens under the cloak of confidential supervisory information. But as long as our examination teams and our policymakers are focusing on ensuring that reputational risk and debanking is not a part of the banking system going forward, then I think that's the way that we'll work to achieve that. I also spend a lot of time speaking with bankers and with people within the economy. So hopefully, if it is happening, someone will let me know, and we can try to address it if we hear about it again.
Well, there are some areas, obviously you talk about legalities and the question of whether marijuana dealers can be banked or not is kind of a difficult one. But you have something like the crypto industry where reputational risk might come in, and you've had a lot of failures there. So what do you tell your bank examiners?
So what we're doing now is we've disbanded our novel supervision group. So it was created 2 years ago to focus on these kinds of activities, innovation and the integration of digital assets into the banking system. So what we're doing is we're taking the learnings that we had from that group and we're integrating it back into our Reserve Bank examination teams so that they understand that as Congress overwhelmingly supported the passage of the Genius Act, these are very acceptable activities, and they're of course legal because we're working on developing frameworks that will allow for digital assets to exist both inside and outside the banking system in a way that is unquestionably allowable activity.
There are also complaints, or Elizabeth Warren has made some, that banks might have locked out customers because of overdraft fees or religious affiliation or political beliefs. Are you addressing those as well?
Well, that's all a part of the president's executive order, and certainly will be included in any debanking oversight that we might do, is to ensure that anyone who's entitled or eligible for a banking account will have access to banking services.
Now, I know you're moving forward on the enhanced supplementary leverage ratio, but have you decided yet on a final rule?
Well, we've published an initial one. That was one of the first things that I did as the Vice Chair for Supervision, was to work with my interagency colleagues to publish and put forward this proposal on the supplemental leverage ratio. That's just one component of our capital framework, though, and we're working on all 4 pillars of that framework, the stress capital buffer, the GSIB surcharge, the Basel III proposal, and then the supplemental leverage ratio proposal as well.
Well, I guess my question gets to the timing of it, when it might come into effect.
So we've already published it. We're waiting for the comment period to lapse, and then we'll move forward with finalizing that proposal. But hopefully it will be in a comprehensive way with the other 3 pillars of our capital system, or capital framework, so that we understand how each one of them builds to the right calibration of capital within the banking system.
And as set up now, you're looking to carve out treasuries and other assets that are risk-free or almost so?
So the way that our proposal works is that it doesn't carve out any particular type of asset. So the purpose of the way that we've drafted the supplemental leverage ratio is to ensure that it works as it was intended, which is to be a backstop instead of a binding constraint. And what we've found over the past few years is that it's served in cases where there's been a lot of activity in the Treasury markets as a binding constraint. So we wanted to make sure that banks have the ability to allocate capital in ways that are helpful and productive for them, and that we're not disincentivizing activities that would allow them to intermediate the Treasury markets appropriately.
There are a lot of issues out there, so I want to keep moving on through them while we've got you here. Large financial institution rating system, Bank Policy Institute, the American Bankers Association are behind now your efforts to make changes in that. Where is that, and what are we likely to see?
So we've published that proposal as well. That's just a Fed-only proposal. But as a part of reviewing all of our ratings frameworks, we're also reviewing the CAMELS framework. So this is just one part of an overall effort to make sure that our rating systems are rationalized and that they're based and grounded in material financial risks, and that they're not overweighting something that may not be a material financial risk. They're all important components, but we want to make sure that we're not downgrading without taking into account if there are deficiencies in material financial conditions. So the large bank framework proposal that we've put forward for the ratings proposal, originally it was designed, there are 3 buckets there's capital, liquidity, and then governance and controls. The way that it was initially designed is that a deficiency in any one of those 3 categories would downgrade a bank in its condition. So now this proposal would require 2 deficiencies, one in 2 different buckets, so that we're not relying on one that might not be a material financial risk to downgrade a bank's condition overall.
Yet another one that's hanging out there is the Basel III implementation.
Right.
Where are you on that? I know that basically the Fed is looking to redo what had been proposed.
Well, I think what we're looking at doing is going back to the original Basel Agreement from 2017 to make sure that we're hewing closely to what that agreement included. We've also seen that every other jurisdiction around the world that's subject to the Basel requirements has already published their requirements. So we want to make sure that we understand what those requirements are as we're looking to frame our own proposal.
What's the timing on that, do you think?
So as we're looking at all 4 of these pieces of capital in a comprehensive way, we want to make sure that we have proposals out that help us understand how they'll all work together, because we have overlapping, duplicative, and sometimes conflicting requirements within the existing capital framework. So Basel III will probably be the last one that we propose, or repropose essentially, and we'll hope to have all of these initial proposals out early next year.
Back to where we started with crypto. You're looking at new global standards on bank crypto exposures that are supposed to come into effect at the beginning of the year. What do you anticipate there?
So those are international standards, and the U.S. is taking a different look. Obviously, Congress has spoken on how they see permissibility or allowable activity, and we want to make sure that what we're doing is appropriate for the United States.
Well, how does the timing fit with the international rules coming into effect? Timing of what the Fed and the other regulators in the U.S. want to be telling banks?
Well, I think I sit on the GHOS, which is the Heads of Supervision Committee for the Basel Committee, and these are conversations that we'll be having going forward for the rest of the year, and I think time will tell.
We'll have you back and get the update on that. I did want to ask about the way the policy system works. I mean, we have 3 regulators in the U.S. Most other countries have maybe 1. Right. And we shift the people in charge of it. As you mentioned, you're the 3rd one here, and Michael Barr, your predecessor, had a much more comprehensive Basel III proposal. We're going to have a new Fed chair in June of next year. Will all this change again?
Oh, I wouldn't think so. Obviously, our board has to approve anything that we put forward as a regulatory proposal. So anything that we move forward will be broadly supported by the members of the board that are present at that time.
You've been on the Fed for quite a while now.
Almost 7 years.
Almost 7 years, yeah. And now you're in the supervisory role that you're really well qualified for.
Well, thank you.
you know, you've been mentioned as a potential Fed chair, but do you prefer the supervisory and regulatory side?
Well, right now I'm committed to doing the job that I have, and we've really hit the ground running with our request for information on check fraud and other payments fraud, with the SLR proposal that we just put out, the LFI rating system. We're taking a really hard look at our supervisory components and across our reserve banks, as well as at the board, to ensure that we're focused on material financial risk. So I have a big agenda. We're moving through it quickly. Obviously, we need to get the capital proposals completed in the near future. But, you know, I'm really focused on the job that I'm doing, and I'm grateful to the president for appointing me and the Senate for confirming me to this role. So that's what I'm focused on right now.
Well, some Republicans on Capitol Hill have suggested that we should change this three-headed regulatory system and maybe take regulation away from the Fed. What are you telling them, and what do you think the odds of something like that happening are?
Well, I think the most important part is to remember that we have a banking system that's a dual banking system. So we have national banks and we have state chartered banks. And the FDIC and the Federal Reserve oversee those state chartered banks together with the state banking commissions. So I think it's important that we maintain the ability to oversee both the state chartered banks and the OCC with the national banks, and that we have a rational framework that is very similar for all of those banks going forward. So there's not arbitrage between the three regulators. But Congress is obviously responsible for making any changes to that system. So, you know, I'll be working closely with them to ensure that they understand what we're focused on and what we're doing that's supportive of the efforts of all of the agencies together.
So you come out to Jackson, but you also go up to Capitol Hill a lot.
I spent some time on Capitol Hill, absolutely. Yeah.
Nikki Bowman, thank you very much for joining us today. The Vice Chair for Supervision at the Federal Reserve Board. We're here in Teton Village, Wyoming, and we'll send it back to you in New York.
Michael McKee, Teton Village, Wyoming. That sounds good.
It does.
Teton Village. All right, that was Michael McKee. Nice. Bloomberg's own Michael McKee with Fed Reserve Governor Michelle Brown. They're out there at the Wyoming Blockchain Symposium. Of course, the Jackson Hole get-together will occur Thursday and Friday with Fed Chairman Jay Powell set to speak on Friday. We'll have full team surveillance. They're hopping on the birds tomorrow, heading out to Jackson Hole, and we'll have full coverage of all that Thursday and Friday. Right now, let's continue that discussion on where rates might be going. We got Ira Jersey joining us, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. Ira, you know, I'm not going to pay attention. I'm going to be on the beach watching the riptides on Friday, but I know people are going to be paying attention to Fed Chairman Jay Powell. What are you going to be listening for?
Yeah, I'm going to be listening for any shift from the meeting that they just had 2 weeks ago, right? So the Federal Reserve, you know, has their meeting every 6 weeks, and Jay Powell was pretty, I'm not going to say neutral, but certainly wasn't as dovish, I think, as some people thought he was going to be. So any tone shift in particular about the path of monetary policy, interestingly, and this is something that I'll be focused very keenly on, is they're working on their policy framework. And talk is that they'll announce that policy framework in September, which would then go into effect probably in January. So any discussion around what that policy framework is, so things like instead of targeting 2% inflation, having some kind of average inflation targeting, which is what they did before the current iteration of their policy framework, and quite frankly, I probably think is something a little bit needed because it gives more flexibility to their understanding of the policy environment and how their policy is going to react to inflation in particular.
In the last minute or so we have left, Ira, bond traders, they expect the Federal Reserve to lower interest rates. But what's the thought process behind their thinking?
Yeah. Well, the market thinks that the Fed's going to cut because it seems like the Fed is more dovish than they are stay on hold at the moment. And you know, the idea is that if inflation continues to reach the Fed's target and you continue to have very meager job growth like you've seen the last few months, then that gives the Federal Reserve cover to cut interest rates. And you know, the market's been pricing for interest rate cuts for the last year and a half, basically, and they did materialize, obviously, 100 100 basis points. But the question is, how do we get back down to neutral? They keep talking about neutral being somewhere around where inflation is, so that would be 100 plus basis points of interest rate cuts. And the market's not quite pricing 150, but they are pricing. The market is pricing for that 100 basis points of cuts, kind of to get to some sense of neutral in terms of the rate.
All right, Ira, thank you so much. We appreciate that. Ira Jersey, Chief U.S. Interest Rate Strategist, Bloomberg Intelligence. He's down there safely ensconced in our Princeton, New Jersey offices, which have the best breakfasts and lunches anywhere.
Better than here?
Oh, no, they have full meals. They're in the middle of nowhere, dude. They're like in Skillman, which is kind of like a burb of Princeton, middle of nowhere,
so you
cornfields.
have to get them in.
Yeah, you got to
Okay,
get the
I
food.
got
So
you.
that's how it works down there in Princeton. That's why some people put on that Princeton 10 or 15 pounds. Just saying, I've heard about it. We're looking at the futures here. We got unched on the S&P. The Dow's up a couple hundred points, and the Nasdaq's down at 90 points. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, for this Bloomberg Business Flash. And we are being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half. If you move to Oracle Cloud Infrastructure, this is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Major stock averages right now, they are mixed. The S&P 500 is up just 4 points. The Dow Jones Industrial Average up 227 points. And the NASDAQ 100 is lower, down 95 points right now. That is 0.4% lower. Best performing stock in the Dow Jones Industrial Average, that belongs to Home Depot. Those shares 4.5% higher. Retail, of course, in focus this week. Comp sales at Home Depot growing 1% in the fiscal second quarter. That was actually less than analysts expected. Now, the CFO is telling Bloomberg, our customers are telling us they're putting projects on hold. Home Depot was able to maintain pricing levels because most of the imported goods arrived before the new tariffs. And the most actively traded stock right now, shares of Intel 9% higher after SoftBank agreed to buy $2 billion worth of the stock. This is kind of a surprise deal to shore up the struggling Intel while boosting its own chip ambitions. The move also follows the Trump administration word that they're in discussions to take a stake of about 10% in the chip maker. You have 8 of the 11 major industries in the S&P 500 higher right now, being led higher by real estate. I'll chalk that up to some of the data that we got earlier today. New residential construction increasing about 5.2% last month. That was an annualized rate of 1.43 million homes. That's according to the government figures. I had never heard of this company before. Chinese plush toy maker Pop Mart International reporting robust revenue and profit growth.
Labubu's.
Boosted by demand for Labubu dolls. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Lisa and Paul.
We got to catch up to date with the Labubus, John. Yes.
There are fake Labubus out there, too. So you got to be careful.
Okay, thank you. Always something with John Tucker. Good morning, everyone. This is Bloomberg Intelligence. I'm Lisa Mateo alongside Paul Sweeney. Some big news came over in the wee hours of the morning. Air Canada will reach a deal with its flight attendants to end that 3-day walkout. It led to a lot of things: mass cancellations, even forced the airline to withdraw its financial outlook for the year. So we want to join now by Bloomberg's Francois Duflo. He's U.S. airline aerospace analyst, joining us this morning. Thanks for joining us, Francois. Is service back up and running? I mean, how long is this going to take?
No, it's not. It's not yet up and running. They cut flight 60% over the last few days. The number of seats flown was down 80%, and everything that is international and long haul was also cut completely. So it will take days. They mentioned 7 to 8 to 9 days. So it will take some time for passengers to be able to see normal operations. But still, that's a step in the right direction.
Francois, what do we know about this contract here? What does it mean for the company in terms of higher wages and the duration of the contract and all that kind of stuff?
We don't know a lot, to be honest. We suspect it's better than the flight attendants managed to get new concessions. So the previous proposal from Air Canada was for a 38% pay increase over 4 years, and it was built in a way that in the first year you would get a 16% increase, but it was split between the flight part and the ground part. And we suspect that it's on the ground part of the pay increase that the flight attendant managed to get some concession from management.
Hey, Francois, can you...
Yes,
sorry,
I was about to say just...
Yeah, sure.
No, I'll consider, even if it's a 42% increase, just like what the pilot got last year, it would still be a smaller part of the operating cost for Air Canada. It would be less than 3% for Air Canada. So it's a small part.
Yeah, that's what we're looking for. That's what I was going to ask you. So how much of an impact did this have on the airline? Because you had the thousands of canceled flights, withdrawing its financial outlook.
So that's another question, and we estimate it's about 50-60 million revenue loss every day of strike for Saturday, Sunday, and Monday, and then you have all the part that will be missed between today and next week as we see a slow recovery. So it's probably around 300-400 million of lost revenue.
All right, Francois. Merci beaucoup. Appreciate it very much. Francois Duflo. He is a U.S. airline aerospace analyst for Bloomberg Intelligence, safely ensconced down there in Princeton, New Jersey, the home of the outstanding breakfast and lunch for our fine folks down there. Let's get back to a little bit of geopolitics here. Tariffs, they're not going away, folks. It's just a question of timing, what degree, who's going to escape them, who's going to come to the White House with some gifts. We'll see how that all plays out. Edward Price, non-resident senior fellow at NYU, joins us here in our Bloomberg Interactive Broker Studio. Ed, as you step back and think about just tariff policy in general, what do you think the U.S. is trying to do here?
Thanks, Paul. I think ultimately the U.S. is trying to create something closer to an autarky. So that is an economy of scale that is immune from trade, or at least negative trade exposures. And that might make some sense if you agree with this premise that China and the US have this 21st century competition underway. The trouble is that at home, we're not also doing the sorts of things that would make sense. For example, if you really wanted to compete with China, which has well over 1 billion people, you would need more laborers from Mexico and Latin America, not fewer. So it might be trying for this kind of freedom from trade, but the way we're doing it will fail.
So President Trump widening steel and aluminum tariffs. So is that kind of along the same line that you're speaking about?
Well, I mean, he said it himself. If you want to fight and win a war, you need steel. He's right to say that. But why not also Japanese steel? Why not also the steel of your allies? So there's always this fissure in this thing where the first thing that the president says, to his credit, does seem like he has the courage and the insight to see the world as it really is. It's a lot of realpolitik. It's just that the second part of his sentences, which are usually like, here's what I'm going to do about it, in my opinion, and I think in the opinion of other analysts, that's when we go into a sort of very strange area that it doesn't seem like it's going to work.
I don't know, I kind of grew up with this whole globalization type thing, and globalization is good. It results in a lot of things, one of which is lower cost to U.S. consumers for goods, wherever they're manufactured. But is that sense of globalism, do you think that's over, or maybe just on the sidelines, maybe just for the U.S.?
Well, one way of looking at globalization is that it was fun, and I certainly enjoyed it.
Right.
But another way of thinking about it is that perhaps the Chinese Communist Party was subsidizing our working class, effectively, and our middle class with these cheap goods, getting us addicted to that stuff, whilst using the revenue thereof essentially for a military buildup. Again, this is ultimately what I think President Trump has noticed and has made a fuss about. Now, I don't believe that the international economy, by definition, can exist without some degree of trade. It might be more regional trade. It might be blocks, such as the EU, rather than freewheeling international trade. But globalism in its current form, certainly, we're not going back there.
Well, I'm interested to get your take on, because we've been talking a lot about the peace talks, right? It's all in the headlines. What's your takeaway from the meeting with President Trump and Putin, President Trump and Zelensky?
My takeaway is that the most powerful man in the world met Donald Trump, and the two of them sat down together and almost inexplicably went through the list of things that Putin said he wants and agreed to all of them, pretty much, and went through the list of things that President Trump has said that he wants, and again, inexplicably said no to pretty much all of them. If you recall, there was this whole thing about serious consequences, 50 days, 5 days, secondary tariffs, sanctions, and so on. I mean, duck egg. So yeah, it didn't happen. So my take on this is that Putin ran that visit, Putin ran that show.
How do you think it might go from here? It seemed to have a pretty constructive meeting yesterday with the European leaders, many of them, including Mr. Zelensky. How do you think this is going to play out in the days coming forward?
Well, President Zelensky, I mean, is the bravest man in the world, so he always does the best that he can. He has a very difficult position. It's the case that Ukraine is suffering. The Russians have mobilized such that they can slowly win a war of attrition. I got in a bit of hot water on your show last time because I said that Putin was slowly losing. What I should have said is Putin could slowly lose if we give the Ukrainians the kit and the weapons, which we're not. So hopefully the Europeans and Zelensky are able to get into some sort of peace deal so that the war ends, which is a noble end, but one that allows at least what's left of Ukraine to survive. And I think Putin has long-term aspirations for the rest of it.
Do you think we'll get to that next step of Russia and Ukraine sitting down for talks, and then after that, a trilateral?
We might, but so much of this is theater, right? I mean, sure. with the president, with Zelensky, the way they treated him in the Oval Office last time, there's always this tail risk, well, not even a tail risk. There's also, a probability that this is going to go south for Zelensky. And really, what is Putin's worth? What is Putin's word worth anyway, right? So even if there is this trilateral meeting and Putin says, yeah, I agree to X, Y, Z, I mean, we've seen in the last 5 or 6 years that he's willing to break any agreement anyway. So I think the essence of this needs to be that the Ukrainians do not agree to anything that means that they cannot either stay mobilized or remobilize if Russia starts the war again.
How concerned do you think those European allies were that came to Washington yesterday, and the other Europeans? How concerned are they about Russia's greater aspirations years down the road here? Because you could argue right now is when they need to draw a line in the sand, a big line.
Okay, so as an Englishman on your show, I'm going to say something strange. World peace now rests on whether or not Germany rearms, which is not something I thought I'd hear myself say.
Right.
If the Germans don't get their act together and create a Bundeswehr that can really fight and defeat the Russians in the field, such that it is a deterrent, the Russians will keep coming. And that is not just an assessment of Putin, that is an assessment of Russian history. And if we really want to be analytical about it, we should understand that the Russians have had a history in which, as far as they're concerned, they are perpetually invaded by the Europeans. It's not just the Germans. There were Romanians, Italians, and so on. And they had that war with the Finns and so on. So I think we can expect a long-term Russian posture which is aggressive. I think the European leaders understand this, and now they just need to rearm very quickly.
My head is spinning on this. In the last minute we have left here, the security plan that they were talking about. I mean, what do you think? What's the overall kind of look for that? I mean, not what does it include, because we really don't know the specifics on it, but what's the overall goal of it?
For whom? You see, like,
exactly.
right?
Yeah, true.
Okay, so let's just go quickly through the three leaders. The goal for Putin is to basically retool. If he agrees to a pause, it won't be an end to the war. He wants to retool, try again later, because the initial invasion failed. The goal for Zelensky, of course, is to keep sovereignty, to keep his country as intact and as powerful as possible. I think the goal for the Europeans is to support Ukraine. And the goal for President Donald Trump appears to be twofold. One, do whatever Vladimir Putin tells him to do. And number two, somehow, some way get a Nobel Peace Prize. So I'm that cynical about it, I'm afraid.
Right. All right. That is a cynical view. Hopefully things go a little bit differently than that. Edward Price, thank you so much for joining us. Non-resident senior fellow at NYU, joining us live here in our Bloomberg Interactive Brokers studio. S&P 500, I'm called out for Lisa Abramowitz, unched on the day. No change, nothing, nada. S&P, the Dow's up 290 points. We'll take that. Thank you to Home Depot. And the NASDAQ off 144 points. We'll have more coming up. This is Bloomberg. Good morning.
hits, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, and we are being brought to you by IBKR. Will U.S. initial jobless claims exceed 220,000 for the week ending August 30th, 2025? At IBKR Forecast Trader, the yes was recently at 50%. Start predicting today at ibkr.com/forecast. Last trading day for this contract is September 4th. The major stock averages mixed right now. S&P 500, 7 points lower. That's down about 0.1%, 64.42 on the index. The NASDAQ 100, 184 points lower. That is down 0.8%. And bucking the trend right now, the Dow Jones Industrial Average up 238 points. That is up 0.5%. The leader in the Dow right now, shares of Home Depot, up 3.8%. The company with its earnings report this morning saying sales returned to growth in the second quarter. Shoppers apparently investing in smaller projects like lighting and gardening. A global data analyst, Neil Saunders, writes that the gains show that material strengthening over the last quarter and provide confidence that the slump in home improvement, at least as he says, is finally over at this point. Most actively traded stock in the early going so far, shares of Intel. Commerce Secretary Howard Lutnick confirmed discussions between the U.S. and Intel for a government to take a stake in the chip maker. So he cast the plan as a bid to convert the Chips and Science Act grant into equity at this point. And shares of Intel, they are up 7.8%. In the S&P 500, you have 9 of the 11 major industry groups. They are higher right now, being led by real estate. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. And that's your Bloomberg Business Flash, Lisa and Paul.
All right, John Tucker, I'm taking a page from you where you mentioned Home Depot, so we're going to go there, okay? So it looks like consumers, they are staying away from those big purchases, but we want to learn more about this, dig deeper into it. Let's bring in Drew Redding. He's Bloomberg Intelligence U.S. home building analyst, joining us from Princeton. Drew, thanks for joining us. How much is that a reflection of interest rates and inflation, what we heard from Home Depot?
Yeah, so it was actually a pretty much inline quarter for Home Depot today. Comps up about 1%. A little shy consensus, but if you back out some of the Forex impact, it was pretty much in line. Now, of course, growth isn't as strong as you would like to see, and a lot of that, as you mentioned, has to do with where rates are, both rates on home equity loans and mortgage rates. You have to remember, housing turnover is at the lowest level since the financial crisis. And what we've heard consistently from Home Depot over the last several quarters is that consumers are pulling back on big-ticket discretionary categories, so think of things like kitchen and bath remodels or flooring. And the reason is because these tend to be financed with debt, and with rates where they are and consumers with the expectation that rates are going to pull back, they're taking a wait and see approach and deciding to opt for their smaller ticket projects instead.
Drew, what does Home Depot say about tariff risk for them? How did they quantify it for the street?
Yeah, good question. Obviously on, top of mind for a lot of investors. So Home Depot has done well to diversify their sourcing over the last several years. They get about 50% of their products from the U.S., so they are in pretty good shape from that regard. We would estimate, products coming from China are somewhere around 15 to 20%. And there's a couple ways that they're going to manage this. One, given the scale that they have, they're able to push back against suppliers. The second, they continue to diversify their supply chain. On their last quarter call, they mentioned that no single country outside of the U.S. will be more than 10% of sourcing. And then lastly, I think we're going to start to see some selective price increases coming through in the next several quarters. Now, they've done a little bit of pre-buy on the inventory side to make sure that they had some of that lower cost product on the shelves for consumers. But I think, as we get to the end of this year and into next year, you're going to start to see a little bit of pricing. Now, we wouldn't expect it to be widespread or significant. Remember, Home Depot sells about 30 to 40,000 products on their shelf. So they tend to take a portfolio approach and manage pricing really across the entire project rather than raising prices across the board.
Drew, so are you telling me my next Home Depot run is going to be more expensive? It's going to cost me more. Drew, I have painting, I have a deck to build, I have things to do. I mean, you're saying this could take effect pretty soon.
Well, maybe not your next trip,
Okay,
but
thank
the next couple, maybe looking more towards the end of this year or into next year, we would expect to see prices up marginally.
So I need to rush now, is what you're saying. Well, if consumers are putting off those big projects, what are they focusing on? I mean, is it the smaller ones, or are they just canceling projects altogether?
Yeah, it tends to be more maintenance, repair oriented. You know, so those projects around the house where things break and you have to fix them immediately, or replacement products for appliances and things of that nature. And again, what we're not seeing is the big ticket discretionary things like kitchen and bath that require financing.
What is going on with the mortgage market here? Drew, what do your companies say? What do they expect mortgage rates to do here? Because we do have a Fed that presumably is going to start cutting rates.
Yeah, so mortgage rates have come down over the last couple of months. We're in the 6.5% range. So really the move in mortgage rates has already kind of front run the expectations for what the Fed's going to do. So I wouldn't expect to see a whole lot of reaction on the mortgage rate side from an upcoming Fed cut. And not to mention, remember the last time the Fed cut rates, we saw an increase in mortgage rates. So I think what we really need to see, I mean, sure, it would be great if we could get rates into the high 5s or low 6% range. But, you know, as we've discussed before, what you really need to see is rates remain consistent and stable. And that's just something that we haven't had. You know, homeowners, when they're out shopping for a home, they want to be able to get a good grasp of what they're going to be spending. And with all the volatility we've seen in rates over the last couple of years, that's become increasingly challenging. Now, on the home building side, we continue to see the builders increase their use of incentives, and primarily that's for mortgage rate buy down. So they're getting their buyers somewhere around 100 basis points lower than the headline rate. Of course, as the demand environment continues to remain weak, we're seeing an increased use of that, and that's what we expect through the second half. So from the builder's perspective, they're giving their buyers, you know, better monthly payments than you're seeing at the headline rate.
Hey, Drew, before you go, Lowe's reports this week, too. I believe it's tomorrow. Do you expect to hear a similar story from them?
Yeah, pretty much. I mean, the one difference will be that Lowe's has a greater exposure to the do-it-yourself customer. And as we know, over the last couple of years, they've really been impacted to a greater degree than the professional customer, you know, due to concerns over the economy or the cumulative impact of inflation. So we do think that on a relative basis, that exposure will weigh on them. But we do think that they're going to benefit a little bit more from the recent hurricane activity, also from strong seasonal trends. So by and large, we think it's going to be pretty much the same stories, that trends are starting to improve, but it's still that big ticket discretionary piece that remains weak.
Drew, how about on the existing home market? How's that market doing, and are there regional differences these days?
Yeah, I mean, the existing home market is pretty much frozen. We've been bumping along that 4 million annualized run rate for a couple years now. And if you think of what normalized is, somewhere around 5 million. You know, we're 20-25% below what we would normally be doing. You know, part of the reason has been the lack of inventory, but we're seeing more inventory come onto the market. So what we expect is going to happen is that you'll start to see some volume improvements off of a low base, but we think that that's going to come at the expense of pricing. We've seen home prices start to moderate. They're still rising at the national level, but we think you start to see the increases lessen. And in some of the markets around the country, to your point, if you look at, you know, markets in Florida, Texas, some in the Southwest, we're already seeing home prices come down on a year-over-year basis. So it's kind of a rolling scenario where different markets are seeing minor corrections at different times, and that's kind of how we expect it to play out going forward.
All right, Drew, thanks so much. Appreciate it. Drew Redding, home building analyst for Bloomberg Intelligence. In my town, these things sell before the sign gets even in the ground, except for this one house. It's a new construction by a builder, and it's been on there for like 7 months. Now, new construction on the Jersey Shore and at an affordable price point is very rare.
And it's still sitting there?
Still sitting there. And I now actually know the sales agent, because I see her all the time as I ride my bike by, and I'm like, dude, you got to cut the price. I mean, and she says, I know, but the builder won't do it. I said, I mean, it's telling you, you know, nothing sits in this market longer than like 15 minutes, and this thing's been like 6-7 months. You got to cut the price, but nobody listens. So anyway, you got to price it to move it is what I think, but not my capital tied up in that thing. So we'll keep an eye on that. S&P minus 15, the Dow up 186. Home Depot's accounting for a lot of that gain, and the Nasdaq's down a couple hundred points. That's about 1% for the Nasdaq sell-off here today. We'll have more coming up. This is Bloomberg.
listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
I don't know how you do this biotech stuff. It is not for the faint of heart. Lisa Mateo, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. I mean, here's just another story, Lisa. Viking Therapeutics. I mean, okay, down 43% in a day. I mean, it's not like it's a pink slip stock here. It's $2.7 billion of market cap. So there's a lot of stuff going on out there in the healthcare space, therapeutics, biotech. So we need to check in with Sam Fazeli, Director of Research for Global Industries, and a senior pharmaceuticals analyst at Bloomberg Intelligence, ostensibly based in London, but I think that's kind of a farce, let's be honest. Sam, thanks for joining us here. Talk to us about Viking Therapeutics. What's going on there?
I will talk to you about Viking Therapeutics from London.
Oh, there you go.
Yeah, well, so look, they had a data readout today. Obesity, as I call it, the snakes and ladders game of obesity, because you see the share prices go up and then come down like that. Here today, we had an oral data set. Remember last week, Lilly had a similar kind of situation where the stock sold off about 14% on exactly the same situation. Oral drug that didn't quite meet the weight loss that people had expected. Here we have an oral drug that is kind of in the same ballpark, but then also with a pretty hefty side effect profile, something between 28-38% discontinuation rates, which is very high in a short trial, 13-week trial. So that's not particularly positive for them, hence 40% decline.
Well, Tim, what does this say about the development of a weight loss pill? I mean, is this still going to happen? Is there still hope for this?
Look, you could continue to dose down to get rid of those discontinuation rates. Because remember, what you're doing is you're giving a drug that's active, works in your brain, but also certainly works on your gut, into the gut. So you're getting big doses in the gut. If you can't manage the slow release on that in a way that gives you the efficacy, but manages the side effect profile, that's what you're going to keep getting. And that's what the situation is here. You need to get those side effects to look better if you're going to want to give these people slightly lower weight loss. So there's going to be a balance. I can't tell you that we're going to get one working, particularly at the levels that the injections work.
Yeah, the injections work, and it's fun to get the injections too. You know,
that's your job.
Is it? That's my job. Yeah, exactly. It's easy. Anybody can do it. It's not like a real needle or anything. Hey, Sam, we also saw Novo offering Wegovy at $499 per month through GoodRx. That seemed like a kind of a game changer for me, for folks that maybe thought it was too expensive beforehand.
Yeah, I mean, it's half price, right? Yep. So they're basically, rather than giving that extra $500 or $499 to the payers or to the pharmacy benefit managers, they're just not giving it to them, and they're giving them the price that they would have been getting from the pharmacy benefit manager. So for Novo, it's a net neutral. And in this way, the patient ends up paying less, but it's a cash, right? It's a cash situation. So that you have to take care of that. And it's in the sort of ballpark of what Lilly's been doing, although Lilly is slightly lower prices, and they give you a vial that you need to take a needle and syringe and inject it yourself. Here's the pens. That's where the difference is. So you're paying maybe a little bit more. Lilly can be at $399 or a little bit less per month, but you have to do the injection yourself, which is, therefore, this is a bit better if you're happy to pay the $100 per month.
So do these price cuts, Sam, do they put them more on track with what's being offered overseas? Because I know they're cheaper overseas, correct?
No, well, it depends. So the biggest question is overseas is where, over what? Well, we all know it's over this sea, right? The Atlantic Ocean. But the question is which country. If you go to the UK, you're probably, I haven't looked lately, maybe $250 with the increase that Mounjaro is just taking from Eli Lilly, or that sort of price. So not quite yet.
So here at Bloomberg, folks, we have this function called OUT, O-U-T, which means basically we can see what everybody's doing. We can see their calendar, their diary for everybody. It's called full transparency. So I pop it up for Sam Fazeli, and I see in the middle of September, he's got the week blocked out. He's going over to Toronto or something like that. So for most people, that would be a fun business trip. Sam, what do you do on the week of September 15th? I got to feel it's going to be a big conference.
I'm going to be having fun. Actually, not that big a conference. It's a Myeloma Society, International Myeloma Society conference. I'm going there to learn a little bit more about what the latest thinking is in terms of treating this. This is one of the diseases where we've actually conquered. It's a big word to say, right? The C word, conquered, cured. But there's a lot of people who are living for a very long time with their myeloma as a disease that they're living with. But before that, Paul, we have the World Congress of Lung Cancer.
Oh, sure we do.
Big data coming potentially in Barcelona. That is fun. Big data potentially coming for Summit Therapeutics. Look at that share price. Look at that valuation. And that's a really cool story. Maybe when the data comes out, if they've got something exciting to say, we can talk about it. But look at Summit Therapeutics. It's a $20 billion one drug in phase 3 company. So a lot is riding on this data, and future data sets, of course, is not just the end, but there's a lot of that coming. World Congress of Lung Cancer at Barcelona. Come and find us there.
All right. See, very good. I mean, he does it. That's how they do it, folks. And they sit in these rooms and they just go over like, medical and scientific literature, and then you're supposed to figure out whether you buy or sell the stock based upon that. And that's what these people do. I have no idea. It's no way to make a living. But Sam Fazeli somehow has figured it out. Sam Fazeli is the Director of Research for Global Industries, one of the best healthcare analysts based over there in London. And he's actually in the office today. Or that could be a backdrop. I'm not putting that past him. It could be like a digital backdrop. And he's sitting on the farm in Bordeaux or Burgundy or wherever.
I'm worried about you checking the out calendar. Oh, are you checking my out calendar?
You're darn right I am. You're darn right I am. So that's how we do it here at Bloomberg. Full transparency. No offices.
Oh, yes.
Everybody's just got a desk. That's kind of how we roll. Yes. So we can see where everybody is, and we can see where they are and where they're supposed to be. That's the key thing. Okay. It's a great management tool. Used it extensively back in the day. And I still keep up on Sam Fazeli. Can't trust that guy. S&P 500 down 20, the Dow up 140, NASDAQ down 220. This is Bloomberg.
is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, Lisa Mateo, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. That's the internet. Go to youtube.com and search Bloomberg Live Radio, and that's where you'll find us. Coming up, we're going to check in with Michael McKee, Bloomberg International Economics and Policy Correspondent. He's out there in Jackson Hole getting ready for the Jackson Hole Confab, which takes place a little bit later this week. He's at a crypto symposium out there. He's doing all kinds of stuff out there. Will Wade's going to join us, Bloomberg Energy and Climate reporter on Peabody pulls out of a $3.8 billion deal for Anglo Coal. Nobody wants to own coal these days, I guess. Terry Spath, founder and CIO at Zuma Wealth. We can get her market outlook as well. So we got a lot coming up here on the stock front. Dan Ives, global head of technology research at Wedbush Securities, is going to give us the latest on Intel and all things tech. So if you have a question for Dan Ives, let me know and we'll get to it. Right now, let's go to Charlie Pellet in the Bloomberg Business Flash.
Thank you very much, Paul. Here's what's going on. You mentioned Intel. That stock up now by 7.4%. Yes, the Dow is moving higher. The S&P, NASDAQ, both in the red. In fact, S&P 500 index right now, low of the day. Right to the numbers. S&P down 26. 64.22 where we stand. A drop now of 0.1%. We've got the Dow up 86. That is a gain of 0.2%. NASDAQ, though, down 258 now. A decline of 1.2%. The Bloomberg Mag 7 index down 1.5%, and the 10-year 4.30%. The 2-year currently yielding 3.74%. Gold is down $9 the ounce, 33.22, drop there of 0.3%. And West Texas Intermediate crude down 1.2%, 62.68 a barrel on WTI. Bitcoin hit hard right now at 113,880 on Bitcoin. That is a drop of 2.2%. Sarah Hunt is chief market strategist at Alpine Woods Capital Investors. And on surveillance this morning, she told us you cannot ignore the calendar.
Where equity markets are and with what can play out over the next couple of months, I think the likelihood for volatility is fairly high. And it is a seasonally higher volatility period of time. I think August and September, October gets a lot of airplay, but August and September can be quite witchy and have been over the last several years.
Sarah Hunt of Alpine Woods interviewed this morning on surveillance. And by the way, you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Home Depot shares higher after earnings, up now by 4%. Rival Lowe's, which also reports this week, up by 2.4%. And keeping an eye on Palo Alto Networks after earnings, Palo Alto up by 4.7%. So again, recapping, S&P 500 index just about the low of the morning now at 64.25. Down 24 points, a drop there of 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. What are you thinking here? Where do we go? Let's go to Christina Kino. Should we do that?
Let's do stock movers. Yes.
The first one is interesting to me. Christina Kino, thank you so much for joining us, managing editor for Markets Live. Nexstar. Tell us what Nexstar is and what are they doing?
Nexstar, yeah, a TV station operator. And this is an M&A story, basically, Paul, because they just agreed on a deal to buy fellow TV station operator Tegna for $3.5 billion in cash. So that values Tegna at $22 a share, a 44% premium to Tegna's stock price on August 8th. That's when we first got reports of this merger happening. And so this is a move that, will expand Nexstar's reach to about, 80% of U.S. households. Tegna has 64 stations, so it will give it access to those stations as well. And, both companies have cited regulatory changes as the main catalyst for this move. There have been recent court rulings that could pave the way for merger, particularly in the media space. Perhaps there's some resistance to that previously, but looks like the door is open now for deals in this space for sure.
Allen & Company representing the seller here, which I find interesting because Allen & Company hosts the Allen & Company Media Conference every July out west, and that's where a lot of these deals get hatched. And you oftentimes see it, 6 months, 12 months later, a deal announced. So it's interesting to see they got paid here. Anyway, I used to cover both of these stocks, and it is really a function of President Trump looking to loosen further regulatories in terms of how many stations you're allowed to own. So that's a direct benefit.
The timing on it.
Right there. Perfect. How about Intel?
Yeah, let's start. We got to talk about Intel today, Paul. So ticker INTC. Those shares are hanging on. Oh, they're up, as Charlie Pellet mentioned, more than 7% at the moment. And so the latest on that is, of course, SoftBank agreeing to take a $2 billion stake in the company. That's after a report that the Trump administration itself is in discussions to take a stake of about 10% in the U.S. chip maker. So a lot of interested parties in Intel. And generally, the analyst commentary around this is that it is a positive, but there are still a number of questions around Intel's prospects. Bloomberg Intelligence, for instance, saying that there is confidence in Intel's turnaround now, but the risks won't immediately fade. And Wedbush actually arguing that the government taking a direct stake could inhibit Intel's ability to maximize shareholder value. So we'll see how that story plays out. But for today, it's a positive one.
And retail earnings kicked off. Home Depot, big one.
Absolutely, Lisa. Home Depot, well, that's also in the green. So ticker HG, shares are currently extending, now up more than 3% from the opening bell there. And, you know, the main metric there is really the comparable sales. So that returned to growth in the second quarter. It's up 1% versus 3.5% declines from a year earlier. But it did fall short of analyst estimates. They were looking for a 1.39% growth rate. Now, we did hear from CFO Richard McPhail saying that Americans are not taking on large fixer-upper projects at the moment. They're opting for smaller home projects in the meantime, hence that moderate comp sales versus what analysts are expecting. Bloomberg Intelligence is saying that there is weakness in big ticket categories like kitchen and bath, which is a headwind, but there is investment in other areas like their online store, their supply chain, which means that Home Depot probably well placed for a market rebound.
Christine, thank you so much. We appreciate that. Christina Aquino, managing editor for Markets Live over there at Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. All right, folks, U.S. Federal Reserve Governor Michelle Bowman, she sat down to speak with Bloomberg's Michael McKee earlier today. In a conversation, Bowman said she's keeping her focus on her current regulatory portfolio, including plans to overhaul big bank capital rules and to stamp out debanking. Here's Bowman commentating earlier on debanking.
Well, I think it's important to understand that the president issued an executive order because it is a problem in the banking system. And one of the first things that I did in assuming this role was to rescind all of our guidance and to change our supervisory materials that referenced reputational risks so that we could ensure that the Federal Reserve is no longer including that in our examinations or in our supervisory activities.
All right, that was U.S. Federal Reserve Governor Michelle Brown speaking with our own Michael McKee. And let's bring Mike in here. Michael McKee, international economics and policy correspondent. He is live from Jackson Hole. Mike, I know you guys also touched on kind of the independence of the Fed. How did Governor Michelle Bowman, how did she kind of react to that? How does she say the board is reacting to that?
Well, in general, Fed officials are saying they pay no attention to what's going on outside the system. However, they do spend a lot of time talking with people up on Capitol Hill, and that seems to have paid off with ongoing support for Fed Chair Jay Powell in his sort of ongoing feud with President Trump. For Bowman, it isn't too difficult right now because the overall power in Washington resides with Republicans, and she's on the deregulatory side of that issue. So she meets their expectations. She doesn't think that that's going to change much with a new chair, but they have to be careful that they don't make too many enemies in the process of doing the regulation. And it seems like she's very attuned to what the banks are suggesting that should be done.
Hey, my God, Jay Powell speaking on Friday, considering all of the attention around interest rates, do you think he's going to drop some hints about the Fed's thinking ahead of that September policy meeting?
I don't think he'll give anybody a steer on where they're going to go with it or how he would vote. He probably wants to keep maximum flexibility because they still have a jobs report and a CPI report to go before they get to that meeting. So he may say that we're getting close, or he may say that it's too hard to tell right now, but if the conditions are correct, then they might cut rates. So I don't think the market will get what it wants, which is 100% certainty, but he will probably talk about it in some fashion.
And Mike, just remind us, there's still some data between now and the Fed day. What should we be focusing on?
Well, the big number is going to be the CPI, because if that stays at a reasonable level, then the Fed will feel a little freer to cut rates. If it rises the way it did in the past month or so, or the way the PPI did, then the Fed will have a lot of trouble justifying a rate cut, especially if the jobs report on September 5th comes in at a reasonable number. Remember, last time we had a very poor number in terms of jobs created, but the unemployment rate didn't rise. If unemployment goes up, then the Fed will feel a need to cut rates. If inflation goes up, they'll need to feel a reason to leave rates where they are. So they've got a bit of a conundrum, and it will depend on those two data points.
And speaking of data, we had some housing figures. Upward surprise for housing starts. I mean, are builders, are they starting to get a little bit more confident that the Fed might cut rates, that people might start buying houses again?
Well, that would be an initial reaction to it because, as you say, housing starts did rise and by more than expected, but building permits fell. So it doesn't look like they're taking out a policy for the future. They probably rebounded because of better weather and maybe because they were trying to get some stuff built ahead of tariffs and inflation that might raise housing costs. We did see tariffs have an impact on lumber costs. So it may have been like we saw with the imports that came in the first quarter, where you're trying to get ahead of any tariff price increases.
All right, Mike, thanks so much for joining us. Appreciate your reporting. As always, Michael McKee, international economics and policy correspondent for Bloomberg News. He's out there in Jackson Hole. Somebody's got to do it. Let's go back to M&A. And this is a deal that is not going to go through. Anglo American PLC's deal to sell its steel-making coal business to Peabody Energy for $3.8 billion. That's been terminated. Let's figure out what's going on there. Will Wade, energy and climate reporter for Bloomberg News, joins us live here in our Bloomberg Interactive Broker studio. As a former banker, Will, I don't like to see deals terminated. That means no fees. What happened here? Explain to us what's going on.
Oh, well, the key thing was the Moranbah North mine in Australia. There were several mines involved in this deal, but this is the most important. It was about half the value of the deal, and they had a fire in March. So Peabody basically is saying, we're not sure we want to buy this potentially damaged asset.
But didn't they have a revised, agreement to compensate them for that fire?
So the thing is, Peabody has been saying for months that they're not getting any clear information from Anglo. Anglo says, no, everything is fine. It's going to be great. And Peabody's saying, we'd like some real data here. We want to know how much damage there was, when we might be able to resume production at this mine. And their side of the story is they've got no information on this. Anglo's side is it's just going to be fine. So Peabody in May said, nope, this is a MAC, a material adverse change. It means it gives them a reason to pull out of the deal. They had a 90-day window where Anglo could cure this MAC. That expired yesterday, and today Peabody said, not making it work for us.
Well, why doesn't Anglo and Peabody just send some people to this mine to decide what's what here?
That's a really good question. I think the answer is that the conditions underground are still really up in the air. The regulators haven't gotten a clear picture on what's happening here. I think nobody knows what's going on down there.
Well, that is a MAC to me then.
It sounds that way to me too, but I'm not, the arbitration judge, and this is definitely going to go to arbitration.
Well, that's going to take a while. No, that's going to be a slow process.
Oh, God, yes.
Yeah,
clearly.
I mean, are we talking months, or are we talking longer?
I talked to an analyst today, and he said, zero chance there'll be a resolution this year. Probably next year.
Probably.
All right, so what's Anglo trying to do here? They're looking to sell their steel-making coal business. That seems like a good business to sell. Who wants to be in a steel-making coal business in today's regulatory environment?
So everybody knows that, coal for power causes climate change, and there's a huge push to get away from that. That'll be a long, slow process, but that's probably, a long, slow decline. That's coal that's burned to make power. This is coal that's used as part of the process to make steel. not a huge move yet to get away from coal and steel. So steel is basically a proxy for the global economy. If the global economy is growing, you need steel, bridges, roads, cars, everything. And if you want steel, you need steel-making coal. So there's still a really good business case for that.
Can you talk about, I mean, it seems like this is just another headache for Anglo. What are some of the other struggles that the company is going through right now?
So they're trying to streamline their operations.
Right.
They're like this giant global conglomerate. They're trying to sell their diamond unit, De Beers. You probably heard of it. I think they already got rid of their platinum business. This was supposed to be the easy part of the deal because I just told you, steel and coal steel shouldn't have been hard to find a buyer for. They lined this up deal first, and then it's all fallen apart on them.
So how do you think this is going to play out? You think it'll go to arbitration? And is this an arbitration could say to Peabody, you got to step up and buy it here, or they could say, no, this is in fact a material adverse change, and we can, you know, this deal can be terminated.
Yeah, I have no idea how it's going to go. It'll take a long time. It could go either way. I mean, there may be some resolution by the time it gets to arbitration on, we may have more information on what the state of the mine is.
I mean, this was a big deal for Peabody. I mean, Peabody's got a market cap of $2 billion. This was a $3.8 billion transaction.
Yes.
This is huge for them. I see their stock's down about 19, 20% this year. So and ideally, they would like this deal to go through if there wasn't this change, presumably, right?
Yeah, I mean, they were happy to take on the assets, especially for steelmaking coal. A lot of the coal companies have been trying to shift their focus to the steel coal and have less of the thermal coal. Peabody's one of them. They have other steel coal assets. We call it met coal, metallurgical coal.
Met coal,
yeah.
All right, Will Wade, thanks so much for joining us there. Energy and a climate reporter for Bloomberg News. I remember that term MAC, Material Adverse Change. You know, when I was doing my loan agreements at the Chase Manhattan Bank, MAC was big. We had like 20 pages on material adverse change in our loan agreements. And we sat there all night, every night, for weeks, reading it, literally line by line with a ruler.
So are you okay right now?
Yeah, now I think
Are you gonna
AI.
flashback? Are
I
you
think
good?
AI can do that now, so
you're right.
they
Yeah.
wouldn't need grunts like me doing that.
Yeah.
And then we'd pay an attorney to do it again for us. You know, so that's just, I don't know. That was my life back in the day. So all right, so we got a deal that's not going to happen in the steel business, as brought to us by Will Wade. He covers all the energy stuff for Bloomberg News. Looking at the markets here, red and green on the screen here. The S&P is down about 19 points. The NASDAQ is down 220 points. That's 1%, folks. The Dow's up 99 points. That's about 0.2%. So red and green, no real direction. The VIX just above 15 here. Yields on your 10-year Treasury, 4.30%. Off just 3 basis points here today. We're going to have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. A bounce off the bottom on the S&P, but down 20 right now. The S&P at 64.28, drop there of 0.3%. Earnings from Home Depot kicking off a string of retail reports. Investors also awaiting Friday's speech from Fed Chair Jay Powell. The Dow Jones Industrial Average, though, pushing higher, up 92. That is a gain of 0.2%. We've got Home Depot, by the way, up by 3.5%. The S&P keeping it all in context, down 0.3%. NASDAQ lower by 1%, and our Mag 7 index trading lower now by 1.3%. The 10-year at 4.30%, with the 2-year 3.74%. Gold down $8 the ounce, 33.24, drop there of 0.2%. And West Texas Intermediate crude lower by 1%, 62.81 a barrel. Bitcoin just below $114,000 now, down by 2.2%. Lots going on in the media industry, specifically television. Nexstar Media Group agreeing to buy TV station operator Tegna for $3.5 billion in cash in a deal that stands to dramatically expand Nexstar's reach to 80% of U.S. households and test the Trump administration's appetite for consolidation. Yesterday, Sinclair, one of the largest owners of TV stations in the U.S., also offered to combine its broadcast TV business with rival operator Tegna. Shares right now of Nexstar, they're up by 2.1%. Tegna up 4.3%, and Sinclair lower by 0.7%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, thank you, Charlie. So Charlie was just talking about the markets, and there is plenty for investors to digest. You have corporate earnings continue, tariffs in focus, the Federal Reserve's annual retreat kicks off Thursday in Jackson Hole, Wyoming. But here with more insight on what it means for the markets is Terry Spath. She is founder and CIO at Zuma Health, joining us from Malibu. Terry, thank you for joining us. When it comes to the Fed's rate cutting debate, right, are the markets betting that signs of the labor market weakness are going to outweigh inflation risk?
Meaning, is there going to be a rate cut in September? I think is kind of the question that a lot of us are focusing on.
Exactly. You read my mind.
And, you know, I think I should get an invite to Jackson Hole so I can make a better answer for this.
You're not going.
But honestly, I think it's going to be a ho-hum coming out of Jackson Hole. I mean, I think the Fed has room to cut interest rates in the U.S., but we are not with the consensus that Jay Powell and friends will cut in September, because what we've seen in the past with the Fed is they don't cut interest rates into a robust economy, into a strong economy, meaning, you know, the economy with GDP growth that is solid, Americans are well employed, and inflation is still a little bit above its target. So we think the Fed stays on hold. We'll be interested to hear what comes out of the meeting, obviously, later this week. But I don't think that we're going to see a cut in September, and I don't think that that's a consensus view. That said, the Fed is still going to go into a rate cut cycle. It's not if, it's when. There's a lot of data, I think, that can support a cut sooner rather than later. I just don't think that it happens. So that could create some speed bumps for investors, because I don't think that's expected. But we're not too worried about that. We don't think that that's the overall driver like it's been in years past, what the Fed's going to do at their next meeting. So wait and see, but we're not looking for a cut in the next couple weeks and months.
Terry, one of the concerns in the marketplace is concentration risk, that this market is really being driven by a handful of names, maybe a little bit more. A, is that a risk for you? And B, if so, how do you kind of deal with it?
Well, I think there's always concentration at the top of the market with the biggest names. And really, you know, what we're asking ourselves when we're investing client money is, like, how long can this rally last for U.S. stocks? Is it going to continue? And we think yes, despite the fact that we don't think there's a cut coming in September. We think that the rally can continue for U.S. stocks. We do think that U.S. exceptionalism, that big theme that we were talking about so much at the end of 2024, we think that's gone. But that outperformance of European assets over the U.S. is probably over. But things are looking really good here in the U.S. Many investors are still quite skeptical. There's still a lot of cash on the sidelines. And you don't see peaks in the market until there's exuberance. And we don't have exuberance. We're getting the trade agreements are beginning to show some contours. I think that's helping calm down a lot of the fear that was in the market earlier this year. There's a lot of key earnings reports coming this week. They're not as bad as maybe some had feared, and sometimes they're better. So there's concentration risk in valuation of a few stocks at the top of the market. But the rest of the market, the other, say, 493 stocks that are not the Mag 7, are at reasonable valuations, and as we see them start to catch up a little bit, we think that this rally can continue, and so we're very constructive on the U.S. stock market right now, and are looking for this rally to continue through the rest of 2025.
Terry, it's a big week for retail earnings. Home Depot came out today. We're kind of seeing the tariff impact from a lot of these companies. Were you surprised at what you heard from, let's say, a Home Depot? But we also have Walmart, Target, Lowe's, TJX coming up.
Yeah, it's a great week for information coming out of the retail sector. The Home Depot report obviously was, when you see the stock price move, that must have been better than people were expecting. I didn't think it was great. It wasn't a down same-store sales year or quarter for Home Depot, but what we're really looking for in earnings this week out of the retail sector is exactly what you just said, the impact of tariffs. So Home Depot is buying in front of the tariffs, so we haven't really actually seen the real impact of tariffs. What are consumers doing? What the Home Depot report told us, and we'll be looking for confirmation of this from Target and the others reporting, is the consumer spending, or are they slowing down a little bit? And also, we're interested in seeing kind of what are the hiring decisions that these retailers are making. Are they sitting on their hands right now because they're not sure what's going on, or are they kind of continuing as business as usual? So I think it's going to be a little bit of a tepid week for retail earnings. But what's really interesting and what we're really looking for is, like what you said, the impact of the tariffs, how consumers are spending, where they're spending, and actually also the hiring decisions that these retailers are making. So it's great information. It's not big market moving as we're seeing in the markets today. They're pretty much zero zip, not a movement in the S&P 500, but it's great information coming down the pipeline this week.
Terry, you got about 30 seconds left, but I want to get to a non-consensus call from you. Exit gold. Give us your call there.
Yeah. Actually, I'm glad you brought that up. Yeah, gold was a great play earlier this year, as there was a lot of uncertainty, a lot of inflation in the market. But that is it's a trade. It's never an allocation for us for gold. And on a technical standpoint, we're starting to see that trade break down. So we're comfortable exiting that position for our clients, and we recommend that for the listeners as well.
Good stuff. Terry, thank you so much. Appreciate that. Terry Spath, founder and CIO of Zuma Wealth Management, joining us via Zoom from, wait for it, Malibu, California. How about that? All right, let's get into the med tech space. Here's a company I know very well, the famed Chase Manhattan Credit Training Program, which has trained half of Wall Street over the years. The final project is like a week to do a big credit research report. My credit research report was on Medtronic. I know all about this stuff. Anyway, they're in the news here today. Elliott Investment Management, the activists, they took a stake in this company, and they wanted some change, and I think they got something here. Matt Hendrickson, senior med tech analyst at Bloomberg Intelligence, joins us here. Matt, bring us up to date on what's happening at Medtronic.
So with the Elliott Management news, they reported that they have a significant stake in the stock, and they're going to plan to bring on 2 new board of directors. These are previous medtech CEOs from back in history. And basically, they're looking to revitalize growth and capture efficiencies to, as they quoted in the earnings call, build oxygen for future growth. And so one of the things we saw in the quarter, in the earnings today, there were some areas that had strong growth, strong momentum, but in their diversified portfolio, there were other areas that kind of, let's say, needed some tweaking.
But when it comes to the board, who are some of the additions that are coming in because of Elliott Invest? And has Elliott disclosed the size of the stake?
As of now, I have not seen an actual size of what the stake is. Some of these the board directors, they were former CEOs at Dentsply, so some med tech companies. They were also previously at Becton Dickinson. Other ones, they are able to come in with more of an operational background. And so being able to drive kind of that efficiency to be able to create the savings to be able to invest into their R&D programs.
All right, for the folks in front of the terminal, the ticker is MDT. Then you type in the ANR function to get the analyst rating. The street doesn't know what to do with this stock. 17 buys, 16 holds, and 1 sell. What's the confusion out there about this name?
The confusion.
I mean, it's medical devices. Everybody needs medical stuff.
Everyone needs medical devices. Medtronic has invested a lot of money into these home run type products, pulse field ablation, renal denervation. All these products are trying to disrupt a current market, either if it's atrial fibrillation, hypertension. If you hit a home run like you're doing with pulse field ablation, it is going to drive pulse field ablation. It's basically a way to ablate an area that's being affected by atrial fibrillation without using heat or without freezing. So that prevents kind of the damage to the tissue. If you hit home runs like that, you're going to have key growth drivers. Other products like renal denervation is taking longer for that growth to develop. So analysts, including myself, see all these products in the pipeline, get very excited about the potential for that growth to accelerate from, let's say, the 4 to 5% they're currently at to 6%. And then we're just still waiting for that execution of those commercialization of the products to get to that higher growth. Some analysts, as you see in the ANR, they are more bullish on when that will come up. Others are starting to say, wait a minute, we've seen this story before. And so they are waiting. It's a wait and see story for those analysts.
I noticed when we talk tariffs, they scaled back the impact of tariffs. So they lifted their full year guidance. Are you seeing that more from other companies in this space?
Yes, I would say the majority of the companies that have reported so far, Medtronic always reports because their July fiscal quarter end. All the companies that reported their June fiscal end had a similar thing where they cut it by roughly half of what they had predicted in the first quarter.
This company's based in Dublin, as in Ireland. Is this the tax scam?
I will not call it a tax scam, but their main headquarters is in Minneapolis. And when they acquired Covidien and they worked through that integration process, they
I can call it a scam because back in Payne, wherever I worked on those Dublin docks deals back in the 80s, that's when they first changed the laws so to bring services and manufacturing to Ireland. And we did all the financing associated with that. And you know what? It worked. Go to Dublin now. The place is bustling with corporate stuff. It's like one of the great European cities in terms of just for your industry, healthcare and technology, Dublin docks.
Yeah, no, we have a lot of other companies are building out plants there. I mean, I know Dexcom has their CGM factory out in Ireland and all those things. So yeah, it's definitely a up and coming location for this.
Great workforce, all kind of that stuff. So and good beer, so I'm told. All right, Matt, thanks so much. Appreciate it. Matt Henriksen bringing us up to date on MDT, Medtronic, medical devices. So there you go. So good stuff there. Coming up, what are we going to do here? Dan Ives. Oh, boy. Here we go.
Here we go.
Thankfully, he's not going to be in studio, so we don't have to see his outfits, but I'll describe them. I'll describe what he's wearing. He's global head of technology research at Wedbush Securities. Talk to him about Intel. Some noise, some news. I think it's pretty good there. Let's talk about it. This is good.
Snippets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. A decidedly mixed market right now. We have got the Dow Jones Industrial Average pushing higher. The S&P, NASDAQ, they are both in the red. A slide in tech companies weighing on stocks. Big box retailers, though, getting a boost from Home Depot's numbers. Home Depot shares are up now by 3.3%. The Dow up 60. That is a gain of 0.1%, while the S&P 500 index is trading lower. The S&P down 20, a decline there of 0.3%. But tough times for techs today, with NASDAQ now down 218 points, down 1%. The NASDAQ 100 index also down by 1%. And the Russell 2000 index of small cap shares down by 0.4%. Right now we have got the 10-year yielding 4.31%, with the 2-year 3.75%. Gold is down 0.2%, 33.25 the ounce. West Texas Intermediate crude down 0.9%, 62.83 a barrel. And Bitcoin right now down 2.1%, below $114,000, $113,992 on Bitcoin. As for expectations coming out of Friday's Jay Powell speech, Terry Spath is Chief Investment Officer at Zuma Wealth. She was a guest moments ago right here on Bloomberg Intelligence.
I think it's going to be a ho-hum coming out of Jackson Hole. I mean, I think the Fed has room to cut interest rates in the U.S., but we are not with the consensus that Jay Powell and friends will cut in September, because what we've seen in the past with the Fed is they don't cut interest rates into a robust economy, into a strong economy.
Terry Spath of Zuma Wealth, interview moments ago right here on Bloomberg Intelligence. Again, recapping here, S&P 500 index down 22. That is a drop of 0.3%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right. Thank you, Charlie Pellet. Well, a few headlines for Intel today, and that really has their shares higher. They're up about 7% right now. So for one, the Trump administration reportedly weighing a 10% government stake in Intel, and then SoftBank buying in. So let's go to someone who knows more about this. That would be Dan Ives, Global Head of Technology Research this morning. Joining us from Westfield, New Jersey, where they do have some good restaurants and shopping, might I
Yes, they do.
Dan, thanks for joining us. So the news, this could see the U.S. become the company's largest shareholder. I mean, what does that mean for Intel, but also for the future? Are we going to be seeing more of this?
Look, I mean, Intel, as everyone knows, back was against the wall. I mean, I think ultimately if this didn't happen, strategic breakup was basically a done deal. And I think U.S. government recognized, not necessarily national security, but like they needed to revive Intel, clearly unorthodox in terms of the structure. But for Intel, I mean, it's a little Cinderella story, at least that's happening here, based on a lot of dark days I've seen the last few years.
And Lisa, you may not be aware, but the preseason rankings for college football have come out, and Penn State is number 2. And that's the highest I can remember.
Okay.
And I've been following these dudes for a long time, since I was a kid. Hey, Dan, how do investors feel about the U.S. government taking a direct equity investment in a company? What have you heard from some of Intel's shareholders?
Look, I mean, obviously it's a head scratcher. If you're an Intel shareholder, you're popping the champagne, right? I mean, because this is something you came out of left field, and obviously the SoftBank as well. But look, it crosses into a gray zone, right? I mean, a sort of line in the sand. Like Lisa was saying, does it end here? Is there more like this? But I think that's the issue, is that like as government gets more into, especially when it comes to chips and AI, there's a lot of unintended consequences. And I think that's some of the worry.
And then we have SoftBank buy-in. So I guess the thinking behind this is there's a potential for a turnaround at Intel. I mean, do you see that?
I mean, look, I think there's a better chance of me playing Bethpage Ryder Cup in September than a turnaround Intel. Now, again, like I'm not saying like you definitely have clearly like they're a lot better today than they were 24 hours ago. But look, this is an ever-like uphill climb. I mean, Intel is run like motor vehicle, and that's a big problem.
Secretary Lutnick was on another network today saying that we need to bring more chip manufacturing back to the U.S. That's been a theme of President Trump as well. How do you think about it? How should the U.S. proceed here, do you think?
Look, I mean, they're trying to lay the groundwork, and obviously you've seen investments, but the reality is it's going to be really more around AI, and it's going to be about a lot more of like what I'll call next-gen technologies. The reality is, as I've said, to produce chips in the U.S. and the supply chain, moving over from Asia to the U.S., I view as it's almost an impossibility relative to cost structure, taking 4 to 5 years to build a factory, and then just the reality of the IP that's really based in Asia. So, look, they have great talking points and they're moving the needle, but the reality is, like I've said, like that's going to be, I'll call it 4 to 5 years before you see any sort of real movement there.
Hey, Dan, I got to take you back to that 10% stake. Can you explain how exactly it's going to be funded?
Look, that's good. I mean, you could go back to maybe some of those like Fannie, Freddie, days, like odd structures, government, almost like in terms of how they're going to actually get paid back, what the ownership is, debt, equity. Look, and I think the devil's in the details, right? In terms of, do you have a board seat? Are you a board observer? I mean, I think those are some of the sort of questions that need to get asked. But it all comes down to, I think it delays a breakup, but I still believe the end result for Intel is going to be a strategic breakup.
So, Dan, what's the next big thing that we're going to be talking to you about in the coming weeks, do you think? Is it an earnings release? Is it a new product launch? What should we be paying attention to in your world of technology?
I think we'll be talking next Thursday morning. Obviously, godfather of AI, Jensen, NVIDIA, when they report. Look, I think, to me, but we've talked about in the show, obviously the last few weeks, you look at earnings season, that was a validation moment for tech, validation for AI. And I think now it comes down to, with NVIDIA reporting, what is demand and supply? We think demand and supply is 10 to 12 to 1. And I think that is going to be the next data point that ultimately, I think, puts fuel in this rally. I believe tech stocks rally hard into year end, despite some, whether it's Fed, geopolitical, and other sort of headline risk or news.
Hey, Dan, can Intel catch up to, let's say, Taiwan semiconductor manufacturing, contract chip making, NVIDIA and chip design? They miss out on this boom in spending in artificial intelligence.
I mean, it's like me going to Rucker Park and playing in a pickup game with an NBA player. It's just not. Look, they've missed the window. I'm not saying you can't have some small victories, but I mean, that's the shame of the thing. They've missed it. Now, look, I can't. You have a big install base. You could have some wins here and there. But you look where TSMC, you look at NVIDIA, you look what Broadcom's done, you look at obviously what Lisa Su and AMD's done. I think that's part of the problem with Intel. And look, I mean, U.S. government, SoftBank, others will get involved, but they have to stop running it like motor vehicle.
Dan, all right, let's get to the heart of the matter here. Is Penn State overrated at number 2?
No, I mean, I believe not just number 2. I think they'll be the number 1 team in the country. I think this is our year, 2025. Again, Michigan, Penn State. This year, you look at it, Ohio State. I think Big Ten's going to dominate. Texas, obviously, great teams, but this is the year I think we win the Natty.
There you go, another big call from Dan Ives. Dan Ives, Global Head of Technology Research at Wedbush Securities and one of the biggest Penn State fans out there. Questionable wardrobe, yes. But
was there bananas on that shirt?
I don't ask. I tend not even to look anymore. But anyway, we appreciate getting a few minutes of Dan's time here to talk about technology and Intel. A good day for Intel. Anytime I guess the government takes a stake in you, that can be conceived or be deemed a good thing. But again, is it enough to turn that story around? Dan's a little bit skeptical, I think. Red and green on the screen here. We've got more coming up. We're going to talk to Nicole D'Souza, Bloomberg Intelligence Internet Software Equity Analyst on TripAdvisor. That's coming up.
listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, Lisa Mateo, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube. How about that? As Tom Keene would call it, new technology, digital technology. I'm not sure how new it is, but YouTube is big. I mean, it's more viewing than any network out there. It is just extraordinary, the growth of that business. But we're all over that stuff. Let's talk about TripAdvisor here. I kind of think of them as an online travel company, kind of a research company, but they're doing some other stuff too. So let's figure out what's going on with our friends at TripAdvisor. Just to remind you, $2.2 billion market cap stock, up about 15% year to date with the appropriate ticker symbol, TRIP. Nicole D'Souza, Internet and Software Equity Analyst at Bloomberg Intelligence, joins us live here in our Bloomberg Interactive Brokers studio. Nicole, what's TripAdvisor up to these days?
Great. Hi, everyone. So Trip historically is known for their legacy business, the reviews on their platform, which they typically monetized through partnerships with online travel agencies and hotels who would advertise on their platform, and Trip would also acquire some booking commissions. That business has been in decline for a while now, even before the pandemic. So they've really transitioned to two new businesses, Viator, which is a experiences platform where it connects travelers with tour guides, and The Fork, which is a European dining platform for diners to make reservations.
Really?
Yes, so these two make up the majority of their revenue now.
Well, I mean, they tell me that people, really since the pandemic, people are investing more in experiences. So, I'm going to Italy next month. Is that an experience? I don't know. And we'll see.
So when you go to Italy, you can go on Viator and you can say, I'm looking to take a cooking class, or I'm looking to go on a hike, a guided tour. So all of these experiences you can book on Viator's platform. They currently have over 400,000 bookable experiences, which is 4 times their nearest competitor.
This looks pretty interesting. I'm looking at the PGEO function, people on the Bloomberg terminal. It just shows you where companies get their revenue. And this TripAdvisor core business, the Viator business is as bigger than that.
Yes.
So is the experiences and dining. So are these two businesses kind of the future, do you think?
Yes, definitely. Viator now makes up more than 50% of Trip's total revenue. The Fork, which is their online dining platform, is growing 28%, so significantly higher growth than the core business. So these are really the segments that investors are focusing on and are looking to for future growth.
How does Trip compete against Expedia? I'm looking at Expedia, and that's got a $25 billion market cap, so it's a lot bigger than Trip. How does that landscape shake out?
So Trip is actually a great partner for Expedia and for all the OTAs. They advertise
travel agencies.
Online travel agencies.
We're jargon free here.
Yes. Okay. Gotcha. So Expedia, Booking.com, they partner with Trip and advertise on their platform to drive traffic to their websites, and Trip has a lot of great review content on their platform. The core business is still a great asset. It has 300 million unique monthly users, so it's still a very important partner for these other businesses.
So what are the OTAs that you cover? What are they saying about the consumer travel? What are the trends out there?
Yes, so a big topic this year, and probably the biggest thing to influence Trip and all the other travel names, is the broader U.S. travel market. So U.S. travel in the first half of the year saw some slowdown. Specifically, international travelers from Canada and Europe were traveling yet less to the United States. There was, some uncertainty around policy, and that has kind of cleared up a little bit in the second half of the year. So the outlook from Booking, Expedia, from a lot of the airlines for second half travel within the U.S. has been a lot more positive.
So this is the conversation I have with my Canadian buddies. I'm like, you're talking tough now. I get it. I get it. I understand where you're coming from. But when it goes in that January, February, when you're getting crushed by the weather, Florida's still open, dude. Yes. Arizona's still open. Come on down. And they're like, no, we're holding firm. I said, all right, we'll see. But that really was a thing. We saw the Canadian airlines reduce capacity to the U.S. So you're seeing that at the OTAs as well, or the OTAs are seeing that?
We're seeing bookings, especially in the first half of the year. We saw a reduction in bookings, specifically for 2-star to 3-star hotels. 4 or 5-star hotels were holding up okay. But that has kind of reversed in the second half. Specifically, a lot of companies, specifically Booking, Expedia, said they had a really strong June, July. So we're viewing that positively for the back half of the year.
And Americans, what's their travels going overseas? Is that still strong?
It's been strong. It's been consistent, and I think it's more travel within the U.S. that has been hard.
Do we know what percentage of people use these OTAs, online travel thingamajiggies agencies, versus doing it on their own or doing just through Google or something?
So it's interesting. Historically, these online travel agencies would benefit based on price. They had competitive pricing. Yeah. That's really no longer the case. So right now they do rely on loyalty programs where they offer members some kind of benefit in order to book on their platform. It is no longer necessarily price competitive to book with an OTA.
You know, like for this Italian thing we're doing coming up next month, I just said, screw it. I called up a travel agent, said, here's my budget. This is what I want to do. Come back to me with something.
Yep.
Boom. Came back, hit it all. They took care of everything. Old school. I don't know. It worked. It worked great. So we'll see. Nicole, thank you very much. Nicole D'Souza, Internet and Software Equity Analyst for Bloomberg Intelligence, bring us up to date on what's happening in the online travel agency business, which is a pretty cool model. I remember when that first came out. All right, folks, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global headlines are coming up in just a moment. Looking at the markets, we have rolled over. We've got the S&P down 27 points, the Dow down 14 points that had been higher earlier, and the NASDAQ down 226 points. That's 1% on the tech-heavy NASDAQ. Yields pulling in as well, 2.5 basis points lower for your 10-year Treasury. Comes in at 4 spots.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. All along the Atlantic coast, officials are telling people to be careful.
Today, you can go in the water only up to your knee. Tomorrow and Thursday, no water. And on Thursday, no beach access.
John Ferretti's a town supervisor on New York's Long Island. Hurricane Aaron's expected to kick up dangerous surf the next few days from the northeast down to the deep south. CBS Philadelphia meteorologist Grant Gilmore tracking the storm as it remains offshore.
Winds down to 105 miles per hour, so still a Category 2 hurricane, no longer forecast to be a Cat 3 as it grazes the North Carolina coast. Still a dangerous concern for some storm surge and some big waves. So watching Aaron closely as it turns north and starts to head just east of the United States.
From the sound of it, President Trump is optimistic Vladimir Putin and Volodymyr Zelensky will sit down and talk. Nothing's been agreed to as of now. CBS News White House correspondent Nancy Cordes.
What President Trump had initially portrayed as a trilateral meeting between himself, Zelensky, and Putin, he now says will actually be a bilateral meeting between just Putin and Zelensky. And then if things go well and they want him there, President Trump would meet with the two of them as a trio. And that's notable because Vladimir Putin has not been willing to sit down with Zelensky. He has not been willing to even recognize him as a legitimate leader of Ukraine.
A day after Hamas accepted a new proposal for a ceasefire with Israel, Jerusalem reporter Linda Gradstein tells us a senior Israeli official said the government is standing firm on the remaining hostages.
This senior official told foreign journalists that the government's position has not changed, and he demanded the release of all 50 hostages, 20 of whom are still believed to be alive. The statement came after Hamas accepted a proposal for a 60-day ceasefire and the release of 10 living hostages in exchange for Palestinian prisoners and large amounts of aid entering Gaza.
The American Academy of Pediatrics said today that children ages 6 months to 23 months should receive a COVID-19 vaccine. The federal CDC no longer recommends that. Sean Muse got quite a surprise in Florida. He and his friends caught a 6-foot lemon shark, and while posing for pictures with it before returning it to the ocean, the shark turned and bit him.
It's unfortunate, but it's something that happens when you go, it happens sometimes. Luckily, he only took a little bit of me, and not a lot.
And checking Wall Street, right now the Dow Jones Industrial Average up about 5 points. The S&P and NASDAQ are trading lower. This is CBS News.
Bloomberg Talk.
Some travel trouble was put to music.
Passengers on an Alaska Airlines flight from St. Louis to Seattle got a treat after they were stranded on the tarmac when their plane was diverted to Boise because of mechanical issues. 9-time Grammy-winning jazz saxophonist Dave Koz and his bandmates happened to be on board. They treated passengers to a pop-up performance in the aisle. Koz posted their Stevie Wonder tribute to his Instagram page, pointing out they managed to turn frustration into fun. The video's gotten millions of views. Next up on the Summer Horns Tour, Alexandria, Virginia, a week from tomorrow. Deborah Rodriguez, CBS News.
Police in Dubai made 3 arrests hours after the theft of a pink diamond worth $25 million. A trader who bought it in Europe was tricked into a phony inspection by the thieves. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump says it's on Russia and Ukraine to be flexible and reach a peace deal. Welcome to the Tuesday edition of the fastest show in politics. This is Balance of Power. As Bloomberg News reports, work has started between U.S. and European officials on what security guarantees could look like for Ukraine. I'm Tyler Kendall here alongside Bloomberg's Michael Shepard in Washington. Joe Matthew is off, and we have a busy afternoon ahead. We'll bring you all the updates. Bloomberg's Eric Martin will join us here on set. He was there at the White House yesterday as European leaders descended on Washington to try to move the ball forward when it comes to Russia and Ukraine. Then later, it's not just our allies that are under pressure, but also Federal Reserve Chair Jerome Powell. Our very own Michael McKee is live in Jackson Hole, Wyoming, fresh off his interview with Fed Chair, Vice Chair of Supervision, Michelle Bowman, who Michael Shepard is a contender to lead the central bank.
Yes, we're going to be watching all the body language there in Jackson Hole this week. There's been a lot of pressure from President Donald Trump on the central bank to do more to lower interest rates. It's something that's been a pillar of his economic argument here since taking office and a pillar of his campaign against Jerome Powell. And it's certainly something that we'll be asking Michael about from his interview. But Tyler, there's also so much more to be talking about too today, and that also includes the news on Intel. We heard Commerce Secretary Howard Lutnick confirming that the U.S. is considering a stake in the chip maker and perhaps as a path out of its troubles in recent years. He didn't confirm the exact amount of the stake, but that is sending shares of the chip maker up. And now let's go to Charlie Pellet, the voice of Bloomberg Radio and the New York subway for the latest on the markets.
Hi, thank you very much. Here's what's going on. You mentioned Intel. We begin there. Intel shares there rallying now by 7.5%. For other techs, though, it is a down day, looking at a decidedly mixed market. Little change. That perhaps the key takeaway right now on the Dow, up 4 points, up less than 0.1%. As a matter of fact, as I speak, the Dow just turning negative. The S&P lows of the day now down 28, down 0.4%. The Nasdaq Composite Index hard hit the day, down 237, drop there of 1.1%, and the Nasdaq 100 Index trading lower by 1%. The Mag 7 index down 1.3%, and the 10-year currently yielding 4.31%, with the 2-year right now at 3.75%. So bottom line, the Dow, the S&P, Nasdaq, all in the red. Gold, a little change, down $10 the ounce, 33.22. West Texas Intermediate crude down 1.3%, 30 right now trading at 62.61. Again, WTI down 1.3%, and Bitcoin below $114,000. Bitcoin right now down by 2.3%. Wall Street's looking ahead to Friday's Jackson Hole speech from Fed Chair Jay Powell. We'll have more coming up in just a moment with our Michael McKee. Robert Socken is Director of Citi Research at Citigroup Global Markets.
He has the political pressure on the back of his neck he's been dealing with some time, so he can't lean one way or another, in my view, in this speech. So it's going to be a lot of, here's what's happening with the labor side of things. There are a lot of factors going on. Here's what's happening with the inflation side of things. Fairly muted so far, but we expect more to come. We have to wait and see, and so he's not going to lean too strongly one way or another.
And you can hear more of the conversation with Robert Socken of Citigroup on the Surveillance podcast. You can download it wherever you get your podcasts. Deal making in the utility industry this Tuesday. U.S. power and natural gas utilities Black Hills and Northwestern Energy Group have agreed to merge in a $3.6 billion deal that underscores the boom for electricity demand being unleashed by data centers. Right now, shares of Black Hills Corp, they are trading higher by 0.6%, and Northwest Energy Group up by 5.7%. Recapping stocks lower, the Dow, the S&P, NASDAQ, all in the red. S&P down 0.5%. And balance of power continues right now. Back we go to Washington once again. Your hosts, Tyler Kendall and Michael Shepard.
All right, Charlie Pellet from World Headquarters in New York, we thank you as always. And as Charlie was mentioning, monetary policymakers are descending on Jackson Hole, Wyoming. It's ahead of the Kansas City Fed's annual economic policy symposium, a lot hanging over it. This year, of course, the potential for a rate cut maybe in September, not to mention the pressure that the Fed's head, Jerome Powell, has been facing from this White House and President Trump. Powell has the stage on Friday. That's for his annual address that he gives every year at the conference. And already there is Bloomberg's Michael McKee. He's senior international economics and policy correspondent for us. And Mike, you were able to sit down with the Fed Vice Chair of Supervision, Michelle Bowman. Also, it looks beautiful where you are for our radio listeners. Mike McKee is in Teton Village, Wyoming, where it is just absolutely stunning if you've ever been able to be there. But more importantly, your interview with Michelle Bowman. She, of course, is a contender to head the central bank, according to our reporting. What did she tell you when it comes to what she is focused on right now and what she could be focused on in the future?
Well, you have to remember that Michelle Bowman just took over as vice chair for supervision this year, and so it's kind of a big job ahead of her. And she says she's focused on that rather than thinking about any other job. Now, I'm not sure that anybody who is under consideration would say much different, but as I mentioned, there's a lot for her to talk about and to think about, and she's here ahead of the Jackson Hole conference at another conference, the Wyoming Blockchain Conference put on by the SALT folks. There are a lot of crypto people here. One of their big issues is that they have a hard time sometimes getting banks to give them services because people are concerned about what crypto means, whether it is involved in a lot of illegality or whether it is something that can be trusted. And Bowman said she's sympathetic to their complaints and she's working on the debanking issue.
Well, I think it's important to understand that the president issued an executive order because it is a problem in the banking system. And one of the first things that I did in assuming this role was to rescind all of our guidance and to change our supervisory materials that referenced reputational risk so that we could ensure that the Federal Reserve is no longer including that in our examinations or in our supervisory activities to ensure that the banks can have as customers anyone that they choose to that's engaged in legal activity, and they can't discriminate against them based on their business model, their political views, or otherwise.
Well, is that a widespread issue? I mean, how do you stamp it out?
Well, I think it's difficult because all of that happens under the cloak of confidential supervisory information. But as long as our examination teams and our policymakers are focusing on ensuring that reputational risk and debanking is not a part of the banking system going forward, then I think that's the way that we'll work to achieve that. I also spend a lot of time speaking with bankers and with people within the economy. So hopefully if it is happening, someone will let me know and we can try to address it if we hear about it again.
Well, there are some areas, obviously you talk about legalities and the question of whether marijuana dealers can be banked or not is kind of a difficult one. But you have something like the crypto industry where reputational risk might come in, and you've had a lot of failures there. So what do you tell your bank examiners?
So what we're doing now is we've disbanded our novel supervision group. So it was created 2 years ago to focus on these kinds of activities, innovation and the integration of digital assets into the banking system. So what we're doing is we're taking the learnings that we had from that group and we're integrating it back into our Reserve Bank examination teams so that they understand that as Congress overwhelmingly supported the passage of the Genius Act, these are very, very acceptable activities, and they're, of course, legal because we're working on developing frameworks that will allow for digital assets to exist both inside and outside the banking system in a way that is unquestionably allowable activity.
There are also complaints, or Elizabeth Warren has made some, that banks might have locked out customers because of overdraft fees or religious affiliation or political beliefs. Are you addressing those as well?
Well, that's all a part of the president's executive order and certainly will be included in any debanking oversight that we might do, is to ensure that anyone who's entitled or eligible for a banking account will have access to banking services.
A couple of other things that Michelle Bowman is focused on is getting out the new supplementary leverage ratio that would enable banks maybe to warehouse more bonds on their books and help smooth out troubles in the system. And also a new proposal for the so-called Basel III reforms that have been adopted other places around the world. The prior administration put out a 1,000-page or so document on that banks really hated, and it looks like the Trump administration is withdrawing that. We'll start over, and they hope to have something sometime next year.
Mike, there is a lot on the table for Michelle Bowman and the Fed when it comes to trying to revamp all these rules. You're talking about next year, but are we going to see this sequentially, or are they going to try to do it all at once? The debanking, Basel, and the leverage ratios?
Well, they're working on them all at once. They will probably hit at different times based on the complexity of what they are trying to do. Bowman said that it's all of a piece as far as she's concerned. But the supplementary leverage ratio issue is already out for comment. Once those comments are in, then the Fed can take a look at finalizing the rule, and that could happen sooner than some of the other things.
Michael McKee, just 30 seconds here. What are we expecting from Fed Chair Powell on Friday? Of course, one of the big events where you are. Will he hint at a rate cut this September?
He may hint at rate cuts to come, but probably not giving anybody a clear view of September because they've still got a lot of data to go. And while the employment numbers have been weak, inflation's starting to creep up, which affects both sides of their mandate, and they'll have to make a tough decision in September. They want to have all the information that they can get.
All right, Bloomberg's Michael McKee, we thank you so much. Reporting live from us from Jackson Hole, Wyoming. We'll be following his coverage throughout the week leading up to that big speech from Jerome Powell on Friday. We'll have coverage all day on Bloomberg television and radio. And of course, Mike, the Fed's outlook is partly clouded here when it comes to tariffs. And we got a pretty interesting headline out today that there's actually been a wider range when it comes to metal tariffs, which we're going to be talking later on this hour with our political panel.
Well, that's right, Tyler. We are seeing an expansion of these tariffs into more consumer goods. And one of the big concerns, of course, is that consumers will start feeling the pinch. Now, the Trump administration has been loath to acknowledge this and has really pushed back against the idea that, these tariffs are having any kind of an effect on voters' pocketbooks. And yet we are seeing signs that these costs are beginning to be passed along.
It is something that everybody is watching closely, from the markets to policymakers as well. We'll be diving into that conversation shortly here, as well as a conversation about what is happening when it comes to talks with Ukraine. Bloomberg's Eric Martin is here next. He was there at the White House. Stick with us. This is Balance of Power on Bloomberg Radio, YouTube, and Originals.
12:31 on Wall Street. We do check markets all day long here at Bloomberg. The Dow back in the green. Little change. Key takeaway at this hour. Up 7 now. Up less than 0.1%. We do have the S&P, though, in the red, trading very close to session lows, down 28, down 0.4%. NASDAQ hard hit, now down by 1.1%, down 244 points. Our NASDAQ 100 index lower by 1.1%. The MAG 7 index down 1.3%. The 10-year 4.31% with the 2-year 3.75%. Gold is down $10 the ounce, $33.22, down 0.3%. And West Texas Intermediate crude down 1.4%, $62.53 a barrel. Cannot ignore the move in Bitcoin today, tumbling 2.3% at 113,754 on Bitcoin. Viking Therapeutics is plunging after its experimental obesity pill disappointed in a mid-stage study, marking another weaker-than-expected result for an oral alternative to popular weight loss injections. Viking Therapeutics shares plunging now by 41.2%. After earnings, Palo Alto Networks up 4.3%. Again, recapping, S&P lower by 0.4%, with the NASDAQ 100 index down by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your hosts of Balance of Power, Tyler Kendall and Michael Shepard.
All right, Charlie Pellet in New York for us. Thank you so much, and welcome back to Balance of Power. I'm Tyler Kendall here alongside Michael Shepard in Washington. And today in the nation's capital, we are really talking about the after effects of what ended up being an impromptu summit at the White House yesterday. Several European leaders descending here on Washington to talk about the stakes of the war in Ukraine. And we have new reporting from Bloomberg this morning, people familiar telling us that U.S. and European officials have actually already started talking about plans to bolster Ukraine's military as part of a potential security guarantee that would be needed to get to any sort of peace agreement. And it's one of the big takeaways that we're learning from yesterday's meeting. And earlier today, we actually heard from President Trump himself in an interview on Fox News. He talked about the stakes that were discussed yesterday here in Washington.
I hope President Putin is going to be good. And if he's not, it's going to be a rough situation. And I hope that President Zelensky will do what he has to do. He has to show some flexibility also. They're not going to be a part of NATO, but we've got the European nations, and they'll front-load it, and they'll have some of them, France and Germany, a couple of them, UK. They want to have, boots on the ground. Not in. I don't think it's going to be a problem, to be honest with you. I think Putin is tired of it.
To dive into this, we're now joined by Bloomberg's Eric Martin, State Department and Foreign Policy reporter. He covers all things national security for us here at Bloomberg. And Eric, you were actually there at the White House yesterday. You were following along really closely with these discussions as they developed. What did we learn about the security guarantees? Because that seems to be really the point of tension that everybody is focused on at this point.
Yes, Tyler, absolutely incredible day yesterday at the White House, right? Historic day. Historic 72 hours between the Alaska meeting with President Putin and President Trump and the European leaders there yesterday at the White House in a really unprecedented way. To your question on security guarantees, it's something that's still being fleshed out. We got to hear a little bit from Mark Rutte, the Secretary General of NATO, yesterday afternoon as he was getting ready to leave the White House. Just incredibly excited because it looks like this will mean ultimately a bolstered NATO, and as has been discussed earlier this week by Special Envoy Steve Witkoff, NATO-like or Article 5-like protections for Ukraine, but still some details there remaining to be worked out. We need to see exactly what Russia is willing to accept. We have seen reporting that President Trump did mention to President Putin the idea of security guarantees, but security guarantees can mean so many different things, right? Whether European boots on the ground, which seems likely, U.S. boots on the ground, which seems very unlikely based on President Trump's ethos and his talk about, from a long time now, trying to avoid forever wars, unlimited U.S. commitments, and this certainly seems like it could be one if you had U.S. soldiers in Ukraine.
Eric, we saw a lot of talk yesterday from European leaders in addition to security guarantees, but also to President Donald Trump's idea of having a bilateral meeting between President Vladimir Putin and his Ukrainian counterpart Volodymyr Zelensky to set the stage for further talks. Do we see any sign that Putin and his coterie of aides in Moscow are aboard with this idea? What has been their response so far?
That's a great question, Mike, because we know that President Putin, a lot of the analysis has been that he is going to hold out. He's avoided meeting with President Zelensky. We know that this is a scenario that potentially having Zelensky at the table makes him somewhat uncomfortable, as some of our reporting has shown. And so waiting to see when this will be scheduled and if it will be scheduled. Ushakov, the spokesman for the Kremlin, said that he did confirm that President Trump raised the idea in this incredible 40-minute call yesterday where he took a break from meeting with European leaders to call President Putin from the Oval Office, but not seeing yet confirmation that President Putin has accepted the idea of a bilateral meeting, seeing some comments from European leaders and leaving Friedrich Merz, for example, saying he expects this maybe in the next couple of weeks. President Macron of France saying that he expects a trilateral, which was the original idea that President Trump had raised as the next step sometime in maybe the next 3 weeks, but still waiting, and this criminology, right, trying to read exactly what the signs are coming from Moscow and what it all means.
All right, Bloomberg's Eric Martin, thank you so much for being here, your reporting and your insight on really, Mike, what was a very big day at the White House when it came to the future of what our European allies are going to do to help get a deal potentially over the finish line.
And like Ukraine, they see this as an existential question in terms of the U.S. relationship, the transatlantic ties that have been such a bedrock of global security for all these years.
Right. A lot to follow, and we're going to go from foreign policy now to domestic policy. We heard from our very own Bloomberg's Michael McKee earlier in this hour. He had the chance to sit down with the Fed Vice Chair of Supervision, Michelle Bowman, and asked her about the future of the Basel III Endgame proposal. She, of course, gave us an interesting update to hear.
I think what we're looking at doing is going back to the original Basel Agreement from 2017 to make sure that we're hewing closely to what that agreement included. We've also seen that every other jurisdiction around the world that's subject to the Basel requirements has already published their requirements. So we want to make sure that we understand what those requirements are as we're looking to frame our own proposal.
We're joined now by Nathan Dean, our colleague here in Washington, from Bloomberg Intelligence, an expert on all things when it comes to financial policy. We are still talking about Basel III, and how much longer will we be talking about it? What is the end game here? Can this really get through? And what are the next steps in seeing this change that she is talking about, Michelle Bowman is talking about, adopted?
Yeah, so, the exciting news is that Governor Bowman said that we were going to have a proposal early next year, and it would come at the end of her 4 pillars. Now, we have 4 proposals: leverage ratio, which is already out. You have the GSIB surcharge, the stress capital buffer, and then the Basel III endgame. Now, our consensus is, or at least our scenario is that this is going to be a capital neutral rule. So if you're a bank like Bank of America or JP Morgan, rather than being hit with a 9% capital increase like you would under the Biden administration, most likely would be capital neutral. Now, if the Fed and the OCC and the FDIC put this rule out in the first half of next year, call it January, February, March, they can get it done in 2026. And so most importantly for these banks, if you're trying to look at how you're going to deal with risk-weighted assets or any of your modeling, most likely implementation now is set for 2027.
Nathan, this is very fun for me because for those that don't know, which would be everybody listening, Nathan and I actually sit next to each other in the newsroom, and I am constantly picking your brain about how this all fits into the bigger picture here in Washington. And I would love your insight, particularly as we are talking about Michelle Bowman, who had been a sharp critic, right, of the Basel III endgame proposal. How does this fit into the broader structure here when we were talking about the Trump administration's plans with banking regulation?
Yeah, so when, the Biden administration, we had former Fed Vice Chair Michael Barr, when he put out this Basel III endgame, the initial proposal had capital requirements going up 19%. And you can almost hear the gasp from the banking trade associations around town. That was huge. But when you have Michelle Bowman coming in, obviously you have a changing of the guard here, and the idea is, remember, when she said in this interview with Mike McKee that she said international standards. We're going back to 2017, looking at the international standards. Now, the Europeans have already implemented their Basel III endgame. They call it Basel IV, and you're looking at somewhere between a 3 to 4% increase in capital requirements. But when you take into the changes to the leverage ratio and maybe the stress capital buffer and the G-SIB surcharge, obviously we have to see what they're going to do with that. Most likely for these G-SIBs, the Bank of Americas, the JP Morgans, and the Citigroups, you're looking around capital neutral. Now, this isn't really much of a deregulation affair, if you will, but the one thing that Governor Bowman didn't say, but she consistently says, is this idea of tailoring to banks. So if you're a smaller bank, like, we'll just say PNC, or even further down to like something much smaller, around the 50 to 60 billion in assets level, you're going to probably see additional deregulatory efforts come out over the next few years.
Nathan, another topic that came up during the conversation today with Mike McKee, Michelle Bowman mentioned this idea of addressing debanking. How much of an issue really is this? And is it really a problem that needs to be solved? Is there a way to quantify it? She indicated that it was sort of hard to put on paper.
So if you look at it through the eyes of the crypto sector, it's a huge deal because obviously a lot of crypto firms are out there trying to get banked, and a lot of the banking industry is like, let's just wait on this. But from the bank perspective, it's not that big of a deal. In fact, we don't write about it all that much because the debanking argument, if you will, a lot of it was driven by the Biden-era regulators. And when you have a difference of opinion over at the regulators, and Governor Bowman even just said that that they're changing things called Camel's ratings and stuff like that. As you have that difference of opinion, the banks are going to be able to go out there and bank these crypto firms. But most importantly for these crypto firms is that you have things like KYC and you have AML and all these other acronyms that the banks have to follow. That's why it's extremely important for Congress to pass things like the Clarity Act or the Senate banking discussion draft that they've already discussed.
I want to stick on regulations in our final minute here, Nathan, and pivot topics slightly because we had new reporting yesterday from Bloomberg News that had clean energy stocks soaring after the Trump administration released new guidance on eligibility requirements for tax credits that weren't as punitive as the industry had feared. What do we need to know about this story?
Yeah, so I like to joke with Joe that the marijuana stocks have hot sauce, but these solar stocks like Sunrun and First Solar, they were up like 20-30% off of this. So what the guidance did is it changed what was actually occurring in the One Big Beautiful Bill. Now, these tax credits, they're going to expire at the end of 2027, but what the guidance did is it changed so that if you create a new project by July 5th, 2026, you can actually claim these tax credits. And rather than having to pay 5% of your project up front, you can only just have to start it. And the language on how you start it is pretty broad. So if you're looking at how to start a solar project, maybe it's in 2028, 29, as long as you get started by July 1st, 2026, you should be able to claim those tax credits.
A lot to follow here. Coming after, of course, that signature legislation, the One Big Beautiful Bill from this administration. Bloomberg Intelligence Senior U.S. Policy Analyst Nathan Dean, thank you so much. We're going to be tracking this story across the next hour and, of course, the other top stories that we have, including the future of these negotiations when it comes to Ukraine and Russia. Up ahead next, we'll have our signature political panel. You won't want to miss it. Jeannie Shanzina will be here alongside Lester Munson for a conversation on what this White House is going to commit to when it comes to security guarantees. Make sure to stay here on Bloomberg. This is Balance of Power. I'm Tyler Kendall alongside Michael Shepard. We'll be right back.
1240 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index now at the worst level of the day. The Dow just turning negative as well. So the Dow, the S&P, NASDAQ are all in the red. Right to the numbers with the S&P down 34 now, down 0.5%. We've got the Dow lower by 1 point, little change there. NASDAQ down 277 now, a decline of 1.3%. A slide in tech companies weighing on stocks. Big box retailers getting a boost from Home Depot's results. Home Depot, by the way, up now by 3.1%. The 10-year, 4.31%. The 2-year, 3.75%. Gold is down $14 the ounce. Spot gold down 0.4%. 33.18 on the precious metal. West Texas Intermediate crude down 1.4%. 62.52 a barrel. And Bitcoin now down by almost $3,000 a token, down 2.6%. Bitcoin at 113,490 on Bitcoin. Fed Governor Michelle Bowman says she is keeping her focus on her current regulatory portfolio, including plans to overhaul big bank capital rules and to stamp out debanking. Bowman told our Michael McKee in a conversation you heard on Balance of Power that debanking is an issue.
It's important to understand that the president issued an executive order because it is a problem in the banking system. And one of the first things that I did in assuming this role was to rescind all of our guidance and to change our supervisory materials that referenced reputational risk so that we could ensure that the Federal Reserve is no longer including that in our examinations or in our supervisory activities.
Fed Governor, Vice Chair of Supervision Michelle Bowman interviewed on Bloomberg Television and Radio. Nexstar Media Group has agreed to buy the TV station operator Tegna for $3.5 billion in a cash deal that stands to dramatically expand Nexstar's reach to 80% of American households. It'll also be a test for the Trump administration's appetite for consolidation. Tegna up by 4.2%. Nexstar shares they're down by just about 0.5%. Recapping stocks lower, S&P down 36, drop there of 0.6%. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Tyler Kendall and Michael Shepard.
All right, Charlie Pellet, thank you as always. As Charlie mentioned, I'm Tyler Kendall here alongside Bloomberg's Michael Shepard in Washington. This is the Tuesday edition of Balance of Power on Bloomberg, as President Trump is now urging Ukrainian President Zelensky and Russian President Vladimir Putin to hold a bilateral meeting. He posted yesterday on Truth Social saying that he has laid the groundwork for this meeting to happen, saying that a trilateral meeting, including him, would follow shortly after if that first meeting was successful. But at this point, the details are in flux, to say the least. We've heard different things about the timeline from different European leaders. German Chancellor Merz saying that it could happen in the next 2 weeks, but we haven't gotten confirmation from the Kremlin yet, though our reporting indicates that a Russian official says Putin and Trump did discuss raising the level of the officials involved in the dialogues, but we do not know yet what that would actually look like. Of course, it comes after yesterday's meeting at the White House, where we saw about half a dozen European leaders descend here in Washington to talk about the stakes of the war. Here is part of what some of them had to say.
We need to stop this war, to stop Russia, and we need support American and European partners. We will do our best for this.
If everything works out well today, we'll have a trilat, and I think there will be a reasonable chance of ending the war when we do that.
The coalition of willing countries, that's 30 countries already working together on security guarantees, will now work with the U.S. on those guarantees.
My hope is that the United States do the most possible, because that's what will allow us to alleviate the burden on Europe, and that the United States also confirm its commitments, because that was a big question mark.
That was Ukrainian President Zelensky, followed by President Trump. The last two voices you heard first was UK Prime Minister Keir Starmer talking about the so-called coalition of the willing that has been pushing forward the security guarantees, followed by a translation of the French President Emmanuel Macron, who has been helping to spearhead that proposal from our European allies. And to discuss the path ahead here, we're going to bring in our signature political panel today. Jeannie Shanzano, Senior Democracy Fellow with the Center for the Study of the Presidency and Congress and a Bloomberg Politics contributor, and Lester Munson, Principal of the international practice at BGR Group and a Republican strategist. Hello to you both on this Tuesday. And Lester, I want to start with you because President Trump said yesterday, and I quote, "We're going to find out about President Putin in the next couple of weeks." That I can tell you. Just how high of stakes is this for President Trump as he ramps up the pressure on these leaders to come to the negotiating table?
Well, I think, we're in the kind of the center ring of the circus here. All the spotlights are on President Trump. They were last week in Alaska for the red carpet rollout of bringing Vladimir Putin kind of back into respectability. They were certainly there yesterday in the White House with seemingly half of the leaders of Europe in the Oval Office, an amazing photo, working with President Trump and President Zelensky on kind of the next steps here. The stakes are as high as they can be, I have to say, for a August month. Normally Washington in August is kind of moribund. Nothing's going on. Now we have everything going on. This is super high level, high wire act by the president. It's his own idiosyncratic approach to foreign policy. I think he makes actually a very credible point. We're going to learn a lot in the next couple of weeks.
Lester, you talked about a high wire act. I want to go to Jeannie now about the sprint. It seems to everyone that the pace will be quite fast here. 2 weeks until perhaps a bilateral meeting between Zelensky and Putin. 3 weeks to a trilateral meeting that would also include President Donald Trump. Is this optimistic? And is the White House perhaps overreading Vladimir Putin's willingness to go along with all of this?
They're definitely overreading it. There has never been any indication at all from Vladimir Putin that he would sit down with Vladimir Zelensky, who he does not even see as the legitimate leader of Ukraine. So that goes unchanged. But just to be optimistic, if they did meet, how would they and on what basis would they come to an agreement? There has been absolutely no area in which either side has said that they would concede. This whole war is a result of what Russia sees as an existential threat to itself because of the threat of Ukraine joining NATO. That has not changed. All of the talk yesterday about security guarantees, which Donald Trump sort of opened the door for, then this morning sort of walked back. All of that is just a non-starter for Russia. It is a non-starter for them to talk about a ceasefire. And the same goes on the other side for Europe and Ukraine. They want a ceasefire before they get to a peace deal. They don't want to give up land, and they do want there to be real strict security guarantees. It's all understandable, but there's no area in which we've seen movement by any. So the bottom line remains that nothing changed after the Friday meeting in Anchorage, and nothing changed after the meeting yesterday. That, the reality is the winner here in all of this has been Putin, who has gotten to ensure that the United States, at least so far, hasn't pressed it economically with these secondary sanctions or otherwise. And they've been able to continue the war just while the meeting was going on. Sirens in Kyiv and 10 more people dead overnight and 56 wounded. So they've been the winner out of this. Europe, the UK, the US, not so much.
Well, Lester, I'd love to get your opinion on what Jeannie is talking about and what we could see when it comes to deliverables out of this meeting. We did have, it's worth noting, reporting from Bloomberg News earlier today, people familiar telling us here that after this meeting, U.S. and European officials did start working out potentially on what security guarantees could look like. There seems to be this emphasis on bolstering Ukraine's domestic military capacity in a bid to prevent Russia from saying that there should be any restrictions on the amount of troops, for example, something that has long been a demand of Russia, that Ukraine abandon its defense industry, abandon Western military flows. But of course, the key part here is that it is U.S. and European allies working together to make progress. Can you talk a little bit about your perspective here when it comes to the more global picture? What is this doing to U.S. and European relations as they try to forge a path forward here to get at least some sort of momentum going?
Well, it's been rather striking on this exact issue in the last month or so. We've seen the European leaders move very close to President Trump. There was an endorsement by a number of European countries, I think virtually all of the members of NATO, committing to a 5% standard for defense, intel, and other related spending. That's as a percentage of GDP. That was a big win by President Trump. And then you saw President Trump effectively endorse NATO and talk about how important Europe is. I mean, there's a real change in tone from President Trump on these issues. And there's certainly a lot of stories in the news media about how this is, efforts by European leaders to kind of meet Trump where he is, play his game, say the things that he wants to hear. There's a lot of truth in that. But at the same time, we've seen a real dramatic difference between the first Trump administration, where there was kind of this battle for the future of NATO, to something in Trump 2, where the president is effectively completely with NATO on a bunch of questions. Now, NATO has changed. Some of the leaders have changed their tone, but we have seen the President Trump kind of bring European leaders together and be with him. They all showed up. The major ones showed up in the Oval Office yesterday. They are supporting his effort to engage in dialogue with Putin. It's possible that, behind closed doors, they say, we're not sure this is going to work. And to Jeannie's point, there are huge, huge challenges here. But those European leaders are demonstrably with President Trump as he goes down this road of his very personal brand of diplomacy. So I'm a little more positive on my outlook than Jeannie is, because I see that President Trump is kind of able to change the way these key leaders are talking and acting. And so does that mean they're going to get past all these hurdles? I don't know. We're going to find out, as he says, whether they're willing to do these things, whether you're going to make the compromises on security guarantees and on the kind of territory that Russia is going to demand, and on all of these tough issues. But there's reason to think that some of this has been very effective by President Trump.
Jeannie, when we talk about security guarantees, what sort of cost would we expect the U.S. to ultimately have to bear over the long run as it supports Ukraine? And will we see a coalition of the willing here in Washington, especially on Capitol Hill, to get behind continuing to spend on Ukraine to support it against Russia over the long haul?
Yeah, those are all great questions. I think one of the big pieces of news that came out momentarily yesterday was Donald Trump being open, or seeming to be open, to the idea of U.S. security guarantees could include American troops. He quickly shut that down this morning, as you know, in part, I believe, because domestically that is not going to sell to his base. We heard Steve Bannon out on his podcast basically saying that is a non-starter. And of course, this is a president who ran on an isolationist approach to the world and no more U.S. involvement in foreign wars. And I think we are seeing him, to a certain extent, carry that out, because one thing I saw yesterday was basically Donald Trump saying, you know what, if we can arrange this bilateral meeting between Vladimir Zelensky and Putin, and if they can come to an agreement, I will swoop in for the trilateral at the end and close this deal. In other words, I can't do much more about this conflict. I promised to end it in 24 hours. That's obviously not going to happen. These two are very far apart. We're not even talking now about the whole issue of land. And so I'm going to leave it to them to resolve. And to your point, I don't think that there is much support in Congress for much support for Ukraine. There's support for Ukraine, but for U.S. funding of Ukraine, they may be able to get some of that with them, some coalition, but support for that is waning the longer that this thing goes on, and that's what President Trump is noticing. So, I agree with Lester, and I am far more pessimistic about the prospect of an end to this war. This thing is going to end on the battlefield, unfortunately, for everybody involved. There's no way to get an agreement between these two at this point.
Lester, in less than the 30 seconds we have left, do you agree? Is this going to be an issue that could divide Republicans?
I don't think so. I think the U.S. is, even under the Trump administration, has been pretty supportive of Ukraine, intel sharing, strategy, finding different ways to deliver weapons. I think the question of troops on the ground was never realistic that there'd be U.S. troops on the ground. I think we're much more likely to see, U.S. air cover for other troops, probably European, British troops, providing security on the ground. So I'm not sure how. I think there's a way to work through these issues without Trump really having a problem with his base.
All right, thank you both. Our political panelists sticking with us for the second hour, Jeannie Shanzano, Senior Democracy Fellow, the Center for the Study of the Presidency, and Lester Munson, Principal of the International Practice at BGR Group. Stick with us. This is Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump says it's on Russia and Ukraine to be flexible, in his words, and reach a peace deal. Welcome to Hour 2 of Balance of Power on Bloomberg. As Bloomberg News reports, work has started already between U.S. and European officials on potential security guarantees for Ukraine. I'm Tyler Kendall here alongside Bloomberg's Michael Shepard in Washington. Joe Matthew is off, and we have a busy afternoon ahead. We'll bring you all of the updates, including an interview with Sir Peter Westmacott, former UK ambassador to the United States. He'll be here to talk about all the latest updates when it comes to the war in Ukraine, as this White House ramps up the pressure for there to be momentum on the way forward. And it's not just our allies that are under pressure from the White House, but Federal Reserve Chair Jerome Powell, too, this week. Our very own Michael McKee is live in Jackson Hole, Wyoming, fresh off of an interview with Fed Vice Chair of Supervision Michelle Bowman, who, Michael Shepard, is a contender to potentially lead the central bank once Powell vacates his post as the chair.
Her name has come up in discussions, but she was careful to demur on her interest and really focus on the task that she has as the Vice Chair of Supervision. She has a big task ahead of her, as she outlined in her interview with Mike, laying out the efforts to address what she referred to as debanking, the issue affecting crypto, but also, as President Donald Trump signaled in his executive order, perhaps some ideological bias behind banks' behavior, too, when it comes to customers.
Right, exactly. And there's other big stories that we're following here as well on Bloomberg, and we'll be talking about them throughout the hour, including one that I know that you watch closely, which has to do with the U.S. potentially here becoming a stakeholder in Intel.
Well, that's right. And this is a key moment, really, for the tech industry, and especially for an iconic chip maker, and that is whether the U.S. government will proceed with taking, as our colleagues here at Bloomberg have scooped, a 10% stake in Intel, and that would make the U.S. government the largest shareholder in this company. And it's something that's moving shares as we speak, Tyler. And let's go to Charlie Pellet, the voice of Bloomberg Radio and the New York subway, for the latest on the markets.
Thank you very much. Very kind. We have got Intel shares. Got to begin there because that stock's surging 7%. Certainly a topic of conversation. One we'll have more on coming up on Balance of Power. But the Dow, the S&P, NASDAQ, right now we are at just about the lows of the day. Got to begin with NASDAQ because I'm looking at a sell-off that is intensifying there with the NASDAQ Composite Index down now by 313 points. That is a drop of 1.5%. Keeping it all in context, the S&P just above 6,400, down 40 now, a decline there of 0.6%. Dow Industrials down 13 on the Dow, a drop of just under 0.1%. A slide in the world's largest tech companies weighing on stocks. Big box retailers getting a boost from Home Depot's numbers this morning. Home Depot up now by 3%. The 10-year 4.30%, with the 2-year currently yielding 3.74%. Gold down $15 the ounce, 33.17, a drop there of just about 0.4%. While West Texas Intermediate crude 62.44 a barrel, down 1.5%. And Bitcoin right now is lower. Bitcoin down 2.7% at 113,385 on Bitcoin. Meta Platforms is splitting its newly formed artificial intelligence group into 4 distinct teams and reassigning many of the company's existing AI employees. It's an attempt to better capitalize on billions of dollars worth of recently acquired talent. All of this, according to an internal memo. Meta Platform shares, they are trading lower now by 2.1%. Recapping, stocks declining, S&P down 39, down 0.6%. And for on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. Back we go to Washington. Once again, your hosts, Tyler Kendall and Michael Shepard.
Charlie Pellet in New York for us. Thank you as always. As Charlie said, I'm Tyler Kendall here alongside Bloomberg's Michael Shepard in Washington, D.C., where it is already shaping up to be a busy news day. We had new reporting this morning from Bloomberg News, people familiar telling us that U.S. and European officials have already started working on plans to bolster Ukraine's military capabilities as part of any sort of security guarantees. This is going to be absolutely crucial in these negotiations going forward, since we know that an initial demand from the Kremlin was for Ukraine to abandon its defense industry, abandon Western military flows. And we heard from President Trump earlier today, speaking in an interview with Fox News, laying out the stakes of what's happening here.
I hope President Putin is going to be good, and if he's not, it's going to be a rough situation. And I hope that President Zelensky will do what he has to do. He has to show some flexibility also. They're not going to be a part of NATO, but we've got the European nations, and they'll front-load it, and they'll have some of them, France and Germany, a couple of them, UK. They want to have, boots on the ground. Not in. I don't think it's going to be a problem, to be honest with you. I think Putin is tired of it.
Joining us now for more is Bloomberg's national security reporter, Natalia Drozdiak, who has been following this story, helps lead our coverage when it comes to foreign policy here at Bloomberg. And Natalia, it felt like one of the big takeaways yesterday was that we did see these firmer commitments from the White House, from President Trump, when it comes to a U.S.-backed security guarantee. But do we have any details on what this is actually going to look like in principle?
Well, we did hear a bit more from President Trump today. I mean, he basically ruled out U.S. troops on the ground and described a bit about potentially having air support to provide a sort of backstop to Western forces that would monitor some sort of peace in Ukraine once they reach that deal. But, as you mentioned at the top of this, they're still trying to hash out the details right now. So we know that the national security advisors from Ukraine, the U.S., and the European nations are all trying to figure that out right now, especially ahead of the next meetings.
Natalia, I wanted to bring up the next meeting and the idea from President Donald Trump, and one shared by the European counterparts who were there yesterday, would be a bilateral sit-down between Vladimir Putin and Volodymyr Zelensky. But how would that work without perhaps a chaperone, for lack of a better word? And what sort of neutral location would even be feasible, given perhaps some of the U.S. president's estrangement of other neutral locations potentially through tariffs, thinking of Switzerland and Brazil?
Yeah, I think that's a great question. I mean, first off, we need to get Putin to actually commit to this because we haven't actually seen that yet. The Russians put out a statement yesterday saying they were exploring the idea of looking at more senior Russian and Ukrainian officials talking, but they didn't say anything specifically about Putin actually doing this. So we have to see first. But then in terms of where this actually takes place, I think it's a really great question. Switzerland was an idea that was thrown out there, but that's a country that has really clashed with Trump over trade, so that's pretty much ruled out. Hungary is another option, but they have been a thorn in the Ukrainian side for many years, especially over the prospects of EU accession. So that seems unlikely. I think one area or one place where it might be possible would be in Turkey, because we've seen the last round of talks between the Ukrainians and the Russians at the lower level in May were held in Turkey, so that might be an option.
Just in our final minute that we have with you, Natalia, what sort of reaction did we see from our European allies? Half a dozen of them descended here in Washington yesterday. I believe it was the German chancellor who said that this meeting actually exceeded his expectations.
Yeah, I think we can't, explain enough how much anxiety there was going into this meeting from the Ukrainian and the European leaders, just given what they had seen on Friday when Putin and Trump had their big summit in Alaska. There was a lot of concern that Trump had essentially swung behind Putin and was disregarding concerns from the Ukrainian side. And, after they met, there was a huge sense of relief also because there wasn't another blow up in the Oval Office between Zelensky and Trump as we had seen in February. But then not only that, they also managed to pin Trump down on the security guarantee part.
All right, Natalia Drozdiak, we thank you always for your coverage, a reporter here at Bloomberg News covering national security for us. As we were just talking about the German Chancellor Merz, he came out yesterday, he spoke to reporters at the White House. And one of the topics of discussion, of course, we're talking a lot about security guarantees, but there are big questions too here about what the future of territory is going to look like in any sort of potential deal. Here's what he told reporters yesterday about the potential for territory concessions.
The one aspect which has not been discussed today is that Ukraine should not be forced to cede any territories. Russia's demand that Kyiv give up Donbass region is comparable, to put it in perspective, to a proposal that the U.S. give up Florida.
We're joined now by Sir Peter Westmacott, former UK ambassador to Turkey, France, and the United States, and now a senior advisor at the Royal Institute of International Affairs in London. Sir Peter, thank you for being with us today. You have worked with and know Keir Starmer well. Yes, we can hear you loud and clear, Sir Peter. Thank you so much for joining us. Sir Peter, President Trump is presenting a number of ideas around this peace plan in Ukraine, and that includes Europe buying, the EU buying American-made arms, no U.S. troops on the ground, no call for a ceasefire yet. What is your read on the state of the American president's commitment to actually securing Ukraine for the long term?
Well, I think what he's trying to do at the moment is to head off the demands that there have been from President Zelensky and from a number of European governments for Ukraine to be considered as a credible member of NATO. That is anathema, of course, to Putin, who doesn't want to have NATO on his doorstep. He doesn't grasp, of course, that NATO is a voluntary alliance that is defensive of countries, many of which were once under the Russian jackboot. He wants to rebuild a Russian empire, regardless of the wishes of the countries and the governments concerned. But, you know, leave that to one side. He has a real problem about Ukraine becoming eventually a member of NATO. Now, if that's not going to be part of the deal, and it perhaps can't be, then some sort of really strong military guarantees are going to be important. And that brings us to your point about, you know, how is that going to work? President Trump says no American boots on the ground. I don't know whether the French and the Germans and the British will want to have troops on the ground, but they will want to have them not very far away in the event that things do go wrong. Of course, although President Trump says that hundreds of billions of dollars of American taxpayers' money have been spent on Ukraine so far, it's not entirely true. And of all the money that's gone on military equipment, 83% of it has gone to American defense companies. So, you know, it's not been just handouts. And so it's not surprising that he says that if there's to be more money, more arms, that they should be paid for by the Europeans. But it's already largely being paid for, shall we say, and it's already been good business for the American companies. But by saying we will strengthen Ukraine's defensive capabilities with this military equipment, then I think he's putting in place a credible alternative, I hope, to the possibility of eventual NATO enlargement. That's what that's all about. It's about giving Zelensky and the others in Ukraine an assurance that if there is a deal, and we haven't talked about territorial swaps and so on yet, we should come on to that, if there is a deal, that is one that can be relied upon to be fair and lasting.
Can we just dig down a little bit more on what this credible deterrence framework would look like? And as we're talking about the different sort of aspects that we could see, we keep hearing this idea about air cover, and perhaps this is an area where the U.S. would be pushing forward the most here. Can you give us some insight into how these negotiations are happening behind closed doors when it comes to what the U.S. would actually supply to a security guarantee to make sure that a potential deal would actually get through?
Well, there's a lot of discussion still going on. There's a coalition of the willing meeting that was co-chaired by the French president and the British prime minister, I think, today. There are military chiefs getting together in Washington. I think there's a lot of the detail of what it really means that has got to be worked out. But we do know from President Zelensky that he would like to have, I think he said, 10 different Patriot missile systems on Ukrainian territory. These are very expensive, but they are super effective. And they are a very important part of the defense of Ukraine against ballistic missiles and other Russian hardware which might be fired there. Then I think other parts of it would be territorial guarantees. The president's talked about something that is Article 5 light. In other words, an attack on one country is an attack on us all. That is to say that if Ukraine was attacked, then the coalition of the willing, if not NATO members themselves, would regard it themselves as duty-bound to come to help Ukraine. But there's an awful lot of detail on this military side that's got to be hammered out, and I'm not sure that President Trump is very clear where he wants it to be, but he has understood that there will not be a deal unless there is something like that, and there is an arrangement whereby Ukraine can have its own credible military deterrent and equipment to withstand any further attacks. Because ultimately, nobody trusts Putin to keep his word. Perhaps President Trump does, but nobody else does. Anyone who's dealt with him knows that, as we saw on the eve of the invasion of Ukraine, he lies through his teeth. So there's got to be something which is, pretty strong and pretty credible if the Ukrainian people and the Ukrainian government are to go along with it.
Sir Peter, one thing President Donald Trump has made clear is his desire to move very quickly with this and outlined together with European leaders yesterday a timetable of perhaps a bilateral meeting between the Russian and Ukrainian leaders within 2 weeks and perhaps a trilateral meeting, including him, within 3 weeks. Is that overly optimistic, and what are the risks of moving at this pace?
Well, one of the benefits of having somebody like President Trump in the Oval Office is that he likes to move fast. Look at all the different things that he's done since he became president. Some of it we may like, some of it we may not, but he doesn't hang around. And he's a deal maker, as he likes to remind us regularly. So, and he also would like to see an end to the killing, as would we all. So I think he wants to get on with this. He doesn't think there's any need for a ceasefire, which is what Zelensky wants and what everybody else in the European side would like, and what the Chancellor of Germany and the French President reminded him was a requirement for progress towards some sort of a settlement. He's now moved off that because Putin didn't want to have a ceasefire. He wants to go straight to a settlement. But to do a settlement in very short order, when you're talking about territorial issues and guarantees and Putin's desire, frankly, to dismantle the entire post-Cold War European order, that's going to be very difficult, and that's a real problem. Let's hope that we can move fast. I think everybody would be delighted if there was rapid progress, but there are questions to be answered, such as what does the president mean by territorial exchanges or territorial swaps? Has anyone seen any sign of the Russians offering land of theirs in exchange for the land of Ukraine that they want to keep for themselves? I don't think we have. All we've seen is that there might just be the possibility of the Russians withdrawing from some little corners of Ukraine that they've already occupied in exchange for getting others. Well, that doesn't sound to me like a very fair deal. I'm not sure that it would to President Zelensky either. So these territorial issues, as well as the military guarantees and the broader political questions that we've touched on, this does take time. But President Trump is a man in a hurry. He went to Alaska. A couple of days later, there was everybody in the Oval Office. We've now got the coalition of the willing talking to each other. We've got military chiefs looking at the military guarantees question. It would be wonderful if we could make early progress, because each day that we speak, there are more people being murdered by Russian missile attacks on Ukraine.
Sir Peter, in just the last 30 seconds that we have with you, I'd love to get your thoughts on what has been a relatively warm relationship between the UK Prime Minister Keir Starmer and President Trump throughout this process. What do you make of the evolution of this relationship, considering that the UK was the first to ink a trade deal, for example?
Well, it was, and it started, I think, with a very successful visit to the Oval Office by Keir Starmer. Not everybody was convinced that it would work. You've got President Trump, who was, full of a MAGA approach and somewhat protectionist. You've got Keir Starmer, who was a Labour politician, a free trader. How was that going to work out?
Sir Peter, I'm so sorry. We have to leave it there. Peter Westmacott, former UK ambassador to the United States, we thank you so much for your time and joining Bloomberg. We'll catch up with you soon.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index continuing to hold near session lows, a slide in the world's largest tech companies weighing on stocks. Big box retailers getting a boost from Home Depot's numbers this morning. Home Depot up now by 3.3%, but the Dow, the S&P, NASDAQ, they're all in the red. S&P down 41. Decline there of 0.6%. The Dow lower by 10 now. Little changed on the day. NASDAQ down 320 points, a drop of 1.4%. The NASDAQ 100 index down 1.4%. Our Mag 7 index now down by 1.7%. The 10-year at 4.29% with a 2-year 3.74%. Spot gold is declining $14 the ounce, down 0.4%, 33.18. And West Texas Intermediate crude down 1.7%, 62.35 a barrel. U.S. power and natural gas utilities Black Hills Corp and Northwestern Energy Group have agreed to merge in a $3.6 billion deal that underscores the boom for electricity demand that's being unleashed by data centers. Shares of Black Hills, they're up 1.2%. Northwest Energy up now by 6.4%. Viking Therapeutics shares are plunging after its experimental obesity pill disappointed in a mid-stage study. Viking right now down 40.7%. Recapping, S&P down 38, down 0.6%. Balance of power continues right now. Back we go to Washington. Once again, your hosts, Tyler Kendall and Michael Shepard.
All right, Charlie Pellet, thank you so much. I'm Tyler Kendall here alongside Michael Shepard in Washington. But we're now going to go to a story that's going to take us to Wyoming, because that's where Federal Reserve Chair Jerome Powell will be in the spotlight later this week when he gives remarks at the Kansas City Fed's annual Economic Policy Symposium. That's where we find Bloomberg's international economics and policy correspondent Michael McKee, who's already there on the ground for us in Teton Village, Wyoming. And Mike, earlier today, you sat down with the Fed Vice Chair of Supervision, Michelle Bowman, who told you that she has a lot on her plate at the moment. What did we learn about how she's balancing priorities?
Well, for right now, she says she's focusing on the regulatory issues instead of on whether or not the president is interested in making her the chairman to replace Jay Powell when he leaves office in May, or to focus on monetary policy. Now, she did confirm that she hasn't changed her mind on the idea of rate cuts, that rate cuts should go ahead in September and all 3 remaining meetings this year. But she said the most important thing for her is getting some of these legislative proposals through. One of the ones she's talking about now is the supplementary leverage ratio. Another is the Basel III reforms. The Biden administration had put out a 1,000-page document on that the Fed has basically recalled and is rewriting under her. And then debanking, an issue for the people here where we are today. The crypto conference, basically the Wyoming blockchain conference. And a lot of people here are concerned that banks don't want to take on their business because of reputational risk. And she says the Fed is going to be taking care of that.
Mike, widening the angle from the conversation with Michelle Bowman, what are you expecting to hear from Fed policymakers and other attendees there in Jackson Hole when it comes to tariffs and the impact on the economy and how that may be influencing the September rate decision, which some are looking at as a possible cut?
Well, I think pretty much everybody agrees that tariffs are inflationary and they are causing some inflation. It's been a question of how fast we see it, and we're beginning to see it more and more in the CPI, PPI, and other indicators. Companies are coming out and talking about raising prices. But then the converse is what's happening with the labor market. We had a very low number of people hired in the last month, and the unemployment rate went up a little bit. Does that signal that we're seeing the economy slow down enough to justify a rate increase, or does inflation mean that they don't want to cut rates? And that's the debate they're going to have, and we'll hear from different people on the Fed about which way they are leaning at this point. We know Bowman and Chris Waller have said they would vote in favor of a rate cut. The other members of the Fed have been somewhere along a spectrum from probably to no, not yet, we're going to wait for more data. Powell's in that data camp, and when he speaks on Friday, we expect him to sort of dance around the issue and say, we'll wait and see what the data tell us between now and then.
Okay, we'll look forward to hearing more from you, Mike. Thank you so much. We're going to now turn to our political panel. Jeannie Shanzano, Senior Democracy Fellow with the Center for Study of the Presidency and Congress and a Bloomberg Politics contributor, and Lester Munson, Principal of the International Practice at the BGR Group here in Washington. Jeannie, I wanted to start with you again. We can turn to this whole question of tariffs. We did see a little bit of upside when it comes to the U.S. credit rating, thanks to tariff revenue coming in. But let's talk maybe about some of the downside that we could be seeing for consumers down the road. The administration is now widening the application of some of those metals tariffs that were announced just weeks ago.
That's right. And that's what we've all expected by some estimates. And we've heard this on Bloomberg repeatedly from some of the economic experts. It's going to be $2,000 per household as a result of these tariffs. And as we get into school shopping season, and then certainly for the holidays, consumers will feel that. And we saw from the University of Michigan Consumer Sentiment Survey released just the other day that consumers are concerned, that they are not as confident in the economy going forward. And there is an upside to this revenue coming in, of course, as you mentioned, but the downside is that tariffs are taxes. And so that money is not coming from foreign countries. It's coming from U.S. companies who will, if they're not already, pass the price of those tariffs on to consumers in the United States. So there's a tendency to talk about these as tariffs on other countries. Of course, they're tariffs we pay as Americans to bring this material in, and companies pay for a certain amount of time until they pass them off to consumers.
Well, I want to build on this headline that we did get today that S&P Global Ratings said that tariff revenues will help soften the blow to the U.S. fiscal health. Our article on the Bloomberg says, quote, while Trump's trade war has roiled markets, unnerved foreign governments, and provoked criticism from leading economists, S&P affirmed its AA plus rating for the U.S. Lester, how does the White House balance this with the argument that Jeannie and Democrats are going to be making ahead of 2026? We're already hearing it when it comes to the push and pull here with the tariff policy.
Well, I don't happen to agree with the administration on its tariff policy, so I'm much more likely to agree with Jeannie. I think in the long run, tariffs are not at all beneficial to the American economy. There can be strategic moments when you need to protect a certain industry over a couple of years. If you're very consistent and very determined and very focused, you can do some limited good. They can also be a tool to help other countries or to kind of compel other countries to lower their tariffs for American goods and services. But as a long-term strategy, it doesn't make a lot of sense. Even if there is some income coming into the U.S. Treasury as a result of this, that's effectively a tax on Americans. And it's generally a very regressive tax. So it falls more harshly on people who can less afford that kind of additional cost. So I think it's not a smart move. It may help the fisc a bit over the short term. But again, in the long run, a tariff policy is kind of doomed to failure. The U.S. has benefits from open trade, free trade, and if we can find those, go back to those multilateral deals, we'll be in a much better position than under this current structure.
Jeannie, we've talked here about tariffs, but I want to get to another element of the president's policy when it comes to companies in particular. And we've seen news broken by Bloomberg over the past week about possible U.S. investments in Intel, a struggling chip maker and yet an iconic one for the United States of America. Is this a good policy move? It certainly is a pivot for the Republican Party away from a very much hands-off approach when it comes to the corporate sector.
Yeah, absolutely, Mike. And it has been fascinating to watch how Donald Trump has dominated and changed the Republican Party in so many ways. I mean, we were just talking, of course, about isolationism a few minutes ago. And in terms of his approach to fiscal policy, as Lester just mentioned, tariffs, of course, and now this. And I think Donald Trump in this regard is representing well what he ran as, which is a populist. And this is something that he can turn to his base and say, this is what we are joining with these companies. This is what we are asking of them. So it is quite a shift for the Republican Party in this regard. And I think it's something that we will hear more about during the campaign. Donald Trump likes to tout his relationships with the business community, and he wants to show that it's going to benefit his base. And so I think that's what he's setting up for 2026, and of course for the Republican Party going forward.
We do want to bring you some breaking news here. The White House press secretary, Caroline Leavitt, is briefing reporters in the White House briefing room as we speak. If you're watching us on Bloomberg Television, and for our radio listeners, you see Caroline Leavitt there at the podium taking questions, and some headlines crossing the terminal in just the last few moments. Leavitt says that the president has ruled out boots on the ground in Ukraine, as our allies are talking about those security guarantees in any such potential peace deal. She also said that accommodations for a Putin-Zelensky meeting is underway. That is that bilateral meeting that we heard President Trump talk about in his post on Truth Social yesterday, but we have yet to get confirmation from the Kremlin that that meeting is going to take place. Lester, to get your thoughts on the strategy here as we bring the conversation back to foreign policy and the meeting that we saw yesterday here in Washington, what sort of strategy are we seeing from the White House as they try to show some forward progress, some forward momentum here, getting all of these leaders together at the White House?
Well, no surprise on the no U.S. troops on the ground. I think we all kind of knew that going into this whole scenario, that just wasn't very realistic. But if it's true that we're pushing towards a Putin-Zelensky meeting, that is a modest victory for President Trump. They have, of course, those two have not talked. They're at war with each other. And if he can get them in the same room and at least begin some sort of discussion about a way forward here, that is exactly what President Trump has been outlining. It is effectively what he ran on last year. American people do not want to commit their own blood and treasure to this conflict any longer through our democratic process. We have learned that. So this is kind of the logical place to be. If he can use his very considerable diplomatic heft to promote these meetings, then good for President Trump. Of course, it remains incredibly difficult to get a deal here. Jeannie was right earlier in the show. This is the thorniest issue there is in the world today, except perhaps for Gaza. So President Trump's taking on a big challenge, but this could be a significant step forward for him.
All right, our political panel today, Jeannie Sheehan Zaino, Senior Democracy Fellow with the Center for the Study of the Presidency and Congress, and Lester Munson, Principal of the International Practice at BGR Group and a Republican strategist. We thank you both for being here on a busy news day. We're going to be following all of these developments. We'll bring you more headlines out of Caroline Leavitt's press conference as they come through. And we have more conversations up ahead. You're not going to want to miss this one. We have Ann Neuberger, the former Deputy National Security Advisor for Cyber and Emerging Technology in the Biden administration. We're going to talk about that Bloomberg News reporting about a potential U.S. stake in Intel, the race for dominance in the AI space with China. Stick with us. This is Balance of Power on Bloomberg TV and radio. I'm Tyler Kendall alongside Michael Shepard.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are off session lows. The Dow now higher. Tech stocks, so they are swooning as bonds rise with the Fed in focus. Friday, it's on to Jackson Hole and Fed Chair Jay Powell. S&P right now, though, does remain lower by 34 points, 64.14. Slight bounce off the low. That is a drop of 0.5%. Dow swinging between gains and losses. A little change right now, up 6 points. We've got NASDAQ down 277, again off session lows, down by 1.3%. The 10-year 4.30% with the 2-year 3.74%. Gold is down $15 the ounce. Spot gold down 0.5%, while West Texas Intermediate crude is down 1.6%, $62.39 a barrel on WTI. Bitcoin now down by 2.5% at $113,550 on Bitcoin. Nexstar Media Group has agreed to buy TV station operator Tegna for $3.5 billion in cash. It stands to dramatically expand its reach to 80% of American households. It also will be a test for the Trump administration's appetite for consolidation. Nexstar down 0.5%. Tegna up by 4.1%. Recapping stocks lower, S&P down 33, drop there of 0.5%. Balance of power continues right now. Back we go to Washington. Once again, your hosts, Tyler Kendall and Michael Shepard.
Charlie Pellet in New York at World Headquarters for us. Thank you so much. The markets and Washington watching this big story today when it comes to Intel. Commerce Secretary Howard Lutnick confirming a Bloomberg News scoop that discussions are underway between the U.S. and Intel for the government to take a stake in the chip maker, casting the plan as a bid to convert CHIPS and Science Act grants into equity. This would be a big step. This could bolster the company's finances at a time when we've seen Intel has been slashing spending and cutting jobs. And lucky for us, my co-host today is Michael Shepard, who happens to be our expert when it comes to the industry. He is our senior editor for tech and strategic industry. So Mike, what do we have to know about this potential deal, particularly how it's structured here? How is this unique?
Well, the structure, it remains a bit fluid, but our understanding is that they intend to take some of the money that was going to be allocated over time to Intel as part of the CHIPS Act and do it much more quickly and give the government in return an equity stake in the company. And that would amount to about 10% of Intel, and it would make the U.S. the largest shareholder in this iconic chip maker, the one that really put the semiconductor industry on the map and, you know, coined in a way the words Silicon Valley. If you think about it, Tyler, it really is an iconic venture, and it's one that the U.S. and certainly the Biden administration also made its own efforts to try to shore up domestic chip making. But some of the questions Howard Lutnick did answer were, what governance role would the U.S. have? Would it take a board seat? Would it get a golden share? At least for now, it doesn't look like that is going to be the case. But that could all change. The negotiations are still underway. It's still kind of a fluid situation. So we will have to see what emerges. And of course, Intel is up today because they also got good news of an investment from SoftBank, a $2 billion equity stake from them to help on the artificial intelligence front. So there's a lot of movement in this whole chip space right now.
Well, a lot of movement, right? Because this does seem like perhaps a reversal from President Trump, right? Because just a couple weeks ago, he was calling for the ouster of the head of Intel right after we saw this inquiry or this request for documents from a leading U.S. senator over some ties to China.
It really was an extraordinary turnabout because you saw within a matter of days the president pivot from calling essentially for Lip-Bu Tan, the Intel CEO, to resign, to them welcoming him to the White House and then essentially calling him a great leader and a great CEO, embracing whatever vision he may have presented to the president about turning the company around. And yet the turnaround that Lip-Bu Tan is pushing may not comport entirely with the U.S. effort to try to get more investment in the chip industry. It's an expensive proposition, and it also requires a lot of customers for Intel. So this is a major challenge for the company and for the government, and we'll have to see what tension there is between the two. And we're pleased today to be joined by Ann Neuberger. She is the Payne Distinguished Lecturer at Stanford University and a former Deputy National Security Advisor in the Biden administration for cyber and emerging technology. Ann, thank you so much for joining us. And we do want to stay on our main story of the moment in this area of tech with Intel. The question I have for you is, what are the risks of the U.S. actually taking a stake in such a critical company and essentially becoming an owner and owning whatever problems it may have?
Good to be with you, Mike. Thank you so much. So the core risk is that it doesn't achieve the overall goal. What's the overall goal? I think we know that the global semiconductor supply chain is both fragile and concentrated. While over just about 50% of chips are designed by American companies, only 12% of chips are manufactured in the United States, and 92% of the most advanced chips are manufactured in Taiwan, which gives both a unique dependence on the economic side, and from a national security perspective, it's deeply concerning with regard to potentially a crisis around Taiwan and the dependence on manufacturing in Taiwan. So the goal of a U.S. investment would be to essentially help in this strategic sector, help the company be successful, because having domestic U.S. manufacturing is so critical because of the range of uses of semiconductors, from defense and military to critical infrastructure, all the way through to connected toys our children play with.
And at the same time that we've seen the Trump administration discuss whether to buy a portion, in essence, of Intel, we've also seen them open the door, essentially, to NVIDIA to resume sales of some of its AI chips to China, and perhaps even sell a downgraded version of its more advanced Blackwell AI chip to Chinese customers. Is this a good idea? The Trump administration certainly thinks so in terms of disseminating the U.S. tech stack, but what are the risks embedded in that strategy?
As you know, both are core to the larger strategic tech competition the U.S. has with China, right? The goal of the first, an equity stake, would be to say the potential is to take the model that worked with the 2008 bailout of the auto industry, an equity stake tied to outcomes, restricted to a time period, again tied to those outcomes, and replacing the Biden administration approach, which was grants and loans, which the CEO of Intel said was taking too long and potentially has the risks of reducing the competitiveness of the company. So that's what's driving in terms of the broader U.S.-China tech competition and ensuring there's a sovereign capability for chips. On the high end, NVIDIA chips and AI is a strategic arena, both because of the application of AI for military and intelligence capabilities, as well as the broader economic competitiveness that we believe AI over time will drive across industries. So as a result, currently, the highest end U.S. chips manufactured for AI are manufactured in the U.S., and balancing providing them to China, or whether broader uptake of the U.S. AI stack would drive global development on U.S. chips, is the trade-off the Trump administration has been thinking about and making. A number of people criticize the decision to provide highest-end chips to China because of a concern it'll advance Chinese military capabilities. Certainly, the CEO of NVIDIA makes the case that it'll deepen global reliance on the U.S. tech stack for this critical new industries being built on AI.
We do want to bring in some breaking news headlines from the White House press secretary, who has now concluded her briefing at the White House. But as we're having this conversation, she was also having this conversation with reporters commenting on this story on Intel, saying that the Commerce Secretary, Howard Lutnick, is currently ironing out the details of that deal. She said that it is a creative idea, in her words, as we try to glean some more details about what its structure is actually going to look like. And she adds that President Trump's interest in this really does have to do with reshoring manufacturing. To build on this conversation, and can you just give us a little bit more context here about the urgency that the U.S. is facing when it comes to competitiveness in this space, and how the White House is dealing with those different factors here to try to strike a balance between making sure that our producers or companies have enough time to move their supply chains, but also keeping up with this idea that we are in this race with China?
Absolutely. So the core issue was around manufacturing of advanced edge semiconductors, and that's where there is an urgency in changing Intel's course. Intel's facility foundry plant in Ohio has been delayed until 2030. So accelerating the time frame for foundry capabilities so there is a backup in the United States is key. With that said, chips are components used across industries. Companies have supply chains, so having more reliance and understanding of when chips will be available in the U.S., at what quantities, frankly, at what sizes, larger end, which are used in consumer products, all the way through to the most refined, smaller semiconductors, which are used in high-end products. So really having a knowledge of helping Intel meet its timelines and tying potential equity stake to those timelines also would give greater assurance to the number of sectors relying on chips, because so much of manufacturing is still just in time and needs to rely on knowing when chips will come where.
And I wanted to pivot a little bit to the other area of your expertise, and of course that is cybersecurity. And I wanted to ask you about how much artificial intelligence is changing the game when it comes to both defensive and offensive cybersecurity operations.
It's a game changer across both. First, it's always easier to be on attack than defense, right? An attacker has to find one way in. A defender has to be monitoring every virtual door and window. What we're seeing now on the attack side is more attackers leveraging it for spear phishing, very focused emails that get people to click on them that are often the first point of entry and compromise, making them more believable. We're seeing that on offense. I think we also can anticipate that we'll see more advanced attacks, multi-stage attacks that use AI to adjust as a defender tries to defend. And I'm concerned that one of the first areas we'll see that is in the burgeoning ransomware industry, where criminals, often in safe haven countries like Russia, try to attack companies that have insufficient defenses in order to force them to pay a ransom to get back their data or get back the operations of their network. On the defense side, AI can be a game changer in terms of actually helping identify misconfigurations in a network, making sense of firewall logs that are often hard to parse, and automating a lot of the manual work around cybersecurity. We're just seeing companies build in AI for defense. Google announced, they had used an AI capability to find a major vulnerability in one of their products and patch it. DARPA at the recent Hackers Conference announced the second phase as well of using AI to not only find but patch vulnerabilities. So the race is on. It'll advantage both. And I think the race is really on to see which one advances further.
Well, to put a finer point on this, Anne, you had a really fascinating piece in Foreign Affairs earlier this month, and I want to pull a quote from it. It's titled that China is winning the cyber war. And you write that China's cyber dominance extends well beyond telecommunications espionage, going on to say these intrusions show little evidence of traditional intelligence gathering. In your view, in your expertise, what is the biggest, most urgent action that the U.S. government could take right now to fend off these threats when it comes to competition with China?
Fundamentally, using AI for defense. So we're in a battle between democracies like the U.S. and authoritarian countries like China. In democracies, traditionally, governments haven't monitored the critical power, water, and pipelines that underpin American lives because they're privately owned. And traditionally, governments haven't monitored privately owned networks. In countries like China, not only are pipelines, water, and power companies often state-owned enterprises, but China has a great firewall where they monitor for both surveillance, obviously, of their citizens, but also for cyber attacks, and they can block those attacks in line. So the asymmetry between the models means that in the U.S., we are at a disadvantage. We need to use AI to find and fix the most critical vulnerabilities in our critical infrastructure that Americans rely on. AI gives us the way to pull that data together, simulate attacks, and make the investments most purposeful for the attacks that could actually disable large amounts of critical infrastructure. So that could work within our model in a partnership between government agencies like the Department of Energy, building digital replicas of our energy grid to model attacks, and then work with companies to fix the most critical vulnerabilities.
All All right. Ann Neuberger, Payne Distinguished Lecturer at Stanford University and former Deputy National Security Advisor for Cyber and Emerging Technology in the Biden administration. We thank you so much for your insight and that fascinating conversation about the competition with China when it comes to artificial intelligence. Thank you for joining us today on the early edition of Balance of Power. We'll have more for you here out of Washington at 5 p.m. Eastern. I'm Tyler Kendall here alongside Bloomberg's Michael Shepard. Bloomberg Business Week Daily is up next. Stick with us. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone, live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. It is Bloomberg Business Week Daily on this Tuesday, August 19th, 2025. I'm Tim Stenivek, along with Bloomberg News cross-asset reporter Emily Graffeo. who's in for Carol Massar once again as Carol is on her, I think I can say, annual retreat. I'm not going to give up too much personal information, but viewers of this program know that she likes to take a little time in August and September to hit the water. Emily, a little bit of a different picture in today's markets than yesterday's, at least when it comes to the equity trade, with the S&P 500 and the NASDAQ taking a little bit of a hit.
That's right. And we also have bond yields moving lower. Additionally, NVIDIA, Microsoft, Broadcom, Meta, and Amazon all dragging the S&P 500 lower, but we're still within hovering distance of all-time highs on the S&P 500, Tim.
We're going to have more on the trade in just a second. Charlie Pellet is standing by. As Emily mentioned, bond yields lower ahead of Jay Powell's speech in Jackson Hole a little later this week. Michael McKee is live in Jackson, Wyoming. He's going to be joining us in just a minute.
Also, stand clear of the closing doors. It feels weird to be the one saying that, but we're going to be joined by the new CFO of the Metropolitan Transit Authority. And we go nuclear with the CEO of Nano Nuclear Energy.
All that and more coming up over the next hour right here on Bloomberg Business Week Daily. Now to the man who actually says stand clear of the closing doors, none other than Charlie Pellet.
Thank you very much. Here's what's going on. Let's stand clear of the sell-off right now because we have got the Dow, the S&P, NASDAQ all very much in the red. We are off session lows, but still a loss for the Dow, the S&P, and NASDAQ. Right now, the S&P is down 36, drop there of 0.6%. The Dow lower by 19. Little change there, down under 0.1%, while NASDAQ, the composite index, down 279, a drop there of 1.3%. The 10-year currently yielding 4.29%, with the 2-year 3.74%. Spot gold is down $14 the ounce, down 0.4%. And West Texas Intermediate crude oil down 1.8%, $62.28 a barrel. Bitcoin is now down 2.6%, $113,450 on Bitcoin. A slide in the world's largest tech companies weighing on stocks. Big box retailers getting a boost from Home Depot's numbers. Home Depot, by the way, up by 2.9%. Meta platform shares lower now by 1.9%. Meta is splitting its newly formed AI group into 4 distinct teams and reassigning many of the company's existing AI employees, an attempt to better capitalize on billions of dollars worth of recently acquired talent. And Commerce Secretary Howard Lutnick is confirming discussions between the U.S. and Intel for the government to take a stake in the chipmaker. Intel up by 8.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. We start with the latest on the effort to bring an end to Russia's invasion of Ukraine. It's certainly been a whirlwind stretch as President Donald Trump pushes to end the war, now in its 4th year to an end. He held a summit in Alaska with President Putin last week. Talks, of course, at the White House with Volodymyr Zelensky and European allies yesterday. Jen Delowy is Bloomberg News senior reporter. She joins us from the White House. Jen, I want to start with the latest in this idea of a bilateral summit ahead of a trilateral summit. We're learning additional details on where that could be held. Are we getting any details on a timeline here?
Yeah, also for the bilateral summit, which, let me just take you back for a moment. The president had originally discussed having a trilateral summit be the outcome of yesterday's meeting with the European leaders. In the end, he said that the actual plan now is to proceed first with a bilateral summit between Zelensky and Putin. The timing on that is a little bit uncertain. It's not quite clear when that will happen. Germany's chancellor indicated that it could happen within 2 weeks, and the White House press secretary just indicated to reporters that Trump is scoffed at the idea of waiting 4 weeks for a meeting. So we've got at least some indication that folks want to get this done in the next couple of weeks. There is some reporting out from Politico today that Hungary and Budapest specifically has been scouted as a possible location for a trilateral summit, one that Trump would later join. But no details have been confirmed from the White House at this point. And right now, there's still just an effort to get these talks to occur. One important note is that a Russian aide to Putin last night said that Trump and Putin had only discussed the very idea of a bilateral discussion. The White House press secretary told reporters today that, in fact, Putin had promised that direct meeting.
Yeah, Jennifer, maybe expand on that point. Give us some of the context here about just the reality of the relationship between Zelensky and Putin, and whether a bilateral meeting is actually realistic, that we would see that, just given their relationship.
You know, it would, of course, be remarkable, but then again, yesterday's meeting at the White House of all these European leaders who flew to D.C. On barely a moment's notice was also remarkable. You know, what's notable here is that Trump has repeatedly said some of these details are so sensitive, they really need to be hammered out by Ukraine and Russia, that they really can't be dealt with interlopers. And Zelensky, you know, certainly seemed supportive of this yesterday. You know, the talks are ongoing between U.S. and other and Russia and Ukrainian officials to get these going, according to the White House press secretary today. So at this point, it does look like this is the next step. The bigger question probably hanging over this, or one of the bigger questions, is, you know, whether the fighting in Ukraine will continue and whether the European leaders' efforts yesterday to encourage Trump to once again embrace a truce that he says is not necessary to broker peace, to get that back on the table.
Hey, Jenna, I wanted to shift gears a little bit and talk about security guarantees here and what exactly security guarantees would look like in the context of Russia's invasion of Ukraine, especially in an environment where obviously the U.S. over the last 3.5 years has not sent troops to the area. Would it be a UN peacekeeping force? Would it be a NATO peacekeeping force? What would it look like?
Right. I mean, security guarantees were really the biggest topic of discussion. They loomed large in yesterday's talks. You know, Ukraine and European allies are wanting to ensure that any peace deal now doesn't lead to a Russian incursion in the future. And Trump has made clear that, you know, these security guarantees are a possibility in lieu of Ukraine joining NATO. You know, he reiterated this morning that Ukraine joining NATO is not tenable from Russia's perspective, but the U.S. has discussed these NATO-like security guarantees. So what could that look like? Well, you know, Trump is saying it's not going to be American boots on the ground, and he's been very clear about that. It's been reiterated here at the White House today. But the president has left open the possibility of American pilots and aircraft being involved in providing some air support in the region. The president has said, you know, if there are military forces on the ground, that's European countries that would supply those ground troops. And of course, you know, we also have President Trump very proud of having brokered kind of a deal for America to sell weapons that would be financed by or purchased by European allies to be used in this conflict. That's the kind of arrangement that could also continue.
Is there appetite for European leaders to send their citizens to that area of the continent?
You know, well, Trump certainly made clear yesterday that he sees any kind of on-the-ground presence coming from Europe. And you know, he's drawn this line in the sand about American support. What we heard from European leaders was this united show of force, you know, in wanting to end this conflict. And as Emmanuel Macron emphasized, you know, we want peace now. We are committed.
What do we watch for next? What are you going to be monitoring for next as we kind of await this potential bilateral meeting?
You know, the biggest question, one of the biggest questions right now is does this bilateral happen? When does it happen? How quickly does it come together? You know, I mentioned the commentary from Russia last night that suggested this might not be as baked a plan as certainly Trump's Truth Social post last night had indicated. That would, you know, that has created some uncertainty over the next steps in the process here. So really seeing any indication that bilateral summit is going forward and going forward quickly, I think is the biggest thing we're watching for. We are looking, of course, for the evolution of any possible financial deals tied to these discussions and tied to security guarantees. And of course, you know, any discussion around the form of these security guarantees, very much still after yesterday, a topic of lively ongoing discussion between Russia, between the U.S., between Ukraine and European allies.
There was some reporting yesterday that indicated the president left the meeting to call Vladimir Putin of Russia. Do we have any reporting now about the content of that call, the duration, anything like that?
we know that this, I mean, you know, again, this extraordinary meeting paused essentially in the East Room so that, and had continued, of course, in the Oval Office, paused so Trump could do this direct call to Putin and essentially provide a readout of what was being discussed. The White House indicates that that was something European leaders supported. We know that, you know, Trump had promised he was going to do this call with Putin afterward and believes that this kind of interaction is facilitating a deal. But again, there's some variance on exactly what was agreed to with regard to the next steps in terms of that bilateral meeting.
Jen Deloe, Bloomberg News senior reporter over there at the White House. Jen, thanks so much. Check out her reporting, the entire team's reporting on the Bloomberg terminal and at Bloomberg.com. Well, from Washington, D.C. to Jackson, Wyoming, it's where we find Michael McKee, Bloomberg News international economics and policy correspondent for TV and radio. Earlier today, he spoke with U.S. Federal Reserve Governor Michelle Bowman. She's one of the folks reportedly under consideration to be the next Fed chair. And yes, he asked her if she's interested in the job.
Well, right now I'm committed to doing the job that I have, and we've really hit the ground running with our request for information on check fraud and other payments fraud with the SLR proposal that we just put out, the LFI rating system. We're taking a really hard look at our supervisory components and across our reserve banks as well as at the board to ensure that we're focused on material financial risk. So I have a big agenda. We're moving through it quickly. Obviously, we need to get the capital proposals completed in the near future. But, you know, I'm really focused on the job that I'm doing, and I'm grateful to the president for appointing me and the Senate for confirming me to this role.
Michelle Bowman, Federal Reserve Governor, earlier today from Jackson, Wyoming, alongside Michael McKee, Bloomberg News international economics and policy correspondent, who joins us right now. Mike, Mickey Bowman was pretty quick to answer your question. I'm focused on the job at hand, essentially saying that twice. Where is she sort of in the race? I don't want to call it a race, but, you know, in the group of names who are being considered to be the next Fed chair?
Well, she wouldn't be considered among the top candidates or favorites, not because of her skills, but because the president seems to have already fixated on a small group of people. It's Scott Bessent, the Treasury Secretary, who said today he's going to start interviewing people around September 1st. For the job, and he's the one who's talking about this expanded list that has shown up in a lot of reporting. Now, you heard from Michelle Bowman what you would expect to hear when someone is put on a list of potential candidates for a job. They don't want to jinx it or talk about it in any way publicly. So it's hard to know whether she's a serious candidate in her mind or not, but I suspect that we're still looking at one of the Kevins or a Chris Waller kind of person. Although it is Donald Trump, so anything can happen.
All right. Well, in the meantime, she does have her current role, and she told you that she has a big agenda, which includes overhauling big bank capital rules. Tell us about the discussion you guys had there.
Well, of course, this was all part of the Basel III international agreement on banking, and the United States is one of the few countries that hasn't yet ratified it. The Biden administration put out a 1,000-page proposal to make the rules stricter in the U.S. than in the rest of the world. The Trump administration has now junked that and are rewriting the rules to make them a little lighter on the banks. The question is, when do they get them out? The hope is relatively soon, because they have to go through a comment period and then go back to the Fed for reconsideration before they can take effect.
Okay, so let's broaden the conversation a little bit, Mike. By the way, you look really relaxed out there in Jackson.
No cowboy hat, though.
You think I'm coming back?
Yeah, you're not coming back for a while. I know that. But that's also because you have a lot to do out there. And partly that is hearing from Fed Chair Jay Powell later this week. The conversation that we've had up to now is really focused on the potential for a September rate cut and messaging around that. What's the reporting you can bring us around that narrative?
Well, the feeling is that Powell will sort of dance around the idea of a rate cut and say that the Fed is looking at the possibility along with the possibility of doing nothing, and it's going to depend on the data, what we get in terms of the employment report and the CPI report that'll both be out before the next Fed meeting. The employment report we had last time was disappointing and suggested maybe the economy is weakening a little bit, so you'd cut rates. But then in the last week, we got some CPI and PPI numbers that suggested we're getting a little of inflation out of the tariffs, and that might pick up as well, which would mean you would want to leave rates unchanged. So they're going to wait till the last minute, see how much data they get. And I imagine that Powell is going to disappoint investors who are looking for him to ratify the idea of a rate cut, which he did last year. He said at this meeting that it was time to cut rates, and they did in September, but maybe not this time.
What else do you expect for his speech? I remember a couple of years ago, a lot of traders were kind of parsing through the length of his speech. He had a very short speech, I think in 2022. Are there any kind of, reading the tea leaves that traders are going to be looking for Powell's next speech?
I don't think so, except for the idea of the rate cut, but it is likely he is going to at least outline what the Fed's new monetary policy framework is, how they look at the economy and determine what they're going to do going forward. Remember, the last one he announced at Jackson Hole in 2020, just before the pandemic was at its worst, and he said that unemployment at that point was continuing to fall, inflation was very low, and they would essentially let the economy run hot for a while to try to get a maximum benefit out of the falling unemployment rate. That didn't work out very well with the inflation that came after COVID. So now every 5 years they relook at what their framework is, and now they're expected to drop some of that language and maybe go back to what we had before, which was essentially we'll do what we think is right at the time.
Mike, before we let you go, just give us an idea of what the vibes are like there. Partly, you're there for a couple different reasons. Of course, the Fed chair and his speech on Friday, and all the Federal Reserve members who are there, but also this blockchain symposium that is happening. Salt and Kraken are hosting this, and you've been talking to people, you've been reporting on the ground there. What's the vibe like? What are the attitudes like? Is it different from previous years?
Well, it's my first time here, and this is only the second Wyoming blockchain conference, so I don't know how different it is, but it does have a happy vibe to it, as people feel the Trump administration is very supportive of crypto, and that's a change from the way the Washington had looked at the asset before. And so they're kind of interested in what the possibilities are going forward, which is one reason they had Mickey Bowman come in and speak to them. And tomorrow they'll have Chris Waller, another Fed governor, talking to them about the future of crypto. The question kind of is, does the government get into the business with a government sort of digital dollar like the Chinese have done, or do they leave it to private sector? The president has suggested the private sector would be best, and he has suggested a light touch of regulation. So people here are pretty upbeat.
Michael McKee, Bloomberg News international economics and policy correspondent, live from Jackson, Wyoming. I know he's working a lot, but hopefully also getting some time to maybe do a little hiking or some fly fishing. Hey, coming up next on Bloomberg Business Week Daily, we are going to be joined by the CFO of the MTA. She's the finance boss of the subways, the buses, and commuter rails that power New York City and the region. That's next on Bloomberg Business Week Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at just about the lows of the day right now. For the Dow, the S&P, and NASDAQ stocks selling off. A slide in the world's largest tech companies weighing on markets. Big box retailers, though, getting a boost from Home Depot's numbers this morning. Here's where we stand. The S&P 500 index right now down 43 at 6406. That is a drop of 0.7%. The Dow is down 79, down 0.2%. The NASDAQ Composite Index, low of the day, down 303 right now, down 1.4%. Our Mag 7 Index down 1.6%. The 10-year yield 4.29%, with the 2-year currently yielding 3.74%. Spot gold right now down 0.4%, 33.19 the ounce. West Texas Intermediate crude down 1.8%, 62.27 for a barrel of WTI. And Bitcoin now lower by 2.7%, 113,364 on Bitcoin. Nexstar Media Group has agreed to buy the TV station operator Tegna for $3.5 billion in a cash deal that stands to dramatically expand Nexstar's reach to 80% of American households and tests the Trump administration's appetite for consolidation. Nexstar is down 1.4%. Tegna right now higher by 4.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. This one's special for you because we're talking about New York City subway. The MTA runs New York City subways, buses, and commuter trains that 6 million people rely on each weekday. And on Monday, board members approved close to a $2 billion contract to expand the 2nd Avenue subway line into East Harlem. Jay Patel is the CFO of the MTA. She's charged with quite the task, which I think is fair to say many would find unenviable, charting a sustainable path through one of the agency's most financially trying periods in its 6-decade history. She joins us here in the Bloomberg Business Week studio. Jay, welcome. How are you?
I'm good. How are you, Tim? Thank you for having me.
Yeah, thanks so much for joining us. I want to start with the numbers and just ridership here. Weekday subway ridership is still 25% below pre-COVID levels. In your modeling, does that ever come back to where it was?
We have a financial plan that's a 5-year period, and originally we were projecting that we would see our subway ridership up to 90%, but a couple of years ago we revised that because we weren't seeing that, but we're hopeful we see an 80% by 2029 ridership recovery for subways. But on the railroads, we're seeing that recovery even higher today. We see 85% ridership recovery on our railroads, which is amazing, something that we thought was going to be slower, our railroad customers, than our subway customers originally coming out of pre-pandemic.
So is there a way to tap into that growth financially, perhaps with higher prices for those commuters rather than here in the city for subway and bus riders?
So, what we have is very small, predictable fare increases that help balance the financial plan. And so we don't want to burden one rider over another. It's really about distance-based and commuters. And so we keep that equitable. You know that we do a 2% fare increase every other year, and that keeps our financial plan in balance.
How do you plan to get that number? I think you said 80% ridership. How do you bring people back into the subways?
We bring riders back by providing reliable on-time performance, right? Our service matters to customers, and delivering the service that we promise and schedule is something that we strive for, but also safety. Our customers need to feel safe, and our customers feel that, right? We've had the lowest safety numbers or crime numbers in July, and so our customers are telling us that by taking the subway, but also our customer surveys, right, tell us that customers are satisfied with the service that we're providing.
The MTA faces a combined $1.1 billion deficit over 3 years starting in 2027. It already owes close to $50 billion. It needs to spend $68 billion more for vital improvements. There's some federal aid that's up in the air. The Trump administration is trying to roll back congestion pricing. What's the backup plan if the aid evaporates and the president is successful in rolling back congestion pricing?
Tim, I would be remiss if I didn't mention that back in 2023, we were the first transit agency to solve our fiscal cliff. Thanks to Governor Hochul, Chair Lieber, and the legislature, we were able to come out of a deficit unlike any other transit agency today. You've heard SEPTA is facing deep cuts, Chicago, but we were the first to say we need state, federal, and local aid, and we got our state federal funding for us. We also, as the MTA, contributing to our solving our deficit, right? The MTA contributes $500 million to its operating efficiencies. And those deficits that we have in 27 and 28 and 29 are very small compared to our operating budget. And we are committed to doing our part in saving money to help ensure that we can balance our budget in the out years.
We were talking a little bit about the base fares of subways increasing regularly. I'm wondering if is there a set area within the MTA that revenue goes toward? Because the base fare for a subway in New York City, it's expected to increase to $3 in January.
Correct. So our fares help our operating budget, right? So 70% of MTA's costs are labor and fringe, and so that pays for 70,000 employees, and then the small fraction is for the non-labor contracts. So every fare contributes to operating cost on our side.
Let's talk about fares and fare evasion. Usually when we talk fare evasion, I think of people jumping over subway turnstiles, and I know there have been some mitigation efforts in place, but I took the bus to LaGuardia on Thursday. It was a great experience, but when I got on the SBS in Queens, it was like an articulated bus, so, it was a long one. I got on in the back, and out of like more than half a dozen people, I think I was the only one who paid. And I was thinking to myself, I didn't know it was optional to pay to get on the bus. What are the numbers there?
So it's not optional, right, to pay the fare. We are encouraging every customer to pay their fair share to
But there's no enforcement on the bus.
So there's a couple of things that we're doing for fare evasion, and our chair has been tackling this first when he became chair. So on the subways, you've heard of us talking about we're doing fins, sleeves, gate guards, enforcing the exit gate, which is the fare evasion highway. And so we've made great strides on the subways. We've reduced fare evasion in over a year by 30%. We've dropped that rate from a high of 14% to 9.8%. So we know those efforts are working. On the buses, it's a little bit more difficult, but we're also working there. We've decreased fare evasion on our buses as well in the last year from 50% to 44% because of all the tactics the president of New York City Transit is employing. We have Eagle teams that are on different bus routes to make sure that they are enforcing the pay your fare, right? Our bus operators do their due diligence, but really our Eagle teams are enforcement out there riding different routes and making sure customers pay their fare, or they're getting a summons where they're getting off the bus. And that's how we're working towards that.
How does that work? Because I heard of a friend who was on a bus and someone had come around and scanned their phone to see if they had paid the fare. Is that how it works? Explain to us.
So right now, what we are doing is if you're boarding the bus, you have to pay because there's two different ways you can pay, right? Today is the Metro card and the Omni. And when we go to full Omni next year, there's going to be proof of payment. And so what you can do is European style proof of payment for customers is you can tap their phones or credit cards, the method of payment to see if they paid their fare. And if they didn't pay their fare, that's something that we'll work with on a summons, or, you need to pay your fare for our customer. And so that's something that's coming. We're really excited about that for Omni and proof of payment. But right now there's two different methods. And so we're working on different ways to combat fare evasion.
I want to talk a little bit about proposals from mayoral candidates. Zoran Mamdani, for example, his proposal to make all New York City buses free. What do you think of that? And does it create a sort of a two-tiered mass transit system where people who ride buses don't pay for it, but then people who ride the subway do, and then kind of offset people not necessarily taking the right mode of transit for their destination?
So we've heard the mayoral candidates' proposal for fare-free buses. What I'd like to emphasize again is fare box revenue is important to the operations of the MTA. It's 26% of our revenue. And buses is about $1 billion in the out years of revenue for the MTA bus. for the MTA, excuse me, and that's important to us. And so we want to make sure revenues equal service, and that is something that's a hypothetical right now, but we rely on fare box revenue.
So you said $1 billion in revenue is what it brings in. Mamdani estimates that's about $750 million annually to make buses free. Is that an accurate assessment on his part?
I think there's pieces that he's looking at just the New York City Transit bus fare. We have MTA bus that we also run that the city contributes to, and that is also fare box revenue for buses.
So what would taking away that revenue from the MTA do to the authority's finances? Or would it just be, I mean, look, again, it's a proposal. You said it's something that, is not a plan yet.
Yes.
But to be fair, he is by far the favored candidate, and there are a lot of questions about what power he has to actually follow through with a campaign promise such as this. But this is certainly a central part of his campaign, so you got to be looking at it closely.
We are looking at it, but one thing that I would like to emphasize, right now in New York City, fares are affordable. We make transit and buses the most affordable at $2.90, and it's affordable with fair fares, reduced fare for our customers. But it is something that we will look into as the mayoral candidate has proposed.
What about mitigating climate issues that affect particularly the subway stations? You go online, you see videos of flooding in stations.
Or maybe you're trying to get home and on a rainy day.
Right,
in
and
the
there's
summer,
water in the subway station. Do you guys have, at least as part of the upcoming capital plan, a plan in place to update the infrastructure?
A couple of points on that, right? A couple of the issues that arise in the subway systems are not the MTA's fault. New York City, right, contributes to the flooding issues that we face in the subways, whether it's through DEP, manholes, the sewage. So that is one aspect of the flooding that you see on the New York City transit. But our historic capital plan, that $68.4 billion, does have climate resiliency of hardening the system in certain stations proposed in there for it.
Let's talk a little bit about congestion pricing. Not as hot of a topic as it was a few months ago. It seems like it's died down a little bit. In your view, is it working?
Congestion pricing is working. It is reducing traffic by 11%. What does that mean? 70,000 cars are off the road every single day. What else is it doing? It's moving our buses faster. It's moving people faster. We've seen a change in ridership, but also we've seen safety increases. There's a 14% decline in pedestrian crashes. And on top of it all, it is bringing in the revenue that we had projected originally.
It's being watched very closely, not just by proponents and opponents of it, but also by other cities that might want to put this into practice. Have you or has the MTA heard from other cities about congestion pricing, about the model, and about questions about implementing it in their own cities?
Yeah, the MTA has heard from other cities and transit properties and engaged with them to have conversations about the process that New York implemented for the successful congestion pricing program that we're having. So they're looking at us as a model.
We have to ask about the Second Avenue subway expansion as well. Just walk us through some of the plans for and the timeline here, because this has been something that's been in the works, something that any New Yorker who's lived in New York for the last
how many years? 40
decades, 50 years.
50. I think we talked about that at our special board meeting on Monday. The contract that our board just approved is almost a $1.9 billion contract to start boring, right? What does that mean? It's starting the tunneling for the 3 stations that are vital to Second Avenue Subway Phase 2. And we are committed to expanding Second Avenue Phase 2 here at the MTA. And we think it's going to be a great service to our customers. It's going to serve about 100,000 customers, in addition to the 200,000 customers that Second Avenue Subway Phase 1 serves today.
Do you have a timeline or an expected timeline?
I think the 2032 was the service date that we have set publicly.
It's a very, like I said at the beginning, it's an unenviable task that you have ahead of you. Some people would argue. I would imagine that you spend quite a bit of time studying other transit systems around the world, what's worked and what hasn't worked. If you could wave a magic wand here in New York City to overcome some of the barriers that the MTA has experienced, whether they're financial barriers, whether they're CapEx barriers, what would those be? Like, what is the biggest obstacle to making the service even better here?
So I think, Tim, one thing that I would say is MTA is a leader, and being the largest agency in North America, other agencies look to us. I think I said this before, we led with the fiscal cliff. We lead with our capital program as well. We have started to do things differently since Jano Lieber took over for C&D and now Jamie Torres Springer. We do design build, we do faster, cheaper, and better, but we're employing definitely different ways of doing capital programs as well as operating for us to be better.
I want to go back to congestion pricing and some financial questions around that, specifically about selling debt off of revenues. Do you have plans to sell debt off of revenues from congestion pricing?
So, as you know, the congestion revenue is dedicated to the 20 to 24 capital program. It is expected to generate $15 billion for that program. And once we see a stable market and the revenues coming in, we do plan to issue debt. We've talked about it. That's not sometime until 2026 for us. Once we see a comfortable stream of revenue, we've projected $500 million for the next 3 years. And we want to make sure that we see that revenue and the markets are comfortable issuing that debt for us.
You've talked about fare increases on MTA services. What about increases in congestion pricing, and what is the timeline for that?
So as the governor has said to us, right, it's the toll will continue to be $9 for 3 years. Then it'll increase gradually to the next 3 years at $12, and then in the final, the 7th year, it'll be a $15 toll. So we've already have that phased in based on the schedule we approved.
Can you just bring us? I know there's litigation around this with the federal government and with the state, but can you just take us into conversations that you've had with counterparts at the Department of Transportation over the last few months about making sure that the MTA stays on a sustainable financial path?
So I think, you know, what I would say is the federal government contributes $2 billion to the MTA, and that's a revenue source that we rely on to keep the system in a state of good repair. And so we would continue to want that funding. You know, MTA moves 40% of riders across North America, but receives only a fraction of federal dollars from Washington. And so we continue to rely on the federal dollars that we get, and it's important for us.
But what's the backup plan if that evaporates?
Yeah, we're confident, right, that the MTA and the federal government, the federal judge that is assigned, right, we're confident that we would win that lawsuit. You know, Judge Lyman issued a positive finding for the MTA just a few months ago, and congestion pricing is, you know, continuing to operate, and we're generating the funding.
Jen, thanks so much. Oh, go ahead.
Well, I was just going to ask one more question. Just, I mean, I imagine, you know, you get a lot of people who hear these numbers. Congestion pricing is on track to raise $500 million. They say, wow, that sounds like a lot of money. Why are the subways still the way that they are? Delays, crime, uncleanliness. Help us just understand. I know that you said that a lot of those fares go towards paying workers, but a number like this, a number like $500 million, what does it mean in the context for the broader MTA organization? Is that a lot of money?
So I'll give you context. Our operating budget every year is about $20 billion, right? That is to run subways, buses, commuter rails, and the services for 6 million commuters every day. But in order for us to keep that system running, you have to maintain it, right? And so $68.4 billion, a good majority of that funding is to keep it in a state of good repair. That means new rail cars, new buses, new signal upgrades, track maintenance, and everything else that goes with operating a system that's so vast in size. So $500 million is just one stream of revenue that generates, when we leverage it, $15 billion to continue with the, you know, capital side of the world, but the operating side has different funding sources. But we're confident that we, you know, move 6 million customers every single day, and we're happy to do that safely.
Jay Patel, CFO of the Metropolitan Transit Authority, joining us here in the Bloomberg Business Week studio. Let's get an update on how the markets are looking. Some business news also. Charlie Pellet is standing by. Hey there, Charlie.
Thank you very much. We are on track for a lower close. The Dow, the S&P, NASDAQ, all declining right now. A slide in the world's largest tech companies weighing on stocks. The S&P right now down 44, just about the worst level of the day. A drop right now of 0.7%. Dow Industrials down 82, decline there of 0.2%. The NASDAQ Composite Index down 309, a decline of 1.4%. Our Mag 7 Index trading lower by 1.6%. The 10-year 4.29%. The 2-year 3.75%. Gold right now is down 0.4%. Spot gold currently at $33.18 the ounce, while West Texas Intermediate crude oil down 1.6%, $62.43 for a barrel of WTI. Bitcoin at $113,008 right now. Briefly, Viking Therapeutic shares are plunging after its experimental obesity pill disappointed in a mid-stage study. Shares of Viking, they are now down by 41.8%. Recapping stocks lower, S&P down 0.7%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Let's talk nuclear, because shares of Nano Nuclear Energy, it's a $1.2 billion market cap nuclear energy company. It's focused on, in part, developing the next generation of nuclear reactors. Those shares down about 7.5% today, down for a second day in a row. This after the investment bank Ladenburg Thalmann cut its recommendation to sell from buy. It wasn't just any cut. Michael Legg, over on the team there, cut his price target on the stock from $51 to $9, saying Nano's focus on ancillary ventures in fuel, transportation, and consulting are distractions from its core initiatives, like its Kronos reactor. We're joined by James Walker, CEO of Nano Nuclear Energy. He joins us from Vancouver. James, typically I wouldn't start an interview with an executive about an analyst call, but this one's such a big cut from $51 to $9, and it's hit the stock pretty hard. Shares down about 17% in the last 2 days. What's your response to this? Because the criticism, it's pretty pointed.
Well, this one's a funny one, because obviously this price target came out at the same time as a bunch of others that were at 50 and 40 and normal kind of prices. And even Michael Legg 5 weeks ago put out a price target of $51. So, and we've not spoken to him since. So it's an odd one, because we know Michael Legg did interview with us for a job, and he did want to be involved in the previous financing, and maybe it's the fact that he wasn't able to be involved in those two things he might have been upset about. It's very difficult to say.
Okay, well, we don't have a response from Michael at this point, but we'll have to reach out to him to get that response.
That's okay. And also, I'm only speculating, because we've not spoken to Michael since his $51 price target.
Okay, let's move on a little bit from this one. I want to, and look, Emily, as Emily pointed out to me before our interview, the stock is up more than 350% since going public last year. So, zoom out a little bit. Talk a little bit about the technology that you have with the Kronos nuclear reactor, and what makes you so confident this version of next-gen nuclear tech is ready for prime time.
So our reactor is a high-temperature gas reactor that utilizes TRISO fuel, and that's very important for two reasons. It's very well-known tech, very high TRL levels, long history of operation. TRISO fuel obviously been designed to be inherently safe system that avoids things like conventional reactor meltdowns, which might be possible with larger systems. But we've also designed the reactor so it is as large as you can possibly make a reactor, so you can keep it completely modular. And that means you can keep manufacturing these things along a production line, and then you get economies of scale very quickly. I think we're very confident of our commercial strategy here, with being able to target markets continuously and be able to roll these things out. So on that front, obviously we're very happy. The larger market, obviously huge interest from the tech industry, but in the industry in general, quite widely, is that there's a big demand on these systems at the moment, and we're obviously positioning ourselves to be one of the forefront leaders in delivering this next generation of nuclear energy to the market.
Let's talk about the tech industry and the demand that you're seeing there. Do you line up customers already, or is it more just about focusing on developing this Kronos out before you actually start meeting with tech companies?
We're in discussions with many potential customers already. So it's AI centers, it's data centers. their energy demands alone are huge. But for instance, we've got a massive project in Canada that we're working on at the moment with the government. And in even that project, they're looking at sort of several hundred communities in the north that subsist off diesel. So it's not just industry. Governments are looking for solutions to provide power to remote locations that might be off grid. I mean, that's an enormous potential market. So obviously, we're going after that too.
James, a lot of what we're talking about is potential. And when it comes to this technology, we're used to talking to folks who are in the early stages of development of, for example, small modular reactors, SMRs. And one thing that is notable with everybody we talk to with next-gen nuclear is that at this point, the tech isn't there yet. We haven't seen one of these with regulatory approval out in the wild actually working. What would you say to somebody who says, it's another company that has yet to achieve any notable milestones?
So what I would say is that there's basically, I wouldn't say no risk, but very low risk about any of these reactor companies not succeeding, or at least several not succeeding to produce licensed reactors that will be very capable of supplying power. What I would say is that there are larger considerations around the industry. So for instance, the fuel supply chain in the US does need to be built back to a level where it can mass manufacture fuel to enable the mass manufacture of reactor systems. And so this could be one impediment to these things being rolled out en masse, is that you do need to get that in place first. And so you have already seen reactor systems advanced reactor systems that have been licensed by the NRC, and there's a number of them undergoing licensing at the moment, which will mean ourselves and a few others will, at the end of this decade, there'll be licensed systems, but you still might need to wait for that fuel supply chain to be built back. And that means enrichment, conversion, even domestic uranium mining. That's all underway, and the DOE is putting a lot of money into that. So it seems inevitable because it has that massive government backing, but it all needs to happen at once. And so big infrastructure challenges. There's big funding that's going into this now, but timelines obviously push this a little bit farther out.
How would you describe the current tone that regulators have when it comes to nuclear energy? Has it changed at all in the last few years?
So the poor regulator, there's been an enormous amount of pressure put on them, firstly by the Biden administration, then the Trump administration. And that's come from heavy lobbying by industry, heavy pressure from the DOD to have a national capability to be able to mass manufacture the fuel for submarines and aircraft carriers. And that's fallen onto the NRC to look at reforming new regulations so they can enable the mass rollout of new systems and reduce licensing times. So they've obviously tried to incorporate as many recommendations as they can, and they are looking to reform to enable themselves as an organization to deal with this sort of nuclear renaissance. So credit to them. Their principal responsibility is still safety. So I think some of their evaluations won't change substantially, but new Part 52, Subpart F, things like that are going to enable the mass rollout of reactor systems. Those are important. Those will be very different from the past. That will, say, for instance, our reactor allow us to mass manufacture reactors, and they are licensed at factory level. And then we can deploy them to sites across North America, and then they don't need further licensing at that point. That is a very unique reformation that the NRC is making for companies like us.
Hey, James, you're developing nuclear reactor products that include the Kronos, the Zeus, the Odin, and the Loki. Why develop 4 different products and not focus on one?
So we are definitely focusing on one. That is the most important thing, is that almost all our resources are going into the Kronos reactor, highest TRL level, most commercial viability. What I would say about the other reactor designs is that there's no overlap in market. Kronos is targeting big power, like several hundred megawatts, gigawatts of power. Some of the smaller reactors, 1 megawatt systems, they would be looking at much more remote locations, mining projects, oil and gas sites, military bases, things like that, which Kronos might not be suitable for. And then, for instance, we might go even smaller, and we're in talks with, say, the Army and the US Marine Corps about a much more deployable reactor system that could potentially work alongside their forward operating lines. Something like that, you would then have 3 reactors being developed that have no overlap. But overwhelmingly, Kronos is where all of our resources are going to, and most of our personnel are being invested into.
Our understanding is that the U.S. Nuclear Regulatory Commission grants licenses for certain activities when it comes to nuclear energy. For the Kronos system, what's the pathway here for getting some of those NRC licenses? Are you close?
It's a good question. So we have the advantage of seeing in recent years what has worked and what hasn't worked. So we know with the NRC, there's a bit they have an ability to license a bit easier if they're familiar with the tech. We thankfully have a very familiar tech to them, high temperature gas reactor with a fuel, TRISO fuel, where billions of DOE money has already gone into that to make sure it's certified and safe and licensed fuel. But what we're going to do is we've got two massive projects, one at University of Illinois, UIUC, and one in Canada that we'll be building at Chalk River. And that's to build out two full-scale reactor systems that we can demonstrate to the market that work, that we can sell power from, but also that we will license concurrently